So let's hope that does play out. But tell us, what's the approach to equities? You're sounding a little bit cautious for global equities on the whole. And as we chatted last time around, I think you said stick to the US, stick to Trump. The US market is likely to outperform. Do you hold on to that view? And what about India? You know, we have had a decent run, but we've gone through a phase of consolidation for the last 6 to around 8 months. Your view on the Indian markets?
So yeah, first of all, I would say on the US, that's a very tactical view. I think that tactically speaking, there's just too many risks coming up, specifically with tariffs. I would also bring to that geopolitics. I think Trump is going to be very, very tough on Iran. We could have a pretty significant geopolitical risk in the Middle East over the next quarter as well. However, I do think the tariffs are tools of negotiation. And so by mid-year, you're going to start seeing two big stories play out. First of all, a peak in fiscal policy in the US. President Trump will not get what he wants in terms of fiscal outlays. So US growth expectations will actually have to come down, which may bring more Fed cuts back into the equation. Again, not right now, middle of the year. And then I think by middle of the year, maybe Q3, we will start realizing that the tariffs he implemented on January 20th through that IEEP are actually just a tool of negotiations. So I think that the dollar and US equity outperformance will probably end in Q2 or Q3. So stick with US for now, but I think come Q2, come Q3, we will have a very interesting entry point for non-US assets, and that includes India. And I think that India is going to do quite well once we clear these hurdles over the next quarter or two. So again, what we need is a realization by the market that US fiscal policy has peaked. It's going to take some time, and that the risk on tariffs has peaked, which will take some time.
Right. Marco, just very quickly, we heard from President, you said Trump, incoming President Trump was saying a lot of things, and he did say a lot of things. Canada, Gulf of America, Greenland, the Panama Canal. I mean, are there any way all of this impacts markets or not at the moment? And what do you make of it?
I think there's a couple of ways to look at it. First of all, I think we should take it seriously. If you say something X, let's say you say something that's 10 times worse than anyone expected. It's probably not going to happen, but something 5 times worse might. In other words, once the narrative has expanded to like invading Greenland or Canada, that will likely not happen over the next 4 years. I mean, I can say that confidently, but something that was still unexpected might. So the narrative has clearly widened in what is appropriate. And so that's the first issue. And I think that one of the things that President Trump, might not care about or doesn't realize is that while when he says those things, they may not happen, other countries are listening. And he might be opening a Pandora's box where somewhere in some part of the world that's been peaceful for the past 20 years, some leader says, well, if President of the United States can say this, then I can act on it as well. There's a lot of irredentism out there. There's a lot of border disputes. And so I would say that that's how I would look at this as perhaps mattering in the long term. But I think in the short term, you should not expect this to move markets.
Well, Marco, I think markets will just hope that he says whatever, announces whatever, but at the end of the day, comes back home to see what's Wall Street doing. And if Wall Street starts faltering, then he very quickly tweaks whatever he's saying and whatever policies he's outlining to suit Wall Street. I think that's a big hope that I was reading that a lot of money managers have, that ultimately he'll do whatever it takes to keep the stock market happy. But we'll see. Prashant.
We should actually have. There's so many memes now. It's a serious issues. But I saw one. Marco, I don't know if you saw it. There was President Trump in Greenland, obviously a morphed picture, all snowy background. And it's a take on his book, The Art of the Deal. And he looks at the snow and he says, well, it's not even green. Knock the price down 20%. I mean,
my favorite, if we're talking about memes, and if we have time, my favorite, I don't know if you are fans of the board game Risk. But in Risk...
I've played it, but yes, go on, please.
Yeah, so in Risk, you get extra troops every turn if you control a continent. And basically... there was a gentleman, very smart gentleman on Twitter who said perhaps he's just trying to complete the continental combination by controlling, North America. But listen, I think one thing, if you want me to give you a silver lining here, If the president of the United States of America, no matter who it is talking about annexing Greenland, it's because there's nothing else bad going on in the world. So if you want a positive story, just put it that way. If we're talking about annexing Greenland, it's because none of the geopolitical issues that are out there are actually rising to an extremely high level. And I would just argue, let's not, wish for some other conversations.
Sure. Love the optimism, Marco. Hopefully that's what it's all about, that the rest of the world just goes on peacefully so we can kind of drum up some interesting conversation. But anyway, I'm sure we'll have many more chats as we get to the 20th of January and beyond. Thank you very much for being with us on the program today. Well, that's the global backdrop, and there's never a dull moment thanks to Mr. Donald Trump. But let's come back home and see the corporate interactions and the market commentary that we've lined up for you. At 8:35, we will be in conversation with the management of Ashiana Housing. They came out with a very strong update. The stock was rallying 6-7%. So we'll get you more details on this today. Then we'll be talking to Alok Mishra of MFIN to talk about the stress in the microfinance sector and this much talked about meeting that happened with the Department of Financial Services yesterday. At 9:20, we talk markets with Atul Suri. What are the indicators saying now? What are the longer-term charts and trends suggesting? He's a market master of the day. And on fundamentals, we have Vikash Kumar Jain of CLSA joining in. Look at their 2025 forecast for the Indian market. After that, we get into conversation with Rajat Kathuria of Signature Global, again, a real estate company that came out with a Q3 update. So we'll find out how trends are looking like. And at 9:50 a.m., Horma Sarabji of Autocar India as well as Jay Kale of Elara Capital will join in. Plenty of chatter around new EV launches. Mahindra & Mahindra, of course, announcing pricing of their new variants. Maruti seems to be sort of getting its act together for 2025. So this is what we discuss as we go forward at 9:50. And finally, in our special segment, it's the economy. Lata will be in conversation with Anish Tawakli of ICICI Prudential Mutual Fund.
All right, time to slip into a short break. On the other side, we'll focus on all the stock-specific action in our special Top 10 segment. We'll look at Manappuram, Lupin, Borosil, Renewables, Tata Motors, PN Gadgil Jewellers, Zentech and Anand Rathi. All of them will be reacting to positive news flow. On the flip side, Credit Access Grameen, Hindalco, NMDC will be reacting to negative news flow. Slip into that break, come back. We'll get into further detail on all of these names. Don't go anywhere.
Include any Delhi-centric announcements in the budget to ensure a level playing field for all political parties.
Number one. बजट फरवरी को आएगा ये आपने पूछा. अब 5 फरवरी को तो पोलिंग है, तो इसलिए ऐसी दिल्ली स्पेसिफिक हम आज ही चिट्ठी इशू कर देंगे. कैबिनेट सेक्रेटरी को आज ही स्टैंडिंग इंस्ट्रक्शन इशू करेंगे कि कोई भी दिल्ली स्पेसिफिक बजट में चीज का शामिल नहीं किया जा सकता which can disturb the level playing field. For Pan India, there is no problem, and that's the practice always whenever the voter account or the elections happen during the budgets happen during the election process. आपने कहा एक पूछा कि confrontation का रास्ता, ये बिल्कुल भी सही नहीं है. Political सबसे important पूरे लोकतंत्र में सबसे important voter and second most important is political party and media. 3, one by one. I mean, I won't say 1, 2, 3, but all 3 equal. Media, because at every stage we allow media from in the districts कि आप सब देखते रहिए, आप हमारे आँख कान बने रहिए, पब्लिक को बताते रहिए, गलती हो हमें समझाते. Disclosure. Voter because he is the king. And political parties because they are intermediaries. We have never interfered whenever there has been a campaigning or a political discourse, unless only in one situation. That is, if the timing is such that the vital electoral process is on, that is either polling or counting. These 2 days or very close to these 2 days, we cannot allow any rumor mongering because that can disturb and create serious law and order problems.
Welcome back. So markets across Asia pretty much red. Japan's down about 0.7%. Shanghai is down about 0.25%. The Hong Kong market is the only one that's a little up in the green. So we're expecting a cautious start for us here as well. But what about individual stocks? We have a team standing by with the CNBC-TV18 list of top stocks to watch. Let's kick it off with Manappuram. Abhishek, finally some good news coming in for Asirvad MFI.
Well, all the four NBFCs wherein the restrictions by RBI was placed on 17th of October 2024 has now been lifted. So RBI has lifted the supervisory restrictions that they had placed on Asirvad Microfinance and DMI Finance. So Asirvad Microfinance is an NBFC, is a subsidiary of Manappuram Finance, who holds about 98% in the company. And with this restrictions being lifted, it would act as positive catalyst for Manappuram. Back to you.
No, absolutely, and I think important to take on board this news flow, especially with regards to implications for the company, listed entity. Now, Lupin should be in focus, and so should be Borosil. Vivek is standing by with details. Vivek, morning.
Well, good morning. Positive news flow coming in as far as Lupin is concerned. Now, this is regarding the Pithampur unit, an important facility for the company. So, after the inspection that was carried out in September, remember the company had received 6 observations, 3 observations each on the API as well as the finished product side. So, the company was awaiting the classification from the US FDA. So, the company has now received an EIR, which is an establishment inspection report, and the kind of classification that they have received is a voluntary action indicated, which indicates that the majority of the issues that the site had have now been resolved. So, it's a positive development as far as Lupin is concerned. Now, coming to Borosil Renewables, the long-awaited capacity addition that the company had put on hold or had deferred is now back on track. The company has announced a large expansion of close to 50%. This is in the manufacturing of solar glass. So, the manufacturing capacity of the company will now increase from 1,000 tons per day to 1,500 tons a day. And the main reason that the company has now found the confidence to go ahead and increase the capacity is the minimum support price that the government has introduced as far as import is concerned. Interesting development. Expect some green on both of these stocks today.
Okay, thanks a lot for that, Vivek. Well, let's hop across to Hormuz. He's here to tell us about Tata Motors. Hormuz?
Nigel, morning. And Tata Motors, the JLR retail sales numbers is what it'll be reacting to. The retail numbers were down around about 3% for the quarter, 1.06 lakhs unit, but the improvement came in the wholesales, and that improved by 3% to 1.04 lakh units. And these, the wholesale volumes improvement reflects the fact that there has been some turnaround after the supply disruptions that were seen in the second quarter. Mind you, Tata Motors as a stock has already corrected by a third from its record highs, so expect the stock to open in the green post this.
All right, so Tata Motors is going to be on our radar as well. Thanks very much, Hormuz, for that. Let's go back to Abhishek. Abhishek, so you were alerting us about this meeting, DFS meeting with a lot of MFI and fintech players. What's the latest?
Well, we also alerted that there may not be a major outcome with respect to what the industry has been demanding with the, defense secretary, and that's exactly been the case. So the DFS SECI meeting outcome for the MFI lenders is that MFI should draw a roadmap with respect to strengthening the sector and become more viable. MFI should encourage repayment of loans digitally, and MFI should focus on cyber security and resilient IT infrastructure. Now, MFI should also strengthen the governance strength, standards. So over leveraging should come down is what is indirectly meant by, governance standards, and indirectly that's being meant by them. So there's not much relief with respect to asset quality or funding, funding that's been asked by the lenders to the secretary. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Well, I'm looking at 2 stocks in the metals pack. One is Hindalco and the other one is NMDC. And both of them could start off in the red. They'd start off in the red. We'll see what goes on from there. For Hindalco, Novelis has released their provisional numbers for the past quarter, and the numbers look quite big. Because you have the adjusted EBITDA that's coming at around $360 to $370 million. The volumes at around 900,000 to 910,000 odd, which tells you that the calculated EBITDA per ton will be around $400 to around $407 per ton. Now, these provisional numbers look weak. The reasons that they've given is we know that scrap prices have been moving up, and because scrap prices have been moving up, spreads will get compressed. So that's point number one. The second factor is the product mix. Lower amount of auto sales, that's what's going to hurt them as well. So both these 2 factors will weigh on them. But however, the stock, after starting off in the red, I expect there could be some kind of bottom fishing. Why is that? Because the stock has corrected 24% in the last 3 months. That's post their Q2 Novelis numbers when they said that they're suspending their guidance. So that's when the street got a little bit jittery. So the stock has already corrected 24%. And the management is saying come Q4, it could look like Q2, which effectively means it could be in that range of around $480 per ton. That will compare with around $400 per ton. So because of both these 2 points, I'm expecting after the stock to start off in the red, to see some kind of bottom fishing and close maybe closer towards the green line. So that's the first stock. The second one is NMDC. You know, a few days ago, we had told you about the operational update, which looked very, very weak. And I had mentioned at that point of time as well, because of this weak operational performance with regard to the offtake, there's a possibility they go ahead and cut prices. And effective today, they've gone ahead and cut prices by 350 rupees, both on lumps as well as on fines. And the street really had sniffed this post that weak showing. So why have they cut prices? One is because global prices have corrected by close to 8 to 10%. Second factor is because the operational performance was so weak. For December itself, the sales offtake number was down by close to around 7%. So that as well starts off in the red. Maybe we'll see some kind of recovery because the street was anticipating a price cut and maybe 350 rupees per ton is par for the course.
Okay, all right. That's NMDC. We're going to watch out for this one and, of course, the impact on Hindalco as well. But let's talk about the jewelers. Most of them have come out with glittering updates for the third quarter. What about PN Gadgil? Mangala, morning.
Well, no different from the glittering updates that we've got everywhere else as well. But if you just look at it a percentage basis, maybe, you know, it may not be as big as, say, something like Kalyan Jewellers or maybe Titan on that base as well on a consolidated basis. But they have been growing slow and steady itself. 24% revenue growth is what the company has reported on a consolidated basis. The good part is retail revenue has actually grown 42%. And unlike other jewelers who are seeing gold see further traction, PN Gadgil, because of the low studded ratio, has actually seen diamond sales grow by 40% as well. Remember, they had a plan of opening 12 stores in this financial year. They've opened 9 in this year so far already, with 3 more in the fourth quarter. So see some green on PN Gadgil. But remember, jewelry stocks have been abuzz ever since the start of the third quarter on hopes of strong performance coming in on account of the festive and wedding season as well. And this one, no different.
All right. Mangalam, thank you very much for that. More stocks with news flow. Hormuz is standing by with that list. Hormuz, morning.
A couple of stocks on our radar, Prashant. Morning to you as well. Zen Technologies is one of them, and they've been granted an Indian patent for a T-72 containerized crew gunnery stimulation system, and this is their 11th patent that they have received in FY25. And this is also an advanced training platform that is designed to enhance the gunnery skills of the T-72 tank and the other gun equipment systems. So positive news coming in there for Zen Technologies. May open in the green, but may also be in the price as well, because the stock over the last 12 months has already tripled in value. It's up over 220%. So keep Zen Technologies on your radar. And the other one is Anand Rathi Wealth. They made an announcement yesterday evening that they are going to hold a board meeting on the 13th. They'll consider a bonus issue along with their third quarter results as well. The first issue of bonus shares after their listing, which was in December of 2021. And the stock here as well, it's been an outperformer in line with most of the other capital market linked names, up 7x from its IPO price of 550 and in almost a 3-year time span. So expect Anand Rathi Wealth to open in the green as well.
All right, got that. Thanks very much, Hormaz, for the details there. So let's quickly recap the list that we have for you today. The stocks that have positive news flow around them are Manappuram Finance, Lupin, Borosil Renewables, Tata Motors, PN Gadgil, Zentech and Anand Rathi Wealth. The ones that could maybe open out in the red, Credit Access Grameen, Hindalco and NMDC. Okay, so that's the stock list for the morning. What about commodities? We've got Manisha standing by with a roundup of all the overnight action. Manisha, good morning. So what's new? What's the latest?
Well, thank you for that, Sylvia. I'll start with the crude oil prices, where we did see 77.5 in terms of Brent prices yesterday, but the prices have come off those 3-month highs, and we are trading below $77 a barrel as of now. Well, the strength in U.S. dollar index seems to be weighing, and so is the thing that the U.S. crude inventories have seen a decline for a 7th straight week. The markets also seem to be reacting to, in some sense, to the U.S. FOMC minutes that came in yesterday, where the U.S. officials emphasize on cautious approach. The future rate cuts, they say, will hinge on clear economic indicators. So that's a bit of an uncertainty, and that has led to a decline in crude oil prices. Gold also saw some decline. Silver seems to be holding firm. But the best of the gains within the metal as a sector has come in from copper prices. 3-week highs, 2% of gains in the overnight market. And this is a space that is expected to, or rather, copper is expected to lead the metal prices in 2025, is the report that's coming in from various banks and brokerages.
All right, Manisha, thank you very much for that. So commodities in a bit of focus. Of course, I mean, the big rise in the dollar that we've seen last night perhaps also takes a bite out of any expectation that stocks there will see rallies. The dollar index just under 109 levels. We'll take a break. We are back. Deepan Mehta of Elixir Equities will be joining in with some fundamental stock conversation. Stay tuned.
It's going to be a three-way contest in the national capital with the Aam Aadmi Party, the BJP and the Congress in the fray. The Aam Aadmi Party is looking to defend its turf and is looking to get third time lucky after winning the previous assembly elections in 2015 and 2020 by comfortable margins. It had won 67 out of 70 seats in 2015 and had won 63 out of 70 seats in 2020. The party is looking to repeat its performance even as several allegations of corruption have surfaced against the party's top leadership in the past few years. The allegations, of course, have been denied by the leadership, but the party has also seen several exits and complaints of corruption and mismanagement by the BJP and the Congress. It remains to be seen what is going to be the party's poll strategy and the kind of defense which is going to be tendered by the party. Also, the party till now has touted several of its welfare schemes as the reasons behind its electoral success in the national capital, which includes the provision of free electricity and water, as well as the announcement of a monthly dole for women. Similar announcements have also been made by the BJP and the Congress. On the other hand, the BJP is looking to replicate its performance in Delhi's Lok Sabha elections since the previous 3 terms and is going to look at replicating the performance in the assembly elections this time around. Since the previous 2 terms, the BJP has not been successful in getting a good number of seats and only managed to get 3 seats in 2015 and 7 seats in 2020. The party has fielded several turncoats from the Aam Aadmi Party and the Congress to bolster its chances on several seats. Also, it's targeting several other seats where the vote share for the party was relatively good compared to other seats and has fielded turncoats on several seats. Also, the Congress party, whose performance had sunk to a rock bottom the last time around, they had lost their deposit, they had forfeited their deposit on all seats except 3 in the previous elections. They are looking to make a comeback on the basis of
Welcome back. Well, we have listed on all the top stocks for you. Now let's get into further detail on all these names and let's get some fundamental analysis. Deepan Mehta of Elixir Equities joins us on the show. Hi Deepan, good morning. Hope you're feeling good this morning. Well, let's discuss a few stocks, and Manappuram Finance is one such stock that comes to mind because the RBI has lifted the curbs on their arm, Ashirvad. Now, the stock has seen a bit of a recovery from those lows of around 145, 150 odd. What do you make of the stock at around 180 rupees? This is definitely good news. It's had its share of challenges, and valuation-wise, it trades at a big discount in comparison to Muthoot. One would say rightfully so. Your view?
Yeah, good morning, Nigel, and thank you for having me on your show. Yes, I think certainly there's a trading, I would say, valuation gap between Manappuram and Muthoot Finance. But the reason for that is that Manappuram has been focusing on non-gold loans as well. I think that contributes anywhere from 35 to 40% of its AUM. And it has had certain challenges over there, whereas Muthoot has focused largely on gold loans. It's been quite profitable for the company. And with the way gold prices have gone up, it just does create a gap for them to lend further to their existing clients. But I think with this positive news, we may see the gap, valuation gap narrowing between the two companies. And there could certainly be a very strong trading rally in Manappuram given this news. But I want to keep in mind that although the restriction on Ashirvad has been raised, the prospects of the entire sector have come under cloud, considering the kind of spike in NPS we have seen in the microfinance sector.
And Deepan, hi, we'll talk about the microfinance sector as well in just a bit. But just a few names, a few more names. RIL is seeing some strength. From 1,200 rupees, it's seen about a 5-6% kind of a pop over the last few days. So any thoughts there, Reliance? And the second one is Dixon, which sold off 9-10% yesterday. Just under 17,000 now. High was about 20. But 6 months back, the stock was at about 10,000 rupees. It's how you look at it. Time frames, really. But your thoughts, RIL and then, of course, Dixon.
See, I think Dixon could be a natural correction. I haven't seen any adverse news flow over there. It's an expensive stock, and at any point of time, if the results are not that great, then certainly you could see a sell-off in it, and which is what has happened over there. Reliance, I think it's more to do with some buzz around the Jio IPO. But I don't think that if an IPO comes, it's great news for Reliance shareholders, because the holding company discount will start creeping into Reliance Industries, and that's never very good for minority shareholders. So I would just be a bit cautious on Reliance. And Dixon, I think, as a measure of disclosure, we are invested in it. So a minor correction shouldn't shake out long-term investors. So I would remain invested in Dixon for the time being.
Paytm, any thoughts? High was about 1,000 rupees, down to about 900.
See, I think that, considering the market structure and the fact that we expect a further correction, I think high price stocks, expensive stocks may lead the correction if and when that takes place. So that may be a good opportunity to buy Paytm and some of the platform companies after they've corrected even further from here. But these are companies you need to keep on your watch list, likes of, Paytm, Zomato, and further correction would make them even more interesting and provide a bit more comfort in terms of valuation. But nonetheless, I think the kind of bad news which was coming from Paytm certainly has stopped in the last few months or so. And we look forward to a good earnings report from Paytm and the progress which they are making towards getting into solid profitability.
Zomato high from about 300 plus down to about 250. Just one more sort of space is microfinance, which you kind of referred to earlier. Names like the decent quality names like Credit Access, etc., have seen a decent bounce. I mean, from 800 to almost 1100 at the high yesterday, and then it cooled off. Anything here, Deepan?
No, I think, Prashant, I would like to wait for some more reforms in the microfinance sector. And, every few years, and I've been a big investor in all these companies, and every few years they get into some tangle with NPAs, and that's not acceptable. When the times are good, they report 30-40% type of growth rates, and then suddenly 1 or 2 quarters, the NPAs spike in such a way that they have to make massive provisioning. So I don't think that from this kind of volatility is acceptable from an investor's perspective. So I would just like to wait and watch and see how the sector evolves. It's very important from the nation and from the economy point of view that we have a vibrant microfinance sector, and some of the reforms they are talking about are very important, but implementation is the key over here. And the one real data point we're watching out for is the restriction on number of loans that can be given to an individual. I think that's what has really spoiled the industry.
Okay, all right. Deepan, request you to stay with us, wanting your view on the housing space as well, because the next management we have is Ashiana Housing. That's the first management on the show. The company reported a strong showing actually in Q3 on a year-on-year basis. So on a sequential basis, there's a bit of a decline. To discuss more about the past quarter, the trends going ahead, we're joined by Mr. Varun Gupta, the director at Ashiana Housing. Hi, Varun. Good morning and Happy New Year to you, your entire team, and wishing you all the best for 2025. Well, let's talk about the past quarter. Happy New Year. Let's talk about the past quarter then. On a year-on-year basis, looks absolutely stellar. On a sequential basis, not that great. Could you tell us why is there a decline on a sequential basis? Point number one. And point number two is you had guided for pre-sales of around 2,000 crores. Stick to that?
Yes. So first, we stick to the guidance of the pre-sales of 2,000 crores. The last 3 quarters have gone as per plan. So now the fourth quarter will really define whether we'll hit our numbers in terms of guidance or not. We have 2 phase launches which are going to be critical, one in Gurgaon, one in Jaipur, to define whether we get to the 2,000 crores number or not. And at this moment in time, we maintain that guidance. We think we are on track to get there. And quarter variations, as I said, we have some quarterly variations because of what projects are available, where do we have stock to sell, what launches happen. So quarter and quarter numbers for us do vary given the size of the company. So last quarter was, I think, a great quarter in the sense that we did not have much stock to sell in Gurgaon in terms of the launch that happened in Q2. Therefore, the Q2 was great. In Q3, we had actually secular sales across locations and saw good numbers come from various cities. And that's been the heartening part about the last quarter that we saw.
Okay, all right. Just one more question, Varun. Since you mentioned about the sales from new launches as well as from the inventory, if you could break it up for us in the past quarter, how much of the sales were from the old inventory that you had and from new launches? Is there a breakup?
I do not have that data exact breakup, but in terms of a new project launch, we had all of one in Ashana Swarang, and we had two phase launches of Ashana Amod Phase 2 and Phase 4. I don't know the number on top of my head, but I would say close to about 45% should be from there.
Okay, all right. A quick question then on pricing. Your average selling price per square foot, I think, moved up from 5,000-6,000 rupees, closer to around 9,000 rupees. That's the last number that I have. What is the rough number that you're looking at? What kind of range? And a quick question on Gurgaon as well, in terms of demand. There is some fear that demand is plateauing out. Any signs for you, or you believe it's as rocking as it was?
So demand in Gurgaon is plateauing out. I think overall there has been a lot of supply in the luxury segment in the market, and Gurgaon has had speculative investments as well as a market as a whole. Fortunately for us, two things: we operate in the 2 to 3 crore segment there, and so we are in a sort of supplying units in a ticket size where there is still lack of supply, and we don't allow transfer of units without registering the units. So we've also had much lesser speculative play in when we sell our apartments, and both of those, I think, provide significant stability to our sales. And in terms of average sale price, I think we will be within that 6,000 to 8,000 rupees a square foot of average selling price, depending on what inventory we sell in what projects and locations, because I think right now we have price points varying from 4,000 to up to 15,000 rupees a square foot. So depending on the mix, the prices on a quarterly level vary. I think we should average about 7,500 rupees a square foot in general over the next few years.
Okay, 7,500. Varun, hi, good morning. Yesterday we had someone from Knight Frank, and there was a broader discussion, not a company-specific discussion on real estate. And he said he was kind of referencing the last, big fall that we had, and it started in the NCR region 12 years ago. And he was saying, well, I shudder to think what will happen if that were to repeat. It was just an observation. Where you say demand is plateauing out in Gurgaon, it's largely a function of what? I mean, too much supply and demand not keeping up? Or, you're actually seeing, that's evenly matched, but demand not keeping up. What's your sense?
So my sense.
And in what price category? In what price category?
Yeah, so my sense is that Gurgaon is not oversupplied in total number of units as compared to the number of units that the city can absorb. I think what the challenge there is that all of us as developers have gone and launched more and more luxury projects because they're more profitable. And I think more in the north of the 4 crore, 5 crore bracket, I think there is too many units as compared to the demand in the affordability index that is there. So that is there. The fall that was there 11, 12 years ago, I don't know when it will come. The business is cyclical. So we are going to get some falls and then some upswings and then some falls and then upswings in this business. I don't think we should fear that so much. That's just part of how real estate operates worldwide, and cycles will come and go. Our job as a management is to be able to work through those cycles and build a business which will run through the cycles.
Generally, I think hopefully the companies are also much better capitalized, etc., as compared to back then, right? So that is
Yes.
also the case.
The
We'll
balance
leave it
sheets
there.
are in much better shape overall.
Absolutely. Varun, thank you very much for that. Appreciate it.
Thank you.
You're on CNBC TV18. Good luck. Deepan is still with us. Deepan, any thoughts? That conversation with the management of Ashiana, any thoughts? And it's not just Ashiana, but the broader commentary, and there are lots of listed players from that market.
No, Prashant, I think very good interview and quite candid in terms of what the reality is there in the market. So that's great. And I did not know that they were so well diversified geographically, which offers some comfort, because if one particular sector, one particular region, there's a slowdown, at other sectors and other regions can pick up. So generally positive, but I don't have much of knowledge about the company. So I'd reserve my judgment on that stock for the time being.
No, got that. Just a few more names, and I think we are sort of ticking closer to the market. Actually, let's take a quick commercial break here. Deepan stays on with us. There's 9 minutes to the pre-open. We're going to come back. Nitesh and Sudarshan will be with us with some technical trading ideas that's coming up.
Was done by the Sheila Dikshit government in the past in the national capital. It remains to be seen what is going to be the poll strategy of all these parties, even as there are not going to be any alliances this time around between the Aam Aadmi Party and the Congress. And although both the parties are confident that the lack of an alliance is going to bolster their chances, the BJP is also confident that the votes, the anti-incumbent votes may get split in a way which may benefit the BJP. However, similar strategies or postulations are also being made by the Aam Aadmi Party and the Congress. So clearly it remains to be seen in which direction the political wind is going to blow in the next 1 month.
The Tata Punch was the highest selling car in 2024 with over 2 lakh units sold. This is for the first time in over 40 years that a company has displaced a Maruti Suzuki car for the top spot. Since the 1980s, the Maruti 800, the WagonR, the Swift and the Dzire have dominated the Indian passenger car market. But this changed in 2024. Punch emerged as the top-selling car, followed by WagonR in the second place with 1,90,855 units sold. Then you had the Ertiga with 1,90,000 units. Then you had the Brezza in the fourth place with 1,88,000 units. And Creta was in the fifth place with 1,86,000 units sold. So here's why Punch has emerged as the leader. First, it is available in 3 powertrains, petrol, CNG and electric, whereas the WagonR, Ertiga and Brezza are available only in petrol and CNG. Second, many entry-level buyers who considered buying a hatchback have gone for the Tata Punch instead because of its affordability and value proposition. If the entry-level WagonR costs rupees 5.6 lakhs ex-showroom, then the entry-level Punch costs just a little extra at rupees 6,12,000 rupees ex-showroom.
Welcome back. Well, the cues have been not too supportive, the global cues that is, and the implied open is now suggesting maybe a 70-point dip at the start. Mitesh Thakkar and Sudarshan Sukhani are joining in. Gentlemen, morning. So it's been challenging in the face of all this FPI selling, right? And the Nifty has just been drifting lower and lower. Let's talk about your approach to trade today. Mitesh, indices first.
Yeah, so yesterday, good morning. Yesterday I was talking about very critical level of 49,700 on the Bank Nifty. We did venture below that level on intraday basis, but the closing was about 100 points higher. I think, yesterday what we did was that as the recovery happened, we did exit most of our put option spreads, but the structure for me is negative. Closing below 49,700 would suggest continuation. If it doesn't happen, then there could be chance of a pullback or a bounce back, and therefore I think, one, either we short below 49,700 on the Bank Nifty, once it looks at it'll close below that, or you sell on a pullback closer to about 50,400, 500 zone. So that is the way we are approaching the market. I would still want to get into options positions till we, unless until we get a pullback wherein shorting at futures with a tight stop loss can happen. So that is the way we have been looking at the markets. The overall view is negative, but because that support has held on, there could be 1-2 days of bounce back and some volatility.
Okay. Sudarshan, what would your approach be? Nifty, Bank Nifty, any trades?
Yeah, good morning. Well, the Nifty has been moving sideways and choppy. Sometimes it opens up, closes lower, opens lower, closes higher. That tells us there is no direction so far. Now, the Nifty becomes a buying opportunity once it crosses a threshold. For me, that threshold is 23,800. That tells us that there is strength in the up move. That hasn't happened in the last 3-4 days. So we'll wait for that event to happen. If it happens, till then, I would say that I have no trade in the Nifty because shorting for me is never easy. It's for the index. And buying is not a good idea when there is a visible sense of weakness. So stay away till the Nifty crosses 23,300. Focus on stocks.
Okay. Let's then actually talk about stocks. So Darshan, what are your individual trades today?
Well, I have, again, buy on dip ideas, and sometimes they work, and in markets, sometimes they don't. But we have to keep on trying. Bharti Airtel is a buy with a stop under 1590. M&M Finance is a buy with a stop under 270. SRF is a buying opportunity with a stop under 2300. And my only short is an intraday short, Oro Pharma, the stop above 1300.
Okay. And Amitesh, let's come to you. Stock-specific trades today?
I also have a few buy calls, especially on the NBFC and financial names. But the first one I would like to begin is Reliance. I think after a long time, Reliance yesterday opened with a gap up and then closed towards the high of the day. So a good reversal short-term candlestick pattern over here. I think if it starts getting past yesterday's high of 1271, buy with a stop at 1245 for a target of 1320. Chola Finance is a buy on declines around 1265 to 1270. Buy with a stop below 1249. Look for targets of 1305. And Bajaj Finserv, I've given this call many times in the last few days, but still remains a good entry point in case we get it mildly lower, even better. So buy here with a stop at 1665 for targets of 1750. And a sell call on CAMS with a stop at 4760 for targets of 4550.
Okay. All right, gentlemen, got that. Thanks very much. We'll come back to you a little closer towards market opening. Now, we do have to take a quick break. Come back on the other side. We'll have the pre-opening rates. And also, we'll be in conversation with Alok Mishra of MFIN. A lot of chatter about the stress in the microfinance segment. Yesterday, there was a meeting with the DFS secretary as well. More details coming up.
The top model of WagonR costs around 7.3 lakh rupees ex-showroom. You can get a mid-range Punch also for the same price, which would have a 7-inch touchscreen with Harman infotainment, Android Auto and Apple CarPlay, reverse parking cameras and steering mounted controls. So both at the entry level of rupees 6,12,000 and at the top model price of roughly rupees 12 lakhs, the Punch has something for every buyer. It is also cheaper than the Brezza, which cost rupees 8.3 lakhs ex-showroom. In 2021, Tata Motors had launched the Punch and, in a way, launched a new category of subcompact SUVs. According to industry experts, the affordable price point and a feature-rich compact SUV make it a compelling option for many customers wanting to buy a small entry-level car but still wanting to own an SUV with premium features. The high overall SUV demand has also led to many customers buying the Tata Punch. According to company sources, the Punch is being bought by those in their 20s and even by those who are over 60 years of age. For some, it is the first car, and for others, it may just be an easy-to-drive option to get around a crowded city. This car was first launched by Tata Motors in 2021, with the Punch electric vehicle being launched in January last year. It is now expected that Tata Motors may give a life cycle upgrade to the Punch petrol and CNG versions in order to further cement the car's position in the market and increase sales in 2025.
Welcome back. We're getting into market opening. So let's get in Sneha Seth. She'll help us out with some derivative trading ideas. Hi, Sneha. Good morning. Fill us in with your view on the index as well as some stock trading calls.
Very good morning, Nigel. If you look at market, last two sessions has been very choppy. Now, if you look at the overall chart structure, the chart structure looks weak. At present, 23,800, 24,000 is a strong resistance zone. In case of any bounce back towards this zone, it should be utilized to go, to exit your longs instead of going ahead and buying. On the lower side, I believe 23,500 is the support zone. In case we breach this zone, we may head towards 23,200, 23,000. That is the level we can see. So at this point in time, stock specific would be trading in an individual counter would be a good idea. So as far as individual counters are concerned, I have a two call. First one is a buy call on ONGC. Now here, this counter has taken a support near the 89 EMA on the weekly chart. Looks good. I believe the support of the resistance around 240, 264 should be acting as a support now. So with a strict stop loss of 264, it's a buy for the target of 282. Apart from this, we have a sell on Motherson. Now, this counter has been weak. We have seen decent selling pressure. And after that, this counter was consolidating. I believe looking at the overall chart structure, it has managed to, at least take a support near 152 zone, which it has slightly breached yesterday. So I believe we may see further selling pressure. So here we can go ahead and sell this counter with a strict stop loss of 157 for the target of 140.
Okay. All right, Sneha, got that. Thank you very much for the calls and the trades today. Let's move on and talk about a lot of the news that's coming in relating to the microfinance space. The DFS secretary chaired a meeting with microfinance institutions yesterday. Now, in this meeting, MFIs conveyed that they are facing difficulties in raising low-cost long-term funds, and the quality of the portfolios is perhaps being impacted by various issues, including a reduction in lending to the sector. So let's talk about this, what the issues at hand are, and what's the way forward. We have with us Mr. Alok Mishra, CEO and Director of MFIN, the industry body, self-regulatory body. Mr. Mishra, thank you very much for joining. And let's talk about this conversation that happened at North Block yesterday. I'm not sure if you attended the meeting or not, but really, what is it that microfinance lenders are seeking from the finance ministry, and are there any reassurances coming?
Yeah. Morning, and thank you for having me. Yeah, I did attend the meeting and I made the presentation on behalf of the sector. Generally DFS, we have regular meetings, maybe once in 5 months, once in 6 months or something. So it was a similar type of meeting. I presented the sector's contributions, what is the sector's outreach, and also few other issues like what is the current credit quality and what are the requests to the government. So all these things were discussed. It was a very cordial meeting, and as you have rightly quoted, the government has last night also issued a press release on it. So it was not something specific meeting. It is a regular meeting which we hold with DFS calls us periodically and has a meeting on the whole sector. So I did the presentation.
Sure. Yeah. So, but fair enough. We take your point, Mr. Mishra, that it was a regular routine, meeting that happens. But the concerns are a lot wider and deeper right now. If you look at any projections on the street, including I was looking at one, I think that India Ratings put out, the recovery expectations are being pushed back to now, second half of FY26. So, did you seek anything, any specific support from the finance ministry in this meeting yesterday?
Yeah, let me first address your figures on credit quality. I think the credit quality, as I told, I think last week I was on your show and on CNBC, and I had said the field evidence suggests to us December was much better than November and January is better. So the trend continues, but I said that in last week also that let it continue for 2-3 months and then we will have a sustained figure. But even now, with our portfolio at risk, which is not overdue, portfolio at risk 1 to 90 days at around 4%, I think we are doing okay. The situation is coming back to stability side of it. So those who have pushed it to June 26 or whatever it is, I can't comment on that, but that's not my view on that. And as regards...
I'm sorry, yeah. We'll see what happens, but did you ask for anything specific? And has anything specific been promised by the government?
See, government promise I would not say, but of course government will examine it. We have said about three things basically. Let me tell you from our side. One was on the, it has been a long-standing ask from us that there has to be a dedicated refinance facility focused only on microfinance, so that because like in the current times, if you don't, if your credit quality is not so good at currently, and if there is a liquidity stress also from funding, that compounds the problem. So that was one ask. Second, we have also talked about KYC, enabling at least the last 4 digits of Aadhaar to be stored in the CICs for dedupe, so that better underwriting can be done. So these were two specific asks. And third ask was about the guarantee scheme, because there is a guarantee scheme, CGS 1 and 2, but we said it has to be made more friendly for microfinance. And the contribution of microfinance in creating around 2 crore jobs, catering to 8 crore unique borrowers, low-income borrowers is there, and it is all unsecured. So we need the support of the government in having a suitable guarantee scheme also.
And what did the government say? When will you hear concrete, something concrete from the government side?
Well, it is all written in the press release. Government last night, Press Information Bureau's press release, they have said they have taken a positive note of it. DFS values the contribution of microfinance in building India, and it will be suitably taken up in consultation with us.
But that doesn't, it's not very concrete. I mean, it's kind of open-ended. Are you expecting anything, any specific measures?
Yes, this sector has reached this place of 4 lakh crores and 8 crore borrowers only because of support of the government and the Reserve Bank of India. And see, you cannot expect in meetings we make demand. These are wider demands and what you can say policy action. They will require deliberation, thoughtful. You cannot expect overnight action on this.
You think something in the budget, Mr. Mishra?
I hope so. I remain positive. We'll continuously engage with them.
Mr. Mishra, can you also detail at an industry level, what do you have to say about some of the concerns that are being raised? I mean, and some numbers will help. I'm quoting various agencies, and this is the latest India Ratings report saying that there are multiple headwinds for the sector, such as borrower over-leveraging for both MFI loans and non-MFI loans, reduced center attendance, high attrition at branch levels, and instances of fraud leading to a higher operating and credit cost for the sector. So, this is what analysts on the street are pointing out. So can you tell us, for the industry as a whole, how do you see credit costs shaping up? What about the instances of, NPAs, frauds? What should we work with? Some ballpark maybe estimates that we can work with for FY25?
Well, as I said it last week again, that I will not comment on an individual rating agency's report, but the figures with me, last week also I had told, this issue of, I do not know from where this issue of frauds come. I have not seen, neither reported any sector, because frauds are reported to Reserve Bank of India also by all NBFCs. I think that's not fair. On the portfolio quality, again, I will tell you the exact figures as of October. PAR 1 to 90 days is around 5 to 5.5%. If you want, I can give you the exact figure also. I think at the year end, we should marginally improve it. By March 25, I think the PAR 1 to 90 days will come down lower, and NPAs will also start coming down. But all the NBFC MFIs, wherever the NPA is there under ECL methodology, they have taken provisions. So I don't see much contribution on the credit quality. You will see we were the first to show the warning signs in May and June, and sector will be the first to come out of it.
Well, we certainly wish that is true. Mr. Mishra, we'll continue to engage with you as you engage with the government over the next many weeks and months. Appreciate it very much here on CNBC-TV18. I think it's, 6 minutes to go for the market open. The pre-open is left with about a 14-odd point lower tick, 23,674. Let's get trading ideas. Sudarshan is with us with his 9-10 call. Sudarshan, morning. What do you have?
Well, consider buying SRF. SRF buy with a stop under 2300.
Okay, SRF. Mitesh, what about you? Morning?
I'll go with the buy. Morning, Prashant. I'll go with the buy on Reliance for targets of 1320.
Okay, all right. Reliance, of course, has been the mover last few days with about a 5-6% gain from the recent lows of about 1200 or so. Well, what are the standout brokerage reports which Nimesh is going through, and what should be in focus? Nimesh, good morning.
Hi, morning, Prashant. Today's standout is on Bajaj Auto. CLSA today has upgraded the stock to outperform from underperform. So technically a double upgrade, and they have a target price of 94, 93, a potential 10% upside from current levels. Now the key reason for the upgrade is a steep correction and improving two-wheeler franchisee. Remember, the stock has corrected 34% in the last 4 months, and is now trading at close to 21 times versus long-term average of 19 times. But they've increased the market share in two-wheelers to 25% in December, which is the strongest across all the players. And despite the ramp up in the electric two-wheeler space, the company is able to maintain the margin at 20%, which CLSA believes is quite credible. Now, the key risk is the fact that there could be further competition in the executive segment. While they are very strong in the premium segment, is the executive segment where there is a lot of competition from peers, and even Bajaj is trying to shift from 100cc to 125cc. But the key upgrade today is largely on back of a steep correction, and the fact that in the electric two-wheeler space, now it's a market leader with almost 25% market share and still maintaining 20% margin.
Okay, all right. Nimesh, thanks a lot for that. We'll have to keep an eye out on that one. Bajaj Auto. Well, I'm looking at Hindalco, and the stock is one of the top losers on the Nifty, but it's down only around 1%. The reason that Hindalco is under some pressure is because Novelis's preliminary results don't look very, very good for the past quarter. They're saying that the adjusted EBITDA number will be around $360 to $370 million, and the total volumes are 900 to around 910,000 odd. That means that the adjusted EBITDA per ton on a calculated basis will be somewhere in the vicinity of around $400 to around $407 per ton. And that will be disappointing because most on the street were in that vicinity of around $420 to around $430 per ton. The key reasons for this softness, one is that the higher scrap prices, that's impacted spreads, so that's why it hurt profitability. Second factor is that the product mix wasn't very favorable. Auto segment contributed relatively less. However, the stock could see some kind of support at lower levels because it's already corrected 24% from the recent peak. That's post quarter 2 when they withdrew their EBITDA guidance for Novelis. And the second factor is the management is saying quarter 4 will be as good as quarter 2, which means that the EBITDA per ton could bounce back to around $480, $490 per ton. So that's why the stock is under pressure, but I expect some kind of recovery as the day progresses.
Okay, all right. So that's Hindalco in focus. By the way, the pre-open rates have settled. It's very quiet, just about 14 points lower on the Nifty. Watch for Swiggy. Swiggy seems to be reacting to a Bernstein report. They've initiated coverage with an outperform rating. Stock's up about 3% right now. I think the target is northwards of 600, if I remember correctly. We'll come back on the exact number, but that's working well for the stock. Speaking of course, consumer, let's get Mangalam back in. There's a Jefferies note on, I believe, the travel sector and the outlook in 2025, Mangalam?
That's correct. So we've seen a lot of travel stocks in focus all of December, the third quarter, which is seasonally strong, but that doesn't seem to be dying down even in January. And that's exactly what Jefferies' view is, that demand in India for both travel and tourism, domestic and outbound, has remained healthy, even the post-COVID growth normalization. In fact, industry pricing across segments is fairly elevated. That hasn't impacted demand, telling you that Indian consumers are prioritizing travel over many other spending categories. They continue to like the space, and they have a buy rating on all the stocks in their coverage area. The key themes for 2025: one, the preference for premium and experiential travel. Secondly, there will be huge, wedding season, the FTA revival, and alongside that, we have Mahakumbh and lower supply coming in on the industry as well. New airports in both Navi Mumbai and Noida will further support travel, and Indigo will see, supply of some of their new planes, and as a result of which, they could explore more international routes. So, as a result of which, their preference, in order of preference, the stocks, we have Indigo, Indian Hotels, GMR, and TBO. On Indigo, they have a target price of nearly 5260. Indian Hotels about 1,000 odd rupees. GMR is about 77 rupees, and TBO Tech is close to around 1743. So that's the space that will be in focus today.
Okay, thank you, Mangalam, so much for that. I'm sure many of us have contributed to all or most of those stocks in terms of, just the revenue as customers in the year gone by. On Swiggy, by the way, the Bernstein target price is 635. What they're saying is that the market share is going to stabilize and Swiggy will do better from here on.
Swiggy is, by the way, also, and Shilpa will tell us more, they've also now introduced a service, an app, which kind of does what Urban Company does, for everyday chores. I mean, it's an app, and I forget the name now, but Shilpa is going to be joining us to tell us more a little later. So they seem to be spreading their wings, not just from quick commerce and food delivery into other things as well. The first rates are up on your screen. We've got the Nifty, which is at about 23,660. It's down a little bit. The Nifty Bank is down about 0.25%, 49,600. So yeah, I mean, that's swiftly down, 0.5 now on the Nifty Bank. So that's a much sharper cut. Yesterday, the Nifty Bank underperformed the Nifty by quite a bit, and I think these would mean newer lows for the Nifty Bank. I mean, breaking below, or not yet, what we saw yesterday at the lowest point. IT index, it's a flattish start. TCS, of course, will be in focus. Advanced decline is slightly positive, but not very much. Nothing really write home about. And I think the Nifty heat map will come up on your screen, gives you a quick snapshot view of the action as far as the Nifty 50 stocks go. Many of them, of course, still opening up, and we'll have that up in a bit. There you go. I think got about 18 odd names which are in the red, in the green, and the rest are in the red right now. So 40 points lower, 23,646. Surabhi.
Okay, so let's get to it. Bajaj Autos are reacting very well to the CLSA note that Nimesh just flagged off. Gains about 2.5% on that stock. Make that 3% now, because remember, CLSA is looking at a price target of well above 9,000, I think 9,400 if I'm not mistaken. So that's the winner. Tata Motors with its JLR numbers also looking good this morning, 1% higher. Then you have some buying on Infosys, on Kotak Mahindra Bank. There's M&M, which is up about 0.5%. Basically, autos looking good. M&M, Bajaj Auto, Tata Motors, Eicher Motors, Hero Moto, even Maruti's got a tinge of green. Auto is the strongest part of the market right now, followed by the IT big boys. Infosys about 1% higher, and TCS is approaching numbers with cautious optimism, about 0.3% higher. What's not working for the market? Banks, banks, and banks. SBI is down about 1.5%. HDFC Bank is down 1%. ICICI is also slumping this morning, so not looking good for the big lenders. What else? There's ONGC, L&T. ONGC is finally cooling after 2 very smart days of gains. L&T is down about 0.5%. And there's ITC losing about 0.5% as well. So those are the early trends coming through. The big sort of trade this morning is on autos. Most of the stocks on the upside, and the Nifty is now down 56 points.
Well, the two stocks that I'm looking at is SRF as well as Navin Fluorine. There's been a big spike up in refrigerant gases because significant, there's a US distributor out there who's raised alarms over R32 and R125. That could be a bit of a supply constraint. And because of that, both these two stocks are now up between 9 to around 10%. We'll try to get you further details, but for the time being, that could add to their profitability. We'll have to find out how much exactly. That's clearly the reason why both these two stocks are now up close to around 10% or thereabouts. So big move is what we're seeing on both these two names. Let's pull up Hindalco. The stock had started off in the red. There is a likelihood that the stock could see some kind of bottom fishing. So, that one should come up for you on the screen. Hindalco, as we mentioned earlier today, the news is negative. The street will look ahead because of the correction that we have seen and the promise they're given that Q4 will, look as good as Q2. The other couple of stocks that we're looking at, Spandana Spurti has cooled off a little bit. We had Transformer and Rectifiers, one of the big outperformers in the last few years. Well, that one as well has come in for profit taking and came out with its set of numbers. The Nifty is now down close to around 60 points or thereabouts, but from the broader markets, plenty of stocks moving around. IGL bounces back up 2.5%. UPL as well up close to around 1.5%. And Aarti Industries is the other one that's up close to around 2.5%. Survey.
Okay, Nigel, well spotted on SRF and Navin Fluorine. Look at these stocks flying away. SRF is 10% higher. And Navin, I saw, also make that 10% of a move on, Navin Fluorine. Manappuram, the relief reaction continues, almost 5% up on that one.
Well, 60 points down on the Nifty, 23,630 is where we are at. And we are, down and... at least on the index level, we're down. By the way, broader market breadth is positive, not by much, by about 200 stocks more on the gaining side as compared to what is down. Maybe just a few other names here before we go any further. Nimesh spotted Bajaj with that sort of, I think it was CLSA, I think, 2% higher. So 87 on Bajaj Auto. Phoenix Limited, the mall operator, 3.5% there. There is Zydus Life, which is up about 3% or so, 1,012. Transrail, which is a recent listing, is up 5%. And, only mentioning these names because they've also got large volumes right now. Anand Rathi is up about 4% or so. Saregama is coming up with a 5.5% gain. So 578 on Saregama, looking good. Shakti Pumps now closing in on 1,400 rupees. It's up 30% in 2025. I mean, so it's just one of those names which has done very well. Car Trade is up about 3.5%. Car Trade, I think, was a mover yesterday as well. Tata Chemicals is up about 2%. Deepak Nitrite is up about 2.5%. Aarti Industries. So it's not just, I mean, SRF and Naveen are there, but there are, maybe it's sparking a bit of an interest in some of the other names as well. Borosil Renewables is up 5%. It's one of the stocks we highlighted as part of our stock list early on in the morning. Spandana Spurti had a big pop yesterday, was up 35% in 2 days. It's taking a bit of a knock. It's down 5.5% on volumes, large volumes. And Credit Access ended up 12% yesterday. It's down 3%. So there are some small reversals. We just had that MFI discussion just a little while back. The other one on the downside is Kalyan Jewellers, which saw a big 8-9% knock. It's down, it's starting down, not big, but 1.5 lower. And, you know, you had all these EMS companies, Dixon and Keynes, and, you know, they were all down yesterday. Keynes is starting, I can spot only Keynes with volumes, which is down about 1.5%. Vari Energies and Premier Energy, these are the other two names which are in the renewable energy space, solar space, which are starting about 2.5% lower at this point in
Just
time.
one stock, Prashant, I wanted to highlight. SBI, the stock is trading at around 765.
Yeah.
The day's low is around 726. You know, so there appears there there appears that, I don't know whether it's an erroneous trade or there is an intended trade out there. But in the first minute itself, there are a couple of trades that took place in that vicinity of around 726 rupees or so. Keep an eye on that.
That looks like a swoon. It looks like a what we call a fat finger or whatever. But we'll have to sort of confirm that. But yeah, the low is about 726.
By the way, the city gas distribution players are a little excited this morning.
Yeah.
IGL, MGL and Gujarat Gas, all of them are up. I thought maybe it's a IGL specific move because we know this Maharashtra gas IPO, the JV between BPCL, GAIL and IGL, maybe because of that. But no, the others are also excited in tandem. So city gas distribution plays doing quite okay this morning.
Yeah, Kotak Bank is another one which is up about 2% or so. You know, again, big underperformer last couple of years, and some sort of conversation that maybe it's one of the stocks to watch out for, at least tactically speaking, if not for the slightly longer term. Atul Suri is now joining us, CEO at Marathon Trends PMS. He's with us here in our studios. Atul, great to have you with us here. Good morning. Thanks very much.
Nice to be here. Thank you.
Yeah, it's starting. I mean, it's we'll talk technicals, but the news flow you can't ignore either. There's
a lot. There's a lot that's going to keep you busy for the next 1 month.
I'm not talking about yields or rates.
Are you able to follow the posts and the memes?
I'm not talking about rates or yields or commodities. I'm talking about Greenland, Canada, Gulf of this. And
you have an exciting job for the next 1 month. See, for 20th, you got the whole
next 1 month or 4 years?
4 years is a long. Then you talk about the Amrit Kaal. Let's talk about then 20 years.
How is it looking?
So I think that the next 1 month is definitely going to be very volatile because you've got three very big things I think that are panning out. One is this whole Trump trade. And already you can see that the world is shaping up for it. Bond yields have taken off. What's happened to the dollar is, I think, the biggest elephant in the room. That's affecting markets world over, whether we talk about it or not. Then you've got budgets, always unexpected, unknown. You don't know what's going to come out. And then you've got your corporate earnings, which actually is the biggest issue in our markets for the longer term sustainability. So within the next 1 month, you're going to have three such very big events, all three very unpredictable, a lot to talk about. But I guess, you're going to see volatility. But I feel beyond that, markets will settle up. So trying to, sort of make a call for one or two of these events is going to be difficult because, I mean, how will you pan out for this Trump trade? What is he going to do? What is he going to say? Which side of the bed he gets up from? I mean, these are things, where the best and best can't. So for us, I think it's more a question of reaction.
But directionally, Atul, is it looking,
So what I think, Prashant, that already the world is factoring this in. See, if you look at bond yields, right, the US 10-year, it's a very important instrument. It was around 3.6. Trump won the elections. It's moved 100 bips. It's at around 4.6 or so. An asset class which seemed to be sliding down because inflation was so-called capped, suddenly has taken off. What has happened to the dollar? Very important asset class, especially for risk on, risk off. All these FI flows. Why do FIs selling? Why are they this? It's nothing that they don't like India or it's a big deal. For them, the whole thing is we are just part of a big puzzle that there is playing out. And the way the dollar index took out from 107 heading to 109, That again tells you that the world is gearing up for inflation. See, because if you look at most of Trump's policies, whether he's talking about tariffs, whether he's talking about border immigration controls, whether he's talking about tax cuts, they tend to lean towards a higher inflation. And that is why markets are already factoring in it. Now, what comes out, how much does he posture, how much is just saber rattling, this only time will tell. I mean, as I said, we have no capacity to judge that. So I guess this is something that is going to play out. As I said, it's going to be very exciting. But how can you prepare for such events?
But again, directionally, just to, जैसे बोलते हैं, ऊपर का घर बंद है कि
I think that the market will surprise. In fact, what happens is that, see, right now we are at very important, very near crucial supports, which is your, I think, 23,300 or something, which was the last bottom. So that is one area which in the short term can be an issue right now. We're at 23,700 thereabouts. So that definitely is an area of concern. But sometimes you feel, oh, the breakdowns happen and suddenly the market has ways of pulling up. And on the upside, if you take out at 24,850, I think I remember was the last high, if that gets taken out, then you make a case for a new high. So I feel that in this period of lot of news, if the market just remains in this band, good day, when you start feeling bearish, the market takes off. And when you feel bullish, the market is going to, which is a typical range-bound movement. I personally would favor if something like that happens. Yeah, the bigger risk is if the breakdown happens. Because, remember, we are nearer to the lower band just by a 2% or thereabouts. Then I feel that, it can lead to more.
When you said markets may surprise on the upside or the downside?
No, I feel that at the moment there's a lot of pessimism, Surbi. At the end of the day, people are worried, ye hoga, wo hoga. There's a lot more bad news. So that's good if the bad news is getting absorbed, it's getting factored in. And that is why even if you see the markets, they are not at lifetime highs. They are good 10-12% from there. We've spent a quarter or so of nothing. In fact, last 6 months, you'll realize that, if you look at it, there has been no substantial really gains. Yes, the markets made a new high. But portfolios, stocks, all the leaders are all off 20%, whether it's your defense, your PSUs, your private sector banks, barring IT, if you see. Most of the sectors and stocks are off 20%. So things have cooled off. Time has been spent. 6 months have been spent. Price has come off 15 to 20%, maybe 12-13% on the index also. I think that is important.
But Atul, before we start talking about what to do here, just complete that point on the two important indicators, both the US 10-year and the dollar, because now on the fundamental side, suddenly we're hearing, for the first time, narratives about maybe there is a global recession coming, maybe the US economy is going to, all of that.
That should be, you will keep hearing. Recession, we've been hearing since 2 years.
Exactly.
One month it's inflation, second month it is recession. So that all is one big thing. But I said the two things that really matter to us as people in the markets, and these things are very, very solid indicators, is where the dollar is headed.
But what do you see anything?
Yeah, so a dollar at 109 is not a pretty space to be in. It's honestly not. I would rather have the dollar at 107 or below. That's the range it had set out for 2 years. We'd rather have a dollar there where we don't have to bother about it. Today, we have to be bothered about it because remember, when the dollar goes up, it leads to a risk-off trade. Like, we are getting shocked. Why FI is selling so much? As I said, it's not that they can't see the big India story. It's that they have multiple pressures. They are dealing in multiple asset classes, these whole global macro players, and what is the impact of the dollar, what currency they borrow in. And when US bond yields are going up, when they are getting at US interest rates at that price, then the need for them to be more adventurous and come to emerging markets where the risks are higher is less. So money is moving to the US, and that is very, very visible. Not a pretty place. It's been difficult. And I do think that the next 1 month is going to be challenging. Lot of news, but you just have to wait it out.
All right. Hi, Atul. Always good to see you. So next 1 month could be challenging. But for the year on the whole, sometimes when you get a lot of pessimism, it's actually good news.
Absolutely.
Because then, in fact, you expect the markets to be absorbing this and then gradually move up. For 2025, do you expect the markets to give a high single-digit return even from these levels? That's point number one. And point number two is, that's provided obviously the global markets don't collapse.
No, why single digit? Why?
I
mean, single digit is like, then an FD would be a good idea.
I'll tell you, Atul, from the kind of market talk that we've been hearing for the last couple of weeks or so, uncertainty on Trump, the dollar index, as you mentioned, 100, if someone gets 10% this year, they'll be quite happy.
No,
so give us the optimistic. The last time we joined, I think we were talking about late 20,000. But tell us, what is the level for this year?
No, I don't know about levels, but I do think that the first few months are going to be challenging.
Yes.
Even for India, our macros have slipped a bit. Your growth rates have slipped. Corporate earnings are not as they were about a year ago. So I do think that this is going to be, but I do feel, again, it's a personal hunch that the government, whether in India, whether it's the US, these guys are very pro-growth. They are development. They are capitalist in their mindset. They want things to come up. They are not going to let this country economy just slip into a recession. They are going to put in the fight. So I do think that, right now, lack of government spending or less government spending is one of the biggest problems. I do think that they will come back. Whether it will happen in the budget or after that, we don't know. And that is why I feel that the recovery in the market will be more back-ended this year than front-ended. The next few months will have their challenges. As I said, it's very heavy on news. There is need for government action and policy, but I do feel it will come. And that's what, as you started the point, that when you are very pessimistic, that's when the seeds are sown. And as I said, that we've spent 6 months consolidating,
yes,
price-wise and time-wise also. Even price-wise, we're no way much higher than we were 6 months ago, right? 23,300 was the election day, I think, volatility high, and that is the support right now for the market. So we were where we were 6 months ago.
Atul, so let's talk about ways to look at how to. So we had Sandeep Tandon of Quant earlier with us on Friday. He was saying maybe one way to do it is, first of all, the call that large caps will do better. Many have been beaten down quite a bit. And big laggards of 24 should do better in 25. A simple kind of. And it's, I think Nimesh later in the day is putting out a piece on edit, I think tomorrow. Saying, just looking at this, and does this work by the underperformers the last year? Not all the time, but what's the hit rate? And he's looked at data going back
dogs
the
of the
last 5
Dow.
years.
There's a lot of study in the US that it's a trading system actually.
Do you think that is something to do here?
So I don't know. I don't know about the buying the dogs of last year, but I do hold the idea that large caps will outperform. See, we do something called a ratio chart. I mean, unfortunately, I don't have it on screen today. But what happens is that when you do a small cap to large cap ratio, you will notice that there is a 3 to 4 year cycle. And if you look at it, large cap relative to small cap, since 2020, that's COVID, this has been the almost 4 years of relative underperformance. For 4 years, large caps have underperformed. And generally, we've seen that cyclically, these tend to be turning points. As I said, we don't know whether it's going to be this month or next month. That is very difficult to call.
Correct.
But yes, we are at extreme underperformance of large cap relative. These also become turning points. I'm not saying that please sell small and large caps. I think they will still have juice, but wherever the earnings will not support it, I think they will sell off. See, yesterday's market, if you look at it, yesterday the index was okay. It recovered. It was very pretty. But if you went and looked at the small and mid cap indexes and some of the stocks, there was a lot of blood out there. So what will happen is that optically your Nifty will look good, your market will look good, but in there the bleeding will happen. So I guess we are heading in that kind of situation. And in that sense, the term, it's also a better place to find protection in large caps.
So large caps.
Because what has not moved, where there's less euphoria, which is as it is beaten down, and if it's turning around. A case in point, a sector I love, Prashant, is IT. Right? I mean, a lot of people are talking about banks. There's consensus bullishness on banks, but I have not been bullish on banks, and I still am not bullish on banks. If I had to put my heart and hat in the largest to be overweight in any sector in large caps, it would be IT. Because if you look at some of the IT stocks, you'll find that a lot of them are pushing to new highs. And I think that is very, very exciting. IT is important because it's the second highest weightage after banks. Because you need something to pull this market up. You need a heavy lifter. And I personally think large cap IT is a space I find very interesting.
So, Atul, to go back to your favorite line, right? The trend is your friend until it bends. Leave us with what you're seeing on the biggest trends of 2024. Now, and these stocks have already cooled off quite a bit from the highs, right? So capital goods, industrials, your ABB, Siemens, defense, railways. Where all have the trends now broken down in these high flyers? And where do you think there's still a scope that, maybe you buy the dip and the trend resumes?
Yeah, I mean, two sectors you spoke about which were darlings last year, defense and railways, okay? Very similar in the PSU basket. You'll find that, yes, both got hammered. Post-election, there was a bit of loss of confidence in PSUs, but you'll find a lot of defense stocks have come back. They are nudging, they are pushing back, but railways haven't. So what you're seeing is very, very divergent trends that are playing out even among sectors and themes. Some themes that have continued to do well, things like hotels, continue to do well. In spite of the fall, they continue to make new highs. So I feel that there are going to be some themes and some sectors, but coming back to, the larger thing, what I was telling Prashant, that I also favor large caps. I also have a more bias towards IT, And there are going to be a lot of plays. Not that small and mid caps are not going to do bad, but there are going to be plays. And I feel that these quarterly numbers are going to actually be very divergent for many companies. Index-wise, it may look, as I said, like yesterday, optically it looked all is well. But inside, there was a lot of damage. So I do feel that with this quarterly numbers, I think the market's going to get a little more bifurcated as to where the delivery of numbers happens. Well, they will all make new highs. Maybe the index doesn't. And wherever, so you will find a market where there will be number of 52 weeks high and 52 weeks low on the same day. And the index will be where it is, telling you that the market will be more divergent.
Absolutely, which is why I think we've been hearing this line that this is a year for the stock picker. It's probably not a broad brush stroke. You touch anything and it
As long as you pick the right stocks.
As long as you pick the right stocks. Absolutely. Thank you so much and wish you all the very best for 2025.
Thanks a lot. Thanks,
Look forward to more conversations, particularly as we get through this very exciting month of January. So catch you once the inauguration is done.
Thanks.
All right. With that, let's move to our next guest. And before we do that, just a quick update on the market as well. So it's a 80-point dip now on the Nifty. Nifty and Bank Nifty are in step. Both are down about 0.3%. And the mid-cap index is not too bad this morning. It's down 0.25%. So that's the situation as of now. Let's now move on and get the CLSA view on the Indian market in 2025. We have Vikash Kumar Jain joining in. Vikash, great to have you with us. Greetings of 2025. Wish you a very happy new year. So let's just take forward the conversation that we were having now. The thing is, as we've entered this year, there are too many moving parts, from the US economy to yields to dollar to a slowdown in earnings. Let me start with the last one first, because that's the India controllable, right? How optimistic are you about the second half earnings revival?
Well, I think there's always many moving parts when you start the year, and that's why what we do at the start of the year is we come out with a typical report, which is a very well-read report by our clients. It's called Themes for the Year, and this time we have 25 themes for 2025. And we discuss a lot of what you mentioned. Earnings, see, more than what I feel, I think it's also trying to understand where expectations are, where consensus is. Firstly, we at CLSA, we are about 2 to 4% below consensus as we start the year. And more importantly, when I look at just our numbers and certain key drivers that moves the earnings, that's moves the big stocks that determine the overall Nifty earnings, there is an assumption of normalization happening rather quickly in terms of growth in FY26. For example, things like credit growth. We are right now sub 11% credit growth. Broadly looking at the numbers that our team has baked in, somewhere closer to 12 to 13% is being assumed for FY26. Similarly, for commodity prices and profitability, we are assuming that things will improve. So there is a recovery that is baked into our numbers. And, our numbers are a little below consensus. So that maybe consensus baking in a little bit more of the recovery. Now, that is just normalization of growth. Now, the process of normalization, if it is a little slower than after the weak GDP number that we saw in the second quarter, then there is obviously risk to earnings in FY26. If you remember the last quarter, we saw pretty big downgrades in earnings. So, further downgrades can be a bit problematic in terms of expectations of Nifty returns.
You're at 12 to 13% for FY25, Vikash, if I got that right, correct?
That is, we are at 12 to 13% of credit growth. The earnings number that consensus is baking in for FY26 is Nifty earnings growth is about 16%. We'd be slightly lower than that.
Okay. Vikash, hi, morning. Prashant here. So what I'm hearing is caution. So give us a directional view. Put it out there. What is your best sense? Lots of things in the mix, but you got to take a stand. So what's your sense?
No, absolutely. I think that's what we have done. So I'll tell you, India's expensive valuations is what is being talked about by everybody. What we brought out this time, looking at the start of this year, is I am actually quite worried about the fact that Indian bonds, as compared to where the parity should be versus, say, US bonds, are looking more expensive. And Indian currency is looking more expensive. And both of that is what sets up, and particularly in the next 4 or 5 weeks where macro is going to be very important and big, that could be a little bit of a problem. Let me explain that. So Last year, we did not have any cuts from RBI, but Indian bond yields fell by 50 bips. In the US, Fed had several cuts, but US bond yields settled up by 80 bips. So Indian bond yields effectively outperformed by 130 bips during 2024. Currently, the differential between US and Indian bond yields, 10-year bond yields, is down to just close to 2%, a little over 2 percentage points or so. Now, to a naked eye, of course, that's one of the lowest we've seen in the last 18 years, but I'm less bothered about it because what I show in my report that this is something which tracks very closely with what is the forward market currency depreciation expectation. And that is more like 2.7%, 2.8% or so. So everything kept together, there is a chance, if US yields do not do anything, then Indian yields need to go up by almost 50 bips for us to get to that parity. Now, if we imagine that happening, and even if we assume that the bond and equity valuation differential remains at the bullish end, that is the max differential for earnings yield versus bond yield, and we go from 6.75 to 7.25% bond yield, then, we're struggling to get anything more than 2-3% return on the market, So I would say it's going to be tough to, and that too in the bull case, if there is a 50 bips move in bond yields. So we need bond yields to not go much higher, and also at the same point of time, expect that equity and bond differential stays very high, and we do not see earnings cut. I think that's a lot of things which are uncertain, and that's why I would say that not gunning for big returns, single-digit returns will be, if we scrape through with that, we'll be very happy with that. So there's going to be a period where things will go much cheaper, and then we can come back to hope for an up move. But net, don't think we're going to end with a very high number versus where we started this year.
Okay, all right. Hi, Vikas. Good morning. Good to see you in. You're sounding a little bit cautious, or little bit would be an understatement. Worst case scenario, what do you think in terms of a downside for the Indian markets? We're 10% off the peak. How much more downside?
So let's not even take worst case. If you were to say that because of concerns of near-term growth, our valuations kind of normalize at 6.75% yield and assume that yields do not rise, which is, going to be difficult because that will mean US yields have to fall. Then even at that, just getting back to normalized differential versus bonds, we're looking at end of the year Nifty fair value at that scenario at 23,000. So even under that scenario, there could be downside for the market. So not really gunning. I think, we've had a great run. This could be that year of consolidation following which started in October. That might very well continue. I would say if it's a very orderly kind of a correction and we scrape through with earnings catching up and valuations becoming more palatable, that's the best scenario one can imagine for the market.
Because those in it for the long term hold on and kind of hope to ride through 25 and look forward. I mean, that's the way for long term investors. But those more tactically oriented, are there anything things to do to protect the gains you've made, where you think we could see damage, take advantage of anything out there?
So I would say that most likely sometime during this year, maybe in the first half, we end up having a correction, and that could set us up for a great entry point for a lot of people, even the long-term guys, and even the ones who want to benefit on the long side once that period is done. See, first half is going to be very, very macro heavy. When Trump comes in, he's obviously not very predictable. What all does he do? What impact that has on the dollar? What impact that has on currency? Plus, we have our own,
Vikas, have you modeled that when you say correction in the first half? I mean, is there any way to say what are we looking at? We're at 23,600 or so right now.
Thankfully, I don't have to do that difficult a job of predicting Nifty every month. But so that's why we typically take a 12-month view. So that's something which I think a technician, maybe our colleague Lawrence, can do a much better job with. But
so what is he saying? Is he in agreement with you? We get a first half swoon?
I think he's obviously saying that the charts are not looking that great for India. I think that's something which he's been maintaining. I'm sure you guys talk to him more often. So he'll be the right one to speak about it.
So possible 7-10% kind of a that would typically qualify as a correction. I mean, if it's
we already had a 10% correction, Shant. So we actually called for it around October, where our India Bull Bear Index, the sentiment gauge gave us a signal around end September that this is at an extreme bullish point, and we called for that.
But you're saying from here you get a bit of a correction, right? H1.
See, I am saying that because of the macro setup. I am saying that,
I'm just saying, I'm just confirming. And so then right. From here, what do you see? You've already seen 10, another, 5-7%?
So,
and then that's the entry point?
So if you see, we are at about 19.5 kind of a PE right now. If you were to go down another 10% or so, then that would take you to very close to where the mean reversion should be to go to historical average valuations. And given the way India is positioned over the slightly longer term, which looks much better than most other economies, if you get the market near historical average valuations for a multi-year period, that's a great entry point.
Vikas, just to finally complete the picture, I just want to put up that chart that we had on with the underweights and overweights that CLSA has, just sector positioning. They're underweight on a lot of things, IT, discretionaries, industrials, and even healthcare. The overweights are only commodities and insurance. So Vikas, as you sign off, commodities, and obviously the market took note of your call specifically on Reliance Industries, which came out earlier this week. Just leave us with some broad setup in terms of hiding places, because you sort of outlined the underweight sectors. On commodities, is it just oil and gas, or in general, are you expecting metals to also move up? Just leave us with the explanation behind that construct.
In fact, you missed one sector. Our biggest overweight is actually staples. So we run an India-focused portfolio, and for the last 4 years, I've tended to completely avoid staples. And this time, at the start of the year, we've actually made staples our biggest overweight, cut our overweight in banks to just above neutral. And commodities, we have 4 names. We have metals as well, and oil and gas names as well. So staples, I believe that that's really the big sector call, which we have taken very anti-consensus. The kind of underspend that we have seen on government capex, both at the state level and the central level, I think that is also maybe hinting us on government's changing priorities. If that happens, the investment and the capex-linked stocks are already overexcited and at elevated valuations. But if priorities change to more welfare, affordable consumption side of things, then that's the sector which is, pretty beaten down because it's not done much for a lot of time. That's why we believe that the realities of coalition government and the hints that we have got from recent state elections, plus the good rainfall that we've seen and the good sowing that we've seen, maybe just bring back that affordable consumption to to kind of life. And within staples, we like the food-related companies more.
All right. Vikash, great chat. And, let's book you for right after the 20th of January. Because I think that'll be, we'll see. Reuters says over 20 executive orders on day one. And then we'll take it from there.
He's going to hit the road running, and that's why it's going to be very macro heavy.
Absolutely. Thank you very much. It's a pleasure, and speak to you soon again. Look forward to our next one. We'll take a quick commercial break here. We have the management of Signature Global to talk about the third quarter business update. So, real estate trends out of Gurgaon. We had one management from there in the morning, Ashiana. The second one, Rajat Katuria of Signature Global. Stay with us.
Welcome back. Well, let's focus on Signature Global. That's the next management on the show. The company has achieved the best ever 9-month pre-sales of around 8,670 crore rupees. To discuss this, demand trends, debt reduction, and also a word on the Gurgaon market, well, we're joined by Mr. Rajat Katuria, the CEO at Signature Global. Hi, Rajat. Good morning. Happy New Year to you, your family, entire team as well. 2025 has started off on a good note for you because of these numbers that we've got. Now, a couple of questions on the past quarter, the past 9 months, and what's the way ahead. Earlier, you were talking about pre-sales of close to around 10,000 crores. Well, that's well and truly on. Give us a revised estimate. You can't keep it hanging in the balance now. You'll have to deliver more than that. So how much better can you do? And on collections, which was lagging, it was at around 3,200 crores. You had a target of close to around 6,000 crores. Both are achievable?
So thanks for inviting us to your show and many, wishing you two a very great year ahead. So, see, the core of our strategy has been to do mid-income housing. We want to be one of the leading or a very relevant player in the Gurgaon and the NCR market. In line of this strategy, we've been doing several new launches. We've done few good ones during this 9-month period as well and are reaping the benefits of the same. If you look at our performance through this 9-month span, every quarter we are doing a steady 2.5 to 3,000 odd crores of sales, which is because, we are able to create supply. So, supply creations leading to kind of demand creation is the trend which we've been witnessing. In terms of pricing, Gurgaon did see a bit of a steep rise over the last couple of years, but the price at which we've sold during these 9 months on an average is about 12,500 rupees a square foot. So that's also kind of, stabilizing at that level. We feel that there could be more inflation-linked kind of price rise from this point in time. So it's a good, healthy situation for the business where, the price movement is not very sharp. We have a good land position in the company, and we intend to continue with the strategy of doing more and more supply. And, since these are at very select locations, we expect, demand to continue to be moving in the right direction. In terms of our guidance, as of now, we are maintaining those numbers while we seem very close to the pre-sales target and still a bit of work to do on the collection side. But we are, as of now, maintaining our guidance for the full year.
Okay, all right. So pre-sales at 10,000 crores, collections at 6,000 crores, holding on to that guidance. Got it. A quick word on this Gurgaon market. Yesterday we had Knight Frank. This morning we had Ashiana Housing as well. The indications are that demand is plateauing out. What's your take? Do you believe the same?
So, see, you need to really break it down a little more. So, in terms of the current inventory and on a relative basis, there's no science to it. But let's say if one was to say that mid-income housing or prices on an average basis range between 2 to 3 crores. If you go up a little on the premium side, there is inventory available at 5 to 6 crores levels. And then, you can go above $1 million mark for luxury or, uber luxury products. So our firm belief is that, if you play the mid-income game, which is this average ticket size between 2 to 3 crores, and even for this 9-month span, our average inventory has been at about, 2.5 odd crores per apartment. This is a non-cyclical business. As much supply you create, there is much and more demand in the market. You just need to be consistent with the supply and be a kind of a company on which people have comfort and they're ready to trust you with their money, hard-earned money. So we feel there is much more to achieve in the mid-income housing segment.
No, I completely take that, Rajat. Hi, good morning, Prashant here. But you're saying you're not seeing what Ashiana told us. They specifically said for flats above the 4 crore price tag, there is a bit of a tapering off of demand that they're seeing. And it's not as if supply is overwhelmed, but they're seeing that. So you're saying that's not something you're seeing?
So Prashant, our strategy remains that, you do homes which are in the current, income context and, capital values context are affordable for people, while 2.5 crores is a good enough ticket size, but, since the income levels in the country have risen and Gurgaon sees a lot of, families who have incomes between 50 lakhs to 1 crore, per annum as a household income, there is a very strong demand if you can come up with units which are in the price range of 2 to 3 crores. And, we continue our focus in that segment while we are experimenting on other segments as well. But if anyone can do, this, ticket size product, I don't think quantum is going to be a challenge.
Okay, all right. Mr. Katuri, I will leave it on that note. Thank you very much for joining in and giving us some perspective on how you see business playing out over the next couple of months. Well, moving on now, the electric vehicle race in the passenger car segment is definitely heating up. Mahindra & Mahindra, Maruti, Hyundai, JSW MG Motors, as well as Tata Motors, all of them are gunning to come out with new EV models. And the Auto Expo is going to be, center of attention now over the next week. We have first Parikshit joining in with more details on what the announcements have been so far and what's expected ahead. Parikshit.
Well, the electric passenger car market is all set to heat up. The competition is going to pick up, and how in 2025. You've got the Mahindra Group firing the first salvo. They had announced prices for the starting variants of their new electric vehicles, the BE6 and the XEV9 at rupees 18.9 lakhs and rupees 21.9 lakhs. Now the company has announced prices for the top variants, which start at 26.9 lakh rupees and 30.5 lakh rupees respectively. Bookings start on the 14th of February. Deliveries will begin from early March onwards. Now, the Mahindra Group has packed in a lot of features usually found in top luxury cars. These cars have ADAS Level 2 Plus, which can detect animals and barricades on the road. You've got Auto Park with a remote control option, 360-degree camera, driver and occupant monitoring system to check driver fatigue, 16-speaker Harman Kardon Dolby Atmos sound system, and augmented reality heads-up display. So the company's strategy is to give you a power-packed vehicle, which is a luxury offering stacked against the likes of Mercedes, which has the EQA SUV at a starting price tag of 67 lakh rupees, the Audi Q8 e-tron at rupees 1 crore 14 lakhs, BMW iX1 electric SUV starting at rupees 67 lakhs ex-showroom. Mahindra has also tried to bring parity with top-selling internal combustion SUVs in the market. The B6 and the XEV9e are priced between 19 lakhs and 30.5 lakhs. Then you have the XUV 700 from the Mahindra stable, and that is priced between 14 lakh rupees to 26 lakhs. For Creta, it is between 11 lakhs and 20.2 lakh rupees for the top variant. The Maruti Vitara costs between 14 lakhs for the entry-level model and rupees 20 lakhs for the top variant. And 15 lakhs is the price for the entry-level Safari SUV, and the top model of the Safari costs rupees 25 lakhs. So you are seeing that there is now some level of parity with the pricing between EVs and ICE vehicles. Now, with several electric cars being launched in 2025, there is bound to be a price war. Here's how others will stack up. Hyundai is launching the electric Creta at the Auto Expo, which is expected to be priced between 20 lakhs and 30 lakhs for different variants. The driving range for the e-Creta will be over 450 kilometers in a single charge. The e-Vitara is a ground-up electric vehicle being launched by Maruti. It is also expected to be priced aggressively between 20 lakhs and 30 lakhs across variants, and it will give you a range of over 500 kilometers in a single charge. Then you've got the Sierra and Harrier EV, which will be showcased at the Auto Expo. They will be launched in FY26, and they too will be priced very aggressively, and the range will be over 500 kilometers. So you are seeing very aggressively priced vehicles and a high range being offered by all OEMs. Already in 2024, we saw a lot of competition in the e-car market. Some of the top existing players like the Curve EV, which costs between 18 lakhs and 22 lakhs. You had the Mahindra positioning itself in this segment. Then you also have the ZS EV, which costs between 19 lakhs and 25 lakhs. The eXUV from Mahindra, which costs in the range of 15.5 lakhs and 17.69 lakhs. You've got the Windsor EV, which is doing very well, and it costs between 13.4 lakhs and 15.4 lakhs. Tata Motors continues to lead the electric passenger car market with sales of over 61,496 cars in 2024 compared to 60,100 EVs in 2023. Tata Motors has hit the sweet spot in terms of pricing as it offers cars like the Altroz EV, the Tiago EV, the Nexon EV, the Punch EV, the Curve EV, all in the range of 10 lakhs and 22 lakhs. But their market share has declined in 2024 to 62% from 73% in 2023. Now, this is because of competition from companies like JSW MG Motor, Mahindra eXUV, BYD, all increasing sales and their presence even though on a low base. 2025 could definitely be a turning point in electric car adoption in the country.
Okay, all right. Got that, Parikshit. Thank you very much. That's, very, very helpful and sets the stage, sets the agenda. So let's take the conversation forward now. Horma Sorabji, editor, Autocar India, as well as Jay Kale, who tracks the auto space at Elara Capital, are both joining in. Gentlemen, good morning to both of you and season's greetings. Wish you a, Happy New Year. Hopefully it's been a great start. Horma, so there you go. I mean, Parikshit laid out some of that excitement, and we've seen the headlines come through already, right? With M&M announcing the bigger battery packs and the pricing, I mean, cars for going up to about 30 lakhs, so on and so forth. But I want to hear from you because there's so much anticipation about Maruti finally unveiling its, EV plans as well. What are you expecting specifically at the Auto Expo? What should we watch out for in this big EV passenger vehicle fight?
Yeah, well, I think coming to Maruti, number one player in the market, still hasn't got an EV, while others have. So clearly, I think a lot of anticipation from the e-Vitara, which they're planning to launch. I think what's important to know is that this is a global product. I think 50% of production is going to be going to Europe and back to Japan as well. This is a product that's been developed alongside with Toyota. So really, close collaboration with them on this. So I think you can expect, a product that is quite sorted. It will deliver on the parameters it's expected to. What we hear is they have faced some delays in getting it to market. It was supposed to be, I think in March, it might be now pushed to a...
Oopsie.
Uh-oh. I think we've just lost Hormaz there, so we'll... Hormaz, I think we'll... Yeah, we can hear you. Let's try it again. We lost you there in between. So if you could just repeat that point.
Sorry, is this better?
Yes.
Yeah. So I was just saying that the e-Vitara is a global product from Maruti Suzuki. It's a kind of collaboration with Toyota. You'll have the Toyota version coming. It's a lot of export potential for this product. In fact, 50% are for exports to Japan and Europe. And of course, in India as well. So this is really a global product that's coming out from Maruti Suzuki. But I think really the one that has really swept everyone on and given a proper electric shock to the competition and the market is what Mahindra have done with their BE6 and XEV9e. Clearly, as Parikshit said, in terms of spec, in terms of design, in terms of performance, it's just hit it out of the park. So that's what one is expecting, from Mahindra and a lot of other EVs coming. I mean, I foresee the EV market or the doubling in 2025 at the least. So I think you will see a penetration jump from what is around 2% to maybe even 4% going forward in 2025.
Okay, got it, Hormaz. Thanks a lot for that. Well, Jay, let's get you into the conversation then. What are you factoring in terms of number of units that Mahindra and Mahindra can sell from its EV basket? The pricing is very, very attractive. The market lead, I think last year, Tata sold roughly around 64,000 units. You can correct me on that number. So how much can Mahindra sell? On a monthly basis, can they do 5,000, 6,000 units, more than that?
Yeah, I mean, I think, good morning. And, like Hormaz said, I think they've really hit the ball out of the park, Mahindra, with their BEVs. I think very attractive pricing as well as, loaded with features. I think the design element is something to be talked about. It's definitely a head turner. And I think that, in BEVs, the problem is, of course, charging infrastructure, etc., has been an issue. But until and unless you give the customer that aspiration to own that vehicle, to kind of move away from the inconveniences of charging, I think EVs are not expected to pick up. And what Mahindra has done is given that customer that aspiration to own this kind of vehicle. So I think despite the inconveniences of charging and the issues that we see with the EVs, I think we are expecting a pretty good volumes from Mahindra BEVs going forward. I think they've recently announced the top-end variant pricing as well. The bookings are expected to open up from February. We hear of a pretty good response on ground for them. So definitely, in what we are factoring into our numbers is definitely more than the 5,000-6,000 that you mentioned per month basis on a sustainable basis in the next few months. They have a eventual capacity of around 10,000, which of course will be taken up further in FY27 as well. So yes, definitely, this is the year where you could see the EV penetration, which has been lagging quite a bit in the last few months. should kind of take off with incrementally so many launches coming in. I think the new model launches were pretty crucial for the EV segment to take off from here. And I think we are seeing that inflection point currently.
Okay, so perhaps higher EV penetration as the fight heats up. Hormaz, so if I were to ask you about the top 3 automakers that you'll watch out for that will start winning this domestic EV fight, which would those companies be?
I think definitely Mahindra, has got a lot of, let's say, interest. It's, I think, as Jai was saying, that people will kind of, forget about the slight inconveniences of the charging infra, which still remains a big issue. And fundamentally, it's home charging, not so much the public charging, because home charging is really where, people want to charge their vehicles. That's where the convenience is. But I think, people are going to kind of, let's say, looking at the design of something like the BE6, people are just going like, wow, and they want to have it irrespective of what the powertrain is. Pricing is also very, very good. So I think, it's looking really good for Mahindra. I would say that they're on a very, very strong wicket with their 2 products. Again, it has to hit the market. They have to make sure that they are reliable. Software glitches, which is quite common, even in Mahindra vehicles, they need to sort that out. They've got a lot of tech in there. They've got a full new Ethernet-based, electronic architecture. So it's very powerful, very sophisticated, but at the same time, it needs to be stable and sorted out. So I think that's what they'll be working on. I think Maruti Suzuki, just by their sheer size and their sheer penetration of their network, they'll pick up some good numbers with the e-Vitara. Not sure what they're going to price it, but I don't think it will be super competitively, because I think what they are banking on is their global quality standards to kind of, let's say, appeal to customers over there. Same with the Hyundai Creta. Creta itself is the best-selling SUV in its category today. It's about second or third best-selling car in the market period. So when you get an electric version of that, you will automatically have, substantial numbers. You can't rule out Tata Motors, but I think Tata Motors will be under pressure for EV market share this year. They've dropped, as we've seen, to 62%. They've got the Harrier coming out, and they've got even the Sierra. But I think, they will face some stiff competition in 2025 for sure, which is turning out to be the year of the EV.
Absolutely. Got that, Hormaz. Thanks very much. Jay, very quickly, what are your top buys in autos right now, in four-wheelers?
Yes, in four-wheelers, it's of course, you have Mahindra and Maruti are the top buys in four-wheelers, and in two-wheelers, it's TVS and Bajaj.
Okay. All right, gentlemen. Got it. Thank you very much for stopping by for that quick chat on the battle of the electric SUVs, should we say, or not just SUVs, the battle of the electric cars in the Indian market. Let's take a very quick break. Come back on the other side. We'll have Manisha Gupta joining in, and we'll get you more on the commodities markets.
वोटर टर्नआउट इंक्रीज हो जाता है 5 बजे के बाद। ये काफ़ी एक विषय पब्लिक में रहा, जनरल इलेक्शन के दौरान भी, उसके बाद भी। कैसे 5 बजे के बाद बढ़ सकता है, कहाँ बढ़ गया, कौन सी 5 बजे से 10 बजे तक के बीच में कतारों में, लाइनों में लोग खड़े हुए थे, हमें वीडियो दिखाइए। इस तरीके के प्रश्न पूछे गए, जिसके उत्तर मैं आज देना चाहता हूँ बिफोर गोइंग टू डेली इलेक्शन। ऑल्सो नेसेसरी, बिकॉज द डाउट्स गेट्स रिमूव्ड, यू कैन आस्क मी फर्दर क्वेश्चंस इफ यू वांट, and these questions do not come again election after election. वोटर्स में मिसमैच हो गया, जितने वोट पड़े थे वो बढ़ा दिए गए। पहली बात तो ये था वोटर टर्नआउट में, चलिए बढ़ा दिए। उसके बाद काउंटिंग में मिसमैच हो गया, कहीं कम गिन लिए, कहीं ज़्यादा गिन लिए, ये भी मुद्दे उठे। काउंटिंग को स्लो डाउन कर दिया गया। अभी एक नया मुद्दा उठा है कि हमने कोई रूल चेंज कर दिए हैं जिससे बहुत बड़ी ट्रांसपेरेंसी खत्म हो गई है। सो ऑल दीज क्वेश्चंस आर एक्चुअली, अगर एक बहुत बड़ी पिक्चर आपको मैं दिखाऊं तो 10.5 लाख बूथ हैं कंट्री में। हर बूथ पर 4 से 5 पोलिंग ऑफिशियल्स होते हैं, तो उनका नंबर हो गया 10.5 × 4 भी कर लें तो करीब 45-50 लाख लोग हैं। एक्चुअली राइट टू क्वेश्चन is inbuilt in democracy. It's an inherent right. We respect this. We respect this right. We feel that क्वेश्चन करना और उसका जवाब देना हमारी जिम्मेदारी है. तो आज इन सभी सवालों की पूरी इज्जत रखते हुए हम इनका जवाब देंगे वन बाय वन. बिफोर गिविंग यू आंसर, एक पूरी पिक्चर दिखाता हूं आपको. ये स्लाइड देखिए और इसको अपने मानस में थोड़ा बसाइए. अभी अनुज ने कहा कि पिछले 2020 से 30 स्टेट्स के इलेक्शन हुए हैं. 15 स्टेट्स में डिफरेंट पार्टीज आर द बिगेस्ट पार्टीज. दिस इज द ब्यूटी ऑफ इंडियन इलेक्शंस एंड द डेमोक्रेसी. आप देखिए 2020 से स्टेट बाय स्टेट हमने दिखाया. दिस वी आर पुटिंग ऑन सोशल मीडिया. जैसे मैं आपसे बात कर रहा हूं तो आपके ग्रुप में ही आ जाएगा.
Welcome back. So the equity market's actually quite okay. Mid-caps have recovered. Let's find out what's happening in the commodity universe. We have Manisha with us in the studios now. Manisha, so what's catching your attention?
Well, the commodity markets are also okay. Thank you for asking. But copper really seems to be doing quite well. If you look at the overnight markets, well, we've gained nearly 2% within that. In 2025 so far, as you can see, copper really seems to be outperforming the overall metal space with 7% of gains. And in 2024, we saw the prices gain up by 5.5%. So it has been good going for copper. The last year it wasn't the best performer, but this year it definitely is determined to be the better one. And we've seen that in way of prices as well. So from a 5-month lows that we saw in December 2024, we have seen a smart rebound come in for prices. And we're trading at a 3-week highs at this point in time. Actually, in the last quarter of 2024, the copper prices declined by 10%. And that really seems to be reversing all of that at this point in time. Well, the strength clearly comes in from the China stimulus expectations, and more projected, more inclined ones is what the street is anticipating right now. Apart from that, the rapid adoption of EVs, I mean, you were having that discussion right now, those numbers look good as well. And the renewable energy numbers also are starting to stand up as we start 2025, and the projections therein, that sentiment also seems to be supporting copper. The refined production numbers also are expected to be on the weaker side because of the lower TRC numbers that we've seen come in for this quarter. From $35 a ton in the last quarter of 2024, it's $25 for the first quarter of 2025. So that tells you that the refined production perhaps could be on the lower side. Markets also are looking at and trading at a premium. If you look at the China copper premium, that stands at $70 a ton right now. It was $43 2 months ago. So markets are looking at Chinese coming back to buy copper as well. The UBS report that came in yesterday has been quite interesting. They expect the copper demand growth for 2025 globally to gain up by 3.2%. I mean, that's your cue and the reason that you saw copper prices gain up quite strongly. When you look at 2025, we have more banks and brokerages now upping their forecast for copper. UBS, for one, in their yesterday's report has come out with $11,000 a ton of an expectation. And you have 10,000 to 10,400 coming in from JP Morgan, Goldman Sachs and Citi. And then around 10,000 is what you have the other banks and brokerages also putting it out. So the likes of ANZ's talked about 10,000, Bank of America and ING are talking about, again, 10,000, 9,500 to 10,000. So we are looking at higher numbers here. Currently, the copper prices are trading at 8,800. So from those kind of levels, as you can see, it's a lot of bullishness that 2025 could show you for this metal.
Okay, all right. So it's all about copper. Manisha, thank you very much for all the highlights over there. We need to take a break. But on the other side, our special segment, Market Masters. Today, Lata is in conversation with Anish Tawakli of ICICI Prudential Mutual Fund to talk about the market's way forward once we get through the Donald Trump swearing-in ceremony later this month.
Slide by slide, it is being transmitted. 20, 21, 22, 23, 24, हर जगह में different parties are getting maximum seats. This is one reflection how fair, how deep-rooted the fairness of the Indian elections are. The Indian voter is extremely aware, conscious, he understands everything. चुनाव की तारीख से 7 या 8 दिन पहले ईवीएम्स को कमीशन किया जाता है, उसमें सिंबल डाले जाते हैं, वो एजेंट के सामने डाले जाते हैं. उसके बाद में उसको मॉकपोल करने की छूट होती है. वो उसी दिन मॉकपोल करके देख लें सिंबल ठीक पड़ गए, उसी दिन उसमें नई बैटरी डाली जाती है, उसी दिन वो बैटरी सबके सामने में सील होती है. उसके बाद उसको उठा के ईवीएम्स को स्ट्रांग रूम में जमा किया जाता है, उन्हीं के सामने सील लगाई जाती है. उसके बाद में जिस दिन पोलिंग डे होगा उस दिन सील उनके सामने तोड़ी जाती है एंड दे आर अलाउड टू रिमेन एट द स्ट्रांग रूम। पोलिंग डे में डिस्ट्रीब्यूशन के बाद पोलिंग स्टेशन पे सबसे पहले कहा जाता है आपको ये वाली सीरियल नंबर की पोलिंग ईवीएम दी गई थी, प्लीज चेक वही है, आपने सील लगाई थी, प्लीज चेक वही है, उस दिन आपने मॉक पोल किया था, आज फिर कर लीजिए, सुबह सबसे पहले फिर मॉक पोल कर लीजिए। पोलिंग एजेंट इज इनसाइड द पोलिंग स्टेशन। शाम को वो दिन भर रिकॉर्ड रखते हैं कौन आया कौन गया। शाम को पोल खत्म होने से पहले, पोलिंग स्टेशन छोड़ने से पहले फॉर्म 17C अकाउंट ऑफ वोट्स, किसमें कितने वोट पड़े इसकी संख्या उनको दे दी जाती है। आई विल कवर दिस पॉइंट अगेन व्हेन आई कम टू VTR। ईवीएम्स को वापस स्टोर रूम में लाया गया, फिर उनके सामने ताला लगाया गया, फिर काउंटिंग के दिन आए, फिर कहा भाई काउंटिंग में फिर देख लो वही मशीन है, फिर सील चेक कर लो, उसके बाद में फॉर्म 17C से मिला लो। अगर 17C से काउंट मिलेगा तभी काउंटिंग प्रोसीड करेगी।
Well, the Nifty has officially, or rather arithmetically, entered correction terrain. It is now over 10%, 10.1% down from its all-time high hit in September of 26,277. The stark reasons are clearly global and are for all to see. Dollar index over 109. The US 10-year yield is pretty close to 4.7, 4.68 today. And Donald Trump hasn't even been sworn in yet. So how do we navigate the next few months and even all of 2025? I have with me Anish Tawakle, Fund Manager Equities at ICICI Prudential Fund. His blue chip fund has returned 27% in the past year and 15.5% since inception, while his manufacturing fund has returned over 35% in the past year and 22% since inception. Anish, good morning and thank you very much indeed for dropping into our studio.
Morning, Lata. Pleasure being here.
Well, we have seen this Trump trade already getting played out. Do you think that we will see worse? 4.7 on the US 10-year and 109 on dollar. What should we be prepared for?
So the interesting thing is the trade is playing out differently in the US equity markets and in the bond markets, right? That's the stark contrast. The US equity markets have done very well, but bond yields have gone up. And I think the bond yields, bond markets are right to be worried because if you look at the US economy right now, unemployment is very low, which tells you that the economy is already operating at full capacity. So at this point in time, right, the right fiscal strategy would be to raise taxes, not cut taxes, right? So fiscal deficit is high, starting bond debt levels are high. And if you're going to cut taxes in a booming economy, the bond markets are right to be worried.
Yeah, you will get inflation.
Yeah, you will get inflation and will be priced in by the bond markets, or the Fed will have to step in and say we can't cut rates, we might even have to hike rates. And I think the Fed has already expressed concerns about the fiscal
the minutes
stance.
said that.
Minutes said that, right? So I think how the equity markets react to the bond yields rising is something that we need to see. I would expect at some point the equity markets will take note of that. Okay. Having said that, it's not that much of a risk for the Indian economy, right? I'm distinguishing between the economy and the markets because there is a divergence that can persist for a while.
Yes, that's very important, of course, that Indian financial markets may have an issue with dollars going away, but the economy is in a different piece. But let me just finish the the US argument a bit and then come to the Indian earnings story as well. Do you therefore think that we can be in for further rallies in the dollar and increases in yields? Or do you think most is priced in? I mean, people are pretty scared about Jan 20th and thereafter. But you think that this trade can go on?
No, I would be of the view that the dollar has probably peaked, right? I don't think, I mean, if bond yields are rising, because markets are worried about the sustainability of the fiscal deficit. That's not an environment where the dollar should appreciate. right? And that's another disconnect between the currency markets and the bond markets, right? See, if interest rates are going up because your economy is strong, it's normal for your currency to appreciate, but that's not what's happening here, right? The economy was already strong. The interest rates, the bond yields are not moving up because the economy is strong. Bond yields are moving up because the markets are worried about your ability to finance your deficits. That's not an environment where I would expect the dollar to appreciate further.
And the equity markets to continue with this kind of exuberance. Yeah, I mean, that is the big worry. So you're in the camp which believes that a lot of the bad news is, or a lot of the Trump trade is probably priced in. You know, we get both these views. Some saying that, you know, he can still drive things further. Whatever, 110 on the dollar. There was one person speaking of 112 as well. But many of them saying that, you know, it can't get worse than this. But, you know, to come back to India, do you think that the earnings story is under threat? Because we saw the second quarter see a lot of earnings revision. And the biggest blow, of course, was GDP coming in at 5.4. Now, do you think that earnings tension is behind us?
So let me distinguish between the current sort of soft patch in the economy and a little bit of the outlook, right? I don't think there's any fundamental problem with the economy. I do think the economy can regain momentum. There is no specific imbalance that threatens the outlook for the economy. And if it doesn't pick up on its own, there is room for monetary support clearly, right? So we are not taking the view that the economic slowdown should persist. We do think the economy should regain momentum. And earnings should therefore, which does not mean this quarter will be good, but we do expect that earnings momentum rebuilds, particularly if we get support, monetary support from the
do you see earnings growth at around 15% coming back in FY26 itself? Or I'm looking at Nifty EPS, of course, your own set of stocks could be different.
See, a little bit, I mean, it could be, I mean, it could be, it should be in that range,
Okay, so now let's come to sectors. Where would you place your bets? Do you get, everybody who comes here are speaking that we prefer large cap over small cap. Everyone prefers banks because they have been the dog stocks, you know, in the year gone by. Bank Nifty gave hardly, what, 4%? Whereas at least Nifty returned 10%. So where would your preference be?
So clearly, we have been amongst the first to say that small cap is an area of concern. And that continues to be the case. The fact that there are so many promoters diluting, etc., tells us that reinforces our view that that segment is does not offer a good risk-return trade-off. Now, if you look at sectorally, if you believe, as we do, that the economy will regain momentum, then we would be in the domestic cyclical space, right? I mean, which means stuff like cement, automobiles, capital goods, and also banks. Although there I would be careful amongst, I do think that...
Which banks?
I would go with the larger banks, and I would be careful of unsecured lending exposures in general, right? We are fairly cautious on that.
Okay.
So in the lending space, we are very cautious on the unsecured lending space.
Okay. So would you therefore prefer insurance then?
Insurance we have, and if you look at our business cycle fund, we are overweight insurance. That has been impacted a little bit by the regulatory uncertainties, but I think the outlook for the sector is, for demand is good.
For the industry itself cannot be questioned. Okay. Now, what about consumption? Because, you know, we did see a big dip in consumption in the second quarter, and you know, the GDP numbers also showed, but the advanced GDP numbers are showing an improvement in consumption. Is it staples or is it consumer discretionaries? You know, gold companies, hotel companies, airline companies. Which side? Which part of the K, if you please?
So actually, my issue with FMCG companies, right, is not that the economy is weak. See, the FMCG companies are reporting 0 to 2% growth.
Yes.
Right?
Some of them, yeah.
Now, reality is, even if the GDP went up from 5.5 to 7.5, it's not as it's not that there's a 0 to 2 is going to go to 7.
Yes.
Right? So I don't think the problem with the FMCG companies is the macroeconomy.
Okay.
The problem, in my view, with the FMCG companies is they are over-earning. I think their margins are too high, and therefore they have
to come to terms with the reality.
They have to come to terms with the reality. So I think there need to be earnings downgrades in the FMCG sector as these companies take some margin correction, invest more in the business. They're good companies.
Yes.
This is exactly what happened if you go back to the early 2000s. The same thing had happened. Margins were very high.
Yes.
Volume growth had collapsed. And it took some time before these companies finally accepted that, look, we will
corrected their business strategy.
Corrected their business strategy. So I don't ascribe the FMCG sector's challenges to the macroeconomic situation. Okay. I think it's more internal. Yeah.
But what about discretionaries? You still would be very...
So discretionary should pick up if the economy regains momentum. Right?
So your top sectors would be construction, cement?
Cement, capital goods, and automobiles.
Okay, you're not very positive on IT?
So IT, I think the dollar strength is done. And look, I mean, what I've been wondering with the IT narrative is that the US economy is already strong, right? It's not as the US economy is weak.
Yes.
So I'm wondering...
So how much more can you get?
How many more can you get? And also, I mean, how much of the the Indian IT sector, right, is not just the Indian listed companies. The captives are also part of the Indian IT sector.
GCCs.
GCCs are part of the Indian IT sector. So it's not as the Indian IT sector overall has been doing badly. The GCCs are growing
Probably
really,
the listed are losing out.
I don't know what's happening, but that could be one of the possible explanations.
Okay. No, fair point.
So I don't want to bet on a big improvement in the Indian IT trajectory based on any...
Given the fact that you think that the US economy is already strong. Yeah. What about, more generally the return that you're expecting? Should we be prepared for lower returns in 2025? Or last year, in spite of the correction, we got 10% at least.
So the last few returns have been phenomenal, right? And typically when that happens, you have front-loaded some of the returns.
Some of this year's gains.
So you should be prepared for a little more moderate expectations going forward. But I'd never advise people to enter equities for a one-year view, right? You have to take, in my view, at least a 3-year view. And if over a 3-year period, the economy does well, which is what we would expect, returns in the large cap space should be healthy. I would still worry about small and mid.
Do you think this is a time, or would you advise, of course you are the equity fund manager, but is it better to be in multi-asset at this point in time?
That is our view. I mean, we do think like asset allocation products are good at this point in time because you leave the decision to
the fund manager, someone who knows better, yes.
Who does that for a living. Yeah.
Okay, so I mean, considering that gold also gave very good returns last year. So where do you see the red flags? Which would be your avoid sectors?
So the avoid sectors, I would still say FMCG is a clear avoid for me. I'm also fairly concerned about metals, particularly ferrous, because I don't think China demand is coming back. And China demand is half of the global demand.
Yes.
So if that half is shrinking, no matter whatever mathematical gymnastics you do with the rest of the demand, you don't get growth.
You don't get that kind of demand.
Yeah. And so if overall demand for metals is under pressure or negative, I'm fairly cautious on metals. IT, as I said, right, it's not that exciting for me, particularly after the dollar move up. So those would be the 3 that I would avoid. And consumer unsecured lending is a clear avoid for us. And it has been for a while.
Oh, yes, of course, of course. What are the red flags you see? Do you think there can be some financial accident because of the kind of geopolitics we are handling in? We are kind of staring at. I mean, one day Greenland, one day Gulf of Mexico should be Gulf of America, things like that. Is there chances of an overview?
If you look at it from a purely mathematically, right? Any country where the bond yields, the long-term bond yields, start exceeding the nominal growth rate of the economy is a fairly risky situation. And if you look at the US bond yield, it's 4.7 now. You look at the Fed's forecast for nominal GDP growth rate, it's 4.6 this year, 4.1 next year, right? So and I mean, US population doesn't grow that fast. Productivity, they're already at peak performance.
No, I take your point that
I think the US bond yields are clearly a source of
worry for the financial
markets, at least. And but having said that, in India, given that we have a solid foreign exchange reserve base, we can buffer ourselves from external volatility should that arise.
Okay, I'm being warned that I've exceeded my time. Very quickly, until now, when the FIIs moved out, you had the domestic money coming in. Are you confident that that stream will remain?
I never make any assumptions about flows. Okay, there is no good model for forecasting flows, and essentially, when you're betting on flows, you're betting on the greater fool theory. It's not a sensible investment strategy.
That's the best fund manager I can think of, someone who believes in earnings and not in flows.
I would not want to, I don't even spend any time trying to forecast flows. Zero.
This is absolutely the best advice you're giving us. Thank you very much, Anish Tawakli, for joining us. It's an excellent conversation we have had, wrapping up on Bazaar. On that note, Chartbusters coming up.
Share of chemical companies like Navin Fluorine SRF, who produce refrigerants, see a 10% plus jump as Equirus reports suggest that US gas distributors have increased prices of refrigerant gases.
Manappuram Finance shares gain after RBI lifts the loan sanctioning and dispersal restrictions on a subsidiary, Ashirwad Microfinance.
Bernstein initiates coverage on Swiggy with an outperform call and target of 635 rupees, factoring in the possibility that the company will be one of the leaders of India's convenience economy.
Share of Borosil Renewables jumps close to 5% after the company reported expansion of capacity by 50%, increasing manufacturing capacity by 500 tons per day. In fact, the management will be joining us in a few minutes from now to detail this particular expansion.
Anand Rathi Wealth up and about in today's trading session. The company has announced that the board will consider a bonus issue along with results on the 13th of January.
Hello and welcome to Chartbusters. I'm Nigel. With you, with me is Mangalam, and with you is both of us. And as you can see on the top of the screen, the headline index is in the red. That's the Nifty as well as the Nifty Bank. Your portfolio is not feeling so bad. That's because the mid-cap index is trading well in the cream. So select pockets of strength, Mangalam, out there. The bulls will take this.
The bulls will take this. And what's interesting is that the US markets are shut tonight, right?
Yeah.
So we will see a lot of activity in the mid and small cap space in India coming in from some of the domestic players, etc. as well. The good part is that, we are holding on to lower levels, so no further follow through coming in for a lot of people who would have gone short. So we'll keep an eye out on the market as we progress, because the second half, we have the Nifty weekly options expiry playing out as well. Last week was a bazooka on the way up, though the Nifty Bank currently at the low point of trade. Borosil Renewables, we spoke about that stock doing extremely well after the company announced a 50% capacity expansion plan for manufacturing of solar glass, taking the total manufacturing capacity of the company to 1,500 tons per day from 1,000 tons. Pradeep Kheruka, who's the executive chairman of Borosil Renewables, now joins in to discuss this in much more detail. Pradeep, you've explained this entire story to us multiple times in the past. So let's get the basics out after this plan has come about. The revenue potential of this increased capacity, if you could give us a sense of that. And secondly, what are the kind of margins, incremental utilization that you expect on this? And what's the glide path of improvement here?
Thank you. Okay, so answering the question of the revenue potential, obviously with a 50% growth, we would expect a 50% increase in revenue, more or less. The thing is that the last year and has been seeing a rather low revenue on the back of very, very strongly dumped prices, which have reduced the turnover for the selling price. So now, sorry. So, sorry. Yeah.
Go ahead.
Sorry. Yeah. So this is there's an issue of the price definitely improving. Now we might not perhaps be selling at the prices which are mentioned as the minimum import price. We haven't reached those prices as yet. We are still somewhere between the prices at which we were selling and the new price that might be coming up for imports. So yes, there would be an improvement in the top line based on that as well. Now I cannot postulate how much that will be, but
okay.
Yeah.
Got it. Hi, Mr. Kheruka, and always good to see you. And sir, this is Nigel on this side. And you were hinting at this expansion, right? You said you get some support from the government, the pricing will recover, and you're ready to add capacity as the need arises. So that's good news. Now let's get a couple of details out of the way. Your capacity, domestic capacity will go up by 50%. What is the capex that you have lined up for this? And if you could help us out with how you will fund it, break it up for us. Internal accruals, debt, equity, if any.
So first of all, I must express my gratitude to the government of India for having recognized the need for providing a level playing field to Indian industry and solar glass as well, very much. And this thing has really helped us to take these decisions with such rapidity. We must remember that the announcement came only on the 4th of December last month, and we've already made an announcement about this. We had sought to raise funds in our board meeting on the 18th of December. So we are not wasting any time going ahead. So far as the question of CapEx is concerned, our CapEx ideas are based on detailed prices which we had acquired about nearly more than 2 years ago. There may not have been too much of a change. It's about 675 crores that we're looking at as the CapEx for this 500-ton investment. And it looks good as of now.
Right. So how do you fund this? Is it debt? How much of that is from internal accruals? What is the kind of fundraise that you're looking at, if at all, to fund this CapEx?
Yeah. So it's early days yet. We've already gone in for a 700 crore fund infusion by means of a preferential allotment of shares.
Yes.
We decided on the 18th of December. From that, 375 has been earmarked for expansion. We have another 125 that has been earmarked for general corporate purpose. So we can see internal accruals. We can see that the money that we have raised, we might be able to spend some of that here. So that 125 is sort of in between.
Right. What we're trying to understand is that, if you could tell us when does this capacity come on stream? And if and when that capacity comes on stream, you know, would it be profit making immediately? Because currently the cycle is against you because of the dumping that is coming by. So we just wanted to understand that bit from you.
Well, we see the capacity coming on stream somewhere 18 to 21 months from now.
Got it.
And, so far as the question of being able to, you know, profit making, you see, profit is a difficult word for me in my 55 years of experience in business. It's a word I don't treat lightly. Yes, I can say that we expect that we should be achieving production, rated production fairly promptly, because we are going to be repeating a furnace that we already have that remains very efficient and very much state of the art. So repeating that, the costs also should be down because we are aware about all the exact, you know, the design of the furnace and the procurement of the necessary equipment to set it up. And so therefore, I think that this should be a fairly rapid investment and rapid results, hopefully.
What is the PBP that your model threw up when you decided upon this expansion?
You see, I have not shared that with the stock market yet. I've not shared.
Which is why we ask you.
I understand. Let's say that we are quite confident. Borosil has always followed a policy of reinvesting its profits in business, and we've done that consistently, which is why we grew from 1 gigawatt to 6.5 gigawatts in a matter of 5 years. You know, it was a very large expansion that we were able to take, and so I can only say that we are growth oriented. I think the nation needs more solar glass. We would have another 500 tons of space in our existing compound to grow. So once this is a little bit online, then we cannot rule out the possibility of another 500 tons. But I'm not talking about it as such. I'm just sort of lightly saying what's there in the head. But that's not a decision in any sense of the term.
Okay, all right. Very quickly, sir, before we let you go, you know, currently you're doing on the standalone basis around 250 to 300 crores very roughly of revenues. Given that your capacity is going to go up by 50%, fair to assume on a quarterly run rate, you'll do around 130 crores or thereabouts of additional revenue. And if I annualize that number, it should be in the vicinity of around 600 crores. Would that be fair to assume 600 crores of additional revenue that could come on stream once the capacity moves up?
Yes, I think we would be, as I said, we have a certain revenue and on a standalone basis, and we're going to be up by at least 50% on that and a little bit more compared to where we are. So
500-600 crores sounds good, right? I mean, because you'll be taking some price increases as well. I'm just going by the run rate. 500-600 crores of additional revenue should come on stream in the next 18 to 21 months. You'll start gradually ramping it up.
We can take that as a conjecture. The price, the revenue you're talking about is the quarterly revenue. So yes. Would be able to go beyond that. Yeah.
Okay, got it. And a final question: this additional 500 tons that you'll be putting on once this gets completed, obviously. At current reckoning, it will come at the same capex, 600-700 crores approximately?
No, we are only discussing 500 tons now.
Yes.
And the 500 tons is 675 crores that we have mentioned so far in our notification.
Yes.
We still need to fine tune that number. And the reason I fine tune that number is because we need to get current prices. Now, I cannot predict what the prices might be.
Got it.
Right.
Okay. Got it, sir.
Okay, we'll take that point. We'll, probably speak to you on another occasion when we talk about the incremental 500 capacity that you can do from your current existing facilities itself. The street believes that maybe it will be a lot lower in terms of capex than what you're, currently deploying for the increased capacity that you have. And as a result of which, it would mean a lot better when it comes to return on capital employed, etc. We haven't got that number from you yet, but if you would, before going, just give us that number, and then we'll probably, allow you to
I would not like to make any conjecture on that because that would be speculative. But I can say there's another little piece of information that I got yesterday was that a lot of capacity in China is on its way to being wound up. So and that goes across the board for the entire solar value chain, because they do realize that they have grossly overbuilt capacity for which there is no demand. And they're killing themselves also, while, of course, despite all the heavy subsidies that they're getting, they're still in very deep trouble. So this is based on a published report that I saw yesterday, a 17-page report, specifically on solar glass. So they'll be turning down capacities there as well. So that should give some relief to the prices, which we've been seeing has been insane.
Okay, all right. So thanks a lot for joining in. The government kept its word. They said they're looking into your plea and they gave some protection. And in turn, you kept to your promise as well. You said, give us some protection. We're ready to put on more capex. And you've announced that your capacity goes up by around 50% in the next 18 to 21 months. Thanks a lot for joining in. Well, time to slip into a short break. On the other side, we'll focus on the technicals. Sachi is waiting for us to help us out with a call on the Nifty and various stock calls.
Welcome back. You're watching us here on Chartbusters. Let's get in a market call coming in from Sachidanand Uttekar. Sachi, if you could give us a sense on the Nifty and the way it goes from here on, along with some of your stock calls as well.
Good morning, Mangalam. Good morning, Nigel. Clearly, yesterday we saw a very strong recovery from the intraday low, but the Nifty, is still waiting for a confirmatory close above that 200-day exponential moving average support. Even today, we have started, on a weak note. In fact, the high point of the day is also below that 200-day exponential moving average. So probably we may see some further slippages. If you look at the entire data set, it is clearly exhibiting that until unless we don't see the Nifty, trending above that 23,640 mark, we may not see incremental strength. But on the lower side, we may see it slipping towards 23,450, 500 kind of a zone. So I think it's better to avoid any long positions in Nifty as of now. The trigger on the higher side is awaited. 23,640 would be the level above which when one can start building aggressive long positions. When we look at stocks, what we are trying to target here is stocks which are showing turnaround and have been in a low top, low bottom sequence wherein some pattern reversals are confirmed. So the first stock on our radar has been Tata Elxsi. If you look at the overall structure, on the daily scale, it was trending lower. But yesterday, again, we saw a bullish hammer formation exhibiting near its multi-month support at 6,300. If you look at the 30-minute RSI, it was showing positive divergence, and plus yesterday as well as today we have seen some short covering data. So probably we may see a strong reversal play here unfolding. On the higher side, we are expecting that the stock will again trend towards its 50 DEMA resistance level, which is placed at 69.60. From a trading perspective, the target is placed at 67.80, and we are recommending building long positions in Tata Elxsi. The stop loss for the trade can be placed at 64.80 on a closing basis. The other stock which has shown some signs of incremental strength is M&M Financials. It was trending higher since a couple of trading sessions, but if you look at the daily structure, it looks like a classic triangle formation. The range was contracting, and probably the breakout at around 280, 285 zone could expand this particular trading range. So we are expecting a good short covering move here unfolding in M&M Financials, and that's why I recommended it to our clients as well. 272 should be the stop loss for the trade. On the higher side, we may see a swing towards 305, and eventually a pattern target is placed around 320, and that's why we are recommending building fresh long positions in M&M Financial Futures with a stop loss at 272.
But just one word, you're saying avoid long positions on the Nifty, and that's playing out because as we speak, the Nifty has suddenly taken a sharp dive. LNT has moved to the low point of the day. Support levels on the Nifty, what's the number?
Nigel, I think the first support was at around 23,560, and I think we may see further slip just towards 23,450. I think that is the point wherein some contra longs can be considered at least for the day. But from a strong reversal point of view, we need a confirmatory close above 23,640 from here on. So I think this slippages may continue. One can retain their short positions, but near to that 23,450 mark, I would recommend to book profits for the day.
All right, we take that point. Yesterday's low 23,495 thereabouts, and December 31st low 23,460. Important marks to keep an eye out on. 23,450 is an important support as per Sachidanand. We take a short break. In fact, before we do that, let's get you an idea for profit coming in from our colleagues at Money Control Pro. Nitin Agarwal is speaking about Zomato.
The company that I have chosen for today is Zomato, which is a platform company involved in food delivery and in quick commerce. Zomato has become a household name, especially in metro cities and in urban areas. Zomato has displayed a strong execution capabilities on its profitability while maintaining the growth across all its business segments. Its aggressive expansion strategy in quick commerce segment has started paying off, as is evident from the past 2 quarter result. Further, Zomato has enough dry powder, especially after the fundraise, to grow inorganically and organically. Due to the duopoly-like structure in the food delivery business, the management expects 20% YOY growth in GOV to sustain over the next few years. Further, the management has indicated that they want to add the largest stores for the quick commerce by making the upfront payment rather than partnering with the local partner. We expect the sustained delivery momentum to continue. Further, post the acquisition of the Paytm's insider business, the Zomato has launched its own district app, which is primarily focusing on movie ticketing and event ticketing, and this is expected to fuel the growth further. In terms of valuation, the company currently trades at around 51.7 times FY27 projected earnings, which we believe is still reasonable given the growth potential, and we advise investors to accumulate the stock despite a significant run-up that we have seen over the last 1 year.
All right, with that, we'll step into a short break, and as we do that, let's dive into Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, Nigel D'Souza interviewed Rohit Srivastava, who's the founder and market strategist at IndiaCharts.com, to understand why traders must avoid guaranteed return schemes. Listen in.
What are the legal as well as financial risks associated with participating in a so-called guaranteed return scheme?
So a guaranteed scheme is essentially telling you that you are going to get a fixed return from the market. Now, by definition, the market comes with risk, right? Every investment scheme that has been approved by either SEBI, if it's a mutual fund or a portfolio management scheme, has to tell you that equity investing comes with associated risks, and you really can't have guaranteed returns. So nobody is really permitted to give you a guaranteed return. So by itself, if you're being guaranteed a return, it's a scam. It's right there. Right. And there's then going to be no legal recourse because most probably he's not registered with any institution.
Correct.
And you can't really go after him once he runs away with your money.
Microsoft started as a tools company. We continue to be super passionate about our tooling. With GitHub, it's fantastic to see what's happening, right? We have now 17 million members of GitHub in India. It's the second largest community next to the United States. In fact, it's projected to be the largest. I guess I forget the year. I think 2028. Yeah, so I can't wait 3 years from now. 2028 is when the crossover will happen, where India will have more developers on GitHub. It's just exciting to see that. Now, we also have contributions from India to AI projects that are just second to the United States. And so it's fantastic to see the active involvement of the developer community out of India in making progress on all the open source projects on GitHub when it comes to AI. It just speaks to, again, the talent there is and the energy there is in this community. AI doesn't sit on its own, right? It requires the entire compute stack. And so we are building that out at a worldwide level. We have 60 plus regions. We have 300 plus data centers around the world. In India, we're excited about all the, the regions we have, right? We have Central India, South India, West India, and then we also have the capacity that we built up with Geo. So we have a lot of regional expansion happening, and I'm really...
Welcome back. Two stocks that are outperforming today, Navin Fluorine as well as SRF, both of them spiking up in trade. Yatin Mota joins us to help us out with why exactly these stocks are excited. Yatin, take it away.
Well, if you look at gas stocks, Navin Fluorine and SRF are buzzing in trade on the back of Equirus note, which says that in the US, we have seen supply disruptions with respect to refrigerant gases. Two varieties, R32 and R125, have seen price increases of over 200% in the spot market. What does this mean for Navin Fluorine and SRF is that since they are major exporters and manufacturers of R32 and R35, as well as R125, these are refrigerant gases which are used in air conditioners and refrigerators, wherein the demand and supply mismatch in the US has caused a big disruption. In fact, if you look at the Equirus note, they say that for every $1 price increase in R32, SRF EBITDA increases by over 260 crores, and the figure for Navin Fluorine is around 77 crores. Now, if you look at capacities also, SRF has a capacity of nearly 30,000 tons for R32, and nearly 9,000 tons capacity is with Navin Fluorine with respect to R32. So given the fact that US markets are witnessing price hikes of nearly $3 to $4 per kg, the stocks are buzzing. Obviously, the note also says that the impact of price hike since the entire capacity is contracted would be important to watch. And if the price sustains from here on, there could be a big impact on the EBITDA margins for Navin Fluorine in the next 3 to 4 quarters, and probably the reason why the stocks are buzzing in trade.
All right, we take that point. Big move on both as the prices of their key products have been increased in the US. But with that, we are out of time on this edition of Chartbusters. As we wrap up on this edition of Chartbusters, we're also counting down to the budget 2025. India is looking to seize the moment and establish itself as a global economic outlier. The upcoming budget, which will be the NDA government's first full budget after the win in 2024, the election victory, it will be key to unlocking of ambitions of millions of Indians. So tell us what you want from the budget by submitting your wish list to CNBC-TV18's budget box. Tune in to your budget headquarters, CNBC-TV18, for unparalleled insights and coverage on the budget day itself. That's the 1st of February.
Today to announce the single largest expansion we have ever done in India by putting $3 billion additional dollars to expand our Azure capacity. I had a chance to meet the Prime Minister Modi ji yesterday. It was fantastic. It was great just to listen to all his examples. Yeah, his vision around how he wants to drive through AI mission. But it's that combination of really the yojanas he has, the India stack, the entrepreneurial energy in this country, and the demographics, both on the consumer and the business side, that is all getting into a virtuous cycle. So that's why we feel fantastic about bringing core compute capability for the next generation AI.
There will be a recovery in earnings, but I think we will still not match the growth rates in earnings that we have seen over 22 and 23. So this year earnings growth will still be much lower than what we saw in the last 2 years. Large cap, the earnings disappointment has been largest. For example, if you look at banks this quarter, they'll probably report 0 to 2% YOY growth only, right? So I think we will have to probably become a bit more focused on stock picking, which are the companies where earnings are more resilient, and that is where you will see probably P's holding on. Other pockets, you definitely have a risk of P derating.
I think what's happening is obviously, India's valuations have gone up ahead of all other emerging markets, and some people think it's a good idea to kind of lock in some gains. However, I think this is a period of a very interesting time with Trump coming back and tariffs.
Good morning. Welcome to Trading Hour. It's a Thursday morning. Things have gone south after a quiet opening in the last 15 minutes. Selling pressure has picked up. The Nifty is down 150 points. The Sensex lower by nearly 500 points. We're staring at a cut of about 0.6%. The Nifty Bank has slipped even more. The Nifty Banking Index is down nearly 1%. So now things which were on the flatter side have now turned a lot worse. Selling pressure has indeed picked up. You've got cuts coming through in the oil and gas. Many of the PSUs are weak in trade too. Metals are on the back foot. The only spot that's holding up today is FMCG. The Nifty FMCG index is a gain of nearly 2%. And just in the morning, we heard CLSA's Vikash Jain talking about how consumption is going to be the sector that he's backing in 2025 after being away from the sector for the last 4 years. The Nifty FMCG index is up 2% and stocks have started moving up. So, year to date, you already have a Tata Consumer, which has given you a return of close to about 6%. You have an HUL up 5.5%. Nestle Britannia also up 4% so far in 2024. So things have started picking up because CLSA's call is that the government approach is going to be more towards welfareism and that will benefit these staple companies. On the way down, it's L&T, Tata Motors, many of the banks like Axis Bank, HDFC Bank, which are down 1.5%. Hi.
Good morning, Rima. Absolutely right. So, like you just mentioned, the selling pressure which had abated for a bit, and in fact, Nifty had almost clawed back most of the losses that it had seen in the morning session. Once again, now near the day's lowest point. The mid-cap and small-cap indices at one point of time were actually flirting in the green territory, but now, once again, both of them are trading with cuts. The Nifty Bank continues to be the biggest drag, down almost over 1%. Well, a couple of stocks that we could quickly highlight, a couple of outperformers, two names from the chemical space stand out. First one is SRF, second one is Navin Fluorine. We just discussed it, but both of these stocks on the back of much higher refrigeration gas prices worldwide. Both of these stocks clearly stand out in today's trading session. As far as the capital goods space is concerned, there's a bit of a divergence over there. Have a look at L&T. It's one of the top drags on the index. There's no fresh news flow that's appeared overnight, but the stock today is seeing quite a bit of selling pressure, down almost 2.6%. So a large heavyweight as far as the capital goods space is concerned. But on the other hand, Siemens and Cummins are actually doing much better. So it'll be important to see whether there's any update that's coming in as far as L&T is concerned. And Borosil Renewables, you just had the management on Chartbusters, the previous show, where the company's gone ahead and announced a capacity expansion of almost 50%. And that particular stock is doing quite well. But Rima, today, all important results of TCS. What is it that the street is anticipating?
Well, we're expecting a muted quarter on account of a couple of reasons. One, furlough. So typically in the December quarter, companies have their annual maintenance shutdown. There are fewer working days on account of holidays. So typically Q3 growth rate is lower. Secondly, TCS's growth was boosted on account of a large BSNL deal. But if you strip that, and what is happening is the incremental contribution from BSNL has been coming down. So suppose it contributed $50 million in the prior quarter. This quarter, maybe it'll contribute $30 million. And therefore, that's also hurting. And the third reason is cross-currency headwinds because of the way the dollar has moved. So which is why the dollar revenue growth, according to our poll, is seen down 0.6%. But in constant currency terms, expect a flat growth. Margins are seen at 24.5%. This is an uptick compared to Q2. But in Q4 and in Q1 and Q2, you saw the margins decline for TCS, so a little bit of a rebound. And this will drive about a 4% jump in the company's profitability on a quarter-on-quarter basis. So what will you watch? Well, you want to find out what the growth is ex of the BSNL contract. Because even in Q2, the international revenue, that's again stripping out the India business, was down 0.4%, the weakest since the COVID quarter. So that's reason number one. And two, you're also expecting growth to accelerate significantly in FY26. But with the BSNL contract tapering off, is it possible to achieve this high single-digit kind? Second is continued recovery in BFSI. The management's been talking up about green shoots. And third is US healthcare, because in Q2, some of the healthcare clients did have their deals get cancelled, discretionary projects got run off. So watch for the outlook on US healthcare. The stock has been an underperformer versus peers. Now, last year, TCS was up 8%, while its peer Infy was up 25%, because the street is anticipating Infy to grow faster than TCS, which is why Infosys valuations too have converged with that of TCS. And TCS share price, as I said, 8% up in the last 1 year, and it's still down close to about 12% from its 52-week high levels.
Thank you so much, Rima. All important, and it will be the harbinger as far as the entire IT pack is concerned. TCS results, and I think you'll be up all evening going at it.
I'm going to be there at the press conference, which is at 5:30 p.m. today. So we'll get a chance to listen in to what the companies have to talk about, the US economy, the client budgets, our discretionary spending. Is that back? What's the outlook on margins? So we'll be listening in very carefully to those comments.
Thank you so much, Rima, for that. Well, moving on, another stock that's doing very well in the session today is Manappuram Finance. Abhishek joins in with more details on what exactly has transpired as far as Manappuram is concerned.
Well, RBI has lifted the restrictions with respect to doing business for Ashirvad Microfinance and DMI Finance. Now, 4 NBFCs were put on restriction list with respect to doing business on October 24, and these restrictions have now been lifted. Now, Ashirvad Microfinance is actually the subsidiary of Manappuram Finance. So the restrictions were placed on 17th of October. So less than 3 months, it has been lifted as per RBI is satisfactory with respect to compliance of all the issues that they had pointed out to the entity. Jeffries has written on Manappuram Finance. They have a hold rating, but they have increased the target price to 190 per share. They say that RBI's lifting of ban on Ashirvad Microfinance is positive, as it constitutes about 27% of the consolidated AUM of Manappuram, and about rupees 22 Manappuram's valuation is a key positive for that. But disbursements in MFI segment should stay muted in the near term, given the stress that you are seeing in the microfinance sector. However, Manappuram's valuations as of now seems attractive for investment for investors. Back to you.
Thank you very much for that. It's over to Nimesh now for Bajaj Auto. Nimesh?
Hi, Rimaina. So today I pointed the Bajaj Auto note as a standout. The stock is reacting as well. CNBC today has upgraded the stock to outperform from underperform. So it's technically a double upgrade, and they have a target price of 94.93. Now, the key reason for the upgrade is one, the stock is in a sharp correction, and two, improving the two-wheeler electric franchise for Bajaj Auto. Remember, the stock is corrected almost 32% in the last 4 months and has actually underperformed the peers as well as the Nifty, and now trading at close to 21 times on FY27 earnings versus a long-term average of 19 times. Even in terms of electric two-wheelers, Bajaj is now, market share has gone up to almost 25%. They're the largest player there, and they've launched the cheaper Chetak as well. What CNBC says is that despite the increasing in the electric two-wheeler space, Bajaj is able to maintain the margins at 20%, which is credible. And that's been the one reason why they've upgraded the stock. In terms of downside risk, while Bajaj is doing good in the premium segment, it's in the economy segment where there is a bit of struggle as well as competition heating up from peers. So that's going to be a bit of a drag. But given the sharp correction and the fact that now they are the number one player in electric two-wheelers, it deserves an upgrade. So that's the reason why sellers should upgrade the stock to outperform with a target price of 94.93.
Thank you so much, Nimesh, for joining us. It's a double upgrade over there and the stock is reacting to that particular development. Well, before we slip into a short break, if we could pull up the intraday chart of Kalyan Jewellers. Yesterday this particular stock saw quite a bit of a sell-off and we had the management on air where they gave us some important clarifications. There was a sharp recovery in Kalyan Jewellers. But today, once again, the stock is now down almost 5%. Remember, this particular stock is a recent entrant into the F&O space. But we'll now slip into a short break. Up next, we'll discuss what's buzzing the commodity space with Manisha Gupta.
Being in picture. So overall, I think for emerging market funds, flows will be very muted till we get some clarity on the tariff picture. And I think the other big basket in EM is China, which, people still are a little bit worried about their real estate sector and how things will develop there, and also whether the government will do a big enough stimulus to counteract some of the consumption slowdown there. So I think overall the macro environment is a very cautious environment in the near term for EM investors.
"2024 has now become the 9th consecutive year of positive returns for the Indian equities, and that's the record. In fact, 24 was a year of record in many ways, the highest fundraise in a single year, the ever-growing domestic pool, and so on. But the big question is, what is in store for 2025? Will the rally sustain? Will the mid and small cap continue to outperform? These are the questions in the minds of the investors. So now, crystal gazing is always a challenge, but CNBC-TV18 has reached out to the biggest market experts to bring to you an Outlook 2025, the biggest market poll for the new year. In fact, it was a poll across 61 participants, including fund managers, HNIs, as well as institutional dealers. So let's begin with the first and the most important question. What kind of return should investors expect in 2025? Majority of the respondents expect a single to mid double-digit return in 25. Only 11.
Welcome back to Trading Hour. Well, let's now shift our focus to the commodity space. Manisha joins in, and today we are focusing on Manisha, ma'am, what is it that you're looking at today?
Well, I'm looking at silver, and I hope you own some of that, Vivek, because we've seen very strong gains in 2024 for silver, up by nearly 25%. And this year, if you look at the silver prices, they clearly seem to be outperforming gold. I mean, it's still early days, but 2025 has started on a stronger note. So when you look at the chart itself, gold prices have gained up by 1.5% in this year, but silver prices already are up by 4.5%. Well, silver continues to gain because you are looking at the gold-silver ratio on a positive side here. And then silver also is trading at a 3-week highs because there's a bit of a pullback in sense of dollar index there. Markets are anticipating that you will be looking at a strong industrial demand in this year from renewables, from photovoltaic and from EVs as well. And 2025 is going to be a 4th straight year that you will be looking at a deficit continuing into the global markets. So various banks and brokerages really have put out silver on a very bullish note for 2025. We are trading at $30 an ounce right now, and the expectation is that you could be looking at $36 to $38 on the higher side within this year itself. While India has seen 1 lakh rupees of an all-time high, that's a level that many feel will surpass for 2025. You look at gold as well, and that we seem to be holding gains onto this one. The FOMC minutes for one say that the officials have emphasized on cautious approach going forward. Actual economic data will be looked at, and that is when they will be taking calls on interest rate cuts from US for 2025. But the markets will also watch out for the US non-farm payroll data. Well, that is the first important data of 2025 that comes in on Friday, and much of the cues would be taken from that one.
Thank you very much for that. We will slip into a very short break, but on the other side, we'll talk about the quick commerce craze. Yogesh Agarwal, head of research at HSBC India, will join in to talk about his view, and his opinion is that perhaps the total addressable market for quick commerce may not be as high as the street anticipates.
Expect a negative return on the Nifty next year. In that case, will the broader markets continue to outperform in 25? Surprisingly, 50% of the respondents believe that 25 will be a year of large caps. Only a small percentage are still betting on micro cap and small cap stocks, which brings to the next big question, and that is the biggest theme to bet on in 2025. Here there is a surprise. First surprise, financial has emerged as the biggest theme to bet on for the next year, and that is despite the macro challenges that the sector is facing and the fact that they have been an underperformer. The other surprise was the stellar outperformer of 24, which was capital goods. That's been considered as the least preferred bet going into 2025. We spoke about the returns and the big themes. Now, what's going to drive all these returns? And the near consensus answer is earnings, earnings, and earnings. That's going to be a dominant factor for the Indian equities to outperform going into 2025. There was a small portion who also believe that the Trump policies could be interesting to watch out for. Now, we spoke about the micros and the themes. Let's focus on some of the macros as well. Q2 was a bit of a shocker as far as the GDP figure is concerned, and after that, many on the streets have trimmed down their growth forecast for the country for next year. But will the growth surprise on the upside? We asked that question to majority. Most of them believe that the GDP growth will be between 6.25 to 6.5% in 2025. Only a mere 3% expect the growth to fall below 6%. So that's the big GDP growth forecast. So what's going to drive the GDP growth? And that's where the consensus seems to be, and that is the government spending. 77% of the respondents believe that government spending, which was lackluster in the first half of this year, will pick up in 2025. So that's going to be the big driver as far as the GDP growth is concerned. We had a record year as far as rupee is concerned. So we asked the question as to will that be a spoil sport into 25 as well. Most of the experts believe that the rupee is going to be ranged between 85 to 87 a dollar, while a small segment expects the currency to appreciate below 85 as well going into 2025. Also, we saw a new RBI governor taking charge, and that the first policy will be in 2025. So we asked the experts what to expect in terms of RBI action. It's a divided house there. 50% believe that the first rate cut from RBI will be in the Q4 of this financial year. However, a small portion believes that the stretch line could be as late as the third quarter of FY26. So that's the RBI action. Indeed, if the RBI has to cut rates, then how much is the rate cut that the street is penciling in? Half of the respondents, which is 50%, believe that the rate cut going into 25 would be at least 50 basis points. So 50 to 75 basis points is what a lot of people are betting on. So that's the rate cut expectation going into 25. In fact, 24 was a very volatile year.
Welcome back. SRF, Navin Fluorine, these are the two stocks on our radar, and they've shot up more than 10%. To understand what's driving them higher, we have Krishan Chandra Parvani, Chemicals Research Analyst at JM Financial Institutional Securities, joining in. Thank you very much for joining in. What we understand is that US gas distributors have announced price hikes for refrigerant gases. So what are the implications? First, tell us a little bit more on the news, what you've picked up. Have you confirmed the news? And what is the implication for a company like SRF? What percentage of its business comes from refrigerant gases? Do they supply only to the US? If they have sales in India also, will this price hike take place in India too? How should we look at it?
Yeah, good morning. Thank you. So firstly, so I guess is one of the distributors in the US distributing their gas. So there is a press release. So we have seen that press release, and they have indicated that due to the supply crunch in the US, they'll be taking price hikes of certain gases, R32 and R125, by as high as 200%. So that is confirmed. And in terms of SRF, the ref gas business is almost 40-50% of the chemical business. And also Within that, the ref gas business, roughly 40-50% is the exports and largely to the US market. So in terms of the exports opportunity, so this is a very good opportunity for SRF with increased prices.
Understood that. So Krishan Chandra, give us a sense. When Q2 results were announced, the management actually said, the business or the outlook as far as the chemicals part of the business is concerned is quite subdued for Q3. And they said they are expecting a marginal recovery only in Q4. So what has changed materially? Why have prices shot up by almost 200% like you just mentioned? And if you could give us a sense of both for SRF as well as Navin, what percentage of their top line comes from this particular business and especially from exports in the US, if you've had a chance to look at it?
Sure. So firstly, the prices haven't yet shot up. There is a possibility that these prices could get hiked. So that's point number one. Okay. Point number two is, the phase down of HFC gases have started in started from January 24 in the US and other developed countries. It's just that now with increasing demand and probably the consumption of the previous inventory, the demand supply mismatch has started in now. And with January, there is a contract renewal for most of the US supplies. So that's why you're seeing the press release now in January. Now, as I explained, for SRF, the mentioned gases capacity, R32 and R125 capacity is closer to 29,000, 30,000 tons. So they have been exporting closer to 10,000, 12,000 tons, depending on the year, depending on the gases. So at a $4 price, the realization comes to about $50 million. Now, if these prices are hiked by even if 100%, that means an incremental $40-50 million kind of sales for SRF. And this could flow down directly to the bottom line. I mean, you'll have to deduct the taxes. So the implication could, the PAT number that we have for FY26 is closer to $210 million odd. So which implies, even 100% hike could raise your estimates by as high as 19-20%.
So minimum $40-50 million boost to the profitability in FY26. That's right. That's the number, correct?
So if the prices were to hike by 100%, prices were to go from, let's say, $3.5-4 currently to $7 to $8 per kg, and if SRF gets that business, so that is considering those things, yes.
One more question. So now that prices are hiked in the US, and that is only 40-50% of their refrigerant business, chemicals business. Is there a linkage between domestic prices? Should we assume that even domestic prices go up? How will it affect the balance business of SRF?
So we have seen that there is a disconnect between the domestic prices and the export prices, clearly because of the demand supply gap that is created, that has gotten created in the US, but it's not the case in the domestic market. Domestic supply is ample. So we don't see, that the domestic prices would follow suit the export prices. So no material impact there for the domestic business, we would say.
Okay, Krishan Chandra, I don't know if you track Navin Fluorine, but any sense of what is the kind of capacity that Navin has, and we understand that they also stand to benefit. And lastly, does this mean that the majority of the pain as far as the chemical space is concerned is now coming to an end?
So relating this ref gas to other chemicals part would be an overstatement. Given this is just specific to the refrigerant gases, and it does not concern the specialty chemicals or the agrochemicals weakness that we have witnessed over the last couple of quarters. So it does not change. And for other players in terms of capacity, so other players have capacities in the range of 4,000 to 5,000 tons, and probably they are also increasing by a similar amount. So yeah, I mean, you can calculate it's lower than SRFs, because SRF is the largest and stands to benefit the most out of them all.
Krishan, very well explained for all our viewers. Thank you very much for joining in today. We need to slip into a very short break, but the countdown to Budget 2025 has begun. India is looking to seize the moment, establish itself as a global economic outlier. The upcoming budget, which will be NDA government's first full budget after the election victory, will be key to unlocking the ambitions of millions of Indians. So tell us what you want from Budget 2025 by submitting your wish list to CNBC TV18's Budget Box, and tune in to your budget headquarters, CNBC TV18, for unparalleled insights and coverage on Budget Day, this 1st of February, a Saturday.
General elections, multiple state elections, and so on and so on. But 25 could be a year of moderate returns, but the expectation is that the positive returns would continue going into 25 as well. That's the big poll from CNBC TV18.
India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC TV18, Mumbai.
Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC TV18.
Celebrating 25 years of CNBC.
Welcome back to Trading Hour. Well, one stock that's doing quite well in the session is Swiggy, and this is following a bullish Bernstein report. Mangalam joins in with more details.
Well, if you look at all these quick commerce players over the last couple of trading sessions, they've seen some bit of profit taking as the clamor around competition increases. But in that, Swiggy is actually doing well, largely because brokerages believe that one, it is at a discount to Zomato, and secondly, it has some long runway for growth as well. So Bernstein, for instance, has initiated coverage, outperform rating, a target price of 635 rupees. And they're saying the company pioneered food delivery in 2014 and also pioneered quick commerce with Instamart, and currently is the second largest hyper-local platform after Zomato. They believe that this will be one of those winners in the convenience economy of India. They haven't called it, quick commerce, food delivery, etc. They've clubbed the entire thing and call it the convenience economy, which currently is at 8% penetration, and the total addressable market for this is close to around $70 billion as well. Swiggy's market share has declined by 4% over the last 3 years, but at 42%, they believe that it is going to stabilize because of increased customer acquisition and innovative product launch like Bolt and Swiggy One Lite. And yesterday as well, it was reported that the company has gone ahead and started Swiggy Snack 2. They expect the adjusted EBITDA margins of Swiggy to increase from 1.2% all the way up to 4% by FY30, in line with Zomato's margin expansion. And if that were the case, then the fair value could be around 635 rupees as against the 511 rupees the stock is currently trading at after a 4% up move.
Thank you very much for this convenience economy has triggered quite the quick commerce revolution. But to talk more about it, HSBC India in its latest note say the total addressable market of the sector may be smaller than what's broadly understood, as they believe small towns are not easy to scale up. They expect near-term growth to stay solid, but anticipate worries may emerge in 2 to 3 years. To discuss this, Yogesh Agarwal, Head of Research at HSBC India, is now with us on the show. Yogesh, morning. Thank you very much for joining in. So lay out your thoughts on how you see quick commerce unfolding in India.
Hi, thanks, Rima. Good to be here. Look, big picture, quick commerce is there to stay. And I think India is very unique where we are not moving from unorganized retail. We are not moving to organized retail much, unlike most other countries, but we are straight away moving to quick commerce. And I think there are many reasons behind it, but the most important reason is our number of SKUs in the kitchen are a lot more than, let's say, a UK kitchen. Okay, if you compare the Indian kitchen has 3x the SKUs as a UK kitchen, and our space is less. So we end up buying a lot more frequently in small ticket sizes. And that is a perfect setup for quick commerce. And so there is a convenience, and as well as there is eventually a number of SKUs are also higher. So I think quick commerce is there to grow. However, it may not just get restricted to grocery, because in our estimate, the top 30 cities also, if the companies reach out, the total market is just about $100 billion. And the street is already expecting the industry to be at least $50 to $60 billion by FY30. So I think the market has to expand much beyond grocery. But yes, obviously in the near term, the growth is going to be very, very strong, because the industry is still around $8-9 billion today.
Yogesh, you just said that the industry has seen quite a bit of strong growth, and you feel that the industry also has to expand breadth-wise. Give us a sense of, as per your opinion, what is it that the street has already started pricing in? How much of it is priced in? And do you feel stocks can go further from here on? If you could give us individual stock opinions as well.
Yeah, without getting into stock opinion, but generally, I think, as I said, the industry is expecting around in our calculation, around $50 to $60 billion of GMV by FY30, and at around 5% EBITDA margins. I think that is punchy. It may just about be achieved, but unlikely there is upside risk to that, because, as I said, the top 30 cities spend almost $100 billion on grocery. So look at it in another way. $50 billion GMV would mean 6 crore customers ordering 8 times a month, okay, 2 times a week, and also paying 25 rupees delivery charges on every order. And I think that may be achievable, but it's not going to be easy from a 5-year perspective.
So what does this mean to the EBITDA estimates? So you're saying that the overall pie is not as large as $50 to $60 billion, or it's not going to be that easy. What about the EBITDA estimates? What does Street expect, and what is your own opinion on that?
Yeah, so actually before going to EBITDA, see, which is kind of linked to the question as well, that beyond grocery, the market has to expand, and companies are doing that, right? If you look at 2 years back, these quick commerce platforms used to sell 2,000 SKUs by and large. Today, they are selling almost 15 to 20,000 SKUs. And I always remember Mr. Kishore Bayani saying that an average Indian touches 10,000 SKUs in his or her lifetime. So you can imagine practically everything we need will be on these QC platforms. And I think that those markets are tough to ascertain how big they are. And a lot of these are margin accretive as well, unlike grocery or, let's say, especially cereals. So I think margins will also depend on how much they are able to expand beyond grocery, and that will give them growth as well as margin tailwind as well. So coming back on margins, we are looking at around 5% EBITDA by end of this decade. And I think Street should be somewhere that as well, because without that, I don't think you can justify the valuations.
Yogesh, give us a sense of your own analysis. You said grocery is one, and the industry needs to go beyond grocery or look beyond grocery. They've also gone into food delivery, and food delivery almost within 15 minutes, and this is fresh food itself. So, apart from this, what are the other verticals you see these players getting into, and what do you make of the trend that has seen so many fresh entrants? So, do you think the path to profitability will be further delayed?
Definitely, I think, look, there are now 5-6 credible players and all of them have deep pockets. So I think one of the things investors will have to, especially the public investors will have to keep patience now. And I don't think for 2 years, profitability is going to be on the positive trend. So it's a bit of a crowded market. And what is also, it also is doing is the salaries are going up. So there is a bit of a negative operating leverage happening. So if you look at the Mumbai region, the salary of a picker has gone up by 50% in a dark store over the last 6-7 months itself. So I think that's another challenge the companies will have to grapple in the near term, and that will continue to put pressure on profitability. I think from a use case perspective, eventually what will happen is over a 5-year period, unlikely all the 5 companies will have an equal market share. So I think companies who are disciplined, who are investing in the technology mode, who are investing in supply chain, who are constantly innovating, will be able to maintain a leadership position. And those are the company or the companies to invest. So for instance, if you look at fruits and vegetables, it's a market which is bigger than cereals. So if you put together rice and wheat and all the cereals, that's a market almost as big or smaller than fruits and vegetables. But that's a market which is very, very operationally heavy. So I think those are the use cases the companies will have to keep investing and make a lot more solid and rigid infrastructure around that. And I think that's where the companies who are able to do that will be the winners in the end.
Just a quick word on Swiggy's new standalone app, Snack, for 15-minute food delivery.
Yeah, Rima, as I said, you will see all these use cases keep coming. So be it a cafe, be it a standalone app. And I think now the pity or fun thing about this business is everything is very easily replicable by competition, okay, especially on the tech side. So I think this constant innovation will keep happening. Be it getting printouts, be it the standalone apps, be it the cafe. But I think the so-called war is just getting started, and I think the next 2 years will be quite interesting.
Thank you so much, Yogesh. We'll keep touching base with you once more as more developments take place as far as the quick commerce space is concerned. Thanks once again for joining us. Let's now take a short break. Up next, we'll discuss market fundamentals with Dheeraj Sachdev, CIO at Roha Ventures.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years.
Welcome back to Trading Hour. Well, as promised, Dheeraj Sachdev, CIO of Roha Ventures, joins us now to discuss market fundamentals and his top sectoral picks. Thank you so much, Dheeraj, for joining us. First up, it's a very volatile market that we're seeing, especially in the past week. How are you looking at markets at the current juncture?
Yeah, hi, good morning. So the Indian equity market is navigating significant volatility, as you rightly mentioned, and this is driven by US policy decisions, elevated bond yields, and a strong dollar, which are impacting FII flows. Now, all eyes will be on the US, especially on the incoming Trump administration's tariff policies. Now, dollar has strengthened in anticipation of pro-growth policies in US, and there is a possible near-term peak that should see pressure on emerging market currencies is also easing. It's also possible that the Trump policies announced may not be as draconian and it will be less stringent as well. So all these are possibilities, while the market is already fearing in advance. However, coming back to India and in the domestic market, there is resilience as the consumption trends are beginning to show some improvement. Recent data from large offline retail stores, QSRs, and quick commerce platforms reflect a steady uptick in demand. Now, the capex cycle, both corporate and government-led, which was somewhat lull in the first half, is also expected to pick up, which can be driven by infrastructure, PLI schemes, and green energy initiatives. So on the valuation front, a large section of small and mid-cap stocks appear to be ahead of time when pricing in forward earnings. Now, these elevated valuation is particularly noticed in themes like defense, railways, shipyards, industrial and capital goods, and even niche IT players, despite their recent correction. Besides, even the IPO market is currently driven by optimism with demanding valuations, which often leave little margin of safety. So while there is froth in certain segments of the market and caution is required, we do find stock-specific or bottom-up opportunities across sectors like financials, consumption, real estate, cement, renewables, pharma and healthcare, including some specific companies in agrochemicals and tech staffing businesses. So from a portfolio construction perspective, despite valuation concerns in certain pockets, we believe that we can navigate and construct a well-diversified portfolio of about 25 to 40 companies with earnings visibility or sustainable growth and reasonable valuation. So this is still achievable. The important part is stock-specific rather than blanket sectoral calls. So net-net, I can only say that the market continues to present a mix of investment opportunities and challenges shaped by both global volatility and valuation concerns.
In fact, you spoke about domestic resilience and how the consumption data is picking up, and FMCG has clearly been the sector of the day. You know, we were chatting, Dheeraj, with Vikash Kumar Jain, the India strategist and India head of research at CLSA, and he said that his biggest overweight going into 2025 is consumption. So let's just quickly rewind and listen in to those views.
Biggest overweight is actually staples. So we run a India-focused portfolio, and for the last 4 years, I've tended to completely avoid staples. And this time, at the start of the year, we've actually made staples our biggest overweight, cut our overweight in banks to just above neutral. Staples, I believe that that's really the big sector call, which we have taken very anti-consensus. We believe that the realities of coalition government and the hints that we have got from recent state elections, plus the good rainfall that we've seen and the good sowing that we've seen, maybe just bring back that affordable consumption to kind of life. And within staples, we like the food-related companies more.
Got that. Dheeraj, so in the consumption pack, I know you're not advising that have a blanket sectoral call. It's all about individual stocks, and within every sector, you will have winners and losers. But in consumption, what is it? Are you looking at staples? Will it continue to be the top-end discretionary spending? Is autos a favor? I mean, give us how you should think of looking at consumption and where there is growth and valuations may be reasonable.
See, the last 6 months have seen a prominent increase in government's willingness to raise spending on welfare schemes, particularly around state elections to attract voters. Now, these, along with the rise in crop sowing plus good rains, should improve rural incomes and help in driving some recovery in affordable consumption. So we're talking about affordable consumption. Now, Q3 results will be muted for staples, though rural has outpaced urban growth, and staples are witnessing slower growth and enhanced competition intensity resulting in subdued earnings growth. So as a trend, what we have seen in consumption is shrinking product life cycles and premiumization, which will continue to across segments, while mass growth, the categories has remained under pressure. So also quick commerce continues to gain traction from general trade. So we like specific opportunities in consumer durables or auto retail or alcohol beverages, QSR, aviation, and domestic apparel when we talk about consumption. where companies are benefiting from wedding season demand or structural shift to organized sector.
Understood that. Another question which you want to ask you is, you are quite optimistic as far as the domestic capex theme is concerned. While government capex is expected to pick up in H2, private capex still seems a while away, and you seem to be quite positive as far as the infra space is concerned, even renewable energy space. What's your view over there? And do you think a lot of stock prices are already building in or pricing in quite a bit of the optimism?
You very rightly said. See, after a slow H1 due to election delays and rains dragging execution cycle for capital good companies, they are set for a strong H2 with most companies retaining a yearly guidance. So while earnings growth is likely to be positive, driven by manufacturing and government capex, valuations are stretched and ahead of time for companies in industrials, defense, railways, when we talk about power transmission and distribution or renewable spaces. So one has to elongate the holding period while the earnings growth will be there. It is largely priced in. So one can't expect more, similar kind of returns over the next couple of years or so. One has to moderate the return expectations here.
Banks, a quick word on banks. Traditionally, consensus is largely still overweight on banks going into this year. But what's your own view? And any sectors to completely avoid?
So, RBI was concerned about high growth in unsecured loans, and while gap was there in loan and deposit growth, in addition to operational gaps in NBFCs, I think that is at the end of 24 may have been addressed with unsecured loan disbursement expected to come down. Besides, bank lending to NBFCs is also slowing, and the loan and deposit growth have started to align. So as a result, we do expect credit growth to be still slower at about 11 to 13% over the next few quarters. So going forward, we do expect that RBI may have 50 basis point of rate cuts to support growth and investment, and pressure in unsecured retail loan is expected to ease. But microfinance will still continue to have pressures, and we need to watch it very closely how the trends will behave on the NPA side. Overall risk reward is favorable with the expectation of easing asset quality pressures in the banking and financial. Our preference here will be housing finance companies due to secured loan book and geographical reach. Sectors to avoid, we still believe some of the companies are ahead in terms of valuations. So in the interim, we are avoiding, though they may have solid earnings growth, whether it is the electronic manufacturing service, EMS kind of companies, or metals, because we still believe that there will be issues, and China stimulus is really not panned out as it is. And the real estate recovery in China calls for caution in the metal sector.
Thank you so much, Dheeraj, for joining us and giving us your take as how exactly you're looking at markets currently. But time now for a short break. Ankur Rudra from JP Morgan joins us next to discuss their outlook on the IT sector and expectations from Q3.
CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards?
Welcome back. The Q3 earnings season is officially kick-started today. Today, TCS is expected to report numbers. In the mid-cap pack, you've got Tata Elxsi. And next week, then a whole host of companies like Infosys, Wipro, HCL Tech all report. So let's quickly get you up to speed in terms of the expectations. Ankur Rudra, head of APAC Telecom and lead analyst for India TMT at JP Morgan, is now with us on the show. Ankur, thank you very much for joining in. First, give us the broad expectations going into the earnings season.
Hi, thank you for having me. So look, this earnings season, we are looking at a quarter which has been impacted by furloughs. We're also looking at a quarter where there's been very sharp currency movements in the last month. So our expectations are not extremely high, especially for the large caps. On the large caps, we expect a relatively muted quarter where, a lot of companies will be sort of at flat growth. And so basically flat to 2% organic is what we are expecting. And the main focus area, at least for the large caps, will be how much of the positive commentary in the past we've seen that was limited to financial services and some early signs of discretionary spending, how widely that spreads out. Does that increase to sectors such as retail, where December is an important sector, important quarter? Or does that extend to some of the other areas such as manufacturing, where we've had mixed commentary so far? We are a bit more optimistic on the mid-cap front, where the growth momentum can be meaningfully higher. The range is more broader from the 2 to 5-ish% range, where the growth is relatively better. Going forward, again, I think the main thing to watch out there again is how much beyond the US, how much beyond financial services do we see growth coming in? And how does that set us up for the calendar 25, fiscal 26, outlook going forward?
So talking about the setup going into this calendar year, well, IT stocks have had a fantastic run-up. It's been a 20% plus return for the Nifty IT index now for 2 consecutive years. So some say that perhaps the good news, the recovery is priced in. Where do you stand on that, given the run-up and the starting point, valuations being richer? And how are investors approaching Indian IT now? Are they largely overweight?
Yeah, so I think if you look at the IT sector, it's had another good. The stocks have had another good year. The Nifty IT or the NSE IT has outperformed the Nifty by 20% for the year. 8% for the last quarter, and maybe 2 or 3% for the last month. So it's been a consistent outperformer. It's not just one period, one month or one quarter it outperformed. Now, having said that, we haven't seen adequate evidence of underlying bottom-up large cap or industry performance improving meaningfully. We currently do not, for example, see a significant growth acceleration for the large caps, at least, or for the industry at large in CY25, F26. So while there was a small amount of growth acceleration, maybe by 150 basis points last year, the industry went to perhaps 3 to 5% growth. The next year probably promises around 4 to 6, 4 to 7 at best. So we are not looking at a very, very sharp growth acceleration here. Now, investor positioning has turned a bit more, I would say, optimistic in the last 6 months or so. Investors have bought into the names, not only for the fact that they're expecting bottom-up performance, but also there is an element of macro where investors do want to diversify to exporters. Investors want to play the US dollar, the US economy to a large extent. Now, I think that's where we see positioning. We are not getting that much of evidence yet that we are looking at a year of double-digit growth or even very high single-digit growth for fiscal 26 or calendar 25 just yet.
Ankur, so you just mentioned going into this particular quarter, almost 6 months, there's been some optimistic positioning as far as the IT space is concerned. Now, in terms of commentary, what is it, will you feel, if companies come out, number one, will be taken positively, and what, according to you, what that management could say, could be construed negatively by the street going into this particular earnings season?
Yeah, sure. So, we are expecting some companies which are guided relatively conservatively to upgrade the guidance. And any kind of, better than expected guidance upgrade will be seen positively. We are also expecting commentary around discretionary spending. If the discretionary spending commentary, which was largely centered around the financial services industry, if that spreads to many more industries, if there's evidence that deal wins, which have begun to flatline for the large deals especially, have begun to flatline for the last few quarters, quarters. If that begins to perk up, we're not expecting that just yet, but if the commentary around it is positive, if the momentum around signings or pipeline creation is positive, I think that will be seen a bit more optimistically and positively. In terms of potential headwinds and negatives, I think the main thing to watch out for is any commentary around the furloughs. If there is commentary that the furloughs that were seen so far only in the December quarter are likely to extend to the March quarter also, that could be a negative. If we hear commentary about, the discretionary spending not really extending beyond financial services or sort of slowing down, if there's any evidence of the growth momentum going sideways as opposed to up, even if it is slow, I think that will be seen negative. And lastly, there will be a view on margins as well. If there's any kind of margin headwinds highlighted, that I think something we'll be watching out for. Finally, headcount addition has been moving. It was negative for most of the first half of calendar 25. It's turned flat to positive for the last few quarters. That's another thing to watch out for, to see, because that does indicate to an extent management willingness to bet on growth for the future periods.
Are you seeing margin headwinds for the IT companies going into next year?
I think the headwinds are, one, if there's any kind of lack of momentum beyond financial services, because given, like you said, these stocks are trading at relatively healthy multiples. There is an expectation that growth will be mid to high single digits. If there is an evidence just immediately that that's unlikely to happen, I think that could be a challenge. If there's any kind of margin-related headwind flagged, in terms of maybe, for example, on the visa side, that's been a point of debate very recently. That could be a headwind. If there's any kind of conversation about AI eating into the opportunities, if that's seen as a negative, that could that could also be seen as a negative. And finally, if there's any kind of pricing pressure, I think that's another thing to watch out for.
Ankur, headed into Q3, where are you more optimistic on? Is it the large cap IT companies? Is it the mid cap IT companies? And if you could also bifurcate them in terms of companies with exposure to BFSI or any other vertical, where will you be more optimistic on?
Sure. So overall, that's easy to answer. We prefer mid caps over large caps right now. We think we are seeing some signs of discretionary spending coming through. We are seeing some smaller deals coming through, and those companies are able to capture that. They're not impacted by the macro as much. We like, in general, mid caps, or within that, we do like, companies which have been able to maintain strong, mid-teen kind of growth rate, which we call growth heroes. We like them. We like financial services recovery plays. We like companies which can potentially benefit from any kind of AI-related spending, which have a strong amount of data and analytics exposure. And a part of the ER&D companies which can see some sort of a growth acceleration this year. So those are the sort of subsectors we prefer within the broader IT and ER&D services space.
And just one final quick word. When you spoke to the management in the quarter, November, December, what did they tell you about discretionary spending extending beyond the financial sector? Is there evidence of that?
Sure. So we speak to a lot of management teams. Last quarter, we spoke to several industry experts too. I think the broad answer so far is that it's most visible within financial services, while discretionary spending is a topic which is sort of a debatable topic. Many companies define discretionary spending different ways. Some companies include small size deals, but what was consistent is that small size deals have begun to come back. Now, whether you call it discretionary or not could be a matter of opinion, but that is something we did here is spreading beyond financial services, may not be discretionary spending per se. So I think we've heard specific to discretionary on financial services, but again, the optimism was largely around financial services just yet. And this is again Q3 oriented. So we'll want to watch out for how that extends for the quarter beyond that.
Thank you so much, Ankur, for joining us and giving us a sense of how exactly investors can look at for the entire IT earnings that will kickstart today with the TCS numbers. Well, just taking a quick look at the markets, a couple of stocks still continuing to hold up despite the kind of selling pressure we are seeing in the broader end of the markets. SRF, again, up close to 15%, cooled off a little bit from the day's high. And Navin Fluorine, again, this particular stock is up 12%. But with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.
A head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
At the Consumer Electronics Show, I found out an espresso-like cocktail-making machine. To tell us more about this, I'm joined in by Ryan Close, who's the founder and CEO of Bartesian. Tell us more. How does this machine work?
Yeah, so this is the Bartesian. It allows anyone to have a fantastic cocktail in the comfort of their own home by allowing them to load their own alcohol in here. So it's very clearly marked. Vodka goes in vodka, whiskey, whiskey. So you simply take these bottles out, you fill them with your favorite spirit, and you pop them in. And then the machine itself, you have a water source at the back.
Sure.
And then the cocktails all come in these capsules.
Okay.
And they're recyclable cups.
Okay.
And there's no artificial colors or
Weak trade on Dalal Street as Indian markets dip in line with the weakness in the global equities. Commodities, PSU banks and other banking stocks lead the losses with the Nifty Bank down over 1%, outpacing the Nifty's 0.5% fall. The mid-cap index is flat.
Prospects of fewer Fed rate cuts and possible use of US emergency laws by Donald Trump to impose higher tariffs spooks global markets. Stocks decline from Wall Street to Asia. The dollar index climbs back above 109. Rupee hits a new low of 85.9 but recovers reportedly on RBI support.
TCS is set to kick off the third quarter earnings season for the Nifty companies today. Revenue is expected to remain flat in constant currency terms compared to the second quarter due to seasonality and a ramp down of the BSNL contracts. The margins are expected to increase by 40 basis points to 24.5%.
2025 is likely to be a year of consolidation, says CLSA's Vikas Jain. The brokerage bets on FMCG stocks over industrials this year, expecting a tilt in government policy towards welfareism.
And Manappuram gains after the RBI lifts restrictions on Asirvad Microfinance. Lupin is also in the green as the US FDA has given the less severe VAI classification to the company's Pithampur facility. Swiggy is up 4% after Bernstein initiates coverage on the stock, expecting a 25% upside.
Good afternoon. You're watching us here on Halftime Report. I'm Mangalam Malu. With me, Horma Svatakia, and above us is a deep shade of red across all indices. We did see a big gash on Monday. Thereafter, there was some stability. On Wednesday, there was a decline, and now today as well, followed with another decline. The only good part about Wednesday was from lower levels, we did see a recovery. And even now, even after this 130-point move that we've seen on the way down, we haven't broken below yesterday's low. So it's a very interestingly poised market right now, especially with the second half having the weekly options expiry that is likely to play out. And also, more importantly, the US market shut for trade today. That implies that maybe when the cat is away, the mice will play. Mice implying some of the domestic funds as well as domestic clients, etc. So we'll keep an eye out on how the market will be at midday. Very, very interestingly poised. notwithstanding the 150-point cut. Hi, Ormaz.
Hi, Mangalam. It's a cliffhanger, if you would like to call it that. The weekly expiry, the final few hours of the trading session, US market shut. We started off pretty well. It was not a very bad start, but then the losses have started to come in over the last hour and a half for the benchmark indices. But then, as Mangalam was highlighting, the good part is that we have not broken through yesterday's low, and that is the first important level to watch, which is 23,496, and then you go down to the 31st December low, which is 23,460. So two important levels to watch on the Nifty. Of course, there is also a prospect that you might just end up seeing a recovery, as you saw in yesterday's trading session. The broader markets, compared to yesterday, are faring a lot better, because while the Nifty and the Nifty Bank recovered from the lows yesterday, the same couldn't be said for the broader markets. The broader markets today, the mid-cap index is down 0.3% compared to more than a 0.5% fall on the Nifty. So, and there are plenty of movers as well. The day, though, belongs to these chemical names, be it the likes of SRF, Navin Fluorine, and the amine stocks as well, Balaji Amines and Alkyl Amines. There's news flow related to that. We'll talk about it in just a bit. And SRF is up almost 15%, Navin Fluorine is up 12%, as is Alkyl Amines. So it is the chemical stocks that are ruling in today's session.
Absolutely. They're doing very well from a broader market standpoint. But the frontline end, all of them, all the FMCG boys are batting on the front foot. Is this because the street is looking at capital protection? Is this because the street believes that populism is on the way, so maybe there would be some consumption uptick in the quarters to come by? Or is this just largely because of the underperformance that all these FMCG stocks saw, that maybe the street is betting or taking a few selective bets on a couple of these names? Colgate, for instance, up nearly 5%, Marico up 3%. We have the quarter 3 updates for a lot of them, including the likes of Marico, Dabur and GCPL, but some of the stocks are actually outperforming out there. Another outperformer today is Manappuram Finance, after the RBI has lifted its supervisory restriction on the subsidiary Asirvad Microfinance and DMI Finance. Abhishek joins into the details on that one. Abhishek.
Well, RBI has lifted the restrictions with respect to doing business for Asirvad Microfinance and DMI Finance. Now, 4 NBFCs were put on restriction list with respect to doing business on October 24, and these restrictions have now been lifted. Now, Asirvad Microfinance is actually the subsidiary of Manappuram Finance. So the restrictions were placed on 17th of October. So less than 3 months it has been lifted as per RBI is satisfactory with respect to compliance of all the issues that they had pointed out to the entity. Jefferies has written on Manappuram Finance. They have a hold rating, but they have increased the target price to 190 per share. They say that RBI's lifting of ban on Asirvad Microfinance is positive, as it constitutes about 27% of the consolidated AUM of Manappuram, and about rupees 22 Manappuram's valuation is a key positive for that. But disbursements in MFI segment should stay muted in the near term, given the stress that you are seeing in the microfinance sector. However, Manappuram's valuations as of now seems attractive for investment for investors. Back to you.
Abhishek, thanks a lot for that. Off the highs of the day is Manappuram, still holding on to gains of around 2.5%. But mind you, the stock is in the F&O band today, so no new positions on the stock. And interestingly, the stock, the day the ban was imposed on Asirvad on the 17th of October, the closing on the 16th was 179. Yesterday's closing was 179. So it's a no profit, no loss there for Manappuram. Of course, it made a low of around 138 in just a few days from that, and then it has recovered from those levels. But the stock, more importantly, is in the F&O band today. What's also doing well today, though, is Swiggy. The stock is off its post-listing highs, but another bullish commentary coming in on the quick commerce operators, Mangalam, this time from Bernstein.
This time from Bernstein. Ever since Swiggy is listed, everyone was looking at quick commerce. Everyone was talking about how Swiggy and Zomato trade at a discount to each other. The last few trading sessions, both Zomato and Swiggy saw a bit of a decline, because the street was now worried about competition coming in the quick commerce space, especially after the lot of fundraise that a lot of these companies have gone ahead and done as well. But as there was some correction, at lower levels, again, there is a fundamental case for the convenience economy in India itself. Bernstein believes that they have, an outperform rating on Swiggy with a target price of 635, because the company has gone ahead and pioneered food delivery in 2014. Also, quick commerce was, pioneered by them at Instamart, and is now the second largest hyperlocal platform post Zomato. More importantly, if you look at their market share, etc. as well, they believe that the company would be one of the winners in India's convenience economy, which is currently 8% penetrated, and a TAM or total addressable market of $70 billion as well. Even though they've lost market share by 4% over the last 3 years, it should stabilize at current levels with better customer acquisition and some of the product launches that the company has been doing with the likes of Bolt, Swiggy One Lite, or even the recent foray of 15-minute food delivery via its own food centers, Snack. And they expect the EBITDA margins to increase from 1.2% in FY25, Q2 FY25, to about 4% in FY13, in line with what Zomato has been doing. So as a result of which the valuation gap between Zomato and Swiggy narrows, and they're positive on Swiggy, 4% up move on that stock after a big gash from the top, citing concerns around competition on Q-commerce.
Opportunities becoming concerns, but then the optimism does remain on Swiggy. It's 4.5% higher there on the stock, still holding on to that level of 500. Time for a short break, but before we do that, let's dive into Growth Code now, which is an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. Now this week, CNBC-TV18's Nigel D'Souza interviewed Rohit Srivastava, who's the founder and market strategist at IndiaCharts.com, to understand why traders must avoid guaranteed return schemes.
What are the legal as well as financial risks associated with participating in a so-called guaranteed return scheme?
So a guaranteed scheme is essentially telling you that you are going to get a fixed return from the market. Now, by definition, the market comes with risk, right? Every investment scheme that has been approved by either SEBI, if it's a mutual fund or a portfolio management scheme, has to tell you that equity investing comes with associated risks, and you really can't have guaranteed returns. So nobody is really permitted to give you a guaranteed return. So by itself, if you're being guaranteed a return, it's a scam. It's right there. Right. And there's then going to be no legal recourse, because most probably he's not registered with any institution.
Correct.
And you can't really go after him once he runs away with your money.
They contain all the bitters, liqueurs, and juices you need to make a perfect cocktail.
So how many cocktails or how many alcohol varieties of alcohols can you load in this particular machine? So I can have whiskey with vodka. How does it work?
Right, so right now it's 4. There's 4 reservoirs, so you add 4 spirits, right? It's whiskey, tequila, rum, and vodka. So you load those 4, and that'll make you over 100 cocktails, no problem. Yeah. And then you could swap out gin and rum, so it actually comes with a 5th reservoir, so if you want to swap it. But in the cocktails, we have, again, over 65 different cocktails. And again, customers don't always want, they don't have pineapple juice, they don't have liqueurs or bitters at home. So with Bartesian, you don't have to have all these ingredients on ready. They're all inside these capsules.
So that's what the pods do. Like, for example, if you want to have a blackberry margarita, all you need to do is just load a tequila on the side and just insert the pod, and you get the flavor of the blackberry along with that.
Well, that's it. I mean, the best way to show you is just by making a cocktail. So there's a barcode on each cocktail, right? And so that's going to tell the Bartesian what alcohol to pull. And what's even cooler is when you put it in, it'll tell you what glass to put underneath. So in this case, a lowball glass with ice, and then you hit next, and you can select your strength. So you can customize whether you want a mocktail, light, regular, or strong, and you just twist this to pick the version that you want, and then you hit mix. And so what it's going to do, and I don't know if the camera can see it, but it's going to pull the tequila in this case.
Sure.
Again, the unit knows that you put in a margarita and it needs tequila.
Okay, I'm going to try this one out soon, but before that, how much does this machine cost?
This is $369.
$369.
I'm safe.
Welcome back. Now, the electric vehicle race in the passenger car segment is all set to heat up in 2025. Mahindra & Mahindra, Maruti, Hyundai, JSW MG Motor and Tata Motors are all launching electric cars at the upcoming Auto Expo. Parikshit is here with details on all of those. Parikshit.
The electric passenger car market is all set to heat up in 2025, with the Mahindra Group firing the first shot. They had announced prices for the starting variants of their new electric vehicles, the BE6 and the XEV9, at Rs 18.9 lakhs and 21.9 lakhs respectively. Now the company announced prices for top variants which start at Rs 26.9 lakh and 30.5 lakhs. Bookings start on the 14th of February. Deliveries will begin from early March 2025. Now, the Mahindra Group has packed in a lot of features usually found in top luxury vehicles. These cars have ADAS Level 2+, which can detect animals on road, auto park with remote control option, 360-degree camera, driver and occupant monitoring system to check driver fatigue, 16-speaker Harman Kardon Dolby Atmos sound system, and augmented reality heads-up display. So the company's strategy is to give you a power-packed vehicle, which is a luxury offering stacked against the likes of Mercedes, which has the EQA SUV at Rs 67 lakhs, the Audi Q8 e-tron at a starting price of 1 crore 14 lakhs, and the BMW iX1 electric SUV starting at Rs 67 lakhs ex-showroom. Mahindra has also tried to bring in parity with top-selling internal combustion or petrol-diesel SUVs in the market. The BE6 and the XEV9e are priced between 19 lakhs to 30.5 lakhs. The XUV 700 from the Mahindra stable is priced between 14 lakhs to the 26 lakh price tag. For Creta, the pricing is between 11 lakhs and 20 lakhs for the top variant. For Maruti Vitara, it is between 14 lakhs for the entry-level model and Rs 20 lakhs for the top variant. 15 lakhs is the price for the entry-level Safari SUV, and the top model of the Safari costs Rs 25 lakhs. So you are already seeing some level of price parity between electric vehicles and ICE. Now, with several e-cars being launched in 2025, there is bound to be a price war. Here's how others will stack up. Hyundai is launching the electric Creta at the Auto Expo, which is expected to be priced between 20 lakhs and 30 lakhs for different variants. The driving range for the e-Creta will be over 450 kilometers in a single charge. The e-Vitara also expected to be priced between 20 lakhs and 30 lakhs across variants and will give you a range of over 500 kilometers. Then you've got the Sierra and Harrier EV, which will be launched in FY26. They too will be priced aggressively and the range will be over 500 kilometers, and this is something that the company has already announced. Already in 2024, we saw a lot of competition in the e-car market. Some of the top existing players, including the Curve EV, which costs between Rs 18 lakhs and Rs 22 lakhs. Mahindra's new EVs are positioned in this segment that you have Curve, the Tata Curve, playing in. Then you also have the ZS EV costing between 19 lakh rupees and 25 lakh rupees. The eXUV 400 from the Mahindra Group costs in the range of 15.5 lakhs and 17.69 lakhs. The Windsor EV, which is doing well and has sold over 10,000 units in just the last 3 months, costs between 13.4 lakhs and 15.49 lakhs. Tata Motors continues to lead the electric passenger car market with over 61,496 EVs sold in 2024 compared to 60,100 EVs sold in 2023. Tata Motors has hit the sweet spot in terms of pricing as it offers cars like the Altroz EV, the Tiago EV, the Nexon EV, the Punch EV, the Curve EV, all in the range of 10 lakhs and Rs 22 lakhs. But their market share has dipped in 2024 to 62% from 73% in 2023. This is because of companies like JSW, MG Motor, Mahindra eXUV, BYD, Hyundai, all increasing sales and their presence even though on a low base. 2025 could well be a turning point in electric car adoption.
All right, a turning point in electric car adoption with the launches that there are. Just keep an eye on a bunch of those stocks, though. We have SRF around 14% higher. Let's get in, Vikash Jain of CLSA, the India strategist and head of CLSA, head of research at CLSA, who spoke to us earlier today, spoke about market expectations, also said that he favors FMCG versus industrials given the expected shift in the government's stance. And as a result of which, we have a bunch of these FMCG stocks which are outperforming today. Let's hear him out.
There is obviously risk to earnings in FY26. If you remember the last quarter, we saw pretty big downgrades in earnings. So, further downgrades can be a bit problematic in terms of expectations of Nifty returns. We are at 12 to 13% of credit growth. The earnings number that consensus is baking in for FY26 is Nifty earnings growth is about 16%. We'd be slightly lower than that. We need bond yields to not go much higher, and also at the same point of time expect that equity and bond differential stays very high, and we do not see earnings cut. I think that's a lot of things which are uncertain, and that's why I would say that not gunning for big returns, single digit returns will be, if we scrape through with that, we'll be very happy with that. So there's going to be a period where things will go much cheaper, and then we can come back to hope for an up move. But net, don't think we're going to end with a very high number versus where we started this year. I think, see, we've had a great run. This could be that year of consolidation following which started in October. That might very well continue. Biggest overweight is actually staples. So we run a India focused portfolio, and for the last 4 years, I've tended to completely avoid staples. And this time at the start of the year, we've actually made staples our biggest overweight, cut our overweight in banks to just above neutral. Staples, I believe that that's really the big sector call, which we have taken very anti-consensus. We believe that the realities of coalition government and the hints that we have got from recent state elections, plus the good rainfall that we've seen and the good sowing that we've seen, maybe just bring back that affordable consumption to kind of life. And within staples, we like the food-related companies more.
Anti-consensus call from CLSA on consumer staples. Mind you, all of these names have corrected anywhere between 20 to 30% from their peak, be it the likes of HUL, DMart, ITC, or even Britannia for that matter. We'll take a short break. The Nifty currently above the mark of 23,600. What are the charts indicating? Is there a recovery on the annual as we saw in yesterday's session? Aditya Agarwal of Invest4Edu joins us on the other side to answer that and also share some trading strategies. Stay tuned.
Markets?
It's in the U.S. market, and the U.K., Germany, Italy, France, and Australia.
Perfect. And how much do the pods cost?
They're $19.99 for an 8-pack, so about $2.50 per capsule.
As good as like an espresso machine,
Well,
right?
that's right, and I mean, saves you $18 from a cocktail going out to a lounge. These are lounge quality cocktails in your home.
Thank you so much, Ryan. Thanks for sharing all of these things with us. Thanks for joining us today on CNBC-TV18.
My pleasure. Thank you.
The mission for the company is to become a leading building materials player with delivering superior value. We are committed to our mission and will continue to grow our company in the future and beyond. If we had this conversation probably 2 months ago, I would have presented a gloom and doom scenario with prices really going down, and certainly it bottomed out in October and November. But I think come December, we've had price increases. We took price increases in East as well as in North markets, and albeit not very big price increase, but we have indeed taken price increase in all the key markets in East as well as in North, and this number should hold good in January and beyond.
Welcome back. We just mentioned at the start of the show that the day completely belongs to chemical companies, be it the likes of Navin Fluorine and SRF. Now, both of them are trading with gains of anywhere between 13 to 15%. And both of these companies are the ones who produce refrigerants. And they are surging today on the back of a report from Equirus. Yatin Mota is joining in now with more details on this. Yatin.
Well, if you look at gas stocks, Navin Fluorine and SRF are buzzing in trade on the back of Equirus note, which says that in the US, we have seen supply disruptions with respect to refrigerant gases. Two varieties, R32 and R125, have seen price increases of over 200% in the spot market. What does this mean for Navin Fluorine and SRF is that since they are major exporters and manufacturers of R32 and R35, as well as R125, these are refrigerant gases which are used in air conditioners and refrigerators, wherein the demand and supply mismatch in the US has caused a big disruption. In fact, if you look at the Equirus note, they say that for every $1 price increase in R32, SRF EBITDA increases by over 260 crores, and the figure for Navin Fluorine is around 77 crores. Now, if you look at capacities also, SRF has a capacity of nearly 30,000 tons for R32, and nearly 9,000 tons capacity is with Navin Fluorine with respect to R32. So given the fact that US markets are witnessing price hikes of nearly $3 to $4 per kg, the stocks are buzzing. Obviously, the note also says that the impact of price hike, since the entire capacity is contracted, would be important to watch. And if the price sustains from here on, there could be a big impact on the EBITDA margins for Navin Fluorine in the next 3 to 4 quarters, and probably the reason why the stocks are buzzing in trade.
Stellar moves on both of these names, double-digit gains for both SRF and Navin Fluorine. Yatin, thanks a lot for that update. Before we went into the break, we just said the Nifty is above 23,600. Now it's back below that level. So the expiry-related moves are coming into play now. What are the FNO data indicating? Mangalam is hopped across to the wall now to tell us just that.
If you look at the way the market has been poised, it's very, very interesting. Why do I say that? Because yes, we are lower in today's trading session. The Nifty is sold off. It's below that 23,600 mark. The Nifty banked down 400 points. Mid-cap index outperforming by virtue of not falling as much, but still down about 0.2% itself. But the interesting part is over the last 5 trading sessions since last Thursday, where there was that big bazooka move on the way up, Jan 2 that was, Nifty has been making lower highs. So 24,200 was the high on Jan 2nd, and thereafter it's all come down. Today's high on the Nifty is 23,689. But at the same time, at the lower levels, it is not breaking earlier lows. So December 31st, the low was 23,460. Jan 8th, the low was 23,496. Today as well, the low has been above that 23,550 mark itself. The question is, which way does the market go? The answer to that lies in whether it breaks yesterday's high first or today's low first is something that we'll watch out for. The street is poised for some sort of consolidation for expiry. 23,550 call, premium of 30 rupees. 23,550 put as well has a premium of almost 24-25 rupees. Rounded off, 50 rupees is what these straddle writers are betting on. So 23,500 at the lower level and 23,600 at the upper level. But were the markets to go lower, there is a bigger amount of bet on support around that 23,500 mark as against resistance on the way up. So if we do see some recovery above 23,600 and sustain above that, maybe cross today's earlier high of 23,689 and go past yesterday's high as well, there is case for a big short covering in the second half of trade. If not, then 23,500 is the support that most on the street are betting for. A lot of long positions added on IGL. ITC led the way in yesterday's trading session in the second half. Some long positions added on ITC as well.
Interesting, Mangalam. Thank you for that update. But just before we go to Aditya Agarwala, some important flashes on your screen on Religare. The Madhya Pradesh High Court has disposed of the petition against the Reserve Bank of India and SEBI with regards to the AGM, and the decks are now cleared for the open offer and for the AGM to be conducted. The flashes will come back on your screen in just a minute. So important news coming in there for Religare. Is reacting to that news now, 4.5% higher on the stock. So important developments there with regards to Religare. But let's hop across back to Aditya Agarwala of Invest for Edu, who's joining in on the show. Aditya, good afternoon. Thank you for joining in. Mangalam asked a very pertinent question. Will we break yesterday's high first, or will we break yesterday's low first? Which way is your tilt now, Aditya? And couple that up with your stock recommendations as well.
Good afternoon, Hormus. Good afternoon, Mangalam. Thanks for having the show. I had hoped that Mangalam answers that as well on my behalf so that I don't have to answer that. It's a very difficult question to answer at the moment because clearly there is weakness in the market. And while I say there is weakness in the market, I also see a lot of positive divergences building up on lower time frame charts. What do I mean by positive divergence? RSI is making a higher low while the price is making a lower low. So I'll give some importance and some weightage to the positive divergences that are building up on the chart setup. So I think that there could be a short covering rally first in the market before we see another round of selling that can follow through. And if I have to pick one index between the Nifty and the Bank Nifty, I would go for a Bank Nifty clearly because it has oversold. It is trading at an oversold territory. So the index has been correcting big time in the last few trading sessions, and plus multiple positive divergences are there on the lower time frame chart. So if I have to pick one index to go for a long trade from here on, it would be the Bank Nifty. I think on the downside, 49,300 is a very key support area for the Bank Nifty. On the upside, it can easily cover up about 1,000 points to about 500 points easily. That is the kind of oversold zone that the index is sitting at. So yes, I would want to believe, and I think that markets will first see a short covering rally before we see another round of selling pressure. And the one index that I'm closely monitoring and eyeing is the Bank Nifty, which is where I think a lot of short covering rally will play out. Talking of stock-specific ideas, then I want to buy in a sell for our viewers. The first one is Reliance Industries. It's a buy recommendation on Reliance Industries, a very interesting chart setup. It's more of a positional trade from my end. I'm looking at a target of 1,400 on Reliance Industries, a buy at current levels with a stop loss somewhere around 1,200 odd levels, very close to its 200 weekly moving average, which is a very important support area. Stock hasn't broken that in some time now. So I think it offers an excellent risk to reward as well. So at current levels, I'll be a buyer in Reliance for a target of 1,400. I have a short call on Shriram Finance. Looks weak on the chart setup, broken down from a bearish flag pattern, also trading below its 200 DMA. So I think there is some more weakness here, which can follow through. So for a target of 2,700, I'll go short on the stock with a stop loss somewhere around 2,930 on the upside.
All right, Aditya, thanks a lot for joining in and giving us your views. As we speak, there is the AMFI data, which is out at the bottom of your screen as well. The net equity inflows have increased for the previous month, as against the month of November itself. For December, it's 41,136 crores. This compares with 35,927 odd crores. The mid-cap, funds have seen a little more inflow than the previous month as well, 5,093 crores versus 4883 crores. The large cap too has continued to see some up move. What's interesting is that after October, there was a brief dip in November. Now numbers have increased sequentially as well. So from 41,865 crores in October, it went down to 35,927 crores and now has inched once again month on month, and that's a positive net equity inflow that there is. And we've also seen some decent inflows into large caps, mid caps, as well as the small caps. What will be interesting to see is whether SIPs continue to trend above that 25,000 crore mark or not. No reason to believe they won't, but whether they grow beyond that or not is something that we'll be keeping an eye out on too.
Interesting. The one number that I'll be watching out for is the sectoral and thematic fund inflows. And that is also because after an entire year of almost 6 to 7 months of inflows of over 10,000 crores, that number has seen a dip in the month of November, and that too contributed to that net equity inflow number dipping as well in comparison to October. We have Sandeep Bagla, who is the CEO of Trust Mutual Fund, who is joining in for an immediate reaction on this. Sandeep, good afternoon. Thank you for joining in. Almost seems like the numbers are back to a status quo, right, as they were in November, almost at a similar level, and the large cap flows have remained relatively consistent, and the mid cap flows continue to increase as well. What do you make of these numbers prima facie?
Good afternoon. Thank you for having me on the show. I think this trend is very, very strong and it is very, very much intact. So I think one slight dip in the last month was because there was a dip in sectoral and thematic funds. Probably because there were lesser number of NFOs, because NFOs nowadays account for 3,000-4,000 crores of collections in the NFO period itself. So I think the investor is quite bullish, I would say, on Indian equities, although the short-term outlook is still quite uncertain. But I think my understanding is most distributors tell me that their holding period for their investors has become far longer than earlier, going as high as 3 to 5 years now. And I think with that kind of outlook, if somebody has those kind of surpluses and the flexibility to invest, I think this is as good a time as any to invest in India. So I think this trend remains strong. It remains resolute. And I think the flows are also fairly constant.
All right. So the investors are extremely mature now, increase their holding period, bullish as well, despite the near-term uncertainty and volatility that we're seeing in the markets. We also have Akhil Chaturvedi, who is the Executive Director and Chief Business Officer at Motilal Oswal AMC, joining in. It seems like, there has been a recovery back to status quo when it comes to the flows after the brief dip that we saw in the month of November as well. Akhil, just wanted your thoughts on two things. One is, this notion that flows make markets or markets make flows. Typically, if the market does not give you returns for a bit of a period of time, it's then that the flows start to evaporate, or maybe people, start holding back on their investment plans for the horizon. So I just wanted to know that if the near-term outlook for the market is uncertain, will that impact flows in the very near term? And a lot of people are already sitting on fair amount of underperformance from the small and mid-cap end of things, the broader markets as well. Could that be a cause for worry for future flows, or do you think maybe the investors are past that worry and this will continue to grow?
So I think I think things have really changed quite a bit in terms of how investors think in terms of investing into equities. Now, what you're seeing is that October was I think for the year it was the top month. It was a high month. November we saw the flows dipping down a bit, and then December has been I think one of the good months once again. I think clearly investors, in terms of their behavior, one thing is clearly coming out that they are trying to benefit out of the market volatility, right? So they believe that it's good if the markets are volatile, and if one is getting entry levels at lower prices, it's good for long-term compounding. I think that trend is changing. So several years ago, yes, what you're saying makes sense that if the markets are volatile or if they are not making enough returns for a few months, then the flows kind of tend to slow down or SIPs tend to shut down. But that's not what is coming out in the last 6 months. I think last 6 months we have seen that markets have been extremely volatile with no clear direction, whether it's a bull market or a bear market. Broadly, we've been in a range. But flows have been, the SIP numbers have been moving up. Number of investors have been moving up, and the flows are also net positive with if you look at net sales, broadly the range is like 2,000-3,000 crores. So some months you're looking at 42,000-43,000 crores of net sales. So weaker months you're looking at 38,000-39,000 crores of net sales. But clearly investors are become smart. I think that's a very, very happy thing to note. Now, yes, I think we need to wait and watch that if this underperformance sustains for maybe next 3 months, then whether the behavior will change and one will hold back and wait for the opportune time to come in. But for now, I think clearly it seems to be pretty okay in terms of the investor sentiment.
Sandeep, the mid-cap and the small-cap funds, they continue to garner inflows. Both of them, the figures are higher compared to the last month. And this despite most of these broader market names correcting anywhere between 20% to 30% from their peaks. Now, usually that would invite a lot of panic, but does that also imply that the investors are also more aware of what and where they are investing in to carry forward what Akhil just mentioned?
See, while some names might have corrected by 20-30%, I think the mutual funds have done a far better job than that. So I have seen mutual fund data in terms of performance has been far stable. I think people have understood that volatility is a part and parcel of the markets. And I think you guys are doing a good job in terms of keeping us updated about the key events in the future. People know that there is going to be volatility in the US political scenario and their policy formations. People know that the economy is slowing down. I think most investing public has taken a longer term view. And I think they are aligned with the demographic dividend which India is promising and we have seen that the scales of companies that we invest in changes quite dramatically over a period of time. I think this quarter end, I think some companies have become from small to mid. So I think there is a lot of growth at the small cap space. And I think a lot of new listings, new companies, new sectors opening up. And that is where the growth is happening. And that is why you are seeing highest flows in small cap funds compared to any other fund category.
All right. Akhil, your final words. You said that if there is underperformance for the next 2-3 months, we may have to look back and monitor how the flows picture pans out. But the very near future, you see no worries. Yes, it is stable, but do you see further, drivers for growth here over and above what the numbers are already? 41,836 in the month of October. Do you think that gets crossed anytime in the very near future?
See, obviously we have to wait and watch what happens after 3 months. I hope that things are, things are good and the optimism is there. I think clearly Indian investors have understood one thing, that India is a long-term story and one needs to invest for like 10, 15, 20 years and, benefit from this whole, India growth story, what is playing out. And one is trying to take benefit of all the volatility which is happening, in the recent times, to buy at lower levels. Right now, if you just look at the numbers are not out, but if I just see my internal numbers for the first few days of January, I think the optimism is continuing. So I think if I just extrapolate the last few days of numbers in January, then maybe January also looks very similar to December, if not better.
All right, Akhil, Sandeep, thank you so much for sparing time and joining us today to discuss the AMFI numbers that were reported for the month of December. Thank you for sparing time, gentlemen. That was the AMFI data then. The December mutual fund inflows around about 41,000 crores, almost the same level as of October. But time to slip into a short break. But as we do that, we're counting down to Budget 2025 and India is looking to seize the moment and establish itself as a global economic outlier. Now, the upcoming budget which will be the NDA government's first full budget after the election victory, will be key to unlocking the ambitions of millions of Indians. So tell us, what do you want from Budget 2025 by submitting your wish list to the CNBC-TV18's budget box, and tune in to your budget headquarters, which is of course CNBC-TV18, for unparalleled insights and coverage on the budget day, which is the 1st of February. Take a break, be right back.
we're going to be announcing a future date pretty soon. We're going to change because we do most of the work.
Welcome back. Now we are entering down to the lowest point of the day now is the Nifty 23,550 is where the index is at, but we'll keep an eye out on the index. A slight bit of recovery has now been swiftly sold into, but all eyes on TCS today. The third quarter results coming out maybe before market close or just after market hours. Rima is here to tell us what to expect from the big boy. Rima.
Well, expect a muted quarter from TCS on account of three reasons. One, the seasonality, the lower working days and furloughs. Secondly, the incremental contribution from BSNL in Q3 is likely to be lower than Q2. And the third reason is cross-currency headwinds on account of the dollar strength. So dollar revenue growth is likely to be down 0.6% according to the CNBC-TV18 poll on a quarter-on-quarter basis, though on a constant currency basis, the revenue growth could be on the flatter side. There are some estimates which are mildly negative and some which are mildly positive. Our poll is at about 0.2%. EBIT margins are seen up by 40 basis points to 24.5%. This is after 2 consecutive quarters of a decline. And profits are seen up nearly 4%. Now, what will the street watch? One, the growth X of the BSNL contribution. If you remember in Q2, international revenues declined by 0.4% for the weakest since COVID. Secondly, continued recovery in BFSI. Do the green shoots continue? Third, the outlook on US healthcare, because in Q2, we saw some clients cancelling discretionary projects, particularly in US healthcare. Has that persisted or have things recovered? And then the usual questions of discretionary spending. Is it back? Is it better than Q2? Has it extended itself to beyond BFSI? The client budgets, the outlook on margins, etc. Now, the stock has been a bit of an underperformer versus peers. In the last 12 months, TCS share price is up 8%, while in Infees up 25%. And as a result of this, Infees valuations have converged to that of TCS, and TCS share price is also about 12% off its peaks. Back to you.
All right, Rima, thanks a lot for that. So that's about TCS currently at the low point of trade. We'll slim to a short break, get him on the markets and a lot of individual stocks.
We're going to be changing sort of the opposite of Biden, where he's closing everything up, essentially getting rid of $50 to $60 trillion worth of assets. We're going to be changing the name of the Gulf of Mexico to the Gulf of America, which has a beautiful ring that covers a lot of territory. The Gulf of America, what a beautiful name. And it's appropriate. It's appropriate. We have a massive deficit with Mexico, and we help Mexico a lot. They're essentially run by the cartels, and can't let that happen. Mexico's really in trouble, a lot of trouble. Very dangerous place. And Mexico has to stop allowing millions of people to pour into our country. They can stop them. And we're going to put very serious tariffs on Mexico and Canada, because Canada, they come through Canada too, and the drugs that are coming through are at record numbers, record numbers. And we want to get along with everybody, but they have to. It takes two to tango.
Going to be the next Chief Minister of India's national capital. The decision would be made by the voters of Delhi on the 5th of February. The schedule for the Legislative Assembly elections in Delhi has been announced by the Election Commission. Elections would take place on the 5th of February in a single phase, and the results would be announced on the 8th of February. Now, since the union budget is slated to be tabled on the 1st of
Welcome back. Even as the Nifty is currently sitting with a cut of over 100 points, 133 points to be precise, we do have a bunch of stocks which are spiking as we speak. We have Bharti Airtel, which has moved to the high point of trade. M&M is the other one which is actually doing quite well. And Nestle India from the front line end. FMCG stocks are actually, bucking the trend of selling today and seeing a bit of an uptick. Trent, which was an underperformer, has actually corrected over 20% from the highs, is seeing some bit of pullback from the lows as well. Still in the red, but has recovered from the lows. In the broader markets, we have Escorts Kubota, which has moved higher. And alongside that, we have Astral, which also has seen a bit of an uptick. And this is just recent over the last 15 minutes or so. The other bunch of stocks which are doing well from the cash market end of things are Sami Hotels. This morning, there was a note coming in on the travel and tourism space by Jefferies saying that no matter how elevated the rates, the desire for travel in India is still intact. That stock is up around 6%. We are also seeing some more traction in a couple of these cash market FMCG names like Imami, etc., which are seeing well-bidded trades today. Imami is up around 3.5%. Take a short break, come back, focus on the commodity space. Manisha Gupta, as always, joins in with a guest who she has today. Harshal Barot of Metals Focus joins in to detail the happenings in the commodity space.
The Election Commission has requested the Union government to not include any Delhi-centric announcements in the budget to ensure a level playing field for all political parties.
Number one. बजट फरवरी को आएगा ये आपने पूछा. अब 5 फरवरी को तो पोलिंग है, तो इसलिए ऐसी दिल्ली स्पेसिफिक हम आज ही चिट्ठी इशू कर देंगे. कैबिनेट सेक्रेटरी को आज ही स्टैंडिंग इंस्ट्रक्शन इशू करेंगे कि कोई भी दिल्ली स्पेसिफिक बजट में चीज का शामिल नहीं किया जा सकता which can disturb the level playing field. For Pan India, there is no problem, and that's the practice always whenever the voter account or the elections happen during the budgets happen during the election process. आपने कहा एक पूछा कि confrontation का रास्ता, ये बिल्कुल भी सही नहीं है. Political सबसे important पूरे लोकतंत्र में सबसे important voter and second most important is political party and media. 3, one by one. I mean, I won't say 1, 2, 3, but all 3 equal. Media, because at every stage we allow media from in the districts कि आप सब देखते रहिए, आप हमारे आँख कान बने रहिए, पब्लिक को बताते रहिए, गलती हो हमें समझाते. Disclosure. Voter because he is the king. And political parties because they are intermediaries. We have never interfered whenever there has been a campaigning or a political discourse, unless only in one situation. That is, if the timing is such that the vital electoral process is on, that is either polling or counting.
Welcome back, and joining us on the show now is Harshal Barot, Senior Consultant, South Asia and Middle East at Metal Focus. Harshal, hi, thank you so much for joining us. I want to start with the import numbers first, and we were chatting yesterday where you said that the Commerce Ministry numbers are yet to come, and that comes with a lag of 2 months. But with the way it is being reconciled, what is your sense? Because this has started from the month of July. Would you say that we are getting now used to the new software?
I would believe so, Manisha, because as you rightly said, since July onward, we started spotting something amiss in the data because the data that and the information that we were getting from some of the foreign suppliers and some what the other countries report that they export to India, there was a discrepancy between what other countries were reporting as exports to India and what India was showing as imports. So hopefully now all of that is sorted out, but we'll wait and see, from this month onwards in terms of, which exact ports where this is happening, and in the future that this may not happen. But as of now, I think it's good news for the industry and for people like us who are keeping track of this data, to get rid of this discrepancy, whatever it was.
So, Harshal, if you look at this current year and with the new reconciliation that we've seen from the month of July onwards, what is the sense until November? We've seen some 664 tons of gold being imported. If we put an approximate number to December, where do you see the imports standing then?
So December, we are estimating around 50 to 60 tons of imports at the moment. So somewhere around 730, 740 would be the full year number in our estimate. So yeah, so reasonably strong. I think, all the discrepancies aside, full year, if you look at, given where prices are in Indian rupee terms and even in dollar terms, we are really at record highs. We've seen record high average prices this year as well. In that sense, Indian consumer buying has been pretty robust given where prices are.
And Harshal, would you say that the duty cut of 9% in the month of July, even taking that in, it really hasn't been a very strong run-up that we've seen in sense of imports?
Yes, definitely. So we saw that immediate jump after the import duty was cut in July. So we saw this big import number coming in August. But since then, because global prices also started to come up, we saw the rupee also depreciating. So that, in a sense, that benefit was very short-lived. And from a consumer perspective, the prices were back where they were even before the duty was cut. So we didn't really see the full benefits in that sense. But as I said, if you look at the larger picture, given where prices have been trending this year, Indian consumer demand has been pretty resilient.
Harshal, you've released a Metal Focus 2025 Outlook report today, and you are bullish on gold and silver. What are the kind of targets that Metal Focus is putting out for this year, and with what reasons?
So for the first half of the year, we definitely see the $3,000 level for gold is something that we see coming in the first half of the year. The big reasons, primary drivers for that are the uncertainties that we still have around Trump's tariffs, some of the noises that he's been making on the geopolitical front, be it his support for NATO, some statements about Canada and some of his NATO partners, and of course the big uncertainty about what happens with the trade relations with China. So given all the uncertainties and given that the gold prices have been pretty resilient with what we've seen in the US dollar and US yields, I think it gives us a sense of confidence that we are still to see some upside in gold. Second half of the year, then we see some cooling down in the prices as the dust settles.
Sure. Harshal, also, when you look at the Indian demand itself, would you say, and this is a claim that many have been making, that we've seen unofficial gold or smuggled gold coming into India considerably decline?
Yes, that's true. Based on our research and the conversations that we have from Middle East as well, I think the incentive has definitely gone down pretty significantly ever since the duty cut has happened. So we do believe that the unofficial gold flow has come down by at least 80 to 90%.
All right, fair point. That a final question on silver then, and are you bullish on that one as well? Because until this time, and this is still early days, but we've seen silver kind of outperform gold until now.
So yes, Manisha, you'd recall we've been pretty bullish on silver over the last couple of years, in fact. So early in the year, probably some headwinds because of the concerns emanating out of China and the broader industrial complex weakness. So there could be periods where it underperforms gold, but from a slightly longer term horizon, we definitely see silver continuing to outperform gold.
All right, Harshal, thank you so much for sparing time and joining us today on the show. Manisha, thank you for joining in as well. With that, it's a wrap on this edition of Halftime Report. We leave you with the Nifty at 23,530, 150 points down on the index. The Sensex is also nearing a 500-point drop as we speak, and a lot of these sectoral indices are not doing well in today's session, be it the likes of real estate, PSU banks, or even the Nifty Bank for that matter, and metals, all four of them trading with losses of over 1%. From Mangalam, me and the team that put the show together, thank you so much for watching. Business Lunch takes you through the next 30 minutes.
Days or very close to these 2 days, we cannot allow any rumor mongering because that can disturb and create serious law and order problems in the entire country.
It's going to be a three-way contest in the national capital with the Aam Aadmi Party, the BJP and the Congress in the fray. The Aam Aadmi Party is looking to defend its turf and is looking to get third time lucky after winning the previous assembly elections in 2015 and 2020 by comfortable margins. It had won 67 out of 70 seats in 2015 and had won 63 out of 70 seats in 2020. The party is looking to repeat its performance even as several allegations of corruption have surfaced against the party's top leadership in the past few years. The allegations, of course, have been denied by the leadership, but the party has also seen several exits and complaints of corruption and mismanagement by the BJP and the Congress. It remains to be seen what is going to be the party's poll strategy and the kind of defense which is going to be tendered by the party. Also, the party till now has touted several of its welfare schemes as the reasons behind its electoral success in the national capital, which includes the provision of free electricity and water, as well as the announcement of a monthly dole for women. Similar announcements have also been made by the BJP and the Congress. On the other hand, the BJP is looking to replicate its performance in Delhi's Lok Sabha elections since the previous 3 terms and is going to look at replicating the performance in the assembly elections this time around. Since the previous 2 terms, the BJP has not been successful in getting a good number of seats and only managed to get 3 seats in 2015 and 7 seats in 2020. The party has fielded several turncoats from the Aam Aadmi Party and the Congress to bolster its chances on several seats. Also, it's targeting several other seats where the vote share for the party was relatively good compared to other seats and has fielded turncoats on several seats. Also, the Congress party, whose performance had sunk to a rock bottom the last time around, they had lost their deposit, they had forfeited their deposit on all seats except 3 in the previous elections. They are looking to make a comeback on the basis of the work which was done by the Sheila Dikshit government in the past in the national capital. It remains to be seen what is going to be the poll strategy of all these parties, even as there are not going to be any alliances this time around between the Aam Aadmi Party and the Congress. And although both the parties are confident that the lack of an alliance is going to bolster their chances, the BJP is also confident that the votes
Big trade on D Street as Indian market dips in line with global weakness. Commodity, PSU and bank stocks lead the declines, with the Nifty Bank down almost 1%, outpacing the Nifty's fall of 0.2%. The mid-cap index falls by about 0.5%. Prospects of a fewer Fed rate cut and possible use of US emergency laws by Donald Trump to impose higher tariffs spooks global markets. Stocks decline from Wall Street to Asia. The dollar index climbs back about 109. The rupee hits a new low of 85.92 but recovers reportedly on RBI support. TCS set to kick off third quarter earnings season. Revenue expected to remain flat in constant currency terms versus the second quarter due to seasonality and ramp down of the BSNL contract. Margins expected to increase by about 0.5 percentage point and to close to around 24.5%. 2025 is likely to be a year of consolidation, says CLSA's Vikas Chen. Brokerage bets on FMCG stocks over industrials this year, expecting a tilt in government policy towards welfareism. Manappuram gains after RBI lifts restrictions on Asirvad Microfinance. Lupin is in the green as the US FDA gives a less severe VAI classification to the company's Pithampur facility. Swiggy rises 4% as Bernstein initiates coverage on the stock, expecting 25% upside. Good afternoon, you're watching us here on Business Lunch. I'm Manglam Malu. We're looking at the markets right now, another day of decline. The only difference between yesterday and today is that yesterday towards this hour we started seeing a bit of recovery or signs of recovery from the lows on the indices, and towards the end of trade, we ended about 190 points off lows. Does that happen today or not is the big question, because the wee bit of recovery that we got about 15 minutes ago on the Nifty has been sold into, and once again, we're near the lower end of today's trading range. The only couple of levels to watch out for on the way down for the Nifty would be 23,500 and 23,450 itself, which corresponds to the very recent lows that we had seen on the frontline index. It's the Nifty Bank which is taking the frontline index lower. HDFC Bank is the top contributor on the way down. Reliance coming in for some profit taking after an outperformance in yesterday's trading session, and we have L&T and ICICI Bank also among the key draggers on the index. The ones which are fighting for the bulls include some of these FMCG names. So you have HUL doing extremely well. Nestle has moved to the high point of trade. Britannia is doing extremely well along with Tata Consumer, and a couple of these broader market names like Dabur and Marico also picking some pace. So a bunch of stocks on our radar, but today kicks off the third quarter earnings season with TCS expected to report a muted set of numbers post market hours today. We have Rima joining in with what the street is expecting. This time, yesterday we saw a recovery on TCS, but currently ahead of numbers, the stock at the low point of trade. Rima.
Well, expect a muted quarter from TCS on account of three reasons. One, the seasonality, the lower working days and furloughs. Secondly, the incremental contribution from BSNL in Q3 is likely to be lower than Q2. And the third reason is cross-currency headwinds on account of the dollar strength. So dollar revenue growth is likely to be down 0.6% according to the CNBC-TV18 poll on a quarter-on-quarter basis. Though on a constant currency basis, the revenue growth could be on the flatter side. There are some estimates which are mildly negative and some which are mildly positive. Our poll is at about 0.2%. EBIT margins are seen up by 40 basis points to 24.5%. This is after 2 consecutive quarters of a decline, and profits are seen up nearly 4%. Now, what will the street watch? One, the growth X of the X of the BSNL contribution. If you remember, in Q2, international revenues declined by 0.4% for the weakest since COVID. Secondly, continued recovery in BFSI. Do the green shoots continue? Third, the outlook on US healthcare, because in Q2, we saw some clients cancelling discretionary projects, particularly in US healthcare. Has that persisted or have things recovered? And then the usual questions of discretionary spending. Is it back? Is it better than Q2? Has it extended itself to beyond BFSI, the client budgets, the outlook on margins, etc. Now, the stock has been a bit of an underperformer versus peers. In the last 12 months, TCS share price is up 8%, while an Infy is up 25%. And as a result of this, Infy's valuations have converged to that of TCS, and TCS share price is also about 12% off its peaks. Back to you.
All right, with that, let's talk about the microfinance companies. They met with the Financial Services Secretary yesterday. In the meeting, MFIs conveyed that they are facing difficulties in raising low-cost term funds and long-term funds, and the quality of the portfolio is also being impacted by various issues, including a reduction in lending to the sector itself. The industry requested the formulation of a credit guarantee scheme, a special fund for companies operating in the Northeast, and relaxations in qualifying asset norms. The DFS Secretary also emphasized that the MFIs, or microfinance institutions in India, need to be more robust, vibrant and financially sound, and the need to draw a roadmap to strengthen the sector. Let's actually hear out what MFIN's Alok Mishra had to say to us this morning.
I presented the sector's contributions, what is the sector's outreach, and also few other issues like what is the current credit quality and what are the requests to the government. So all these things were discussed. It was a very cordial meeting, and as you have rightly quoted, the government has last night also issued a press release on it. On the portfolio quality, again, I will tell you the exact figures as of October. PAR 1 to 90 days is around 5 to 5.5%. If you want, I can give you the exact figure also. I think at the year end, we should marginally improve it. By March 25, I think the PAR 1 to 90 days will come down lower, and NPAs will also start coming down. But all the NBFC MFIs, wherever the NPA is there under ECL methodology, they have taken provisions. So I don't see much contribution on the credit quality. You will see we were the first to show the warning signs in May and June, and sector will be the first to come out of it.
All right, and in an otherwise wobbly market, the shares of refrigerant gas companies, the likes of Navin Fluorine and SRF, are extremely well bid in trade today. Near double-digit gains for Navin Fluorine, SRF2 up around 13% on the back of positive news flow that the US may give them higher prices for their products itself. Yatin Mota joins in with more details on this one. Yatin.
Well, if you look at gas stocks, Navin Fluorine and SRF are buzzing in trade on the back of Aquarius note, which says that in the US we have seen supply disruptions with respect to refrigerant gases. Two varieties, R32 and R125, have seen price increases of over 200% in the spot market. What does this mean for Navin Fluorine and SRF is that since they are major exporters and manufacturers of R32 and R35, as well as R125. These are refrigerant gases which are used in air conditioners and refrigerators, wherein the demand and supply mismatch in the US has caused a big disruption. In fact, if you look at the Aquarius note, they say that for every $1 price increase in R32, SRF EBITDA increases by over 260 crores, and the figure for Navin Fluorine is around 77 crores. Now, if you look at capacities also, SRF has a capacity of nearly 30,000 tons for R32, and nearly 9,000 tons capacity is with Navin Fluorine with respect to R32. So given the fact that US markets are witnessing price hikes of nearly $3 to $4 per kg, the stocks are buzzing. Obviously, the note also says that the impact of price hike, since the entire capacity is contracted, would be important to watch. And if the price sustains from here on, there could be a big impact on the EBITDA margins for Navin Fluorine in the next 3 to 4 quarters, and probably the reason why the stocks are buzzing in trade.
All right, we take that point, the possibility of higher EBITDA for both these companies. But SEBI's new rule mandates companies as defaulters even for minor payment lapses. Ritu joins in with more details on that one. Ritu.
Well, SEBI's strict default rules, where even a one-day delay of ₹1 to any investor counts as a default and triggers a rating downgrade, are proving to be quite challenging for corporate India, and the recent Axis Finance case only goes on to highlight how even minor delays can lead to big consequences. This Monday, we saw India Ratings downgrade Axis Finance's rating to default because of a one-day delay in repaying 6 crore rupees on a banking facility. The company had instructed its bank to pay the lender on the due date of 30th of December, but operational issues delayed the payment until the 31st of December. Now, although the rating was restored later, the temporary downgrade has raised quite a stir. In another instance, an NBFC called Kanak Durga Finance was downgraded to D by CARE Ratings in November and then simultaneously upgraded. Why? Because of a delay in processing a payment of just 841 rupees to one out of its 251 investors, and in this case, the delay was because of incorrect details provided by the investor. Now, all of these events really stem from SEBI's November 18th circular that leaves no room for leniency. Now, while this ₹1 one-day default rule has been in place for 7-8 years, the regulator had provided some leniency during the pandemic and allowed rating agencies to recognize technical defaults without actual downgrades for events which were outside their control. But the November 18th circular scraps the entire concept of technical defaults, requiring rating agencies to act on every delay, even if operational or technical. Now, while there is the relaxation of a simultaneous downgrade and upgrade, which SEBI has provided to rating agencies if the issuer deposits the payment in an escrow account and shows genuine intent to pay, even these momentary downgrades can cause reputational damage. The rating volatility can even cause stock price volatility, and for funds that are holding the downgraded debt, the knock-on effect is a hit to NAVs and investor returns. So SEBI's goal is transparency, but it is turning out to be a tricky situation for companies.
Tricky situation indeed. Very interesting story there, Ritu. We'll take a short break, come back, and we talk about the mutual fund data for the month of December, which was released just a short while back. What does it indicate? We'll get you the details after this break.
Votes may get split in a way which may benefit the BJP. However, similar strategies or postulations are also being made by the Aam Aadmi Party and the Congress. So clearly it remains to be seen in which direction the political wind is going to blow in the next 1 month.
The Tata Punch was the highest selling car in 2024 with over 2 lakh units sold. This is for the first time in over 40 years that a company has displaced a Maruti Suzuki car for the top spot. Since the 1980s, the Maruti 800, the WagonR, the Swift and the Dzire have dominated the Indian passenger car market. But this changed in 2024. Punch emerged as the top-selling car, followed by WagonR in the second place, with 1,90,855 units sold. Then you had the Ertiga with 1,90,000 units. Then you had the Brezza in the fourth place with 1,88,000 units. And Creta was in the fifth place with 1,86,000 units sold. So here's why Punch has emerged as the leader. First, it is available in 3 powertrains, petrol, CNG and electric, whereas the WagonR, Ertiga and Brezza are available only in petrol and CNG. Second, many entry-level buyers who considered buying a hatchback have gone for the Tata Punch instead because of its affordability and value proposition. If the entry-level WagonR costs rupees 5.6 lakhs ex-showroom, then the entry-level Punch costs just a little extra at rupees 6,12,000 rupees ex-showroom. Similarly, if the top model of WagonR costs around 7.3 lakh rupees ex-showroom, you can get a mid-range Punch also for the same price, which would have a 7-inch touchscreen with Harman infotainment, Android Auto and Apple CarPlay, reverse parking.
Welcome back. You're watching us here on Business Lunch on CNBC-TV18. No respite for the market, still 150 points down for the Nifty. The Nifty banked down by about 1%, a little over that. Currently at the lower end of today's trading range so far, with the mid-cap index seeing deeper cuts, 2 stocks declining for every 1 stock which is advancing in the broader markets. But the electric vehicle space, that's sure to fire up in 2025. There's a word coming from a lot of experts as well. But the next big thing after that could actually be flying cars. That's some interesting news for all you auto enthusiasts out there. The dream of the Jetsons, the flying car, will soon become mass production. Is that likely to happen by 2026? Well, CNBC TV18's Shibani Harat is at the Consumer Electronics Show at Las Vegas, and she came across this futuristic innovation out there. Take a look.
A flying car that will begin mass production in 2026. No issue of parking or where to take it off from, but you need to have $300,000 in your pocket. XPeng Aero HT, the aerospace company under Chinese EV startup XPeng, unveiled at CES 2025 its modular flying car, the Landcraft Carrier as well. Essentially an electric minivan with a small folding eVTOL electric vertical takeoff and landing vehicle, which is right behind me over here, which can be rolled out and tucked in the back of this particular truck. The price of it $300,000 and it will be yours. There are already 3,000 intent orders for the vehicle. Rather than requiring an expensive hangar, in fact, Aero HT's invention would allow you to simply drive the eVTOL to a takeoff location and a landing site and deliver a single command to detach it and unfold this small aircraft and then take off. Once you have had fun in the skies precisely for 20 minutes, the mothership reconnects to the eVTOL, folding its arms and storing it at the back of the truck. So how does the mothership look like? Almost like the Tesla truck. It's a 6-wheel vehicle. It's got a floating roof, dark wheel arches and foldable rear view mirrors that retract into, in fact, fenders when parked. And even with this eVTOL inside that particular truck, there is still room for 4 passengers, which is an entire family. Now, this particular eVTOL is made of super lightweight materials. It's made of carbon fiber and has dual duct 6-rotor design. Can be easily controlled to take off and land. I, in fact, sat inside the vehicle and it's very, very cool. It has room for 2 people.
A vehicle that flies, that's the ultimate dream. Shivani, thanks a lot for that. You sat in it, wonder whether you flew in it or not as well. $300,000, a bit expensive for the pop, but perhaps a lot of these mutual fund investors in India who are consistently saving and putting their money in mutual funds, if the bull run continues, may one day be able to afford these flying cars as well. Let's move on to the next story then. It's the mutual fund data for the month of December, released some time back. Surabhi joins in with the details. Surabhi, after a brief dip, looks like it's all it's all good in the hood.
I don't know about flying cars, but the consistent manner in which mutual fund investors are putting in money in equity funds, maybe they can buy a lot more. I mean, homes, cars.
You know, we'll just put a break to that one as well. There was a brief dip in November. After that, there was an up move in December when it came to the net equity flows. Similarly, we'll take a brief break right now, come back, we'll fix the audio with Surabhi and talk about the mutual fund data that came by for the previous month. And as we take that break, we'll also look at Budget 2025, where India is looking to seize the moment and establish itself as the global economic outlier. The upcoming budget, which will be the NDA government's first full budget after the election victory, will be key to unlocking the ambitions of millions of Indians. So tell us what you want from the Budget 2025 by submitting your wish list to CNBC-TV18's Budget Box and tune in to your budget headquarters, which is what else but CNBC-TV18, for an unparalleled coverage on the budget day, which is the 1st of February.
Steering mounted controls. So both at the entry level of rupees 6,12,000 and at the top model price of roughly rupees 12 lakhs, the Punch has something for every buyer. It is also cheaper than the Brezza, which cost rupees 8.3 lakhs ex-showroom. In 2021, Tata Motors had launched the Punch and in a way launched a new category of subcompact SUVs. According to industry experts, the affordable price point and a feature-rich compact SUV make it a compelling option for many customers wanting to buy a small entry-level car but still wanting to own an SUV with premium features. The high overall SUV demand has also led to many customers buying the Tata Punch. According to company sources, the Punch is being bought by those in their 20s and even by those who are over 60 years of age. For some, it is the first car, and for others, it may just be an easy-to-drive option to get around a crowded city. This car was first launched by Tata Motors in 2021, with the Punch electric vehicle being launched in January last year. It is now expected that Tata Motors may give a life cycle upgrade to the Punch petrol and CNG versions in order to further cement the car's position in the market and increase sales in 2025.
वोटर टर्नआउट इंक्रीज हो जाता है 5 बजे के बाद। ये काफ़ी एक विषय पब्लिक में रहा, जनरल इलेक्शन के दौरान भी, उसके बाद भी। कैसे 5 बजे के बाद बढ़ सकता है, कहाँ बढ़ गया, कौन सी 5 बजे से 10 बजे तक के बीच में कतारों में, लाइनों में लोग खड़े हुए थे, हमें वीडियो दिखाइए। इस तरीके के प्रश्न पूछे गए, जिसके उत्तर मैं आज देना चाहता हूँ बिफोर गोइंग टू डेली इलेक्शन। ऑल्सो नेसेसरी, बिकॉज द डाउट्स गेट्स रिमूव्ड, यू कैन आस्क मी फर्दर क्वेश्चंस इफ यू वांट, and these questions do not come again election after election. वोटर्स में मिसमैच हो गया, जितने वोट पड़े थे वो बढ़ा दिए गए। पहली बात तो ये था वोटर टर्नआउट में, चलिए बढ़ा दिए। उसके बाद काउंटिंग में मिसमैच हो गया, कहीं कम गिन लिए, कहीं ज़्यादा गिन लिए, ये भी मुद्दे उठे। काउंटिंग को स्लो डाउन कर दिया गया। अभी एक नया मुद्दा उठा है कि हमने कोई रूल चेंज कर दिए हैं जिससे बहुत बड़ी ट्रांसपेरेंसी खत्म हो गई है। सो ऑल दीज क्वेश्चंस आर एक्चुअली, अगर एक बहुत बड़ी पिक्चर आपको मैं दिखाऊं तो 10.5 लाख बूथ हैं कंट्री में। हर बूथ पर 4 से 5 पोलिंग ऑफिशियल्स होते हैं, तो उनका नंबर हो गया 10.5 into 4 भी कर लें तो करीब 45-50 लाख लोग हैं। एक्चुअली राइट टू क्वेश्चन इज इन बिल्ट इन डेमोक्रेसी, इट्स एन इनहेरेंट राइट। वी रेस्पेक्ट दिस राइट, वी फील दैट क्वेश्चन करना और उसका जवाब देना हमारी जिम्मेदारी है। तो आज इन सभी सवालों की पूरी इज्जत रखते हुए
Welcome back. Let's go back to Surabhi, who's joining in once again to give us a lowdown on the December mutual fund data. Surabhi, looks like after a brief blip, not in your audio, but in November, it's actually improved once again in December.
It really has. And, equity investors have really kept the faith in mutual funds. And even as the market has been consolidating and many stocks have been correcting, the money still keeps coming in. In fact, month on month, the equity inflow has risen by almost 15%. It's come in at a staggering figure of 41,136 crore rupees. And as much as experts say that, this is going to be a year of large caps, investors are making a beeline for mid and small cap funds. Look at the kind of money they're drawing in, almost 5,000 crores, 5,100 crores in mid cap funds, 4,700 crores nearly in small cap funds. Contrast this with just about 2,000 crores that have flown into large caps. So small and mid caps still get top billing. The other very interesting trend is NFOs once again. We've got 33 NFOs in December. Many of them are actually sectoral and thematic funds, and together they've pulled in about 13,600 crores, which is also why that sectoral category, that's again swollen in December. Sectoral funds have pulled in over 15,000 crores, in fact 15,330 to be more precise. Hybrids as a category is very, very steady. Both balanced advantage funds and multi-asset allocation funds have both been getting very steady inflows, about 1,500 in BAF and about 2,500 crores in the multi-asset allocation category. So overall, hybrids are doing okay. The total AUM for the industry has dipped a little bit to just under 67 lakh crores. That's because of the outflows in debt funds. And finally, we've just got the SIP details as well. That number is absolutely staggering. SIPs have pulled in about 26,400 crores in the month of December. So there you have it, the equity story intact, and investors are absolutely unfazed with the market correction, time-wise or price-wise.
Take that point entirely. 26,459 crores in the month of December. The street was circumspect as there was 25,000 crores in November and October itself. They were wondering whether this grows or not. Not only has it grown, it's sustained through the volatility that we've seen in the market itself. $3 billion for the SIP per month is a milestone that the mutual fund industry has achieved, and that's kudos to the disciplined investor in India. That's you. With that, let's go across to some disturbing news coming in from the United States, where Los Angeles is reeling under wildfires. Powerful winds have fueled strong wildfires around Pasadena, Pacific, Palisades, and other neighborhoods of Los Angeles itself. NBC's Gary Schwartz brings us more of that one.
This was the moment the sun rose over the fire raging above Pasadena, but you'd never know it because the dawn disappeared in the smoke.
Again, you hear those explosions. So many of these homes, there is no hope.
But against the odds in Mother Nature, some stayed doing everything they could to fight back.
There are people still here trying to fight this fire with garden hoses. There is still water in this area, but with this much destruction, it almost seems futile. You were here fighting by yourself, right?
Yes.
How long have you been out here?
I've been out here since 4 a.m.
4 a.m.
Yes.
Trying to protect your home.
Yes.
You now have a full, contingent of firefighters here.
Yes.
It seems like it's right in the nick of time.
They saved this home for now.
Hey, let's go. Yo! Hey, I'm taking it in.
A scene that played out across so many fire lines, from the foothills of the Angeles Mountains to the Palisades.
And then trying to make entrance. They're smashing down that door. They got to go inside. They got to make sure no one is here. Who else is left in the house?
Right. Yeah, homeowners on rooftops trying to wet down everything.
Here they come! We're going to help you! It's hard to show the scope of what's going on.
As we headed down Sunset Boulevard, the loss was worse than any fire we've ever seen.
And this looks like the apocalypse here.
And the chaos, way too often, firefighters left without water as hydrants went dry.
They are not designed to fight wildfires. A firefight with multiple fire hydrants drawing water from the system for several hours is unsustainable.
Water!
Officials say they weren't able to fill tanks fast enough, which would have helped with the water pressure. Something NBC's Morgan Chesky saw firsthand.
Out of every fire hydrant you've seen, what have you found?
Right now, we're finding most of them are down or low pressure.
If you had a hydrant for this building,
If we had a hydrant for this building, we might have been able to save the back house.
This apartment complex is untouched for now, but you can see how close those flames are. Firefighters are making their way up. Again, they're having to ignore massive structures like this huge apartment complex. It looks like it's going to go up imminently because they are just overwhelmed. There isn't enough water up here.
The winds also grounding that critical support from the sky for most of the day. And when firefighters were able to make a stand and save a home, there was no victory. just a brief reprieve from the helplessness of fighting fire against the wind.
From tragedy in the US, let's move on to some tragic news coming by from back home in India itself. A stampede in the temple town of Tirupati on Wednesday killed 6 and injured several others. The stampede took place during the 10-day Vaikuntha Darshan festival. Chaos unfolded when large crowds were pushing to secure their tokens for the auspicious occasion when the rush to get ahead resulted in this stampede. Andhra Pradesh Chief Minister Chandrababu Naidu, PM Narendra Modi, State Leader of Opposition Jagan Mohan Reddy and President Draupadi Murmu have expressed grief over the losses of life. With that, we're out of time on this edition of Business Lunch. Thank you for watching. Midcap Radar comes up next.
One by one, before giving you answer, एक पूरी पिक्चर दिखाता हूँ आपको. ये स्लाइड देखिए और इसको अपने मानस में थोड़ा बसाइए. अभी अनुज ने कहा कि पिछले 2020 से 30 स्टेट्स के इलेक्शन हुए हैं. 15 स्टेट्स में different parties are the biggest parties. This is the beauty of Indian elections and the democracy. आप देखिए 2020 से स्टेट बाय स्टेट हमने दिखाया. दिस वी आर पुटिंग ऑन सोशल मीडिया. जैसे मैं आपसे बात कर रहा हूं तो आपके ग्रुप में ही आ जाएगा. स्लाइड बाय स्लाइड इट इज बीइंग ट्रांसमिटेड. 20, 21, 22, 23, 24 हर जगह में डिफरेंट पार्टीज आर कमिंग टू are getting maximum seats. This is one reflection how fair, how deep rooted the fairness of the Indian elections are. The Indian voter is extremely aware, conscious, he understands everything. चुनाव की तारीख से 7 या 8 दिन पहले ईवीएम्स को कमीशन किया जाता है. उसमें सिंबल डाले जाते हैं. वो एजेंट के सामने डाले जाते हैं. उसके बाद में उसको मॉकपोल करने की छूट होती है. वो उसी दिन मॉकपोल करके देख लें सिंबल ठीक पड़ गए. उसी दिन उसमें नई बैटरी डाली जाती है. उसी दिन वो बैटरी सबके सामने में सील होती है. उसके बाद उसको उठा के ईवीएम्स को स्ट्रांग रूम में जमा किया जाता है. उन्हीं के सामने सील लगाई जाती है. उसके बाद में जिस दिन पोलिंग डे होगा उस दिन सील उनके सामने तोड़ी जाती है. एंड दे आर अलाउड टू रिमेन एट द स्ट्रांग रूम. पोलिंग डे में डिस्ट्रीब्यूशन के बाद पोलिंग स्टेशन पे सबसे पहले कहा जाता है आपको ये वाली सीरियल नंबर की पोलिंग ईवीएम दी गई थी, प्लीज चेक वही है. आपने सील लगाई थी, प्लीज चेक वही है. उस दिन आपने मॉकपोल किया था, आज फिर कर लीजिए. सुबह सबसे पहले फिर मॉकपोल कर लीजिए. पोलिंग एजेंट इज इनसाइड द पोलिंग स्टेशन. शाम को वो दिन भर रिकॉर्ड रखते हैं कौन आया कौन गया. शाम को पोल खत्म होने से पहले, पोलिंग स्टेशन छोड़ने से पहले फॉर्म 17C अकाउंट ऑफ वोट्स, किसमें कितने वोट पड़े इसकी संख्या उनको दे दी जाती है. आई विल कवर दिस पॉइंट अगेन व्हेन आई कम टू वीटीआर. ईवीएम्स को वापस स्टोर रूम में लाया गया. फिर उनके सामने ताला लगाया गया. फिर काउंटिंग के दिन आए. फिर कहा भाई काउंटिंग में फिर देख लो वही मशीन है. फिर सील चेक कर लो. उसके बाद में फॉर्म 17C से मिला लो. अगर 17C से काउंट मिलेगा तभी काउंटिंग प्रोसीड करेगी.
Good afternoon and welcome to Midcap Radar. I'm Vivek Iyer and with me today is Hormaz Fatakia. Hormaz will join me a bit. He's standing by the wall to look at what are the top stocks that will buzz around as far as the broader end of the markets are concerned. But we have quite a lot lined up for you on the show today. Let's start off with the top headlines. Weak trade on D Street as Indian market dips in line with global weakness. Realty along with oil and gas lead the declines with the Nifty Bank down 1%, outpacing the Nifty's 0.6% fall. Mid-cap index weak but relatively performs better.
The day, though, belongs to shares of chemical companies like Navin Fluorine and SRF, who produce refrigerants. Both of them are seeing double-digit gains as an Equirus report suggests that a US gas distributor has increased the prices of refrigerant gases.
Zydus Life Sciences surges in trade after Nomura upgrades the stock to a buy rating, raising the target price to 1,140 rupees a share. The brokerage says the company benefits from the appreciating US dollar as a large part of its exports are from the USA.
Shares of Borosil Renewables also jump after the company announces capacity expansion by 50%, increasing its manufacturing capacity by 500 tons per day. The management tells CNBC-TV18 that 50% growth should imply a 50% increase in revenue potential.
Manappuram Finance's shares surge as after the RBI lifts the loan sanctioning and disposal restrictions on its subsidiary Asirvad Microfinance. Good afternoon. Even as we speak and even as we look at the markets, the sell-off intensifies, the sell-off continues. We just saw the AMFI monthly numbers. The numbers are quite good. In fact, the SIP figure actually crossing the 26,000 crores a monthly mark. But despite that, the kind of sell-off that you're seeing in the markets has intensified. Morning, we did highlight the fact that a couple of capital goods companies, especially names like L&T, had seen significant selling pressure. Siemens and Cummins were actually outperforming as far as between 11 to 12 a.m. But now all three of these stocks are seeing selling pressure. Even names like ONGC, which was a relative outperformer in the last couple of trading sessions too, seeing significant selling pressure in today's trading session. But this show is all about mid-caps. This is our special segment, Mid-Cap Movers. Hormaz is standing by the wall to take us through the mid-caps that are moving around in this session.
No respite, if you can say that, because it's still a couple of hours away from closing. The expiry is yet to play out. So it's still at the lowest point of the day. The markets, the broader markets, though, are faring slightly better than what they were in yesterday's session. But even now, they are trying to see some selling pressure as compared to where they were an hour and a half ago. But the day, as we just highlighted a few minutes ago, belongs to these shares of these chemical companies, be it the likes of SRF, Navin Fluorine, and along with it, some amines companies too have started to move. SRF is up 13%. Alkyl Amines is up 10%, as is Balaji Amines, as is Navin Fluorine. Navin Fluorine is off the highs of the day, but still holding on to gains of around 10%. Some of the other newsmakers in today's trading session, they are seeing some bit of a selling pressure, and that is, before that we get to FMCG first, and is the mid-cap FMCG. Actually, the entire FMCG pack is doing well for itself after that anti-consensus call that CLSA just highlighted. Colgate, Marico, Emami, the staples are the ones that are doing well today, 3 to 4% higher. Real estate is seeing some profit booking after some business updates that have come in over the last few days. Sobha continues to lead the losses on that front. Sobha, Ajmera also came out with a business update. The stock at one point was up 4%, is now capitulated, is down 3% now, as is Macrotech down to the lowest point of the day. Some of the other stocks that are doing well on the back of strong volumes, and Gujarat Fluoro is one of them. Anand Rathi on the back of its bonus issue off the day's high, but on strong volumes. Sundaram Finance is up almost 9% on the back of very strong volumes, as is IGL with gains of almost 5%. And lastly, some other losers within the broader markets. ITI, after some eye-watering moves on the upside, is now facing downward pressure, 9% lower here. Mind you, the stock is also in the ASM framework now at the first stage. Oil India too down to the lowest point of the day despite a rise in crude oil prices, 7% lower there. Kalyan Jewellers, the management issued a clarification yesterday to CNBC-TV18, but after the recovery seen yesterday, back to the red is Kalyan Jewellers, 5% lower there, and Aegis Logistics too down 5.5%, not having a very good day in the office.
Thank you so much, Hormaz, for taking us through all of the movers, more red than green in today's trading session. But it's a good time to welcome Nagraj Shetty of HDFC Securities for a technical check on the market. Good afternoon, Nagraj. Thank you so much for joining us. Where do you see this particular sell-off stop? Where do you see the immediate support as far as the Nifty and Bank Nifty are concerned?
Hi, good afternoon, Vivek. The market has been in a continuous downtrend over the last few sessions. Despite the sharp upside gains in the early part of the January, market has given almost all the gains made during this period and during that period, and slightly lower. I think the next support would be around once the Nifty slips below 23,500 levels, then the next support would be around 23,200 to 23,000, where the chances of a reasonable upside bounce could come in at the low levels. The things are very clear right now. The market is in a downtrend. There is no indication of any strength in the upside bounces. Intraday rises. Market is being sold on every rise. And the same thing is happening with the Bank Nifty as well. Bank Nifty even declining sharper than the Nifty, underperforming sharper than Nifty. It is continuously moving below the 200-day EMA, what we can say a decisive downside breakout of 200-day EMA as of now. The next lower supports one can watch is around 48,600 levels in the near term.
In light of that, Nagraj, what are the specific stocks that you're recommending this afternoon? Good afternoon to you.
Hi, good afternoon. And I have a mixed talk. One is from long side, another is one from a short side. First, we'll discuss the short side. The OMC is the one that sector has been in a continuous downtrend. In that IOC, Indian Oil Corporation, is one stock that has been in a continuous downtrend. Lower tops and bottoms is visible on the daily chart, and the stock is currently placed below the important moving averages. Currently trading around 132.30, 132.20. One can look to short at this point of time. 125 is going to be the next immediate downside target, and one can place a stop loss at 136. Second one is the one Minda Corp. The auto ancillary stock has been outperforming this weaker, broader and benchmark Nifty and sustained in today's gains so far. Currently trading around 536, placed at the edge of upside breakout of the important resistance. Currently trading at, one can look to buy at this point of time around 536, and 565, 570 is going to be the next upside target, and one can place a stop loss at 518.
Thank you so much, Nagraj, for joining us and giving us your view on the market as well as your individual stock calls. Well, moving on, let's now dive into the Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you make well-informed trading decisions. This week, CNBC-TV18's Nigel D'Souza interviewed Rohit Srivastava, founder and market strategist, IndiaCharts.com, to understand why traders must avoid guaranteed return schemes.
What are the legal as well as financial risks associated with participating in a so-called guaranteed return scheme?
So a guaranteed scheme is essentially telling you that you are going to get a fixed return from the market. Now, by definition, the market comes with risk, right? Every investment scheme that has been approved by either SEBI, if it's a mutual fund or a portfolio management scheme, has to tell you that equity investing comes with associated risks, and you really can't have guaranteed returns. So nobody is really permitted to give you a guaranteed return. So by itself, if you're being guaranteed a return, it's a scam. It's right there. Right. And there's then going to be no legal recourse, because most probably he's not registered with any institution.
Correct.
And you can't really go after him once he runs away with your money.
Welcome back. Still 150 points down on the index. 23,535 is where we are on the Nifty at the lowest point of the day. Still no signs of recovery from lower levels. That 23,500 level will be a very important one to monitor. But some of the other movers in the broader markets that we did not highlight earlier on in the show, some of these high-flying names, be it the likes of BSC, that is trading with losses of around 3%, as is GAIL, and also PSU names like HUDCO, They are also trading at the lowest point of the day. GAIL too down around 3.5% now, accelerating the fall, as is HUDCO, 4% lower on the stock now at the lowest point of the day. But the stock that has been in focus since last evening and a better part of this morning is Manappuram Finance, and that is after the RBI has lifted supervisory restrictions on its subsidiary Asirvad Micro and DMI Finance. Now Abhishek is joining in with more details on that. Abhishek.
Well, RBI has lifted the restrictions with respect to doing business for Asirvad Microfinance and DMI Finance. Now, 4 NBFCs were put on restriction list with respect to doing business on October 24, and these restrictions have now been lifted. Now, Asirvad Microfinance is actually the subsidiary of Manappuram Finance. So the restrictions were placed on 17th of October. So less than 3 months, it has been lifted as per RBI satisfactory with respect to compliance of all the issues that they had pointed out to the entity. Jefferies has written on Manappuram Finance. They have a hold rating, but they have increased the target price to 190 per share. They say that RBI's lifting of ban on Asirvad Microfinance is positive, as it constitutes about 27% of the consolidated AUM of Manappuram, and about rupees 22 Manappuram's valuation is a key positive for that. But disbursements in MFI segment should stay muted in the near term, given the stress that you are seeing in the microfinance sector. However, Manappuram's valuations as of now seems attractive for investment for investors. Back to you.
Thank you so much, Abhishek, for taking us through the key highlights of what this particular approval means for Manappuram. Well, shares of chemical companies, especially SRF and Navin Fluorine, surge in trade. Yatin Mota joins in with more details on what exactly is driving the stock prices higher for these chemical companies.
Well, if you look at gas stocks, Navin Fluorine and SRF are buzzing in trade on the back of Aquarius note, which says that in the US, we have seen supply disruptions with respect to refrigerant gases. 2 varieties, R32 and R125, have seen price increases of over 200% in the spot market. What does this mean for Navin Fluorine and SRF is that since they are major exporters and manufacturers of R32 and R35 as well as R125, these are refrigerant gases which are used in air conditioners and refrigerators, wherein the demand and supply mismatch in the US has caused a big disruption. In fact, if you look at the Aquarius note, they say that for every $1 price increase in R32, SRF EBITDA increases by over 260 crores, and the figure for Navin Fluorine is around 77 crores. Now, if you look at capacities also, SRF has a capacity of nearly 30,000 tons for R32, and nearly 9,000 tons capacity is with Navin Fluorine with respect to R32. So given the fact that US markets are witnessing price hikes of nearly $3 to $4 per kg, the stocks are buzzing. Obviously, the note also says that the impact of price hike, since the entire capacity is contracted, would be important to watch. And if the price sustains from here on, there could be a big impact on the EBITDA margins for Navin Fluorine in the next 3 to 4 quarters, and probably the reason why the stocks are buzzing in trade.
Yatin, thanks a lot for that. 13% higher now on SRF, and along with it, it's taken all the chemical companies higher as well. But before we move on, Vivek, Abhishek was talking of Manappuram. The day before the ban was imposed by the RBI, its closing price was 179. Yesterday's closing price was 179. Almost.
And today, I believe the stock is in the F&O ban, so you can't take fresh F&O positions as well. So interesting development on Manappuram. Important development, nevertheless, given the fact that this particular ban actually ensured that there could not be any fresh dispersals that could be made. But I am looking at Zydus Life. This particular stock is buzzing, and this on the back of an upgrade that's come in from Nomura. So Nomura has upgraded the stock to a buy rating from an earlier neutral stance. What is it that they're saying? They're raising the earnings estimate. This is mainly on the back of higher contribution from a drug called sitagliptin, which basically helps in the treatment of diabetes. Now, what is it that the company announced? Company announced an agreement with CVS Caremark. This is a US-based company, and Zydus Life will go ahead and launch this particular drug along with its partner. So, what is Nomura penciling in? Nomura estimates that the sitagliptin market is in the range of $300 to $350 million annually, and even with a discounted price, they believe the opportunity size for Zydus could be quite large, in the range of $100 to $150 million. Now remember, Zydus Life will get a piece of this particular market. This is the total opportunity that Nomura is discussing. Now Nomura, when it comes to FY26, what is it that they're penciling? They're actually penciling a decline as far as US sales is concerned when you're comparing it to FY25, and this is largely on the back of the fact that there will be significant competition for one of their key drugs with this generic version of Revlimid. Now, however, the management in second quarter results actually guided to the fact that there could be some growth coming in FY26, and this particular partnership will actually aid the company go ahead and meet some of the targets. Along with that, the other thing to watch out for, with the rupee depreciation, the company, which has almost 77% of its exports with exposure to the US market, they actually benefit from going ahead and exporting to the US market. So weak rupee bodes well for exporters like Zydus.
Indeed, and it's doing well for itself. Is Zydus 4% higher on the stock. By the way, before we take that break, let's quickly just take you through the stocks that are reporting results today, because TCS is down to the lowest point of the day now, ahead of its results announcement anytime in the next couple of hours now, almost 2% lower. So it has given up everything that it had gained in yesterday's trading session. So 1.75% down for TCS. Pull up Ireda as well. That is also going to report results anytime now. And that stock has also witnessed choppy moves because it was positive at the start of the trading session, held on to gains for a better part of it, but now is witnessing some selling pressure, 0.8% lower for Ireda. But time for a short break. But before we do that, as we're counting down to Budget 2025, India is looking to seize the moment and establish itself as a global economic outlier. The upcoming budget, which will be the NDA government's first full budget after the election victory, will be key to unlocking the ambitions of millions of Indians. So tell us, what do you want from Budget 2025 by submitting your wish list to CNBC-TV18's budget box, and tune in to your budget headquarters, which is of course CNBC-TV18, for unparalleled insights and coverage on Budget Day, which is the 1st of February.
Welcome back to Midcap Radar. Well, a few stocks attempting a recovery while the broader end of the markets continue to see some selling pressure. Dixon Technologies has seen a bit of a sharp surge and now trading near the day's highest point. And the other stock that's seen a bit of a recovery is Delivery. But the other set of stocks that are in focus today is the entire travel pack. This is after Jefferies issued bullish commentary on the sector. Mangalam joins in with more details.
Indeed, there is bullish, commentary coming in from not just analysts, but if you look around as well, a lot of travel and tourism underway in India despite the high prices, and that exactly is the theme that Jefferies is betting on. Both, domestic and outbound tourism in India has remained healthy even post the COVID-led boost got normalized, post-COVID, boost which got normalized. So as a result of which there is improvement and there is a lot of sector enhancement out there despite the pricing which was increasing as well, and that remains intact without hurting any sort of growth. The consumers are prioritizing travel over spending in many other categories, and that's exactly what Jefferies believes, and as a result of which they continue to like the space and have a buy rating on all their stocks under the coverage. For instance, consumer preference for premium and experiential travel will increase in 2025. That's not all. There is some supply-related issues which will keep the ARRs or room rates higher for all the hotel companies. There are events like weddings, the Mahakumbh, FTA revival, all these factors which would work well for the hospitality industry. And for travel players, airline companies like Indigo, the supply of further airports in terms of Navi Mumbai, Noida, and some more aircraft coming in will also support increased routes. So their order of preference for, the space, they have Indigo that they like. Apart from that, they like Indian hotels as well. They like GMR airports. And alongside that, they also like TBO Tech. They have a target price of 5260 on Interglobe Aviation, 1000 on Indian hotels, 77 on GMR airports, and around 1740 on TBO Tech.
Well, Mangalam, if you're traveling, you need snacks. For snacks, you'll go to quick commerce. And if you go to quick commerce, companies like Swiggy do well. And if companies like Swiggy do well, brokerages like Bernstein are happy. Tell us more on that.
If you're not outside your house, then you're inside your house. And if you're inside your house, you're ordering stuff on, from restaurants or even the quick commerce places. And that's something that Bernstein has, under the umbrella of convenience economy, quantified to be around $70 billion and still at just about 8% penetration. Swiggy, which is the second largest player and actually a pioneer in the quick commerce and the food tech space or food delivery space in 2014 itself, has done extremely well, and they believe that there could be case for outperform and a target price upwards of 600 on that itself. Yes, they have lost market share over the last 3 years to the tune of almost 4%, but there are reasons for the brokerage to believe that the market share would be stabilized around that 42% mark itself, with better customer acquisition and innovative product launches, the likes of Bolt and more recently Swiggy Snack as well. They expect the margins for Swiggy to increase from 1.2% now to almost 4% by FY30, similar to Zomato's margin expansion path as well. And were that to happen, then why should Swiggy trade at this current discount to Zomato? Maybe there would be case for the valuation gap to narrow between the two, and as a result of which they are buying Swiggy.
Thank you so much, Mangalam, for taking us through both travel as well as quick commerce. But the other stock in focus today is Borosil Renewables. This particular stock was in focus after the company announced a 50% capacity expansion plan for its manufacturing facility as far as its solar glass unit is concerned. Earlier today, we spoke to Pradeep Keruka, the executive chairman of Borosil Renewables. Let's listen in to excerpts from that conversation.
Obviously, with a 50% growth, we would expect a 50% increase in revenue, more or less. The thing is that the last year and the has been seeing a rather low revenue on the back of very strongly dumped prices, which have reduced the turnover for the selling price. We might not perhaps be selling at the prices which are mentioned as the minimum import price. We haven't reached those prices as yet. We are still somewhere between the prices at which we were selling and the new price that might be coming up for imports. Our capex ideas are based on detailed prices which we had acquired about nearly more than 2 years ago. There may not have been too much of a change. It's about 675 crores that we're looking at as the capex for this 500-ton investment, and it looks good as of now. We see the capacity coming on stream somewhere 18 to 21 months from now.
the management there of Borosil Renewables in conversation with CNBC-TV18. But as the market continues to remain at the lows of the day, now 160 points lower on the index, what next for the markets? We spoke to Atul Suri, the CEO at Marathon Trends PMS, and listening to excerpts from that conversation.
The next 1 month is definitely going to be very volatile because you've got three very big things, I think, that are panning out. One is this whole Trump trade. And already you can see that the world is shaping up for it. Bond yields have taken off. What's happened to the dollar is, I think, the biggest elephant in the room. That's affecting markets world over, whether we talk about it or not. Then you've got budgets, always unexpected, unknown. You don't know what's going to come out. And then you've got your corporate earnings, which actually is the biggest issue in our markets for the longer term sustainability. So I feel that in this period of lot of news, if the market just remains in this band, good day, when you start feeling bearish, the market takes off. And when you feel bullish, the market is going to, which is a typical range bound movement. I personally would favor if something like that happens. Yeah, the bigger risk is if the breakdown happens, because, remember, we are nearer to the lower band just by a 2% or thereabouts. Not a pretty place. It's been difficult. And I do think that the next 1 month is going to be challenging. Lot of news, but you just have to wait it out.
Well, Atul Suri, they're saying that the next 1 month could be challenging. But with that, it's all the time we have on this edition of Midcap Radar, Mutual Fund Corner, when we return.
Microsoft started as a tools company. We continue to be super passionate about our tooling. With GitHub, it's fantastic to see what's happening, right? We have now 17 million members of GitHub in India. It's the second largest community next to the United States. In fact, it's projected to be the largest. I guess I forget the year. I think 2028. Yeah, so I can't wait 3 years from now. 2028 is when the crossover will happen, where India will have more developers on GitHub. It's just exciting to see that. Now, we also have contributions from India to AI projects that are just second to the United States. And so it's fantastic to see the active involvement of the developer community out of India in making progress on all the open source projects on GitHub when it comes to AI. It just speaks to, again, the talent there is and the energy there is in this community. AI doesn't sit on its own, right? It requires the entire compute stack. And so we are building that out at a worldwide level. We have 60 plus regions. We have 300 plus data centers around the world. In India, we're excited about all the, the regions we have, right? We have Central India, South India, West India,
Hello, good afternoon. You've tuned into MF Corner on CNBC TV18 and I'm Vinny Motiwala. Today, what we're going to be doing is we're going to be solving all your mutual fund queries that you all have sent us through the days. And for solving those queries, we have our experts joining in with us. Today, we have Prableen Bajpai, founder at FinFix Research and Analytics, joining in with us, as well as Nasreen Mamaji, CFP founder at Moneyworks Financial Services, to solve all those fund-related doubts and queries that you all have sent us. Good afternoon, ladies. Thank you so much for joining in with us on the show as always. And let's get started quickly because we have a whole host of mutual fund queries that have come in. So we'll get started by solving these queries. Starting with the first query for today, we have Joseph, who's writing to us from New Delhi. He's saying that he has invested rupees 10,000 in Parag Parikh Mutual Fund, Canara Robeco Mutual Fund, a blue chip equity fund, and rupees 5,000 in Access Small Cap Mutual Fund, as well as an HDFC Mid Cap Opportunities Fund, HSBC Mutual Fund, as well as Motilal Oswal's S&P 500 Index Fund. Now he wants to know whether he should make any changes in his portfolio in the next 10 years. Nasreen, good afternoon, and let me take this to you first.
Sure. Thank you so much for inviting me on the show. And I'll get straight into Joseph's question. So he's done a pretty, interesting asset allocation besides the in the various categories. So I'm assuming Parag Parikh is a flexi cap fund. So he's got one flexi, one blue chip, a small cap, mid cap, value, UTI 200 momentum, which is a factor-based fund, and the Motilal Oswal S&P 500 index. So more or less okay, but I'm just suggesting that UTI momentum. 200, 30 index, we may not be chasing momentum stocks in the next couple of years, in the next, 3 years. He could switch to, they have an NFO coming up, which is a quant fund. So maybe he can go into that because that is also factor investing, but they will be taking more factors into play, not just the momentum, from the smart beta suite of products that he's doing. So I think that one small change that I would recommend. Otherwise, all his funds are pretty much safe to continue. The asset allocation is also very complete in, between the mid cap, small cap, flexi cap, and the large cap. And I think if he continues like this, which is quite a, good sum of 40,000 rupees SIP per month, after 10 years, you can expect a crore if we calculate at an expected CAGR of about 13%. So, this is what his expectation can be after 10%, provided we get 13% annualized return compounded every year for the next 10 years. So all the very best. And, I hope that you do well in your investment journey, Joseph.
Absolutely. And Prableen, anything you would ask the viewer to change? Because Nasreen has just made a very small change in this one. Do you think the viewer's portfolio right now, what he's doing in terms of investments, seems right?
Good afternoon, Vinny. Good afternoon, Nasreen. I think Joseph can just keep an eye on the Axis small cap, although it's been a consistent performer, but broadly it's been sluggish on the upside capture ratio, if you look at that, and it's on rolling return basis, when it's somewhere in between. So I think that's one fund I think Joseph can just keep an eye on. Otherwise, broadly the allocations are fine. Canara Robeco Blue Chip Equity, which is a large cap active fund, that has just managed to sort of match the category and the benchmark returns on a rolling return basis. So that is again one fund, I think, which is avoidable because there's already an overlap with Parag Parikh and HSBC Value. So probably Canara Robeco can stay or go depending on what he wishes, because it's a 10-year allocation. I don't want to make too many changes here. But if he plans to continue further, Vinny, then definitely I would suggest a passive equal-based strategy for the large cap.
Okay. Thanks for that view coming in there, Prableen. Let's move on to the next query. This one is from Lakshmi, who's writing to us from Mumbai. Now, she says that she has an SIP of rupees 66,000 for 5 years and is investing in the following funds. 16,000 is in ICICI Prudential Nifty Bank Index. 20,000 is in UTI Nifty 200 Momentum Fund. Momentum 30 index fund, and rupees 30,000 is in ICICI Prudential India Opportunities Fund Growth. Wants to know the outlook on her funds and whether she will be able to deliver and get good returns even from here on for a long-term period if she's looking at it. Prableen?
It's a very interesting allocation, Vinny, because it's one strategy index, it's one sectoral fund, one thematic fund. So it's a very different kind of a combination she's taken. If the same portfolio is for 10 years, I won't make too many changes. But given the time horizon, 5 years, I think it can be tricky with a sectoral fund like banking. Now, banking, given the current market situation and the way private banks have performed, maybe as a tactical call, it's not a bad idea to have some allocation. But then the ICICI India Opportunities also has a decent allocation towards banks. So out of the top 5 stocks in ICICI India Opportunities, 4 are banks. So I would say that probably out of the 66,000, maybe she can reduce her allocation to the banking index, keep it at 6,000. And then if she's still going with a 5-year view, and she has a slightly higher risk appetite, then I think that she should complement this with a multi-cap fund from probably SBI or Motilal, because they have less allocation towards banks, because ICICI India Opportunities as it is having decent allocation. Or if she's wanting to reduce the level of risk, then I think a flexi-cap fund, addition of a flexi-cap will be good. UTI momentum, again, with a long-term view, looks good. But again, 5-year can be slightly tricky. So she can just trim down the allocation over there, but she can continue with it. So overall, trimming down on the 2 allocations and probably adding a multi-cap or a flexi-cap, depending on how she wants to, the level of risk that she wants to hold in a portfolio. And she can create around 54 lakhs, Winnie, in the next 5 years at a XIRR of 12%. If she continues for 10 years, then it can be almost triple, 1.51 crores.
Okay, sure. And Nisreen, your thoughts on this one as well? 5-year time period as well as 10-year time period. What should the viewer be expecting in terms of returns?
Sure. So basically, since her SIP is about 66,000, I feel that she's very concentrated in these 3 particular, themes. One is thematic, one she's got the momentum factor, and one she's got an India opportunity. So the amount is about 66. I would suggest that, she break it up into at least say about 15,000 per fund and have 5 categories. Especially since, one of her choices is to, that she needs the funds after 5 years. I would think that she can go slightly more safer. So I would definitely recommend that she goes into a flexi-cap category, say for one allocation of about 15,000 rupees and say 12,000 rupees. If you have 5 funds, the 12,000 in each, divided equally so that you get a good basket and, you're not, betting on any one particular sector. Then rather than just going for a Nifty bank index, I would suggest a thematic fund of funds kind of a strategy. IQ has a thematic fund of funds where, the fund manager himself will decide the funds for the next 3 to 4 years, the themes for the next 3 to 4 years, rather than the investor herself taking a larger call of 16,000 rupees per SIP only on the banking index. Similar views, that she already will have some amount of banking allocation and India opportunities also. So one flexi cap, one thematic fund of fund, one say maybe like a larger mid category, because if the corpus is required after 5 years, I think larger mid would give her some amount of safety. Sure. And say one more category that we can suggest, India opportunity, she can definitely continue. And one more that we can suggest is like a business cycle fund, which will go top down approach sort of. So I would suggest maybe like a Sundaram business cycle fund. So this way, she gets a complete basket of stocks and various, categorizations also, rather than betting 66,000, the entire SIP on these 3 kind of categories that she's earlier selected. And if you look at about 13% CAGR, in about 5 years, she would expect 61 lakhs. And if she can extend the time frame to 10 years, it will be about 1.7 crores. So that would be my suggestion, to take 5 categories and divided approximately equally 12 to 13,000 each.
Okay, let's move on to the next query, and this is a caller query that we have. Santu Mundal is calling us today from West Bengal. Santu, good afternoon, and can you hear us? And please take your query.
I am Santu Mundal. I am 36 today.
Right, Santu, we can hear you.
Hello?
Yes, we can hear you, Santu. Go on.
I shall retire at 60. I am in West Bengal government service. I am entitled to government pension.
Right.
My service is like bond or debt fund. No standard deviation, no fluctuation. So my money should be in equity. If I withdraw money from PPF and General Provident Fund to put it in well-managed equity funds like HDFC FlexiCap, ICICI Value Discovery Fund, only to get better return than PPF and GPF. Have you any objection? Is it a wise decision?
Sure. Okay, sure, Santu. Prableen, what is your view on this one, given that, he's thinking that would it be a sound decision to move out, take out his money from PPF and General Provident Fund and invest maybe into equity mutual fund, something like a ICICI Value Discovery Fund is what they're looking at to, obviously retire at a good considerable age of 60, then is that something that is advisable now?
So two parts to his question, Vinny. So number one, that should he withdraw from PPF in General Provident Fund, I would recommend that probably one of them can be, he can exit from one of them and continue with the other, because it's okay to allocate. Of course, we require equity allocations, but at the same time, probably he doesn't have too much exposure to equity. So I think suddenly moving from all your fixed income, something which is giving you tax-free sort of returns at 7.1%, I think a partial withdrawal should be done. So I think the PPF can be exited and invested in mutual funds. The mutual fund portfolio, like he mentioned, HDFC Flexi Cap and probably the Wellman, slightly initially the more large cap tilted, but he definitely requires a portfolio which is well diversified. And this portfolio which he creates should also be supplemented with SIPs. So whatever allocation was going towards PPF can be diverted towards SIPs. That point number one. But the other point is, Vinny, that the ideal way to calculate what you require and how you should be managing your money is based on your goals. Considering that this is for his retirement and he would get a pension, he should still factor in, today what is the expense and whether the pension is going to be good enough for him at the time of retirement, and look at the other goals as well, and then take a decision on the allocations. But definitely having the security of a pensionable job, the allocations towards equities must be done, but not from the whole amount, partial, and then supplemented with SIPs is what I would recommend.
Okay. And Nasreen, your view?
So somewhat similar. You can switch some of the funds from PPF to, equity mutual funds. It could be a wise decision, not the entire corpus, because, you're looking at retirement, you're only 37, so you have quite a long tenure to look forward to. So with the long-term horizon and the safety net of the government pension, both combined, I think that the advantages of switching to equity mutual funds can be quite good. You get higher growth potential, you get inflation protection. So the PPF lock-in period is about 15 years, and then partial withdrawals are allowed after 6 years. So what I would recommend is, a gradual reallocation instead of withdrawing a lump sum. And so a smaller portion periodically can be, systematically transferred into the equity mutual funds. And then when you are retired, you can look at an SWP option, a systematic withdrawal plan, along with your government pension, so that, your own goals and your expenses can be met at that time. So keep a portion of the PPF for safety and also for the returns. And for the inflation, matching, I think that definitely equity would be a better, bet. So say 50 to 60% of your current, PPF corpus can be switched to equity mutual funds in a systematic way. So, do the reallocation in a gradual way rather than in a lump sum. Sure. And with ICICI Value Discovery, basically, which is your choice, it has a very good track record. It considers diversifying into a mix of large cap, mid cap, and small cap. And also it has some amount of sectoral and thematic funds. So Value Discovery of iGroup can be one of your choices. And if your risk tolerance is a little lower, then you can go for maybe a hybrid equity fund or a balanced advantage fund, because, you're moving straight from debt into equity. So I think out of the 50 to 60% that you are switching over, keep about 15% in something like a hybrid category or a balanced advantage category, so that the transition is a little smooth for you. Because if you see a lot of volatility, it might not go with your own risk tolerance. So keep in mind that do a bit of both, so that your overall portfolio will see a good return. At the same time, the volatility will not, upset you, because you have to also, maintain your psyche and your psychological, happiness as well.
Absolutely. But on that note, viewers, we're going to step into a very, very short break. But don't go anywhere. More queries on the other side. So we'll be back with that.
The capacity that we built up with Geo. So we have a lot regional expansion happening. And I'm really, really excited today to announce the single largest expansion we've ever done in India by putting $3 billion additional dollars to expand our Azure capacity. I had a chance to meet the Prime Minister Modi ji yesterday. It was fantastic. It was great to listen to all his examples. Yeah, his vision around how he wants to drive through AI mission. But it's that combination of really the yojanas he has, the India stack, the entrepreneurial energy in this country, and the demographics, both on the consumer and the business side, that is all getting into a virtuous cycle. So that's why we feel fantastic about bringing core compute capability for the next generation AI.
There will be a recovery in earnings. But I think we will still not match the growth rates in earnings that we have seen over 22 and 23. So this year earnings growth will stop.
Welcome back to MF Corner on CNBC-TV18, where we are solving all your mutual fund related queries today with Prableen as well as Nisreen. Let's keep it going, and this query now is a caller query again. We have Rajesh who's calling to us from Mumbai. Rajesh, good afternoon. Can you hear us? And please take your query.
Yeah, hi, good afternoon. I've been actually active on equity for last since COVID actually. Invested a couple of crores and has grown well. Now I have some lump sum amount coming through from some property sale and all. I want to know, should I get into mutual funds? If I get into mutual funds, my question is, should I invest in one go, or can I do staggered period of time instead of doing SIP? Maybe in 6 months or 3 months time frame, about 25 to 50 lakhs of investment. What is the best option? Should I do one time, or should I do staggered, because the market is correcting, we don't know what is the low point?
Yes, Rajesh, okay, we got your query. We'll take it to Nisreen first. Nisreen, what should Rajesh be doing? Staggered manner investing, or just the lump sum amount that he's getting between 25 to 50 lakhs? Then should that be invested immediately at a whole, or staggered manner investing?
Yeah, so what I would recommend is that you invest it immediately into, say, a money market fund, a low duration fund, or an arbitrage fund with the nil exit rule. And then you systematically transfer this over the next 3 to 4 months into the target funds, because that will be a form of staggering. So that for immediate purposes, you're not getting only savings bank interest, but you're getting a little more, especially if you're in an arbitrage fund, where you can expect between 6 to 7% annualized at today's spreads. So this what would happen is basically you don't have the risk of timing the market, because if you were to invest it lump sum into the market, then obviously you would have the market timing risk. This way you will have a disciplined approach. Your money will be fully invested, and the STPs would kind of give you some amount of discipline of getting into your target funds over a period of time. So you can take anything between say 12 weeks to 16 weeks, that is between 3 to 4 months. You will be fully invested into your target funds. Now, when you're making the corpus for the 25 lakh, keep in mind your time frame that you're investing for, as well as your own risk tolerance. And also keep in mind that you might need liquidity in the shorter term. Thereby, you must keep some amount, say in an equity savings or in a balanced advantage kind of a fund, so that if you need money in the shorter term, that will be available to you, in terms of liquidity. And say 70 to 80% of the corpus, you can, invest it in multi-cap funds, certain thematic funds, and, make your basket of investments in that way. Even small and mid-cap have a certain allocation towards that as well, if your time frame is anything above 7 to 10 years. So this is how you can make a complete allocation, go through the staggered approach, and your returns in a systematic transfer plan that we call an STP from the source fund to the target fund. We've done statistical testing, and it's always better than investing in a lump sum, because you might be expecting corrections in the next 3 to 4 months. Thereby, you will get the advantage of that. It's like buying in a sale. You will get more units at a lower NAV in case there is a correction. So definitely do that. Do the staggered approach. It's called systematic transfer plan. But be fully invested now and don't leave your money in the savings account at lower rates of return.
Okay. And probably in your view?
Broadly the same, Vinny. I would also suggest a staggered approach, but I think the percentage allocation that he wants to take would depend on his time horizon. So assuming that it's a long-term portfolio, which is beyond, let's say, 7 years, he should have the mid-cap and the small cap as well as large cap. So if I'm taking a large cap index, a mid-cap and a small cap, let's say active fund structure, which I'm giving, then in the large caps, I would say that probably 30-35% can be put in right away. Remaining would be via a staggered approach from a liquid or an arbitrage fund going into the large cap. In the mid and the small cap fund, it would be, let's say, 10-15% allocation right away, and remaining would be staggered over the next 4 to 5 months. So yes, the STP route will be better to allocate.
Okay. Prableen, just the next query we have is coming in from Sahil, who is writing to us from Delhi, wants to know top 3 mutual funds to start investing in for the long term.
Always difficult to answer such questions. We need top 3 funds. We all want to stay invested in the best performing funds. And I think calendar year wise, if we see within the same category, there is hardly any year when the same scheme is actually able to give you returns or is stopping, let's say within the small caps or the mid caps. So if he's new to investing and being in the top funds is already on his mind, I would suggest, Sahil, that, rankings are not permanent. So it's better not to look and invest what has happened in the past. I would say create your core with 2 passive funds, a large cap index fund and a mid cap index fund, and complement it with probably 1 multi-cap fund to begin with. Later, you can add a small cap fund. And I think at least with index funds, then you don't have to worry about being in the best performer and not. And that also creates a good, solid core for you. And within the active funds, the multi-cap and the small cap, if you're adding those, I would say a slightly more value-centric AMCs would be better, so that passive investing, which is slightly more growth-oriented, can be complemented better.
Okay. Nisreen, this next query is written by Akshay Joshi. He wants to know whether the existing SIP in small and mid-cap fund should actually be now shifted to large-cap funds, given in the view of valuation that we are looking at. What is your view?
So typically, when you're making a strategy, when you start a financial plan, you're doing it, say, for the next 5 to 10 years. So I don't recommend that, every time that you make these kind of tactical changes, unless you have, selected the worst performing fund over at least 8 to 10, quartiles. If that happens, then yes, you have to make the tactical decision. But strategically, if you've made a plan and you've done an entire basket of investments and a certain, allocation towards mid caps, small caps, large and mid, maybe balance advantage, equity savings, I think more or less you should kind of stick to that plan depending on your term of investing and also your goals, because you will be having some short-term goals, some medium-term goals, and some long-term goals. So your entire financial plan will be based on these goals, right? So every time, because these things keep on changing. Right now, if we are looking at, say, the last 3 years, people followed a value strategy. The next 3 years, we're looking at kind of an alpha momentum strategy. Also, combined strategies, what we think is going to work, quality and alpha. So these things will keep on changing over every 3-year cycle. But if you have your strategy in place, I think that it's better for you to stick to the strategy and make tactical changes based on your annual reviews or 3-yearly reviews on the entire portfolio, rather than being reactive and taking a stance like that. Okay? So now the mid and smalls at this point, you might find that expensive at this point. But if you're investing in a SIP over a period of time, I think you should stick to that strategy, because those are probably meant for your longer term goals, like, maybe retirement, children's education, wealth creation, in the longer term, big asset purchase, etc. So don't react, to any sudden changes in the market. Stick to the long term planning and definitely review the portfolio every couple of years to make sure that you are on track for the entire portfolio as a whole.
Absolutely. Okay, that was the last query. Actually, we had a whole host of queries still left to go. But Nisreen as well as Prabreen, thank you so much, for joining in with us and solving these important doubts on mutual funds and, how they should be looking at their portfolios. Thank you so much for that. But that's all the time we have on this edition of MF Corner on CNBC TV18. Don't go anywhere. Closing bell is up next to take you through the last hour of trade.
Much lower than what we saw in the last 2 years. Large cap, the earning disappointment has been largest. For example, if you look at banks this quarter, they'll probably report 0 to 2% YOY growth only. Right. So I think we will have to probably become a bit more focused on stock picking, which are the companies where earnings are more resilient. And that is where you will see probably P's holding on. Other pocket, you definitely have a risk of P derating.
I think what's happening is obviously, India's valuations have gone up ahead of all other emerging markets. And some people think it's a good idea to kind of lock in some gains. However, I think this is a period of a very interesting time with Trump coming back and tariffs again being in picture. So overall, I think for emerging market funds, flows will be very muted till we get some clarity on the tariff picture. And I think the other big basket in EM is China, which, people still are a little bit worried about their real estate sector and how things will develop there, and also whether the government will do a big enough stimulus to counteract some of the consumption slowdown there. So I think overall, the macro environment is a very cautious.
0.7% down on the Nikkei. The Taiwanese index is down 0.3%.
23,813 is the next resistance after that. That's a Bollinger Band level.
ITC at around this 440, 445 levels looks interesting.
DFS SECI meeting outcome for the MFI lenders is that MFI should draw a roadmap with respect to strengthening the sector.
There has to be a dedicated refinance facility focused only on microfinance.
We've got the Nifty, which is at about 23,660. It's down a little bit.
A case in point, a sector I love, Prashant, is IT, right?
Single-digit returns will be, if we scrape through with that, we'll be very happy with that.
Look at gas stocks, Navin Fluorine and SRF are buzzing in trade on the back of Equirus note.
Things have gone south after a quiet opening in the last 15 minutes. Investors are absolutely unfazed with the market correction, time-wise or price-wise.
Markets, the sell-off intensifies, the sell-off continues.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Okay, tough trading day. That's the day essentially as it has panned out so far. But last hour coming up here, closing bell. This is, of course, we're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleague Surabhi and Nigel. Guys, hi.
Hi, afternoon. Plenty of red on the screen again, and I was just checking the levels. We are at the lows of the week, and there's been absolutely no sense of recovery.
Well, the sense I get is, yet again, I don't know how the institutions are going to play this, but there appears there's a pocket of the market that's in pain. And we'll have to see how much of that pain is there. Particularly, I think this could be domestic-led. So we'll have to wait for that to clear out. The indications were the last couple of days that it's gradually getting absorbed. So hopefully we're closer to the end of at least that pocket of the market, domestic money, that's in a bit of pain. So hopefully that gets cleared out, and then hopefully we do see a bit of recovery. But for the time it appears that pocket is still under some pressure.
No, I mean, there is. Broader markets are doing worse off as compared to the Nifty and the Nifty Bank, and which essentially just tells you that, it's not concentrated, it's kind of a little more dispersed, the losses, and they're getting a little wider. And, you know, last 2 months, actually, since September last 2024, view was large caps essentially is the place to be. Broader market and broader markets will fall, but didn't happen. Is it starting to happen now? I think that's another question which we need to kind of look at. I think second day running, a broader market's doing a little worse off. Small caps, I think, especially, but about last I checked, about 1.25% kind of a cut coming through. Now, you know, all sectors are leading lower. I think except FMCG, which is higher. Everything else is down, but FMCG maybe paid the price earlier as one of the underperformers. Bank Nifty is making fresh lows. Basically, it's broken yesterday's low and trading cleanly below it. The Nifty so far is not. I mean, for the Nifty, the December low still is ahead of it. 23,460 is that number, and we're about a little less than 100 points away from that. You know, declines nearly outnumbering advances by some almost 3:1. So it's not a good and pretty picture out there with a fair bit of pain, which is actually showing up. So we'll have to play it by the year. Remember, later today, there is no US market action. US equity markets are shut, bond markets shut early. So in that sense, you'll be a little Q-less and newsless, but maybe not newsless because, I mean, you know, you'll get tweets and whatnot, but price action, there will be none, and we'll have to come back and look at what Asia is doing tomorrow morning. Surbhi.
Absolutely. I think the only solace, if at all, we can draw from the fact that it's not just India that's fallen today. A lot of the regional markets have been lower as well. Asia was down because of the weak handover from Wall Street, but Europe is actually not too bad. I mean, there's no major widespread decline across Europe. Markets are flat with a little bit of a negative bias. So in that context, there's no recovery coming through for us, even though Europe is now looking a little better. Let's talk about where the weakness is. Now, even where you know, profits were made earlier in the week, the reversals are very swift and sharp. A case in point would be something like ONGC. ONGC had two fantastic sessions, Monday, Tuesday. And look at the reversal on the stock today. It's down about 3% already. There are other names like Coal India and BPCL. In general, PSUs are extremely weak. They've been you know, having a pretty difficult week, so to speak, and today hasn't changed that trajectory either. NTPC, quite a few names on the way down. Banks are the other trouble spot. So you have a lot of the large names, SBI, Axis Bank, most of them are on the weak side. Check out HDFC Bank, down almost 2%. So that's the kind of serious pressure that the the large banks are pulling up. If you look at the contribution played on the Nifty, actually, apart from banks, there's also Reliance. Reliance, that move was a non-starter move that we had yesterday on the back of a couple of positive brokerage upgrades coming through. Today, again, the stock's under pressure. It's down about 2%, so not really offering much of a counter to the bulls. So where is the buying concentrated? You can see Lever on that screen. Lever is not alone. Actually, some of the other FMCG names are also finding some green. A case in point would be Nestle, Britannia, Tata Consumers. So there's some buying on consumer stocks. And Bajaj Auto is reacting well to a brokerage note, which we will talk about as we go along. But yeah, tough day.
Well, you know, the mood of the market could be told by Manappuram Finance as well. The stock is now at the low point of the day. The news is extremely positive, but the stock is as flat as can be. You know, someone wanted to buy at 180, they've got their chance. 180, 181 now, you know, in terms of the stock price move. At the highs of the day, it was 192 rupees. And even Religare, you know, they've got that go-ahead, not probability now, their open offer does progress. Stock is up 2%. On another day, you see stocks like Religare that see very outsized reactions. But for the time being, that one's up just around 2.5%. Yeah.
Just adding one or two other names. Look at some of the jewelry stocks. I mean, Kalyan is a different story. Kalyan's down another 4-5% today. But even PN Gadgil, where the update was not too bad, even that one's down almost 3% PN Gadgil now.
You know, Kalyan's becoming a curious case. Is it just valuations or is it something more? Because the management said demand is good. They're not purchasing any helicopter or plane or anything. You know, they've clarified because there was that rumor out there. But in spite of that, after yesterday's strong pullback, the stock is still under pressure. Mangalam has told us that valuation-wise, it's become a little bit expensive. So is it just valuations or is the street treating something more? For the time being, as we heard from the management yesterday, they said they're extremely positive with regard to growth going ahead. But for the time being, the market's not buying into that. What's the call, though, for the final hour of trade? Mitesh Thakur joins in. Hi, Mitesh. Good afternoon. Well, you have been sounding a little bit skittish the last few days. And the markets are under pressure as well. We're down 150 points. However, we're very close to that mark of around 23,450, 23,500. time to be brave or no? Time to be, more logical. In fact, stay aside, let the dust settle, and then you take a fresh call.
Good afternoon, Ajay. So I think, the Nifty hasn't broken the earlier low. The Bank Nifty has. It was 49,700 for the Bank Nifty, and we are now looking like we've broken that. With that kind of an objective, I think the idea is that do not attempt long on indices till there's some kind of reversal which is very evident. So for the timing, avoid the indices. We've taken positions, taken profits on the short side of index position, which was put spreads, and now waiting for a bounce back to re-enter again. I think that's the way we'll approach it. The good thing is that since the Nifty hasn't broken one support pivot of 23,500 and then 23,350, I think there's always a chance of some kind of a throwback or a pullback happening. Having said that, I have one buy and one sell call right now. On the buying side is Britannia. I think, after a long time, Britannia is reversing after a correction. So buy here with a stop just below levels of 48.50 and a target of 5,075, 5,100 can be looked at. And on the negative side is BPCL, which I would recommend shorting. Keep a stop about levels of 286, look for targets of 267.
Okay, all right, Mitesh, got that. Thanks for the calls. We'll come back to you in just a bit for some more trades, some more ideas. Let's, however, move on and talk about the next big event that we're watching out for, and that obviously is the TCS numbers. TCS will be kickstarting the third quarter earnings season officially today, and the expectation is very, very muted growth in constant currency terms. Rima's poll is saying that it could be just as flat as 0.2%. But let's go across to Rima for the rest of the numbers and the expectations. Rima.
Well, expect a muted quarter from TCS on account of three reasons. One, the seasonality, the lower working days and furloughs. Secondly, the incremental contribution from BSNL in Q3 is likely to be lower than Q2. And the third reason is cross-currency headwinds on account of the dollar strength. So dollar revenue growth is likely to be down 0.6% according to the CNBC-TV18 poll on a quarter-on-quarter basis. Though on a constant currency basis, the revenue growth could be on the flatter side. There are some estimates which are mildly negative and some which are mildly positive. Our poll is at about 0.2%. EBIT margins are seen up by 40 basis points to 24.5%. This is after 2 consecutive quarters of a decline, and profits are seen up nearly 4%. Now, what will the street watch? One, the growth X of the BSNL contribution. If you remember, in Q2, international revenues declined by 0.4% for the weakest since COVID. Secondly, continued recovery in BFSI. Do the green shoots continue? Third, the outlook on US healthcare, because in Q2, we saw some clients cancelling discretionary projects, particularly in US healthcare. Has that persisted or have things recovered? And then the usual questions of discretionary spending. Is it back? Is it better than Q2? Has it extended itself to beyond BFSI, the client budgets, the outlook on margins, etc. Now, the stock has been a bit of an underperformer versus peers. In the last 12 months, TCS share price is up 8%, while an Infees up 25%. And as a result of this, Infees valuations have converged to that of TCS, and TCS share price is also about 12% off its peaks. Back to you.
All right, Rima, thanks very much for that. Of course, we'll be hearing from the top team at TCS, K. Krithivasan, Samir Seksaria, and Milind Lakkad. All of them are going to be live, of course, today, 5:30 after the numbers come out. They would be, of course, addressing the media. But let's actually look at what opinion we picked up from Ankur Rudra, who, of course, tracks the IT space at JP Morgan. He's been fairly cautious, especially on some of the larger companies like TCS. Take a look at his view for 2025.
Our expectations are not extremely high, especially for the large caps. On the large caps, we expect a relatively muted quarter where, a lot of companies will be sort of at flat growth. And so basically flat to 2% organic is what we are expecting. And the main focus area, at least for the large caps, will be how much of the positive commentary in the past we've seen that was limited to financial services and some early signs of discretionary spending, how widely that spreads out. We are a bit more optimistic on the mid-cap front, where the growth momentum can be meaningfully higher. The range is more broader from the 2 to 5-ish% range, where the growth is relatively better. In terms of potential headwinds and negatives, I think the main thing to watch out for is any commentary around the furloughs. If there is commentary that the furloughs that were seen so far only in the December quarter are likely to extend to the March quarter also, that could be a negative. If we hear commentary about, the discretionary spending not really extending beyond financial services or sort of slowing down, if there's any evidence of, the growth momentum going sideways as opposed to up, even if it is slow, I think that will be seen negative. And lastly, there will be a view on margins as well. If there's any kind of margin headwinds highlighted, that I think something we'll be watching out for.
Okay, all right. That's the JP Morgan view on Indian IT. Let's welcome in Deven Choksi of DR Choksi FinServ on the show this afternoon. Deven, good afternoon. First of all, Happy New Year. I think this is the first time I'm talking to you in the new year. We want to start with IT actually, and let's get our team to pull up a one-year chart on TCS, not just today, but 1 year. Because what's happened with these larger IT companies and these larger IT stocks is that they've almost become like trading plays. You'll have a couple of good weeks in the run-up to earnings or just after earnings. If you can be nimble and trade the rallies, you're fine. Otherwise, on a one-year basis, I mean, most of the large cap names are quiet and flat, especially TCS. It's up barely 8-9% in the last 1 year. Going forward, Deven, what would your view be on the stock? Would it find merit in a medium-term portfolio for you?
Yeah. Good afternoon, Survi, and Happy New Year to you as well. Well, I believe that the overall out of the 6 major verticals on which the company is focusing, of which I think the largest one would be, of course, I think the BFSI space. And then comes the technology space, wherein I think your data center computing and the AI would come in. I believe that these 2 areas will have to be carefully looked at going forward. If the commentary suggests that I think they have started receiving the larger inquiries, may not be orders, but larger inquiries in these 2 areas of activity, in my viewpoint, I think that was the beginning of we breaking above the range in which I think the stock is trading currently. For the stock to get out of this particular range, you require to have meaningful growth coming in. Today, the growth is in single digit, and that's the reason for which I think the market participation is missing in this particular activity. Second most important aspect is the manufacturing. With the adoption of AI and engineering R&D services by most of the manufacturing companies, here is a vertical where probably I think it holds a larger potential. Has also been seen from some of the mid-sized engineering R&D companies. I think in case of TCS too, I think it is expected that I think they win some sizably large orders, which can give them the sustenance of next 3 to 5 years. Should that happen, then probably I think the mood will change in the market. Otherwise, I think the mood remains quite circumspect at this point of time for trading into the IT companies.
Okay, all right. That's the call on TCS. But Nigel has been telling us about, the moves that we've seen in many of these, chemical stocks, SRF, Navin Fluorine, big bump up in many of them today.
Well, that's right. We spotted that early this morning that Navin Fluorine as well as SRF, who produce refrigerant gas, they have been surging post an Equirus note that came out because of a supply side issue that's caused prices to move up. Yatin joins us to break that down for us. Yatin?
Well, if you look at gas stocks, Navin Fluorine and SRF are buzzing in trade on the back of Equirus note, which says that in the US, we have seen supply disruptions with respect to refrigerant gases. 2 varieties, R32 and R125, have seen price increases of over 200% in the spot market. What does this mean for Navin Fluorine and SRF is that since they are major exporters and manufacturers of R32 and R35, as well as R125, these are refrigerant gases which are used in air conditioners and refrigerators, wherein the demand and supply mismatch in the US has caused a big disruption. In fact, if you look at the Equirus note, they say that for every $1 price increase in R32, SRF EBITDA increases by over 260 crores, and the figure for Navin Fluorine is around 77 crores. Now, if you look at capacities also, SRF has a capacity of nearly 30,000 tons for R32, and nearly 9,000 tons capacity is with Navin Fluorine with respect to R32. So given the fact that US markets are witnessing price hikes of nearly $3 to $4 per kg, the stocks are buzzing. Obviously, the note also says that the impact of price hike since the entire capacity is contracted would be important to watch. And if the price sustains from here on, there could be a big impact on the EBITDA margins for Navin Fluorine in the next 3 to 4 quarters, and probably the reason why the stocks are buzzing in trade.
Thanks, Yatin, for that. Devin, what do you make of this piece of news? The point is that prices are likely to go up. And if they get the full benefit, rough estimates as per that Aquarius note suggest that for both these two, for SRF, it could be nearly around, 15% in comparison to last year's entire EBITDA number. So that's a big bump up that we're seeing. And for Navin Fluorine as well, close to around 18 to 19% of FY24's EBITDA. So the news could be positive, but what would you do with the stocks now that they're already up close to around 10%?
Well, I think, Nigel, both these companies, they remained promising on various counts. Till last year, I think they have had the situation wherein the high cost of inventory probably also impacted the profit margin along with the lower offtake on various product side. This year has been different, and in particular in the third quarter, we are seeing the larger amount of inventory management has happened. And as a result of which, I think to a greater extent, at the low cost level, I think the inventories are there in the system, which is giving them decent amount of delta as far as I think their value addition is concerned on the top of it. So in my viewpoint, I think specialty chemical companies, including the likes of SRF, Navin Fluorine, I would think that I think the worst is behind them as far as the margin front is concerned. On the other side, the demand scenario and the product price improvement, I guess I think it will be individual cases like one what we are discussing right now is a positive one. Whether it is sustaining over the full year period or whether it is going to be a temporary effect is something which I am not completely sure about. Should it sustain, then the numbers what you have calculated is right, and maybe the market is justified in the price which has happened. But as of now, I would think that along with the market, I think many of these specialty chemical companies may have some amount of upside left in the coming period.
Okay, all right, got that. By the way, just keep an eye out on the screen. We have moved again very, very close to the 23,500 odd mark. And a few stocks have slipped in the last few minutes. Not very, very large weights, but if you pull up Dr. Reddy's, pull up BEL, both of them have seen a sharp downtick in the last few minutes, so they should come up for you on the screen. NTPC is another one as well that's seeing a bit of a sell-off. And I think the problem pocket has been tech today, because yesterday towards the end of trade, tech did very, very well and spiked up, but the IT index itself is struggling a little bit. And the reason that the tech index has moved to the low point of the day is because Big Boy Surbi, Infosys has just slipped in the last few minutes to the day's low.
If you look at expectations, Nigel,
yeah.
TCS, I think there's about 0.4%, 0.5% degrowth in
dollar terms.
In constant currency. Dollar is about a little over 1% dollar terms. And but Infosys is expected to increase. It's expected to do better, much better as compared to TCS at least. And Infi is also expected to increase its guidance. TCS doesn't give a guidance. So actually, once these numbers come, and if the numbers from TCS are largely in line,
then we could
I don't know, the trade may be actually Infi, not
actually,
TCS.
Let's pull up a dual chart of both Infosys as well as TCS. You'll see, I think in the recent past, we have Infosys that's outperforming because Street is not factoring in very great things for TCS. And sometimes an inline gets a thumbs up.
Exactly, and I'll tell you what, because in the last 1 month or so, TCS has corrected close to 10%, factoring in this issue about the weak third quarter. Infosys relatively is better off. Infosys is flat. The market fell 5% in the last 1 month. TCS fell 10%. Infosys has been outperforming the market by being flat. So let's see. Is a disappointment already in the price?
There you go.
If TCS starts talking about some hope, some improvement, green shoots in the US, BFSI, etc., could there be a big uptrade on TCS tomorrow? We don't know. We'll have to wait and watch.
I'd be skeptical. But the point is growth is very, very anemic.
Yeah.
You're looking for, and these are all, we've seen this, right? Results day, you'll get a reaction, 2%, 3% reaction. Yeah. And then for the rest of the quarter, they'll go to sleep.
Yeah.
So,
which is what they become trading stocks. I mean,
not even trading stocks. Trading, you need moves, right? You need 10, 15, 20% moves. But it's very, very hard to come by. Just look at the TCS stock, for example. It is at the same level it was in January of 2022. Actually, forget January 2022. The same level it was in August of 2021. So, and it's not as if, we've seen one big swoon up because 22 was a tough year, not just for IT, but for the market as well. But that's about it. And then it's kind of completely plateaued out. We'll see. Of course, these are also stocks which will be and we'll have the opportunity to speak with the management tomorrow morning. You'll hear from the management. This entire, post the election, H1B, I mean, these are all big issues which now I think will come to the fore as well. So, I mean, as I said, we'll get you those views from the management, post the numbers. We'll slip into a break here, but we're also counting down to Budget 2025. India is looking to seize the moment and establish itself as a global economic outlier. The upcoming budget, which will be NDA government's first full budget post the election victory, will be key to unlocking the ambitions of millions of Indians. So tell us what you want from budget by submitting your wish list to CNBC-TV18's budget box and tune into your budget headquarters, CNBC-TV18, for unparalleled insights and coverage on Budget Day. That is the 1st of February. That is a Saturday this time, I'd like to point out. Stay with us.
Near term for EM investors.
"2024 has now become the 9th consecutive year of positive returns for the Indian equities, and that's the record. In fact, 24 was a year of record in many ways. The highest fundraise in a single year, the ever-growing domestic pool, and so on. But the big question is, what is in store for 2025? Will the rally sustain? Will the mid and small cap continue to outperform? These are the questions in the minds of the investors. So now, crystal gazing is always a challenge, but CNBC-TV18 has reached out to the biggest market experts to bring to you an Outlook 2025, the biggest market poll for the new year. In fact, it was a poll across 61 participants, including fund managers, HNIs, as well as institutional dealers. So let's begin with the first and the most important question. What kind of return should investors expect in 2025? Majority of the respondents expect.
Okay, welcome back. Nitin Bhasin is head of institutional equities at Ambit. He's now joining us to take some questions on markets. Nitin, good to have you here. Thank you very much for joining us. Give us a sense, give us a flavor of the kind of conversations, Nitin, that you're having with your clients on the buy side, and what is really going on. People a little bit now in capital preservation mode instead of looking for ideas to make money on an absolute basis. Heavy kind of is that kind of mindset starting to set in this year? Go on.
Hey, thanks for having Prashant on the show. Happy New Year to all of you. In the way we are talking to our clients and we are explaining it to them, perhaps after 9 years of a bull run, this year could be a year where the bull run just takes a pause in the Indian stock markets. Perhaps we will go through some sort of a valuation correction. We could go through some earnings moderation. So clearly, what we are advising to our investors, institutional investors in India and abroad, is time to clearly be bracing for some bull run pause. That's the one. But within that, asset allocation, stock picking will become a lot more relevant, especially when it comes to choosing between large caps, mid caps, and small caps. We have been highlighting for a while now that it's the large caps which make sense, more so from the way we are seeing the earnings downgrade trajectory picking up or the earnings estimates picking up. It's the large caps where we see sales growth, where we see PAT growth. It's the large caps which are clearly preferred over the mid caps and the small caps. So that would be our key recommendation to investors, institutional or even individuals.
All right. Hi, Nitin. Good afternoon and good to see you in after a very, very long time. Since you briefly mentioned on earnings, and we have tech earnings that will come in the next 60 minutes or so, kickstarts with TCS. The fear is there is a downside to the earnings risk. And then India shouldn't be trading at such a peak multiples. Though you'll argue that for the last 6 months, we haven't done anything. Time-wise correction has happened. And also earnings estimates have been pulled back. Do you believe there is still more downside to earnings estimates and the street is sounding too optimistic? For FY26, everyone's talking about at least mid-teens, early to mid-teens earnings growth. Is there a risk out there?
So Nigel, if you take a little longer perspective over the last decade or so, Indian earnings every year prior to COVID used to see through a huge moderation from the time we began the year to ended the year from our community of the sell side. But COVID and post-COVID, about 2 or 3 years, we've seen that the earnings were pretty much sustaining to what we had in the beginning of the year. But this year, we've already seen that Nifty earnings could be more towards closer to about 8-9% or perhaps even lower. And a lot of those earnings are being supported by the banks sector. And I think perhaps the same thing would play out next year also. It's the IT which drew some bit of earnings growth this year after banks. And next year, again, banks are supporting most of the earnings growth. So clearly, what we are more fearing is that in the second half of this fiscal, would there be more moderation in the non-banks earnings of the Nifty or the broader market? So we see risks. If you look at the Q2 numbers that came out, if you look at, hence this quarter becomes even more relevant for people to gauge the direction of earnings. There is a risk to the earnings. We all start at mid-teens earnings growth for next year. I would be in the camp of lower teens, perhaps next year. That could be coming in from what we see at macro and little reasons for margin expansions available in the country. So hence, I would say we will be more closer to 8-9% or even lower than that in India this year for Nifty, and more towards lower teens next year.
Okay, 8-9% for this year and lower teens next year. Got that, Nitin. Thank you very much for being with us on the show today. So in that, cautious construct, let's talk about, what your top overweights are and what you're staying away from. And we have some snippets from your coffee can portfolio where we'll just put this up on the screen as well. HDFC Bank is a buy. HCL Tech, LTI Mindtree are two sells from the IT space. Avenue Supermarts is a sell. Even Dixon, Dixon has been such a high flyer of 2024. That is a sell at this point in time. These are some of the first few names. The others are flashing on the screen. So just take us through the thought and the construct on what you will keep in the coffee can and what deserves to go out now.
So thanks a lot for this. The coffee can report that we put out is more like for people who can actually build portfolios and own good quality companies, using certain financial metrics, just can buy those stocks and just sleep over them for the next 5 years or 7 years or so to make, classic buy and hold strategy. But many of the institutional investors perhaps are not able to or cannot follow that as a strategy. So hence, how we look at the next 3 months, 6 months, or the next 1 year more so today, we would be more constructive or overweight on IT. We would be more constructive or overweight on banks. That's where we see the earnings are. That's where we see the quality perception is. 2 or 3 months back when we had put out this note on the market, which we still believe today is valid as well, is that quality, low volatility, and earnings revisions are being favored by the market, earnings revisions to the positive. So the way we look at it is quality. IT sector forms the second highest sector in the quality factor indices in India. So banks as well as IT would be our top recommendations. And within the IT sector, perhaps we would recommend, given the valuations and the near-term earning risks, as our analysts suggest, we would prefer more like turnaround plays, like a TechM, a Cyient, or a KPIT. Those are the ones preferred for us for the next 1 year. That's how we would actually recommend in IT. Whereas, as you mentioned, there's two sectors overweight, banks and IT.
Right. Nitin, just clarification. We have that coffee can portfolio in the list of stocks there. Some of them are rated basically no rating. So do you have coverage on these names, or these are? So
we have a view on those companies, and we don't presently cover them very actively. But and these are for investors again with a 5 to 7 year holding. So it's been about 14 or 15 years. We as an organization have conceptualized this thinking, which has been there for years in the investing industry, about buy and hold. And coffee can is a way for us to search stocks which have done very good over the last 5 to 10 years, which investors should think about, irrespective of valuations, to create long-term portfolios. These are the companies that come across today, but they are more from 5 and 7 years of holding horizon, whereas a market view could be for about 3 months to 12 months also.
Okay, so let's talk about the year end now then, Nitin. Clearly, looking at earnings, looking at the consumption feedback that we get, something needs to be done. But what is that? What would be on your wish list? From the government of India, what do you expect? And from the RBI, rates have stayed high. We haven't seen a rate cut, I think, for around 700 days. That's as per the Bernstein report that we were talking about yesterday. So clearly there are some rate cuts as well that the market wants to see, because by itself it's it's downhill. Like we've been seeing that for the last few months, in fact, that things have been getting a weakish. So what's on your wish list from the government, from the RBI?
I think government first. I think the talk of the town, everybody is talking about consumption and job creation. I think job creation should be the first agenda on the minds of the government right now. And there's both supply and demand things that need to get solved. Clearly, one of the recommendations, not very easy for the government to actually follow, may not be very much going well with the industry, but otherwise it has to be the relook at the entire minimum wages in India. Perhaps even one can see how the inflation is hitting the bottom of the pyramid, the rural wages, etc. The real wage growth for rural market hasn't increased. So I would say relook at minimum wages in India. That creates the incentive for people from the farmland to actually move into the factories. Availability of labor improves. Consumption at that element also kicks. I think from other side, I would like to see the government reduce a lot more pressures of legislation, clearances, etc., for the capex to pick up in India from the private sector. Private sector can actually say that we don't see a strong trend of consumption or visibility of demand. But if we were to actually fast pace and reduce the cost of creating capacity by giving land faster, clearances much faster, reducing legislation, perhaps it solves both corporate capex as well as, to some extent, the FDI and the ease of doing business in India. I would say those will be the first and the second. And I think not overlooking at the fiscal deficit in India, though we are thinking about the budget will be more like status quo at about 4.5% sort of fiscal deficit. But without thinking too much about that, how the government announces capacity creation in state and center to catapult the hard infra capex to grow more like low teens to mid-teens in both roads and railways after a sort of weak FY25 on the capex growth. I would say that those would be my three wishes from the government of India. And RBI, I would say from the RBI, it'd be very tough for the new governor, a very balancing act, how they would actually look at the rate cuts. The disinflation towards the fag end is becoming very sticky right now. So very early days to form a view that a rate cut is coming. Our view is 25 to 50 bips, more like a 25 bips, very difficult to take a rate cut in the near term for the markets if they're expecting some. RBI will find it very difficult.
It's a catch-22 because inflation hasn't shown signs of sort of persistently declining, and that's the big conundrum. But just to go back to that point on IT and banks, then I was curious because the bears there are going to say that why buy banks now? The narrative is that credit costs will probably start rising when the best of asset quality is behind us. People are arguing that margins may not expand, may even come under pressure as rate cuts start happening. Then there is this whole fight for deposits that's going on. So why are you positive on banks? And similarly for IT, we were just having this discussion before you joined us that at least the larger firms, we're talking very anemic, 4-5% growth in a year. So what makes you bullish?
So, we all believe that markets, as I was mentioning in the beginning, we are expecting in the second half, the Nifty earnings, non-bank, under more pressure, and perhaps the risk of more downgrades over there, whether it is capital goods companies or whether that is auto companies or whether that is FMCG companies, you name. Other sectors have a more risk because they're all sitting on expectations which are very high. Banks that way have a little less exposure to the cuts over there, perhaps earnings downgrades. That's number one. Number two, if you were to think about it at larger level in India, whereas there is a valuation comfort, banks as a sector is about accounting for closer to 25-26% of aggregate PAT in India, with perhaps a market cap much lower number than that, more closer to 14-15%. So on that aggregate profitability theory, I would say banks look the most undervalued. But another factor I'll throw in over here for everybody to appreciate is we are in the last 5 years looking at one of the most non-concentrated markets. Unlike the US, in our country, we have perhaps one of the lowest concentration of, let's say, top 10, top 20, top 50, top 100 in the overall market capitalization right now. So we see that in the times to come, where the earnings are becoming more riskier for smaller weightage companies, mid caps and small caps, the money will start finding itself to stay where valuations are reasonable, where profits are going to be less prone to cuts, or estimates are less prone to cuts relative to the other market. So relatively, banks will become that place of mega caps where market might gravitate towards in the times to come. And as we move away from massively non-concentrated, fragmented market capitalization concentration to more concentrated markets, you will see mega caps like banks, some of the other companies do really well. So that would be my thinking, that aggregate profitability, more risks of downgrades in the other sectors makes bank relatively a better place to be in right now. IT, clearly, when we are looking at downgrade risks in the marketplace, the same theory relative to the other sectors. What is perceived as quality? FMCG is perceived as quality, and IT is perceived as quality. So that factor of quality factor, we foresee market rotating towards those companies where less risk of earnings cuts and are thought of as quality businesses. That's where the IT would be. So hence, that's where I would say banks and IT become our larger ideas among the sectors. Otherwise, it's a stock picker market this year.
Absolutely. Got it, Nitin. Thanks for joining in. It's been a while. Good to see you, Vin, and looking forward to chatting up with you all through 2025. Appreciate you joining in as always. Well, let's get back to the markets, and the markets have moved to the low point of the day as we're having that chat. So let's go across to Nimesh. He's here to tell us what he's picking up in terms of D-Street chatter. Nimesh, take it away.
Hi, Nigel. Another down there, especially in the broader markets. The pain seems to be quite severe now. And now it started hurting the portfolio investors as well. I spoke to some large HNI investors today. And now all seems to be a bit of cautious now after the kind of fall we've seen in the broader market. So clearly that space looks like there is more pain to come in the days to come. From an institutional point of view, again, it's a mixed day from a flow perspective. A bit of buying in the FMCG stocks today because they've been relatively underperforming. On the other side, some bit of selling in IT names before the TCS numbers. So TCS, of course, will be a big barometer for the IT names in the days to come. So that number will be quite crucial today. From a technical point of view, I guess we're pretty much close now to that crucial support of 23,300 on the downside. So that's something to watch out for. If that gets taken out, you'll probably see further sell-off. And again, even from a PCA point of view, the market tends to look like it's slightly oversold. The PCA is now back to 0.7. So maybe below that, you see a bit of a technical pullback as well. So that pullback can happen. But from a positioning point of view, from investors as well as HNIs, looks like there is more pressure, especially in the broader market.
Interesting. Nimesh, in terms of specific stocks, what's on your list?
It is, so the first stock on my list today is Adani Wilmar. We all know about the deal that the Adani Group is going to sell 31% to Wilmar, and there's going to be an OFS of 13%. That OFS is likely this week or in days to come. So that's something to track in Adani Wilmar. And interestingly, there I believe one of the domestic mutual fund is likely to be an anchor investor there. So again, OFS launch and who's going to participate will be quite interesting in Adani Wilmar. So that's the first name. The second stock is GMR Power. Well, the stock is under pressure today. Of late, you've seen a bit of a pullback as well. So, but still, it's been in a very narrow range between 110 to 120, 25. But again, in GMR Power, I understand the company is likely to raise funds by QIP very soon. And this fundraising will be largely used for expansion into the smart meter business. So that's the agenda for which they're going to raise money very soon. So that's the second name. The third name is AB Fashion. In a weak market, that stock is buzzing. It is up 2% last when I checked. The volumes on the higher side. Even in AB Fashion, the feedback is that the company is likely to raise funds very soon. It's likely to be at an SPV level, but from larger institutions, they are going to raise money. So that's a buzz in AB Fashion. And the last is a couple of stocks where this Dilwir-based buying. Colgate, which stands out today in terms of outperformance, and Kotak Mahindra Bank. Both are seeing Dilwir-based buying in today's market from larger FI desks. So expect high delivery volumes, and looks like some bit of FI interest is back in the so-called beaten down names like Kotak Mahindra Bank and Colgate.
Right, Nimesh, thank you very much for that. So those are individual stocks on Nimesh's list. We'll keep tracking some of these. We'll take a quick commercial break here. We come back with short-term trading ideas, and we'll go across to Mitesh, technical experts. For that, stay tuned.
To mid double-digit return in 25. Only 11% of the respondents expect a negative return on the Nifty next year. In that case, will the broader markets continue to outperform in 25? Surprisingly, 50% of the respondents believe that 25 will be a year of large caps. Only a small percentage are still betting on micro cap and small cap stocks, which brings to the next big question, and that is the biggest theme to bet on in 2025. Here there is a surprise. First surprise, financial has emerged as the biggest theme to bet on for the next year, and that is despite the macro challenges that the sector is facing and the fact that they have been an underperformer. The other surprise was the stellar outperformer of 24, which was capital goods. That's been considered as the least preferred bet going into 2025. We spoke about the returns and the big themes. Now, what's going to drive all these returns? And the near consensus answer is earnings, earnings, and earnings. That's going to be a dominant factor for the Indian equities to outperform going into 2025. There was a small portion who also believe that the Trump policies could be interesting to watch out for. Now, we spoke about the macro, the micros and the themes. Let's focus on some of the macros as well. Q2 was a bit of a shocker as far as the GDP figure is concerned. And after that, many on the streets have trimmed down their growth forecast for the country for next year. But will the growth surprise on the upside? We asked that question to majority. Most of them believe that the GDP growth will be between 6.25 to 6.5% in 2025. Only a mere 3% expect the growth to fall below 6%. So that's the big GDP growth forecast. So what's going to drive the GDP growth? And that's where the consensus seems to be, and that is the government spending. 77% of the respondents believe that government spending, which was lackluster in the first half of this year, will pick up in 2025. So that's going to be the big.
Welcome back. Thank God for small mercies, and today that at least till now we're defending the 23,500 odd mark. No shocker, hopefully, coming out of the United States, because those markets will be shut. But a few stocks actually have come up in the last few minutes. I think Asian Paints is one name that's perked up. Our big underperformer last 6 months, 12 months, 18 months. That one's seen a bit of a leg up. Midesh Thakkar is back with us. Midesh, what calls you have for us?
Nigel, Colgate is on merits as well. BTST here. Keep a stop at about 28.85. Look for targets of 29.30. And Coforge, I think, is showing first signs of weakness and correction. So STBT with a stop at about price of 93.31 and a target of 92.25.
Okay, all right, Mitesh, got that. Thanks very much. You have a good rest of the day, and we'll connect again tomorrow morning with the markets. Market continues to be under pressure. There's been absolutely no change in sentiment. 170 points down on the Nifty, 23,520. Okay, been a tough day. Let's move on and talk about some more stocks and news stories. The focus now is on Religare Enterprises. The stock has been gaining after Madhya Pradesh High Court came out with its order. Abhishek is joining in with the latest. Abhishek?
Well, Religare case was being done at Madhya Pradesh High Court today, wherein RBI argued that the stranger has filed a petition without being a shareholder. He is contemplating about a company who's not even a single share he owns. So can anyone file a case where, without being involved in the company? To which High Court did say that the petition is being disposed of, and they give liberty to the petitioner to file in an appropriate court. So MP High Court has disposed of the petition that was there against RBI and SEBI on Religare's AGM and open offer matter. So just to alert our viewers, now Religare open offer can go through, and as and when AGM can be conducted. Back to you.
Okay, all right. So stranger not, holding up in the court of law, so it seems. That's the MP order today. Thanks very much, Abhishek, for joining in. Let's move on and welcome in Amrish Baliga into the conversation. Amrish, good to have you on the show. Thanks for joining in, and season's greetings to you. Amrish, every week you join in and you talk about a stock pick. I must say that that's extremely brave, because the market has been testing people's patience, right? And the selling has been relentless. Even this week, we're already down, I think 2-3%, 5% on mid caps, even more in individual stocks. Do you still have a buy idea today?
Yeah, good afternoon, Ravi. Normally the stocks which I pick up are more of contrarian picks. So, these are already beaten down stocks. So there's, nothing like more to beat it down further based on the market movement. So today's pick is Tamil Nadu Mercantile Bank. That's one of the oldest private sector banks with a history of nearly 100 years. Focuses on retail, agri and MSME segment. And again, a strong presence in Tamil Nadu, where they have about 417 branches. Total number of branches is about 567, of which 70% is semi-urban and rural areas. 15 new branches were opened in H1. Strong earnings as far as Q2 is concerned. I expect similar in Q3 also. And in Q2, it was the highest profit till date, about 303 crores, which is up about 11%. Total income grew about 15% Y-on-Y. Gross NPAs have come down quite sharply to 1.37%. Net NPAs at about 0.46, which is extremely good. And NIMs increased to about 4.25. Book value again is about 532, which means that the current market price is at about 20% discount to the book value. And the focus again is on increasing the digital footprint, which should improve their profitability as well as margins. So here my target is about 540, which works out to one-time adjusted book value for FY25.
You don't hear that very often, that pick, but well, there is Tamil Nadu Mercantile Bank, Ambarish's pick. He's, I think, talking about it for the first time here on the channel. Ambarish, thanks for that. Coming back to you for more. But, you know, Zydus, the stock saw favorite damage. Zydus Life, not Wellness. And there is now a note from Nomura, and they're, I think, upgrading their rating. I think fallen to about 900, but back to about 1,010 today. Vivek, tell us more.
Well, that's right. An interesting note coming in from Nomura today as far as Zydus Life Sciences is concerned. They've upgraded the rating, like you mentioned, to a buy from a neutral that they had earlier, and they've increased the target price to 1,140 rupees a share. What is it that they're saying is the important trigger? First thing, remember on Jan 7th, Zydus actually announced that Zydus, along with its partner, would go ahead and launch sitagliptin, which is a diabetes drug. And what Nomura has done is they've done a sensitivity analysis as to how exactly it can aid the earnings of Zydus. So they're saying that assuming sitagliptin market opportunity at close to $300 to $500 million at a discounted price, they believe the opportunity size for Zydus can be large at $100 to $150 million on an annual basis. This, they believe, offers significant upside or risk as far as Zydus, US earnings are concerned. Along with that, what they're mentioning is that at this point of time, they were actually factoring in a 5% decline in US revenues for FY26 versus a higher base of FY25. Remember, Zydus, along with quite a few other Indian companies, will actually lose the kind of benefits that they were getting from the generic Revlimid. And this is why a lot of analysts had been factoring in a decline as far as US sales is concerned. However, with the addition of a few new launches, Nomura says that upside risk now there. Along with that, they're also saying that the company benefits from an appreciating US dollar as a large part of the exports, almost 77% anticipated in FY27 is in the US. So rising US dollar along with new opportunities is something that has driven the upgrade as for Zydus from Nomura.
Okay, all right, got it. That explains the move on Zydus Life. Vivek, thanks very much for that. Amrish Baliga, of course, is still with us. Amrish, I don't know if you look at Zydus in specific. If not, any other pharma picks today, there's news on Lupin as well, of course. They've got some reprieve on their Pitham per unit, where the action is only VAI, voluntary action indicated. So it's not as severe. So Zydus, Lupin, or any other pharma stock you like?
No, in fact, both these I've been tracking, and I had also recommended Lupin. I think I recommended about 2.5 years back. Zydus, again, I had recommended, I think, about 12 to 18 months back. And we've seen a decent correction as far as Zydus is concerned. From closer to about 1,300 levels, it had corrected. And now, based on this news, I do believe that it'll be a slow mover. I think we've already seen a very decent sort of a move in Lupin in the last close to about 12 months. So I think the upside for Lupin will be about 2,500, 2,550 if you're talking of the next 12 months.
Okay, all right, Amrish, stay with us. 12 minutes to go for close. Markets still down as far as the indices go, and broader markets, of course, under more pain. Atul Suri of CEO Marathon Trends PMS, we spoke with them earlier today. Overall sounded caution and two big red flags, global macros, the dollar and US dollar yields, which are closer to 5 than 4%. So this is the view, listener. We are going to come back after a quick break.
The next 1 month is definitely going to be very volatile because you've got three very big things, I think, that are panning out. One is this whole Trump trade. And already you can see that the world is shaping up for it. Bond yields have taken off. What's happened to the dollar is, I think, the biggest elephant in the room. That's affecting markets world over, whether we talk about it or not. Then you've got budgets, always unexpected, unknown. You don't know what's going to come out. And then you've got your corporate earnings, which actually is the biggest issue in our markets for the longer term sustainability. So I feel that in this period of lot of news, if the market just remains in this band, good day, when you start feeling bearish, the market takes off. And when you feel bullish, the market is going to, which is a typical range bound movement. I personally would favor if something like that happens. Yeah, the bigger risk is if the breakdown happens, because, remember, we are nearer to the lower band just by a 2% or thereabouts. Not a pretty place. It's been difficult. And I do think that the next 1 month is going to be challenging. Lot of news, but you just have to wait it out. A case in point, a sector I love, Prashant, is IT, right? I mean, a lot of people are talking about banks. There's consensus bullishness on banks, but I have not been bullish on banks, and I still am not bullish on banks. If I had to put my heart and hat in the largest to be overweight in any sector in large caps, it would be IT. Because if you look at some of the IT stocks, you'll find that a lot of them are pushing to new highs. And I think that is very, very exciting.
As far as the GDP growth is concerned, we had a record year as far as rupee is concerned. So we asked the question as to, will that be a spoil sport into 25 as well? Most of the experts believe that the rupee is going to be range between 85 to 87 a dollar, while a small segment expects the currency to appreciate below 85 as well going into 2025. Also, we saw a new RBI governor taking charge, and that the first policy will be in 2025. So we asked the experts what to expect in terms of RBI action. It's a divided house there. 50% believe that the first rate cut from RBI will be in the Q4 of this financial year. However, a small portion believes that the stretch line could be as late as the third quarter of FY26. So that's the RBI action. Indeed, if the RBI has to cut rates, then how much is the rate cut that the street is penciling in? Half of the respondents, which is 50%, believe that the rate cut going into 25 would be at least 50 basis points. So 50 to 75 basis points is what a lot of people are betting on. So that's the rate cut expectation going into 25. In fact, 24 was a very volatile year. We had a budget, we had general elections, multiple state elections, and so on and so on. But 25 could be a year of moderate returns, but the expectation is that the positive returns would continue going into 25 as well. That's the big poll from CNBC-TV18.
Welcome back. 7 minutes to go. The situation is still tricky on the street, but the markets pulled back from the lowest point of the day for whatever it's worth. And that's largely thanks to the moves that we've seen on some of the consumer stocks. And ONGC has also kind of pulled back. It was down almost 3% when we started the show. Now it's a little better off, marginally better. One can say Bank Nifty also down about 0.6%. So yeah, that's the uptick on ONGC. Anyway, let's move on to a big view that we got in the morning. Vikash Kumar Jain, India strategist and India head of research at CLSA, spoke with us earlier, gave us his outlook for the year. Vikash is fairly cautious on the market, says that he'll be happy if we even get single-digit returns. And his biggest call actually is consumer staples for the year. Take a look.
There is obviously risk to earnings in FY26. If you remember the last quarter, we saw pretty big downgrades in earnings. So, further downgrades can be a bit problematic in terms of expectations of Nifty returns. We are at 12 to 13% of credit growth. The earnings number that consensus is baking in for FY26 is Nifty earnings growth is about 16%. We'd be slightly lower than that. We need bond yields to not go much higher, and also at the same point of time, expect that equity and bond differential stays very high, and we do not see earnings cut. I think that's a lot of things which are uncertain. And that's why I would say that not gunning for big returns, single-digit returns will be, if we scrape through with that, we'll be very happy with that. So there's going to be a period where things will go much cheaper, and then we can come back to hope for an up move. But net, don't think we're going to end with a very high number versus where we started this year. I think, see, we've had a great run. This could be that year of consolidation following, which started in October. That might very well continue. Biggest overweight is actually staples. So we run a India-focused portfolio, and for the last 4 years, I've tended to completely avoid staples. And this time, at the start of the year, we've actually made staples our biggest overweight, cut our overweight in banks to just above neutral. Staples, I believe that that's really the big sector call, which we have taken very anti-consensus. We believe that the realities of coalition government and the hints that we have got from recent state elections, plus the good rainfall that we've seen and the good sowing that we've seen, maybe just bring back that affordable consumption to kind of life. And within staples, we like the food-related companies more.
Food-related companies, staples is what Vikas likes. But Amrish Paliga is still with us. Amrish, hi, good afternoon, and good to see you. And as always, I want to ask you about tech. You know, we're getting into earnings, and actually not too bad an outcome because TCS is going into the numbers at the low point of the day, and a lot of these tech-related names are also lower. So if you can get an inline or mildly positive number, it will be great news. How do you view the tech pack, and what do you like from there?
No, I think tech would be possibly one of those few sectors where we can see a decent uptick from the Q3 numbers. And again, the expectations are not too high. There are fears, especially post Jan 20th, as to, what sort of restrictions could come, which could affect the Indian IT companies. So I think because of that, there is some amount of caution. But then from the earnings point of view, I think that can be a positive surprise. And I would surely look at buying tech on a decline. For example, Infosys, TCS, I think these are the two stocks which should surely be in one's portfolio. So I think it's an opportunity to buy.
All these, SRFs and Naveen Fluorine and Aarti Industries, any interest, Amrish?
The news which has come today of the increase in prices, I think, at least from a short to medium term angle, it would be positive for these companies, especially SRF, which has seen a decent move today. But then again, I really don't think this can carry on for too long. I really don't expect SRF to move beyond 2800, 2825 in this move.
Religare is that change in control story, and now probably it'll move the open offer and the resolution on reappointment, etc. will move forward, which was supposed to happen 31st December, but now should happen. Any thoughts here?
No, in fact, Religare I have not really tracked closely. All through this controversy which has been going on, I have not really tracked it, so difficult to comment.
By the way, today the mid-cap market has fared worse than the large-cap space. Just taking some names. Kalyan is now down 7%. There is ITI. ITI had a good run in the last few sessions, but today it's completely reversed. It's down about 8%. Oil India is a big stock. It's down about 5% today. Ashoka Buildcon is losing about 5 to 6% as well. MobiKwik, the recent listing, MobiKwik's down 7.5% today. So plenty of weakness. And in terms of smaller jewelry players, the correction is not limited to Kalyan. If you look at the others, like PN Gadgil is lower, and even TBZ. TBZ is down about 5 to 6% as well. So that's, a summary of the broader correction. Amrish, on consumer, the debate is really out. And, leave us with your thoughts there, finally, and any picks that you may have. Today, the CLSA view was that it's time to go big on staples. But, there are others who feel that maybe discretionary consumption is still the way to go. Your thoughts, just maybe one idea in the consumer space.
The way I see it is possibly we could see a slowdown for another quarter or so. But then if you're looking at long term, this could be a sort of a window when you can start buying into these stocks and hold on for longer term. And one of my picks in this space clearly is Dabur, where we've already seen a decent correction. So, and at the same time, I see the rural consumption possibly picking up post April, May. So I think this is the best time to get into a stock like Dabur.
Yeah, all right. We have more questions for you, Amrish. By the way, before we get into market wrap, just want to pull up a few stocks. L&T Finance, big up spike is what we're seeing in the last few minutes. I don't know what's going on there. But that stock has suddenly scooted off to the high point of the day. So maybe keep an eye out on that particular
Market
name.
is also, Nigel, picked up a little bit. But
Could be an expiry-related factor as well. Weekly expiry.
It's 50 points from the lows. I mean, actually, the low today and yesterday is almost similar. About 23,500 was the low yesterday, and I think about 23,500 is the low today as well. But, you know, let's see if it's holding on. Our 23,550 is where we close. About 140 points low.
All right, let's wrap down the markets. Then ONGC, Coal India, top losers in trade today. Shriram Finance as well did bear the brunt today, so that stock was lower. BPSL came in for some profit taking. What did well? We had an interesting brokerage note coming in from CLSA on Bajaj Auto, so that stock was up close to 2%. Too much of pessimism, it seems, on consumption on these FMCG names. HUL, Nestle, Britannia, all of them top gainers in trade today. From the broader markets, well, there was a lot of pain. So Kalyan Jewellers, one of the big underperformers this week itself. Guess what? The operational update was good. The stock has lost 15% this week. Oil India as well gave up what it put on yesterday, so that stock was lower. BSC, after seeing a good run, a couple of sessions ago, it moved from around 5,100 all the way to around 5,500. Now it's back around 5,200, down 4% in today's trading session. Broader markets, the story wasn't different. Marico was up 5%. Aarti Industries was up. These chemical vehicles moved up. Refrigerant gas, apparently, prices are going to move up big time. SRF and Navin Fluorine, boom, boom, big move is what we saw on both of them.
Okay, and by the way, PSU stocks have been pummeled this week so far, and across the board, whether it's PSU banks, it could be metal stocks, it could be, other commodity names. The Nifty PSC index is already down 4.5% for the week, and that showed up in a lot of stocks today as well. ONGC, BPCL, Coal India, so NTPC, many of these PSUs, SBI, all of them on the downside. Well, the day is over, 162 points of a cut on the Nifty. 23,526 is the final tally. That's where we take your leave on this edition of Closing Bell. But don't go away, because Nigel and I are right here, take you forward. Up ahead is Markets Forward. India is in vogue for a number of international brands this season. Surabhi Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Surabhi Upadhyay, and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters, as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of
A weak session sees the Sensex and the Nifty end near the day's low. Most sector indices end lower, with the Nifty Bank making fresh lows. Broader markets underperform in trade.
Specialty chemical stocks like SRF, Navin Fluorine and alkyl amines rally following a sharp rise in global refrigerant gas prices, which brokerages expect will help lift earnings of these companies that have remained under pressure.
Manappuram Finance surges in trade as RBI lifts restrictions on its subsidiary, but the stock comes off the high point of the day. Religare stocks as well trade high as the court order paves the way for the AGM and in fact the open offer as well. The other stocks in focus include Bajaj Auto, which surged post the brokerage update. Hello and welcome to a fresh edition of Markets Forward, your go-to show where we aim to get you up to speed with regard to today's trading action and set you up for tomorrow's session as well. I'm Nigel, with me as always, Surbhi. Hey Surbhi.
Well, Nigel, another tough day for the market. It's not been easy. It's not been an easy week, and Thursday didn't show up any different.
Well, that's right. Weekly expiry as well played out, so that could be another factor at play. But towards the end of trade, you saw a bit of a fight back, and that's why, at least on a closing basis, you'll have to say, thank God, at least we protected that 23,500 odd mark. However, as Surbhi mentioned, the broader markets, that was a painful space to be in there. You had only around 500 stocks that were advancing and 1,500 stocks that were declining. So the mid-cap and the small-cap index got pummeled. The sense you get is that maybe there's a part of domestic money that's getting a little bit sketchy. And because of that, we're seeing a bit of an underperformance out there. So that was the problem pocket, Surbhi.
Absolutely. But you know what? I want to talk about the silver lining today before we move on with the market action. And that is just the faith that retail investors are still keeping in the equity market, at least through their mutual funds, because the numbers came in for December. And in a month where the market has been so sluggish, range bound, also, even falling, guess what? In the equity mutual fund side, investors have pumped in over 41,000 crores. And it's about a 15% improvement over November. Not just that. The SIP numbers are at an all-time high. SIPs have pulled in over 26,400 crores. It's an all-time high number, and the money is really pouring in. While a large part of the market, and experts talk about how large caps could be doing well, at least in December, it was still mid-caps and small-cap funds, which is where the money was going in. Mid-cap funds actually pulled in about 5,000 crores. Small-cap funds pulled in about 4,700 crores. So the going's been pretty good. But yes, the market has been testing investors' patience and faith. As of now, I think domestic investors are using the dip as a buying opportunity. So I thought I'll put that piece of positive news on the table, even as FPIs have been really challenging this market with their daily sales. But anyway, let's tell you about what the lineup on the show is looking like. We will start off with the key movers and shakers of the day. Vivek will give us a blow-by-blow account of what happened on the street. And then we put the spotlight on specialty chemical stocks like SRF, Navin Fluorine, and they were all up and about in today's trading action. We'll tell you why in just a bit. Manappuram Finance was in focus. The RBI reprieve came in on their MFI business, but didn't really help the stock. So more on this in a while. And then, of course, finally, it is earnings season. Lots to watch tomorrow. So we'll get you all the key events to align yourself with for Friday. But first up, let's head across to Vivek. Vivek, plenty of red once again today.
Good afternoon. That's right. Once again, the breadth of the market was quite weak, not holding on to any of the gains. But quite a few large movers in the session today. Let's start off with the top gainers. First, it has to be Bajaj Auto, a double upgrade coming in as far as CLSA is concerned on the rating of the stock. And despite the weak market, the stock held out quite strong in today's trading session. The other set of stocks that did quite well today was the rebound that you saw from the entire FMCG basket. So most of the FMCG stocks today actually managed to end the day with significant gains. So names like Marico, Colgate, all of these stocks almost 3-4% higher in the session. The other set of stocks, and one that we'll discuss in depth later on, is the chemical pack. So names like SRF, Navin Fluorine, ref gas prices in the US have gone up significantly. Remember, names like SRF has significant export to the US market, and they had a very good trading session. The other stock that did quite well was Zydus Life. Upgrade coming in from Nomura for this particular stock. They see significant opportunity from the latest launch of the company, and on the back of that, this particular stock did quite well too. And towards the end of the day, CGD companies, so both IGL as well as MGL, saw a bit of a bounce. This was on the back of the fact that they saw an increase as far as domestic gas allocation is concerned. But quite a long list of losers as well. The entire realty pack today saw quite a bit of selling pressure. Names like DLF, Oberoi Realty, all of them were down in today's trading session. Along with that, Oil India, one of the top laggards as far as the NSE 500 was concerned, so significant volumes as well in this particular name. And Kalyan Jewellers, once again after yesterday's respite or yesterday's recovery from the day's low, today once again one of the top laggards as far as the F&O space was concerned, down over 6% in the session today.
Okay, all right. Thanks a lot for that, Vivek. Well, let's get in our experts. Amrish Paliga and Ruchit Jain join in on the show. Hi, gentlemen. Thanks a lot for joining in. Ruchit, you go first. Another down day. The hope is the recent low gets protected. That's around 23,450 or lower still, 23,200. Are you in that camp, or do you think we're just buying time? That level's there for the taking. It's going to get broken on the downside.
Yeah, very good afternoon, Nigel. Very good afternoon to everyone. Well, definitely markets have approached those supports again. But as of now, if you look at the overall market breadth, there are no signs of any kind of pullback move or reversal yet. I think only if you look at last 3 trading sessions, the market have been trading within this range of 23,450 to 23,800. So I think we need to see whether the index manages to make a firm support around these levels and surpass the 23,800 mark. Only then we would participate on the long side. Otherwise, it's better to be cautious since there is no support from the broader markets. Also, if you look at the FI's long-short ratio data since last 3 or 4 trading sessions, it's quite stagnant around that 18-19% mark. The positions are short heavy with around 80% positions on the short side, but there are no signs of short covering yet. So I think we would wait for the data to change, either some short covering data by the FIs where this short position reduces, or market or Nifty surpassing above the 23,750, 23,800. Then only one should look for long opportunities for short-term trading. Otherwise, till that time, I think we are in the camp where better to stay cautious.
Fair enough. Yeah, as of now, those shorts are not covering, perhaps not finding any reason to cover immediately. But let's see how the situation plays out. Let's move to the sector of the day, and that really has to be the chemical space. In a market that was downbeat, stocks like SRF, Navin Fluorine, they managed double-digit gains today, and that was thanks to expectations that, not just expectations, actually reality as well, that some of the refrigerant gases, their prices are going up. Let's in fact go across to our colleague Yatin for more details on this.
Well, if you look at gas stocks, Navin Fluorine and SRF are buzzing in trade on the back of Aquarius note, which says that in the US, we have seen supply disruptions with respect to refrigerant gases. 2 varieties, R32 and R125, have seen price increases of over 200% in the spot market. What does this mean for Navin Fluorine and SRF is that since they are major exporters and manufacturers of R32 and R35, as well as R125, these are refrigerant gases which are used in air conditioners and refrigerators, wherein the demand and supply mismatch in the US has caused a big disruption. In fact, if you look at the Aquarius note, they say that for every $1 price increase in R32, SRF EBITDA increases by over 260 crores, and the figure for Navin Fluorine is around 77 crores. Now, if you look at capacities also, SRF has a capacity of nearly 30,000 tons for R32, and nearly 9,000 tons capacity is with Navin Fluorine with respect to R32. So given the fact that US markets are witnessing price hikes of nearly $3 to $4 per kg, the stocks are buzzing. Obviously, the note also says that the impact of price hike, since the entire capacity is contracted, would be important to watch. And if the price sustains from here on, there could be a big impact on the EBITDA margins for Navin Fluorine in the next 3 to 4 quarters, and probably the reason why the stocks are buzzing in trade.
Probably so. Yatin, thanks a lot for that. Amrish, your view on both these 2 stocks? Big move today, warranted? If there is good news, has it played out?
No, it is clearly warranted because of the supply disruptions, the way the prices have gone up. Clearly, it's a short-term opportunity. So, like I was saying earlier, possibly SRF can move up some more from here, but don't really expect it to continue moving up to levels of about 3,000, 3,200. I think that's difficult. I think the upside would be capped closer to about 2,800, 2,850.
All right, got that. Gentlemen, stay on. Let's move to the other stock as well, which is Manappuram that we're talking about now. Manappuram started the day with good news, with the relief coming in for Asirvad Microfinance from RBI, but then the gains fizzled out. Let's go across to Abhishek to understand what the street view is now, what different brokerages are saying. Abhishek, over to you.
Well, RBI has lifted the restrictions that they had placed on business being conducted by, Religare as well as DMI Finance. So all the 4 NBFCs wherein the RBI had placed restriction with respect to business in October 24 has been now lifted in less than 3 months. So we have Jeffrey's notes on Manappuram. They have an hold rating and target price they have increased to 190 per share. They say that RBI is lifting ban on disbursals of Manappuram's MFI subsidiary, that is Asirvad, is a key positive. It forms about 27% of AUM and about rupees 20 with respect to the SOTP or some of the parts target price that they have on Manappuram. This is a key positive trigger, they say. However, disbursals in the MFI segment should stay muted in the near term given the stress that we are seeing in the MFI sector. So, for Manappuram, they say the valuations are attractive. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's get in Amrish to talk about this thing. Amrish, Manappuram, it was good news, but the stock came off the day's high. So if you could quickly give us your view, and then we'll go across to Ruchi to get his view on the stock.
That's true. See, lifting the ban was positive, so because of which we saw a decent start for Manappuram. But then, the lifting of ban was for the microfinance part of the the subsidiary, and the sort of a mood which is there on the market as far as microfinance companies is negative. So finally, I think that's what has played out.
Okay.
Ruchit, what about you? If you could tell us what's your take, because the stock saw a sharp correction and went in the ban, and from there it bounced considerably. On the charts, how's it looking?
So, Nigel, if you look at a bit of historical data, when RBI had put that restriction in the month of October, the stock was trading somewhere around 175, post which we witnessed that gap down opening. But before this news came out, yesterday the stock had already recovered, from the lows and surpassed the 174, 175 level. So I think somehow, it has been discounted already. And whenever we see such gap up openings after news, the important thing is follow-up move. If there is no follow-up move, then I think the entire rally could get fizzled out. So there was no follow-up move today. 195 continues to be resistance until we see a breakout above that. I think the news has been factored in the stock, and likely it's to trade within this range of 195 to 165 in the short term.
Okay, that's Manappuram. Ruchit, also didn't check SRF and Navin Fluorine with you. These stocks today had a very solid bounce after a long time. What are the charts indicating? Could this last?
I think yes, SRF specifically looks quite interesting because it has been into a long consolidation phase of 3 years. If you look at January 2022, the stock was trading around this 24,2,500 range. If we are in January 2025, the stock is still in that range only. So it has been a 3 years of consolidation phase for the stock, irrespective of what the markets have done in this time. So I think if we see a follow-up move or a breakout about 2,700, which has been the resistance, the long-term charts would get much positive. So I think within the entire space, it has been a long consolidation phase. So about 2,700, I think the uptrend would get resumed, and then the stock has potential to do even 3,200, 3,300 kind of range.
Okay, all right. Richard, final question before we let you go. The bulls will be turning to some of these heavyweights to bail them out. If you had to pick up one stock that could bat for the bulls, what would it be? Reliance Industries, HDFC Bank, ITC?
So if we look at the risk-reward ratio, then I think Reliance will have to take the job in case if we witness a pullback move or any kind of bounce back from these support levels. The oil and gas entire space have already seen a good corrective phase of late, and Reliance Industries is now trading around its weekly 200 average. And historically, whenever the stock has come towards this 200 weeks exponential moving average since the COVID bottom, we have seen the stock gaining buying interest again. So the risk-reward ratio seems favorable with Reliance over here. So I think this would be one stock to watch out for in case of reversals.
Okay, all right. Ruchit and Amrish, thank you very much for joining in. Good to have your views and opinion on the show today. Well, we need to take a quick break. On that note, we'll come back with some of the top corporate voices in the commentary that we picked up today, as well as the events to watch tomorrow.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line?
Well, the third quarter earnings season kicks off today with TCS declaring numbers, and it's expected to be a fairly muted quarter for the company. Rima is joining in with the key expectations.
Well, expect a muted quarter from TCS on account of three reasons. One, the seasonality, the lower working days and furloughs. Secondly, the incremental contribution from BSNL in Q3 is likely to be lower than Q2. And the third reason is cross-currency headwinds on account of the dollar strength. So dollar revenue growth is likely to be down 0.6% according to the CNBC-TV18 poll on a quarter-on-quarter basis. Though on a constant currency basis, the revenue growth could be on the flatter side. There are some estimates which are mildly negative and some which are mildly positive. Our poll is at about 0.2%. EBIT margins are seen up by 40 basis points to 24.5%. This is after two consecutive quarters of a decline, and profits are seen up nearly 4%. Now, what will the street watch? One, the growth X of the X of the BSNL contribution. If you remember in Q2, international revenues declined by 0.4% for the weakest since COVID. Secondly, continued recovery in BFSI. Do the green shoots continue? Third, the outlook on US healthcare, because in Q2, we saw some clients cancelling discretionary projects, particularly in US healthcare. Has that persisted or have things recovered? And then the usual questions of discretionary spending. Is it back? Is it better than Q2? Has it extended itself to beyond BFSI, the client budgets, the outlook on margins, etc. Now, the stock has been a bit of an underperformer versus peers. In the last 12 months, TCS share price is up 8%, while an Infy is up 25%. And as a result of this, Infy's valuations have converged to that of TCS, and TCS share price is also about 12% off its peaks. Back to you.
Let's take you through the key corporate voices that we had during the course of the day. Ashiana Housing, well, they have maintained their FY25 pre-sales guidance of around 2,000 crore rupees with an average selling price at around 6 to around 8,000 rupees per square foot. The management said that despite signs of plateauing real estate demand in Gurugram, the company's focus on affordable, lower ticket projects offers some protection. Also, we had another real estate company, that's Signature Global. They have maintained their FY25 guidance. They're targeting pre-sales of 10,000 crores and collections of around 6,000 crores for FY25. The management also said the company is seeing strong demand for the mid-sized apartments in the Gurugram/NCR region.
Well, let's move on. Borosil Renewables outlines its expansion plans in India with the commissioning expected in 18 to 21 months. The company will be investing 675 crore rupees for the expansion, leading to a 50% increase in domestic revenues. The management adds that there is potential for a further 500-ton expansion in the future. All right, let's move to some market views now. Atul Suri, CEO at Marathon Trends PMS, is expecting the next few months of 2025 to be fairly challenging for the Indian market. This on the back of Donald Trump's return to the White House, the upcoming budget, and several other triggers, including concerns around earnings. Take a look.
The next 1 month is definitely going to be very volatile because you've got three very big things, I think, that are panning out. One is this whole Trump trade. And already you can see that the world is shaping up for it. Bond yields have taken off. What's happened to the dollar is, I think, the biggest elephant in the room. That's affecting markets world over, whether we talk about it or not. Then you've got budgets, always unexpected, unknown. You don't know what's going to come out. And then you've got your corporate earnings, which actually is the biggest issue in our markets for the longer term sustainability. So I feel that in this period of lot of news, if the market just remains in this band, good day, when you start feeling bearish, the market takes off, and when you feel bullish, the market is going to, which is a typical range-bound movement. I personally would favor if something like that happens. Yeah, the bigger risk is if the breakdown happens, because, remember, we are nearer to the lower band just by 2% or thereabout. Not a pretty place. It's been difficult. And I do think that the next 1 month is going to be challenging. A lot of news, but you just have to wait it out.
Well, Vikas Kumar Jain of CLSA believes that 2025 will be a year of consolidation for the Indian market, and that he doesn't anticipate more than single-digit returns for the year. Let's hear him out.
We need bond yields to not go much higher, and also at the same point of time, expect that equity and bond differential stays very high, and we do not see earnings cut. I think that's a lot of things which are uncertain, and that's why I would say that not gunning for big returns. Single-digit returns will be, if we scrape through with that, we'll be very happy with that. So there's going to be a period where things will go much cheaper, and then we can come back to hope for an up move. But net, don't think we're going to end with a very high number versus where we started this year. I think, we've had a great run. This could be that year of consolidation following which started in October. That might very well continue.
All right, that was the view from CLSA. But before we wrap out, let's tell you all the key events that you need to watch out for tomorrow. Abhishek is standing by with the details.
Well, tomorrow we'll have the industrial production data for India. It is, last time it was around 3.5%. Manufacturing production data will be out. Last time it was around 4.1%. And also watch out for the Forex reserve data from RBI. Last time it was around $640.3 billion. With respect to USA, tomorrow you will get the non-farm payroll. It is estimated to come at 1,54,000. Unemployment rate will come out. It is estimated to be at 4.2% for USA. Now, DFS is holding a series of consultative meetings from 7th of Jan to 16th of Jan, so that will also continue tomorrow. We have a stock split tomorrow. Shriram Finance will get split from a face value of rupees 10 to rupees 2. There is a record date, that is 10th of Jan 2025. We also have the results season running in. So tomorrow you have the results from Brightcom Group, CSE, Equinox, GNA Access, as well as Hathway. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, on that note, we'll have to wrap up on this edition of Markets Forward. We'll be back with more news and updates on the other side.
About making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
At the Consumer Electronics Show, I found out an espresso-like cocktail-making machine. To tell us more about this, I'm joined in by Ryan Close, who's the founder and CEO of Bartesian. Tell us more. how does this machine work?
Yeah, so this is the Bartesian. It allows anyone to have a fantastic cocktail in the comfort of their own home by allowing them to load their own alcohol in here. So that's very clearly marked. Vodka goes in vodka, whiskey, whiskey. So you simply take these bottles out, you fill them with your favorite spirit, and you pop them in. And then the machine itself, you have a water source at the back.
Sure.
And then the cocktails all come in these capsules.
Okay.
And they're recyclable cups.
Okay.
And there's no artificial colors or flavors. And they contain all the bitters, liqueurs, and juices you need to make a perfect cocktail.
So how...
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty end at the low point of the day. Mid-cap see a sharper sell-off. Rupee tests fresh record lows against the dollar before ending flat. Domestic institutional investors remain unfazed amid selling by foreign portfolio investors. Inflows into equity mutual funds rise more than 14% in December, even as the Nifty declines 2% in the same month. SIP inflows hit a record high of nearly 26,500 crore rupees. TCS expected to report a minor decline in quarterly revenue as the Q3 earnings season kicks off. Margins likely to expand according to a CNBC-TV18 poll. Stock declines and trade ahead of the earnings. SEBI's new sterner default rule pinches companies. The market regulator's November 18 circular says a repayment delay of even a rupee by a day, even due to technical reasons, would result in default classification. Does away with the leniency previously granted to technical defaults during the pandemic. 6 people are killed and 40 injured after a stampede at Tirupati temple. The incident occurred at a ticket counter where thousands had queued up for special darshan tickets. 50 people killed across Gaza overnight as Israeli forces continue their assault. Outgoing U.S. Secretary of State Antony Blinken optimistic about the prospects of a ceasefire. Parents of at least 800 soldiers and reservists write to Israeli Prime Minister Netanyahu and urge him to end the war. 5 people killed, thousands flee their homes as wildfires rip through Los Angeles. More than 1.3 lakh people are under evacuation orders as the blaze tears through iconic landmarks on Hollywood's hills. A Singaporean passport remains the most powerful in the world as it provides visa-free travel to 195 destinations. Japan ranks second in the annual Henry Passport Index. United States drops to number 9. Indian passport weakens by 5 places to number 85. Right here, let's start with the market action. Sensex declined by over 500 points. Nifty lost over 160 points as weakness persists on the Lal Street. Mid-caps underperformed the blue chips. Barring FMCG, all sectoral indices ended in the red. Prashant Nair is here with the market wrap.
Well, another tough day for the market and the Nifty Bank, broader markets all down and out. Actually, even sectorally speaking, indices were leading lower. Now, the Nifty still not at the December lows. That is still about 100 odd points away from where we left off today. The Nifty Bank broke yesterday's low, and that's in a clean way, making a newer lows, which is not a great sign technically. Mid-cap and small-cap indices yesterday underperformed and did worse as compared to large caps. And I think today was that story once again, especially the small-cap space. All sectors down, but the big ones were real estate, energy, and CPSE. Remember, the oil and gas space has done decently well over the last 2 weeks or so. So there was some selling pressure. FMCG, which has been down and out, and I'll talk about stocks in a bit, was the only large sector which was up and about in the green. I'll start with what was down on the Nifty. ONGC, BPCL, Coal India, Tata Steel Metals and resource names, really, which were down. Shriram Finance had a big sort of move, I think yesterday and day before. Today it was taking it easy on the downside. What was up, beaten down names, Bajaj, I think there was an upgrade from a broker. Kotak Bank, it's been one of those tactical buys which people have been pushing, recommending, did well. FMCG, Nestle, Lever, Britannia, Tata Consumer, all Nifty names which were up between 1 and 2.5%. Broader market, some 3:1 declines outnumber advances. So here, the losses coming through in Aegis Logistics. But remember, some of these stocks are coming off very, very large gains. Kalyan, something similar. I think it's lost about 10% this week, maybe a little more. ITI, another quick mover in 2025. The few days that we've traded so far came under pressure. Spandana, something similar, recent sharp gains. MobiKwik, reversal from yesterday's gains. Oil India, PCBL, Hutco, Ami Organics and Dhani were some of the other names which were down. Winners coming through, these chemical names, SRF and Naveen, there was news flow. IGL did well. Balaji Amines, Alkyl Amines, both were up sharply. Colgate stood out. Zydus Life, there was a brokerage upgrade. Mazgaon Dock on the defense space. Aarti Industries, another chemical name there. GIC, RE, Religare, positive news for those especially expecting change and control there. And a hotel company like Sami did quite well as well. Remember, US markets are shut. Stock markets are completely shut. Bond markets shut early. News flow, I think, will continue to hit us, but no price action as we come back tomorrow morning. Back to you.
Right. Thank you, Prashant, for that. On to the money market action. The Indian rupee weakened further to hit yet another record low versus the dollar. But most of the losses were wiped out in late trade and the rupee ended largely flat. However, $1 is now worth nearly 86 rupees. 8-year bond prices have also come under pressure, leading to a spike in yields. Now, domestic investors' appetite for equity-based mutual funds remained intact in December despite market volatility. Now, inflows into equity mutual funds rose 15% last month despite a 2% drop in the benchmark Nifty 50 index. Indian stock funds have now seen net inflows for the 46th consecutive month. Now, Surbhi Upadhyay is here with more. Surbhi, take us through the key trends from the AMFI data.
Equity investors have really kept the faith in mutual funds, and even as the market has been consolidating and many stocks have been correcting, the money still keeps coming in. In fact, month on month, the equity inflow has risen by almost 15%. It's come in at a staggering figure of 41,136 crore rupees. And as much as experts say that, this is going to be a year of large caps, investors are making a beeline for mid and small cap funds. Look at the kind of money they're drawing in, almost 5,000 crores, 5,100 crores in mid cap funds, 4,700 crores nearly in small cap funds. Contrast this with just about 2,000 crores that have flown into large caps. So small and mid caps still get top billing. The other very interesting trend is NFOs once again. We've got 33 NFOs in December. Many of them are actually sectoral and thematic funds, and together they've pulled in about 13,600 crores, which is also why that sectoral category, that's again swollen in December. Sectoral funds have pulled in over 15,000 crores, in fact 15,330 to be more precise. Hybrids as a category is very, very steady. Both balanced advantage funds and multi-asset allocation funds have both been getting very steady inflows, about 1,500 in BAF and about 2,500 crores in the multi-asset allocation category. So overall, hybrids are doing okay. The total AUM for the industry has dipped a little bit to just under 67 lakh crores. That's because of the outflows in debt funds. And finally, we've just got the SIP details as well. That number is absolutely staggering. SIPs have pulled in about 26,400 crores in the month of December. So there you have it, the equity story intact, and investors are absolutely unfazed with the market correction, time-wise or price-wise.
Thank you, Surbhi, for that. 2025 will be a year of consolidation for the Indian markets. That is the word coming in from CLSA. Speaking with CNBC-TV18, the brokerage firm's India strategist Vikas Jain said he's expecting earnings growth of 13 to 14% in FY25. The brokerage is also betting on FMCG stocks over industrials this year as it anticipates a tilt in government policy towards welfareism.
Further downgrades can be a bit problematic in terms of expectations of Nifty returns. We are at 12 to 13% of credit growth. The earnings number that consensus is baking in for FY26 is Nifty earnings growth is about 16%. We'd be a slightly lower than that. I would say that not gunning for big returns, single-digit returns will be, if we scrape through with that, we'll be very happy with that. I think, we've had a great run. This could be that year of consolidation following which started in October. That might very well continue.
The Finance Ministry is ringing in some major changes ahead of the upcoming union budget. Tuhin Kanta Pandey, who is currently the Finance Secretary, has been given additional charge of the Revenue Department. The post fell vacant after former Revenue Secretary Sanjay Malhotra was appointed as the RBI Governor. Arunish Chawla will be the man in charge of divestment. He has been appointed as the DIPAM Secretary. Chawla will also hold additional charges as Secretary at the Department of Public Enterprises and the Ministry of Culture as well. And speaking of the Finance Ministry, DFS Secretary has said that the microfinancing institutions must draw a roadmap to strengthen the sector and become more viable. The Secretary also said that the industry must also encourage repayment of loans digitally and focus on boosting cybersecurity and IT infra. This comes a day after the industry met the government to lay down its wish list for the upcoming budget. The industry asked the government to renew credit guarantee mechanism given to the sector during the pandemic. The sector hopes this move will help reduce pricing costs and help lenders access growth capital.
I presented the sector's contributions, what is the sector's outreach, and also few other issues like what is the current credit quality and what are the requests to the government. So all these things were discussed. It was a very cordial meeting, and as you have rightly quoted, the government has last night also issued a press release on it.
The countdown to the union budget has well and truly begun. India is looking to seize the moment and establish itself as a global economic outlier. The upcoming budget, which will be the NDA government's first full budget after the election victory. Tell us what you want from Budget 2025 by submitting your wish list to the CNBC-TV18's budget box at hotspots near you and on CNBC-TV18.com. This is your budget headquarters. Join us on the budget day for the biggest newsmakers and unparalleled insights. SEBI's stricter default rules have begun hurting companies. The market regulator on November 18th circular, it said that any repayment delay of even a rupee by a day, regardless of the reason, will result in default classification. The circular has also done away with the leniency previously granted to technical defaults during the pandemic. Ritu Singh joins us now with more on the recent downgrades companies are facing on the recent defaults.
Well, SEBI's strict default rules, where even a one-day delay of 1 rupee to any investor counts as a default and triggers a rating downgrade, are proving to be quite challenging for corporate India, and the recent Axis Finance case only goes on to highlight how even minor delays can lead to big consequences. This Monday, we saw India Ratings downgrade Axis Finance's rating to default because of a one-day delay in repaying 6 crore rupees on a banking facility. The company had instructed its bank to pay the lender on the due date of 30th of December, but operational issues delayed the payment until the 31st of December. Now, although the rating was restored later, the temporary downgrade has raised quite a stir. In another instance, an NBFC called Kanak Durga Finance was downgraded to D by CARE Ratings in November and then simultaneously upgraded. Why? Because of a delay in processing a payment of just 841 rupees to one out of its 251 investors, and in this case, the delay was because of incorrect details provided by the investor. Now, all of these events really stem from SEBI's November 18th circular that leaves no room for leniency. Now, while this 1 rupee one-day default rule has been in place for 7-8 years, the regulator had provided some leniency during the pandemic and allowed rating agencies to recognize technical defaults without actual downgrades for events which were outside their control. But the November 18th circular scraps the entire concept of technical defaults, requiring rating agencies to act on every delay, even if operational or technical. Now, while there is the relaxation of a simultaneous downgrade and upgrade, which SEBI has provided to rating agencies if the issuer deposits the payment in an escrow account and shows genuine intent to pay, even these momentary downgrades can cause reputational damage. The rating volatility can even cause stock price volatility, and for funds that are holding the downgraded debt, the knock-on effect is a hit to NAVs and investor returns. So SEBI's goal is transparency, but it is turning out to be a tricky situation for companies.
Thank you, Ritu, for that. Dunzo's co-founder Kabir Biswas is set to join Flipkart Minutes. He'll lead the quick commerce operations for Walmart-owned Flipkart as the head of Flipkart Minutes. This will be Biswas's second innings in the rapid delivery space after starting and scaling up Dunzo for over a decade. Earlier reports suggested that he was stepping down as CEO of Dunzo. The move comes at a time when Dunzo is struggling to keep operations afloat. The National Restaurant Association has strongly opposed new launches from Zomato and Swiggy that promise food delivery in 15 minutes. The association is looking to pursue legal action against the quick commerce firms for allegedly monopolizing the market. The NRAI has also said that this is a clear case of misuse of private labels, adding that the company's move is infringing upon intellectual property rights under the Copyright Act. This move comes after Swiggy and Zomato announced its foray into 15-minute food delivery space with new apps. Ride-hailing platform BlueSmart is set to raise $50 million in a new funding round. The company's pre-money valuation has been pegged at $335 million. The funding round will see participation from existing investors and promoters. The company has already received half of the total fundraise. The round is expected to close next month. Right, big news that we are tracking. TCS has reported its third quarter numbers for FY25. Let's get across to Rima Tendulkar for the numbers. Rima.
Well, these appear to be largely in line with street expectations. The company's dollar revenue has declined by 0.5% on a quarter-on-quarter basis. Remember, this is a seasonally weak quarter. There are furloughs, lower working days, so that could have impacted the company's top line. So dollar revenue has declined by 0.5%. Margins on expected lines have expanded by 40 basis points to 24.5%, coming in line with expectations. And the company's profits have gone up by 4% sequentially at 12,380. Prima facie, these numbers appear to be in line with the rupee has declined by rupee revenues have declined by 0.5%. I'm still awaiting what the dollar revenue growth is. The company's constant currency revenue growth in the current quarter is at 4.5% on a year-on-year basis, and this is a slight deceleration compared to the 5.5% growth that we had in Q2. We do not have the constant currency revenue growth on a quarter-on-quarter basis, nor do we have the dollar revenue growth on a quarter-on-quarter basis. The company's deal wins have picked up. So deal wins have come in at $10.2 billion, which compares with $8.7 billion. So there is a pickup seen on a quarter-on-quarter basis by nearly 17%. And even on a year-on-year basis, the deal wins are up 25%. So this is largely it's slightly higher than the company's comfort band. They've always spoken about $7 to $9 billion being the quarterly deal win run rate. The attrition for the company has inched up marginally. It now stands at close to about 13%. And I think in the prior quarter, it was at 12.3%. But again, at 13%, it's still within the company's comfort band. They've spoken about 11 to 13% as the comfort band for attrition. It's just that it's come in at the upper end. The total workforce is at about 6,07,000. And I think this would be slightly lower compared to what they had in the prior quarter. So the company's net headcount would have fallen in the current quarter. I think quarter on quarter, it would be a drop of a little more than 5,000 employees. What I'm just trying to calculate is the performance of BFSI has picked up. So on a year-on-year basis, the BFSI revenue has come in at 0.9% sequentially, which is higher than the 0.1% that we had in the prior quarter. So the resilience and that little bit of green shoots demand recovery in BFSI still very much continues. Telecom is still a weak spot. Telecom revenues are under pressure. And in terms of geographies, North America has declined by 2.3%. Again, these are year-on-year numbers. India revenues are now at about 9.8% of the revenue. So India revenues are up close to about 70%. So there would still be a sizable contribution coming in from BFSI. I think we have some guests joining in to give us their initial comments. We have Sandeep and Moshe with us on the show. Sandeep, if you can hear me, could you give us your initial thoughts on TCS's numbers?
Yeah, so I think, it is a inline kind of number as rightly mentioned, but I am little positively surprised with the slight inch up in the attrition number because, in this industry, if attrition goes below 11%, then it also is a sign of lack of demand. So fortunately, that has gone up a little bit, and while after 15-16%, it starts hurting the margin, but at 13-14%, it is also a sign of recovering demand. Secondly, the deal win numbers are good. Rest of the numbers are in line. So I don't read too much, I would say, because the stock has also corrected a little bit recently. So I think it is an inline kind of number, I would say, and the street will not be disappointed with this.
But Sandeep, shouldn't we see the rising attrition in context with the overall headcount, which has fallen on a sequential basis?
No, absolutely. So they will have to hire now more aggressively, and that will also, but at the same time, attrition is a very funny thing in this industry. You will have to always look at it from both sides, because it goes up substantially, then it starts hurting margin very badly. But again, it indicates there is a strong demand. And at the same time, if it goes below certain percentage, your margins may improve. But at the same time, it indicates that growth will be muted going forward. So I would say that, they will have to hire more aggressively. That is a concern. But at the same time, this inching up a little bit is showing that your growth is coming back.
Okay. The dollar revenue for the company is at about $7.54 billion. And this is a decline of 1.7% on a sequential basis. And again, it's slightly lower than what we were anticipating. So Q3 has been subdued in terms of the overall top line. The revenues have come in modestly lower than street expectation. Dollar revenue growth down 1.7% sequentially, lower than the CNBC-TV18 poll of a decline of 0.6%. And even on a year-on-year basis, revenue growth at 4.5% is a deceleration compared to the prior quarter. One of the other explanations for that could be that the BSNL deal, the contribution of the BSNL deal peaked off in Q2, and the incremental contribution from BSNL in Q3 is lower than what we had in the prior quarter. And this has come in a seasonally weak quarter, so that could have also hurt. Deven, so there's nothing very exciting in the numbers. You could call them in line, maybe modestly lower on the demand front. But given that the stock itself has been a bit subdued, even today, it ended with a cut of about 1.7%. Do you think these kind of numbers are in the price?
So the market has priced it, I think, to the perfection as I see it, Rima, because I think expected numbers have come in and the market has adjusted the stock price, which has fallen by about 10% from its high level. So that part, I think one would say that, yes, market is right in, I think, judging the numbers. On the other side, what one could possibly ask for is, I think, and as I see it little favorable on the attrition side. If 13% attrition has happened, it means that I think the company is very fast adopting the AI way of working, which is very fundamental for saving the cost going forward. Should that get confirmed from the management commentary, I think this would probably help in re-rating the stock in the marketplace as I see it. The second point, I think, which one would like to definitely get more amount of clarity information from the management commentary, whether I think the respective verticals, be it BFSI or be it engineering R&D through the manufacturing, are they fetching more number of deal wins? I think I heard you saying that I think they have got 17% QOQ increase in the deal wins versus YOI 25%, which is a good sign. Now, whether this is coming from BFSI and manufacturing, if that gets confirmed, then probably I think you're also asking for the confirmation on the margin front. In my viewpoint, I think both these commentaries are going to be very important role play hereafter. And last but not the least, I think would like to see how exactly they see the scenario emerging in US, UK, and other emerging markets, including India, as far as I think the demand for services are concerned. Whether the company is shifting into largely to data center and the AI, that also I think is a commentary that one can possibly ask for.
Okay, so while the overall revenues, the dollar revenue has fallen by 1.7%, as per my initial calculations, it appears that BSNL, the India revenues, here the India revenues in absolute terms has actually gone up by 8.5-9% on a quarter-on-quarter basis, which means the dollar revenues ex of BSNL have fallen by nearly 2.5%. So the international revenues, or the revenues ex of the BSNL contract, which has been pumping the company's revenues, is actually fairly muted. And that, according to my initial calculations, maybe I'm wrong, but we'll wait for some clarification. I think that's down close to about 2.5%, and that is a bit disappointing. Secondly, even the BFSI contribution in the current quarter was about 30.5%. And in the prior quarter, if I'm not mistaken, it was close to about 30.8%. Yes, the BFSI contribution has come down on a sequential basis. So BFSI revenues have actually fallen by nearly 2.6% sequentially. And considering that BFSI was a space where we had a pickup and the street was hopeful across the board, the industry was talking about a pickup in BFSI, at least that hasn't translated. BFSI revenues have fallen by 2.5% in dollar terms on a quarter-on-quarter basis. So that is a bit of a concern. And again, BFSI is propping up the company's revenues. But on the whole, as I said, revenue performance is slightly lower, modestly lower than street expectations. Margins in line, margins expanding to 24.5%, driving a 4% jump in the company's profitability. Deal wins have picked up sequentially by 17% to $10.2 billion. Headcount is down, attrition is up. So it's sort of a mixed quarter, but with a negative bias. Sandeep, come in, I don't know if you've had a chance to look at the performance of BFSI in the current quarter and even the contribution of BFSI, the BSNL deal, the India performance. How is it X of that?
No, X of that, it is definitely muted. But as I said that, people see forward looking how the outlook looks. So from that perspective, I think the deal win number is really encouraging. 25% growth year over year is good. And also remember, as I said earlier also, that stock has corrected quite a bit, and for TCS kind of stock, that kind of correction is quite high. So I don't think people will read too much negative from here. That is the way we look at the company.
Okay. The deal wins have been very strong and well-rounded across the industries, as K. Kritivasan says. BFSI returning to growth, continued stellar run of regional markets, and early signs of revival in discretionary spend in some verticals gives us confidence for the future. That's an important line. Early signs of revival in discretionary spend in some verticals gives us confidence for the future, because this sets the tone for Q4 and what the company and the industry is likely to do in FY26. Because so far, discretionary spending, the recovery was limited to BFSI. If they're now talking about it coming through in other verticals, in some verticals, that would be a positive. Gurmeet is also joining in. Gurmeet, first, your comment on the Q3 numbers, and then juxtapose it with the way the stock has been performing.
I think it's in line with the price action. Maybe you can say it's a mild miss because, had the numbers been even static minus the BSNL deal, I think, and seen some growth, probably you could have gone more confidence that, there is a pickup and the negativity around IT is behind us. But deal wins are encouraging, upwards of $10 billion. Also, the retail and consumer vertical has done better. The BFSI is flat. Manufacturing is actually mildly negative. So vertical-wise isn't much. So my sense is we have to probably wait a little bit for the management commentary. I think it's basically the earnings have gone up led by margin. One thing which could obviously is positive is the two dividend side. One is the interim one with a special one. They did it last year as well. Last 2 years they've been paying almost 4 to 5 times along with a buyback. So even I think the price action could be very muted considering what the numbers are, because the stock has fallen from 4,500 levels to 4,000. But considering it's a seasonally weak quarter, I would say it's neutral to maybe a mild miss, Nima.
Gurmeet, Sandeep, Deven, thank you very much for joining in. The company itself in their press release says strong TCV. TCV stands for total contract value or deal wins in a seasonally challenging Q3 positions TCS for long-term growth. We're going to slip into a very short break. Archana, with that, it's back to you.
Thank you, Rima, for that update. And with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC-TV18.
How many varieties of alcohols can you load in this particular machine? So I can have whiskey with vodka. How does it work?
Right. So right now it's 4. There's 4 reservoirs. So you add 4 spirits, right? It's whiskey, tequila, rum, and vodka. So you load those 4, and that'll make you over 100 cocktails, no problem. Yeah. And then you could swap out gin and rum. So it actually comes with a 5th reservoir. So if you want to swap it. But in the cocktails, we have, again, over 65 different cocktails. And again, customers don't always want, they don't have pineapple juice. They don't have liqueurs or bitters at home. So with Bartesian, you don't have to have all these ingredients on ready. They're all inside these capsules.
So that's what the pods do. Like, for example, if you want to have a blackberry margarita, all you need to do is just load a tequila on the side and just insert the pod, and you get the flavor of the blackberry along with that.
Well, that's it. I mean, the best way to show you is just by making a cocktail. So there's a barcode on each cocktail, right? And so that's going to tell the Bartesian what alcohol to pull. And what's even cooler is when you put it in, it'll tell you what glass to put underneath. So in this case, a lowball glass with ice. and then you hit next, and you can select your strength. So you can customize whether you want a mocktail, light, regular, or strong, and you just twist this to pick the version that you want, and then you hit mix. And so what it's going to do, and I don't know if the camera can see it, but it's going to pull the tequila in this case.
Sure.
Again, the unit knows that you put in a margarita and it needs tequila.
Okay, I'm going to try this one out soon, but before that, how much does this machine cost?
This is $369.
$369, available in which all markets?
It's in the U.S. market, and the UK, Germany, Italy, France, and Australia.
Perfect. And how much do the pods cost?
They're $19.99 for an 8-pack, so about $2.50 per capsule.
As good as like an espresso machine,
Well,
right?
that's right, and I mean, saves you $18 from a cocktail going out to a lounge. These are lounge quality cocktails in your home.
Thank you so much, Ryan. Thanks for sharing all of these things with us. Thanks for joining us today on CNBC-TV18.
My pleasure. Thank you.
The mission for the company is to become a leading building materials player with delivering superior value. We are committed to our mission and will continue to grow our company in the future and beyond.
We have Vikash Kumar Jain joining in. Vikash, great to have you with us. Greetings of 2025. Wish you a very happy new year. So let's just take forward the conversation that we were having now. The thing is, as we've entered this year, there are too many moving parts, from the US economy to yields to dollar to a slowdown in earnings. Let me start with the last one first, because that's the India controllable, right? How optimistic are you about the second half earnings revival?
Well, I think there's always many moving parts when you start the year, and that's why what we do at the start of the year is we come out with a typical report, which is a very well-read report by our clients. It's called Themes for the Year, and this time we have 25 themes for 2025, and we discuss a lot of what you mentioned. Earnings, see, more than what I feel, I think it's also trying to understand where expectations are, where consensus is. Firstly, we at CLSA, we are about 2 to 4% below consensus as we start the year. And more importantly, when I look at just our numbers and certain key drivers that moves the earnings, that's the moves the big stocks that determine the overall Nifty earnings, there is an assumption of normalization happening rather quickly in terms of growth in FY26. For example, things like credit growth. We are right now sub 11% credit growth. Broadly looking at the numbers that our team has baked in, somewhere closer to 12 to 13% is being assumed for FY26. Similarly, for commodity prices and profitability, we are assuming that things will improve. So there is a recovery that is baked into our numbers. And, our numbers are a little below consensus. So that maybe consensus baking in a little bit more of the recovery. Now, that is just normalization of growth. Now, the process of normalization, if it is a little slower than after the weak GDP number that we saw in the second quarter, then there is obviously risk to earnings in FY26. If you remember the last quarter, we saw pretty big downgrades in earnings. So, further downgrades can be a bit problematic in terms of expectations of Nifty returns.
You're at 12 to 13% for FY25, Vikash, if I got that right, correct?
That is, we are at 12 to 13% of credit growth. The earnings number that consensus is baking in for FY26 is Nifty earnings growth is about 16%. We'd be a slightly lower than that.
Okay. Vikash, hi, morning. Prashant here. So what I'm hearing is caution. So give us a directional view. Put it out there. What is your best sense? Lots of things in the mix, but you got to take a stand. So what's your sense?
Sure, no, absolutely. I think that's what we have done. So I'll tell you, India's expensive valuations is what is being talked about where, by everybody. what we bought out this time, looking at the start of this year, is I am actually quite worried about the fact that Indian bonds, as compared to where the parity should be versus, say, US bonds, are looking more expensive, and Indian currency is looking more expensive. And both of that is what sets up, and particularly in the next 4 or 5 weeks where macro is going to be very important and big, that could be a little bit of a problem. Let me explain that. So last year, we did not have any cuts from RBI, but Indian bond yields fell by 50 bips. In the US, Fed had several cuts, but US bond yields settled up by 80 bips. So Indian bond yields effectively outperformed by 130 bips during 2024. Currently, the differential between US and Indian bond yields, 10-year bond yields, is down to just close to 2%, a little over 2 percentage points or so. Now, to a naked eye, of course, that's one of the lowest we've seen in the last 18 years, but I'm less bothered about it because what I show in my report that this is something which tracks very closely with what is the forward market currency depreciation expectation. And that is more like 2.7%, 2.8% or so. So everything kept together, there is a chance, if US yields do not do anything, then Indian yields need to go up by almost 50 bips for us to get to that parity. Now, if we imagine that happening, and even if we assume that the bond and equity valuation differential remains at the bullish end, that is the max differential for earnings yield versus bond yield, and we go from 6.75 to 7.25% bond yield, then, we're struggling to get anything more than 2-3% return on the market, So I would say it's going to be tough and that too in the bull case, if there is a 50 bips move in bond yields. So we need bond yields to not go much higher, and also at the same point of time, expect that equity and bond differential stays very high, and we do not see earnings cut. I think that's a lot of things which are uncertain, and that's why I would say that not gunning for big returns, single-digit returns will be, if we scrape through with that, we'll be very happy with that. So there's going to be a period where things will go much cheaper, and then we can come back to hope for an up move. But net, don't think we are going to end with a very high number versus where we started this year.
Okay, all right. Hi, Vikas. Good morning. Good to see you in. You're sounding a little bit cautious, or a little bit would be an understatement. Worst case scenario, what do you think in terms of a downside for the Indian markets? We're 10% off the peak. How much more downside?
So let's not even take worst case. If you were to say that because of concerns of near-term growth, our valuations kind of normalize at 6.75% yield and assume that yields do not rise, which is, going to be difficult because that will mean US yields have to fall. Then even at that, just getting back to normalized differential versus bonds, we're looking at end of the year Nifty fair value at that scenario at 23,000. So even under that scenario, there could be downside for the market. So not really gunning. I think, we've had a great run. This could be that year of consolidation following which started in October. That might very well continue. I would say if it's a very orderly kind of a correction and we scrape through with earnings catching up and valuations becoming more palatable, that's the best scenario one can imagine for the market.
Because those in it for the long term hold on and kind of hope to ride through 25 and look forward. I mean, that's the way for long term investors. But those more tactically oriented, are there anything things to do to protect the gains you've made, where you think we could see damage, take advantage of anything out there?
So I would say that most likely sometime during this year, maybe in the first half, we end up having a correction, and that could set us up for a great entry point for a lot of people, even the long-term guys, and even the ones who want to benefit on the long side once that period is done. See, first half is going to be very, very macro heavy. When Trump comes in, he's obviously not very predictable. What all does he do? What impact that has on the dollar? What impact that has on currency? Plus, we have our own.
Vikas, have you modeled that when you say correction in the first half? I mean, is there any way to say what are we looking at? We're at 23,600 or so right now.
Thankfully, I don't have to do that difficult a job of predicting Nifty every month. But so that's why we typically take a 12-month view. So that's something which I think a technician, maybe our colleague Lawrence, can do a much better job.
So what is he saying? Is he in agreement with you? We get a first half swoon?
I think he's obviously saying that the charts are not looking that great for India. I think that's something which he's been maintaining. I'm sure you guys talk to him more often, so he'll be the right one to speak about.
So possible 7-10% kind of a sort of. I mean, that would typically qualify as a correction. I mean, if it's.
We've already had a 10% correction, Prashant. So we actually called for it around October, where our India Bull Bear Index, the sentiment gauge, gave us a signal around end September that this is at an extreme bullish point, and we called for that.
Okay.
But you're saying from here you get a bit of a correction, right? H1.
See, I am saying that because of the macro setup. I am saying that.
I'm just saying. I'm just confirming. And so then
That's
from
right.
here, what do you see? You've already seen 10. Another 5-7%, and
So,
then that's the entry point.
So if you see, we are at about 19.5 kind of a PE right now. If you were to go down another 10% or so, then that would take you to very close to where the mean reversion should be to go to historical average valuations. And given the way India is positioned over the slightly longer term, which looks much better than most other economies, if you get the market near historical average valuations for a multi-year period, that's a great entry point.
Vikas, just to finally complete the picture, I just want to put up that chart that we had on with the underweights and overweights that CLSA has, just sector positioning. They're underweight on a lot of things: IT, discretionaries, industrials, and even healthcare. The overweights are only commodities and insurance. So Vikas, as you sign off, commodities, and obviously the market took note of your call specifically on Reliance Industries, which came out earlier this week. Just leave us with some broad setup in terms of hiding places, because you sort of outlined the underweight sectors. On commodities, is it just oil and gas, or in general, are you expecting metals to also move up? Just leave us with the explanation behind that construct.
In fact, you missed one sector. Our biggest overweight is actually staples.
Okay,
so we run a India-focused portfolio, and for the last 4 years, I've tended to completely avoid staples. And this time, at the start of the year, we've actually made staples our biggest overweight, cut our overweight in banks to just above neutral. And commodities, we have 4 names. We have metals as well, and oil and gas names as well. So staples, I believe that that's really the big sector call, which we have taken very anti-consensus. The kind of underspend that we have seen on government capex, both at the state level and the central level, I think that is also maybe hinting us on governments changing priorities. If that happens, the investment and the capex-linked stocks are already overexcited and at elevated valuations. But if priorities change to more welfare, affordable consumption side of things, then that's the sector which is, pretty beaten down because it's not done much for a lot of time. That's why we believe that the realities of coalition government and the hints that we have got from recent state elections, plus the good rainfall that we've seen and the good sowing that we've seen, maybe just bring back that affordable consumption to to kind of life. And within staples, we like the food-related companies more.
If we had this conversation probably 2 months ago, I would have presented a gloom and doom scenario with prices really going down, and certainly it bottomed out in October and November. But I think come December, we've had price increases. We took price increases in East as well as in North markets, and albeit not very big price increase, but we have indeed taken price increase in all the key markets in East as well as in North. And this number should hold good in January and beyond.
Atul Suri is now joining us, CEO at Marathon Trends PMS. He's with us here in our studios. Atul, great to have you with us here. Good morning. Thanks very
Nice
much.
to be here. Thank you.
Yeah, it's starting. I mean, it's we'll talk technicals, but the news flow you can't ignore either. There's
a lot. There's a lot that's going to keep you busy for
I'm
the
not
next
talking about
1 month.
yields or rates.
Are you able to follow the posts and the memes?
I'm not talking about rates or yields or commodities. I'm talking about Greenland, Canada, Gulf of this. And
you have an exciting job for the next 1 month. See, first 20th, you got the whole...
Next 1 month or 4 years?
4 years is a long. Then you talk about the Amrit Kaal. Let's talk about then 20 years.
How is it looking, Azul?
So I think that the next 1 month is definitely going to be very volatile because you've got three very big things I think that are panning out. One is this whole Trump trade. And already you can see that the world is shaping up for it. Bond yields have taken off. What's happened to the dollar is, I think, the biggest elephant in the room. That's affecting markets world over, whether we talk about it or not. Then you've got budgets, always unexpected, unknown. You don't know what's going to come out. And then you've got your corporate earnings, which actually is the biggest issue in our markets for the longer term sustainability. So within the next 1 month, you're going to have three such very big events, all three very unpredictable, a lot to talk about. But I guess, you're going to see volatility. But I feel beyond that, markets will settle up. So trying to, sort of make a call for one or two of these events is going to be difficult because, I mean, how will you pan out for this Trump trade? What is he going to do? What is he going to say? Which side of the bed he gets up from? I mean, these are things, where the best and best can't. So for us, I think it's more a
But
question of
directionally, Atul, is it looking,
So what I think, Prashant, that already the world is factoring this in. See, if you look at bond yields, right, the US 10-year, it's a very important instrument. It was around 3.6. Trump won the elections. It's moved 100 bips. It's at around 4.6 or so. An asset class which seemed to be sliding down because inflation was so-called capped, suddenly has taken off. What has happened to the dollar? Very important asset class, especially for risk on, risk off. All these FI flows. Why do FIs selling? Why are they this? It's nothing that they don't like India or it's a big deal. For them, the whole thing is we are just part of a big puzzle that there is playing out. And the way the dollar index took out from 107 heading to 109, that again tells you that the world is gearing up for inflation. See, because if you look at most of Trump's policies, whether he's talking about tariffs, whether he's talking about border immigration controls, whether he's talking about tax cuts, they tend to lean towards a higher inflation. And that is why markets are already factoring in it. Now, what comes out, how much does he posture, how much is just saber rattling, this only time will tell. I mean, as I said, we have no capacity to judge that. So I guess this is something that is going to play out. As I said, it's going to be very exciting. But how can you prepare for such events?
But again, directionally, just to बोलते हैं ऊपर का घर बंद है कि
I think that the market will surprise. In fact, what happens is that, see, right now we are at very important, very near crucial supports, which is your, I think, 23,300 or something, which was the last bottom. So that is one area which in the short term can be an issue right now. We're at 23,700 thereabouts. So that definitely is an area of concern. But sometimes you feel, the breakdowns happen and suddenly the market has ways of pulling up. And on the upside, if you take out at 24,850, I think I remember was the last high. If that gets taken out, then you make a case for a new high. So I feel that in this period of lot of news, if the market just remains in this band, good day, when you start feeling bearish, the market takes off. And when you feel bullish, the market is going to, which is a typical range-bound movement. I personally would favor if something like that happens. Yeah, the bigger risk is if the breakdown happens. Because, remember, we are nearer to the lower band just by a 2% or thereabouts. Then I feel that, it can lead to more.
When you said markets may surprise on the upside or the downside?
No, I feel that at the moment there's a lot of pessimism, Surbi. At the end of the day, people are worried, ye hoga, wo hoga. There's a lot more bad news. So that's good if the bad news is getting absorbed, it's getting factored in. And that is why even if you see the markets, they are not at lifetime highs. They are good 10-12% from there. We've spent a quarter or so of nothing. In fact, last 6 months, you'll realize that, if you look at it, there has been no substantial really gains. Yes, the markets made a new high. But portfolios, stocks, all the leaders are all off 20%, whether it's your defense, your PSUs, your private sector banks, barring IT, if you see. Most of the sectors and stocks are off 20%. So things have cooled off. Time has been spent. 6 months have been spent. Price has come off 15 to 20%, maybe 12-13% on the index also. I think that is important.
But Atul, before we start talking about what to do here, just complete that point on the two important indicators, both the US 10-year and the dollar, because now on the fundamental side, suddenly we're hearing, for the first time, narratives about maybe there is a global recession coming, maybe the US economy is going to, all of that.
That should be, you will keep hearing. Recession, we've been hearing since 2 years.
Exactly.
One month it's inflation, second month it is recession. So that all is one big thing. But I said the two things that really matter to us as people in the markets, and these things are very, very solid indicators, is where the dollar is headed.
But what do you do you see anything?
Yeah, so a dollar at 109 is not a pretty space to be in. It's honestly not. I would rather have the dollar at 107 or below. That's the range it had set out for 2 years. We'd rather have a dollar there where we don't have to bother about it. Today, we have to be bothered about it because remember, when the dollar goes up, it leads to a risk-off trade. Like, we are getting shocked. Why FI is selling so much? As I said, it's not that they can't see the big India story. It's that they have multiple pressures. They are dealing in multiple asset classes, these whole global macro players, and what is the impact of the dollar, what currency they borrow in. And when US bond yields are going up, when they are getting at US interest rates at that price, then the need for them to be more adventurous and come to emerging markets where the risks are higher is less. So money is moving to the US, and that is very, very visible. Not a pretty place. It's been difficult. And I do think that the next 1 month is going to be challenging. Lot of news, but you just have to wait it out.
All right. Hi, Atul. Always good to see you. So next 1 month could be challenging. But for the year on the whole, sometimes when you get a lot of pessimism, it's actually good news. Because then, in fact, you expect the markets to be absorbing this and then gradually move up. For 2025, do you expect the markets to give a high single-digit return even from these levels? That's point number one. And point number two is, that's provided obviously the global markets don't collapse.
No, why single digit? Why?
I mean, conservative.
I mean, single digit is like, then an FD would be a bad idea.
I'll tell you, Atul, from the kind of market talk that we've been hearing for the last couple of weeks or so, uncertainty on Trump, the dollar index, as you mentioned, 100, and if someone gets 10% this year, they'll be quite happy. I think,
I think Atul is expecting more.
So give us the optimistic. The last time we joined, I think we were talking about late 20,000. But tell us, what is the level for this year?
No, I don't know about levels, but I do think that the first few months are going to be challenging.
Yes.
Even for India, our macros have slipped a bit. Your growth rates have slipped. Corporate earnings are not as they were about a year ago. So I do think that this is going to be. But I do feel, again, it's a personal hunch that the government, whether in India, whether it's the US, these guys are very pro-growth. They are development. They are capitalist in their mindset. They want things to come up. They are not going to let this country economy just slip into a recession. They are going to put in the fight. So I do think that right now lack of government spending or less government spending is one of the biggest problems. I do think that they will come back. Whether it will happen in the budget or after that, we don't know. And that is why I feel that the recovery in the market will be more back-ended this year than front-ended. The next few months will have their challenges. As I said, it's very heavy on news. There is need for government action and policy, but I do feel it will come. And that's what, as you started the point, that when you are very pessimistic, that's when the seeds are sown. And as I said, that we've spent 6 months consolidating.
Yes,
price-wise and time-wise also. Even price-wise, we're no way much higher than we were 6 months ago, right?
Yeah.
23,300 was the election day, I think, volatility high, and that is the support right now for the market. So we were where we were 6 months ago.
Atul, so let's talk about ways to look at how to. So we had Sandeep Tandon of Quant earlier with us on Friday. He was saying maybe one way to do it is, first of all, the call that large caps will do better. Many have been beaten down quite a bit. And big laggards of 24 should do better in 25. A simple kind of. And it's, I think Nimesh later in the day is putting out a piece on edit, I think tomorrow. On saying, just looking at this, and does this work by the underperformers the last year? Not all the time, but what's the hit rate? and he's looked at data going back
dogs
the last
of the
5
Dow.
years
There's
or
a
so.
lot of there's a lot of study
Exactly.
in the US that it's a trading system actually.
Do you think that is something to do here?
So I
in our
don't know.
context?
I don't know about the buying the dogs of last year, but I do hold the idea that large caps will outperform. See, we do something called a ratio chart. I mean, unfortunately, I don't have it on screen today. But what happens is that when you do a small cap to large cap ratio, you will notice that there is a 3 to 4 year cycle. And if you look at it, large cap relative to small cap, since 2020, that's COVID, this has been the almost 4 years of relative underperformance. For 4 years, large caps have underperformed. And generally, we've seen that cyclically, these tend to be turning points. As I said, we don't know whether it's going to be this month or next month. That is very difficult to call.
Correct.
But yes, we are at extreme underperformance of large cap relative. These also become turning points. I'm not saying that please sell small and large caps. I think they will still have juice, but wherever the earnings will not support it, I think they will sell off. See, yesterday's market, if you look at it, yesterday the index was okay. It recovered. It was very pretty. But if you went and looked at the small and mid cap indexes and some of the stocks, there was a lot of blood out there. So what will happen is that optically your Nifty will look good, your market will look good, but in there the bleeding will happen. So I guess we are heading in that kind of situation. And in that sense, the term, it's also better place to find protection in large caps.
So large caps.
Because what has not moved, where there's less euphoria, which is as it is beaten down, and if it's turning around. A case in point, a sector I love, Prashant, is IT. Right? I mean, a lot of people are talking about banks. There's consensus bullishness on banks, but I have not been bullish on banks, and I still am not bullish on banks. If I had to put my heart and hat in the largest to be overweight in any sector in large caps, it would be IT. Because if you look at some of the IT stocks, you'll find that a lot of them are pushing to new highs. And I think that is very, very exciting. IT is important because it's the second highest weightage after banks. Yeah. Because you need something to pull this market up. You need a heavy lifter. And I personally think large cap IT is a space I find very interesting.
So, Atul, to go back to your favorite line, right? The trend is your friend until it bends. Leave us with what you're seeing on the biggest trends of 2024. Now, and these stocks have already cooled off quite a bit from the highs, right? So, capital goods, industrials, your ABB, Siemens, defense, railways. Where all have the trends now broken down in these high flyers, and where do you think there's still a scope that, maybe you buy the dip and the trend resumes?
Yeah, I mean, two sectors you spoke about which were darlings last year, defense and railways, okay? Very similar in the PSU basket. You'll find that, yes, both got hammered post-election. There was a bit of loss of confidence in PSUs, but you'll find a lot of defense stocks have come back. They are nudging, they are pushing back. But railways haven't. So what you're seeing is very, very divergent trends that are playing out even among sectors and themes. Some themes that have continued to do well, things like hotels, continue to do well. In spite of the fall, they continue to make new highs. So I feel that there are going to be some themes and some sectors. But coming back to, the larger thing, what I was telling Prashant, that I also favor large caps. Okay. I also have a more bias towards IT. And there are going to be a lot of plays. Not that small and mid caps are going to do bad, but there are going to be plays. And I feel that these quarterly numbers are going to actually be very divergent for many companies. Index-wise, it may look, as I said, like yesterday, optically it looked all is well. But inside, there was a lot of damage. So I do feel that with this quarterly numbers, I think the market's going to get a little more bifurcated as to where the delivery of numbers happens. Well, they will all make new highs. Maybe the index doesn't. And wherever. So you will find a market where there will be number of 52 weeks high and 52 weeks low on the same day. And the index will be where it is, telling you that the market will be more divergent.
Absolutely, which is why I think we've been hearing this line that this is a year for the stock picker. It's probably not a broad brush stroke. You touch anything and it
As long as you pick the right stocks.
As long as you pick the right stocks. Absolutely. Thank you so much and wish you all the very best for 2025.
Thanks a lot. Yeah, thanks,
Look
guys.
forward to more conversations.
going to be announcing at a future date pretty soon. We're going to change, because we do most of the work there and it's ours. We're going to be changing, sort of the opposite of Biden, where he's closing everything up, essentially getting rid of $50 to $60 trillion worth of assets. We're going to be changing the name of the Gulf of Mexico to the Gulf of America, which has a beautiful ring that covers a lot of territory. The Gulf of America, what a beautiful name. And it's appropriate. It's appropriate. We have a massive deficit with Mexico, and we help Mexico a lot. They're essentially run by the cartels. And
Hello and welcome to the Budget Countdown 2025. I'm Parikshit Luthra. Finance Minister Nirmala Sitharaman has her job cut out when she presents the union budget in just over 3 weeks from now. While the less than encouraging first advanced GDP estimates of 6.4% may not exactly be the kind of news that North Bloc was hoping for in the run-up to the budget, it does signal that the Modi government needs to do some serious heavy lifting to boost manufacturing, one of the worst hit sectors. The Indian industry has submitted its list of recommendations asking for simplified taxation, higher capex and more labour-intensive measures, among others. The Rashtriya Swayamsevak Sangh, BJP's ideological fountainhead, has sought 200 days of work under Manrega, higher income tax exemption limit, among others, and a new manufacturing policy as well. The Congress, India's principal opposition, has sought income support for the poor and higher Manrega wages, among others. Now, joining us to understand the politics of the union budget and what the Aam Aadmi can really expect in terms of relief, we're joined by Vishwas Pathak, spokesperson of the BJP. Salman Soz, spokesperson of the Congress Party, is also with us. Dinesh Kanabar, CEO of Dhruva Advisors, is with us. And we have Ashwini Mahajan, the national co-convener of the Swadeshi Jagran Manch. Salman Soz, if I can begin with you. The Congress today carried out at least 12 or 13 press conferences across the country on the GST, urging for its simplification. You've also said that radical measures are needed to reverse the slowdown in economic growth and the slump in consumption as well. What would be your recommendation or the Congress's wish list when it comes to the union budget?
I think our wish list is not going to be very different from the wish list of ordinary Indians. Most Indians would agree, and I think panelists out here would also agree, that our tax system should not be complicated. And the GST has been classified as the most complex indirect tax system in the world. And this is not me saying, this is the World Bank saying. So we made a mess of GST. And what is the result of, we're talking only about the GST. Of course, the budget is going to be much broader, and we can discuss the bigger issues.
GST is something that can only be decided in the GST Council.
So let me come to the GST part specifically, because you asked that, but of course we can discuss the budget as well. Any tax system, a modern tax system, should be progressive. Unfortunately, what has happened is that in India, indirect taxes are now pretty much, the biggest chunk of overall taxes. And this trend of increasing indirect taxes is actually very regressive. It really hurts the poor and the middle-income families. In fact, 65% of GST collections are from Indians who are in the bottom 50%. So I think this is a very cruel system, and we should try and get away from it. Then it's also very complex, and that is what is hurting businesses. And which businesses are getting hurt the most is the small and medium businesses, which actually are the ones we need for creating jobs. So everybody seems to be tired of this. What I cannot understand, honestly, I cannot understand it. This is not as an opposition member, as an economist, as an ordinary citizen. I don't understand why the government and the GST Council, of course, the GST Council is, what is the GST Council? It is representatives of all the states. That's where the BJP still dominates. The BJP has the union government. I don't understand why, with so much talent that we have at our disposal, so many Many wonderful things can be done, but the government seems to be completely incapable of moving in the right direction. I'm totally flummoxed.
All right, but at the same time, the GST Council works with consensus, and they have had issues and opposition from some of the Congress-ruled states on some of the major issues there in front of the GST Council as well. Let me get in Dinesh Kanabar at this point. Dinesh Kanabar, in every union budget, we hear from the industry about the need to give tax relief to the middle class, increasing the threshold limit when it comes to exemptions. What can we really expect? And if this can't be done, what can be the next best alternative?
So two things. This budget is being presented in the light of two background scenarios which are critical. First is that in the last budget, the finance minister mentioned that she is taking significant steps to simplify the tax laws. And towards that end, several representations were called for. There was a press release to say that almost 2,000 representations have been received. The chambers of commerce, professional bodies, professional firms, everybody has made representations. So it'll be interesting to see what is it that the government is going to pick up from all of this and what changes are we expecting. The second thing which has been is that there is a fall in the consumption. The GDP expectations have gone down. And the question is, what can the government do in this budget to really give a fillip to it? You rightly mentioned earlier, Parikshit, that GST is the domain of the GST Council and is not something which is a purview of this particular budget. But a couple of things can happen here. So we are first seeing a situation where every year there is a clamor that what is the amount of tax-free income that the budget should look at. And the question is, rather than having this clamor year on year, first of all, can we make it linked to an index? So can we say that there is an inflation index and every year based on that inflation index, your tax-free income goes on. So it doesn't become a recurring thing. The same rupee meant something else last year, means something else this year. So how can we do something like that? And the second thing which is coming in is that the government has increasingly wanted individuals particularly to move from the old tax regime where they were entitled to deductions and exemptions to move to the new tax regime where the rate of tax is lower. While those provisions have worked for corporates very significantly, that hasn't happened in the context of individuals. And that's again where one is hoping that a lot of changes will happen. One will see the slab rates getting reduced. One will see the distinction between the new and the old regime and a push to individuals to move towards the new tax regime.
All right. Very important points there. Let me also get in Mr. Vishwas Pathak of the BJP. Vishwas Pathak, today the BJP and the union government is fighting a battle of perception. One is a complicated GST structure. The industry has also been asking for simplification of GST, the number of compliances all across the country, something that Salman Soz also spoke about. Now, it's well known that GST Council works with consensus. This is a GST matter. But then there is the perception of a very high tax rate in the country, very high prohibitive tax structure. How will you dispel this notion? What has been the recommendation from the union budget to dispel this notion of high taxation and tax terrorism that the opposition has been speaking about? What roadmap would the BJP have to offer?
Number one, I must tell Mr. Soz that budget is not going to deal with GST. GST has got mechanism to deal with. Rather, I would tell you, post-GST implementation, indirect taxes rates have been stabilized. Pre-GST era, there used to be 150 plus or different kind of taxes. And the average tax rate was in excess of 23%. Post GST, it is below 18%. And it is now well established. Look at any other country, comparable country in the world, who could really establish and implement GST for this kind of volume of the country. So India is doing well, and the collection of GST is now reaching to the extent of 2 lakhs per month. I think it is a very important stage for any developing country, and that is the reason we are talking about 5 trillion economy by 2027. As far as direct taxes are concerned, post 2014, tell me when direct tax rates have been enhanced. On the contrary, corporate rate tax was reduced. and the slabs for deduction and all that thing are also enhanced. And despite of that, our collection of direct taxes is also
but Mr. Pathak,
gone up manifold.
But Mr. Pathak, would you agree that considering that consumption is low at this juncture, even FMCG sector has seen a demand dip across the country? Would you agree that, last year also we heard that the budget will be dedicated to the middle class. Even this year, budget is going to be dedicated to the middle class, so to say. Do you think that some tax relief is important for the middle class? Would you be batting for that?
See, all middle class people can always expect something more. But all I'm trying to say is, and Mr. Dinesh Kanabar ji is an authority on that, since 2014, this government has not enhanced any direct tax rates. So that itself is a relief. On the contrary, slabs have been enhanced. So that itself is a relief. And of course, if something more can be offered, this government will always try to do that. But for any developing economy, tax collection is a very critical thing. And therefore, from 2 trillion economy, we have almost reached to 4 trillion economy in 10 years' time. And now we are reaching to 5 trillion economy. So for any development, tax collection is equally important. There are various other ways of rewarding middlemen, which this government is
doing. Mr. Pathak, I got your point. Okay, you're saying that the government is dedicated to the middle class. I got your point. Let me also get in a word with, from Swadeshi Jagran Manch, Mr. Ashwini Mahajan is standing by. Mr. Mahajan, now, for the last 4 to 5 years, ever since the COVID pandemic broke out, we had a Atmanirbhar Bharat movement in the country. And several nations, several companies were saying that India has a China +1 opportunity. But we've not been able to win or leverage that to our advantage till now. What do you think we need to do, and what is the urgent need of the hour when it comes to manufacturing?
I won't say that nothing has happened, but yes, more can be done. If we see the dependence on China continues to be there, and that is a real issue before us. And therefore, what we see that all the countries of the world, and especially the developed ones, they are talking about the manufacturing policy in their country. They're talking about the protection to their domestic industry. And there is no harm if we also start doing so. And protection is not just by raising tariffs. That is one possibility. Then there are other measures as well. For instance, if we have excess capacity in some of our industries, and just by raising a few percentage points of tariff, we can stop Chinese imports, influx of Chinese imports, and can help our domestic industry produce more and contribute more. That will save our foreign exchange. And then there are several industries which have been identified under PLI scheme, and those industries, more investment is coming. But they want to be more sure, the investors, and they want that at least when they establish their capacity, then there should not be a kind of dumping by China, and government must come forward to save them. And for that, we need a very comprehensive manufacturing policy in the country, which talks about the tariffs, which talks about sudden spurt in imports, and then what can be done. It must talk about the kind of other measures which can be adopted to help domestic industry. For instance, we have a very high rate of interest today, and therefore this is coming in our way to establish new capacities, and therefore some sort of help in terms of the interest subsidy can be given. And because other countries where we are competing with, they have a very low rate of interest, and we can't compete. Therefore, a comprehensive manufacturing policy which talks about interest rates, which talks about the incentives, which talks about tariffs, non-tariff barriers and others must be there. And I think before Atmanirbhar Bharat, or before in the days of globalization, talking about manufacturing policy was like a crime. Today, it is talk of the town.
All right. Yes, it is talk of the town, and the government has been regularly holding consultations with the Swadeshi Jagran Manch industry bodies and political parties on how to make sure that we rise in global value chains. We're taking a short break. Don't go anywhere. We'll be right back with all our guests.
Let that happen. Mexico's really in trouble, a lot of trouble. Very dangerous place. And Mexico has to stop allowing millions of people to pour into our country. They can stop them. And we're going to put very serious tariffs on Mexico and Canada, because Canada, they come through Canada too. And the drugs that are coming through are at record numbers. Record numbers. And we want to get along with everybody, but you know, they have to, it takes two to tango.
To be the next Chief Minister of India's national capital. The decision would be made by the voters of Delhi on the 5th of February. The schedule for the Legislative Assembly elections in Delhi has been announced by the Election Commission. Elections would take place on the 5th of February in a single phase, and the results would be announced on the 8th of February. Now, since the Union Budget is slated to be tabled on the 1st of February, the Election Commission has requested the Union government to not include any Delhi-centric announcements in the budget to ensure a level playing field for all political parties.
बजट फरवरी को आएगा, ये आपने पूछा। अब 5 फरवरी को तो पोलिंग है, तो इसलिए ऐसी दिल्ली स्पेसिफिक हम आज ही चिट्ठी इशू कर देंगे। कैबिनेट सेक्रेटरी को आज ही स्टैंडिंग इंस्ट्रक्शन इशू करेंगे कि कोई भी दिल्ली स्पेसिफिक बजट में चीज का शामिल नहीं किया जा सकता, which can disturb the level playing field. For Pan India, there is no problem, and that's the practice always whenever the voter account or the elections happen during the budgets happen during the election process. आपने कहा, ये पूछा कि confrontation का रास्ता, ये बिल्कुल भी सही नहीं है। Political सबसे important पूरे लोकतंत्र में
Yes, you're watching Budget Countdown with CNBC-TV18, and we're getting you views from political parties, the Swadeshi Jagran Manch, the RSS affiliate, and also from experts on what the union budget can do in terms of driving growth in the country. Dinesh Kanabar, if I were to ask you about simplifying tax laws in the country. Now, this was a commitment by the finance minister in the previous budget. What really can we expect, or what would you feel would be on the priority list, and also on the simplification of TDS, rationalization of TDS slabs?
So I think so far as TDS is concerned, the request which has been made by the various chambers of commerce has been that when one is deducting tax at source, one is basically acting as an agent of the government. It is the tax liability of the recipient and not the tax liability of the deductor. And the proposition there is that today there are multiple slabs where one has to really come back and make a call as to whether the payment is for a works contract, payment is for professional charges, royalties, technical services. So the request to government has been to say that why don't we simply have 3 rates, 3 slabs for TDS. One is for salaried employees, which is the normal income thing. Other is the negative rate, which is for lottery earnings, cryptos and things like that. And then a single rate, whether it is 2% or 5%. So that one does not really get into a litigation all the time with the tax office as to what is the appropriate rate at which tax has to be deducted. So that is one situation. The other point, which is with regard to simplification, is on litigation. And litigation has been a big challenge, Parikshit, all the time. It's something which has really set back India in terms of ease of doing business index when it was on, and of course it's now been discontinued. But every time that India did not fare well really on ease of doing business, it was because of taxes, and within taxes it was because of litigation. And there are 2 or 3 points out here, Parikshit. One is that on all large matters, the litigation goes all the way from an assessing officer right up to Supreme Court. The government, of course, has increased threshold limits up to which it will not litigate. But that again means nothing really. Most large matters, as I said, end up in the Supreme Court. And that means that one has to wait for anywhere between 10 to 15 years before one gets a resolution. And that's not the right thing to happen, because one is looking at contingent liabilities, there are transactions happening, there are 20 things happening, and one cannot really afford to have a 12 to 15-year window to get a resolution. How does one get quicker resolution? Second is that the government had introduced some very salutary provisions, like, for example, authority for advance ruling for non-resident taxation. Those were not working and the government has scrapped them, and there is a need to revive them. Third is that there are advanced pricing agreements and the government has signed several of them, but really it needs to be expedited so that on transfer pricing litigation can be put down. So the question is, how do we get expedited resolution and a negotiated resolution?
Okay, so lesser litigation. Let me go back to Salman Soz. Salman Soz, we're looking at this union budget at a very critical time. There is global uncertainty. Donald Trump is going to be coming to the White House. There will be this threat of tariffs looming large. There is an issue of overcapacity in China. The consumption is down in the country. Looking at the global environment where companies are reluctant to invest more in terms of capacity, not knowing what will be the demand, whether there will be an all-out war, what reform measure or what kind of stability can the union budget offer? If you had one recommendation to make to the finance minister, what would that be?
Well, before I come to the recommendation, let me just, before I come to the recommendation, let me just remind you that the BJP spokesperson basically said, essentially, that everything is good. They're not going to make any changes. And the middle class, we'll figure out a way to reward the middle class. The same middle class, by the way, which pays income taxes and then ends up paying 18%, 28%, 12% GST. So they will suck the blood out of the middle class. But they will just not do much because they feel that they can take the middle class for granted because they get votes in urban centers. And it doesn't matter, the middle class will keep voting for us. I think that is a mistake because it is bad for the country. The middle class of a country is the engine that actually drives the economy along with small and medium businesses. You can't kill your golden goose. And that is what the BJP has done consistently for the last 10 years. And as far as Mahajanji is concerned, who is from the RSS, he's been, obviously these are government supporters, but at the same time, you can see in his own words, his support is also muted because they know that the situation is not very good in the economy. And by the way, I do have a slight disagreement with Mahajanji on tariffs. I know that we have a huge trade deficit with China, and that's a horrible policy outcome that we've had. The same government that has actually yielded territory to China has also yielded a major trade surplus to China. But the way to deal with this is not to just willy-nilly have tariffs against countries, but to think very calmly about policies that can actually help us compete better with China. And that brings me to the real point that you asked this question about. What can one tell the finance minister about some reform that can help the country? Frankly, I don't think the finance minister is very receptive to any feedback. She's a very angry person, as far as I can tell. I mean, she's always very arrogant. But if she were to listen, I would say one thing that investors are looking for, and by the way, investors are always looking for opportunities. No matter where the opportunity exists, they will go there. After people started moving their companies out of China, they did not come to India, they went to Vietnam. There's a reason for that. And I think the reason is we have to provide more certainty, more confidence to businesses that the policy framework is going to be stable, that we are not going to unleash tax terrorism on them, but that we are not going to send agency after them. We're not going to have the kinds of tax, deduction at source kind of issues that our other panelists spoke about. We're not going to have those kinds of issues. If you have a good framework,
let me get in some final remarks now from all our panelists. The BJP spokesperson who is with us, Vishwas Pathak, how do you respond to statements made by Salman Soz about the government not being receptive to ideas from the opposition?
that is all totally political, and I just reviewed those statements. See, 2 days back, even I participated before Honorable Finance Minister Nirmala Sitharaman. Who's of the industries were there, and she was so receptive. She was all accepting the proposals. I tell you, to reach out to the public and reward middle class, there are other ways also which BJP has been doing. Electricity, toilets, then water, nal se jal, then insurance. There are many more things. So in this budget, all common man will expect same kind of relief. And though our GDP growth is revised down to 6.4%, it is still #1 highest growing economy worldwide. So that we have to understand because of the decisive leadership and clarity in Financial Act of Mr. Modi.
All right, the government has, of course, been saying that it will stick to the fiscal glide path while tackling inflation. There are, of course, challenges on that front. My final question, Mr. Mahajan, to you. And what do you really expect in terms of MSMEs, in terms of making the PLI schemes in the country more effective? Some PLI schemes have worked, in others the offtake hasn't been great. If we want to make them effective, if we want to spur domestic manufacturing, link MSMEs, have greater exports, what can be done to tweak them?
See, I'm not against raising limit for the middle class, but only 2 crore people are paying taxes. And therefore, if you want to spur demand, then in that case, we have to look at other measures, and MSME sector and the farm sector, they are the 2 major ones where we can really help them raise incomes. And in this case, we see that over the years, the PLI scheme has been tilted in favor of the large industries for obvious reasons. But now, since it has been stabilized, now we can think of giving at least 50% of the PLI benefits to the small scale sector, to the MSME sector, so that the growth can be spurred over there, and at the same time, employment can also be generated. And if that can be helped, if we have to think about the people at the bottom of the pyramid, they are the small, the cottage industry and others. But yes, PLI scheme will have to be given to the small industries or the MSME or the medium industries. And what I suggest here is that in this exercise, we can also include a few more sectors, like our dependence on the foreign countries about the chemical fertilizers is there, then plastic is there. So we can give more PLI for these 2 segments, and we can achieve self-reliance and Atmanirbharta in these 2 that can reduce our dependence on the foreign countries.
Okay. All right, we've run out of time, but thank you very much, gentlemen, for joining us on the program. Let's see what the union budget delivers for the country, for economic growth in the days to come. With that, it's a wrap on this edition of Budget Countdown. More news and updates continue right here.
And second most important is political party and media. 3, one by one. I mean, I wouldn't say 1, 2, 3, but all 3 equal. Media, because at every stage we allow media from in the districts कि आप सब देखते रहिए, आप हमारे आँख कान बने रहिए, पब्लिक को बताते रहिए, गलती हमें समझाते, disclosure. Voter, because he is the king, and political parties because they are intermediaries. We have never interfered whenever there has been a campaigning or a political discourse, unless only in one situation, that is, if the timing is such that the vital electoral process is on, that is either polling or counting. These 2 days or very close to these 2 days, we cannot allow any rumor mongering, because that can disturb and create serious law and order problems in the entire country.
It's going to be a three-way contest in the national capital with the Aam Aadmi Party, the BJP and the Congress in the fray. The Aam Aadmi Party is looking to defend its turf and is looking to get third time lucky after winning the previous assembly elections in 2015 and 2020 by comfortable margins. It had won 67 out of 70 seats in 2015 and had won 63 out of 70 seats in 2020. The party is looking to repeat its performance even as several allegations of corruption have surfaced against the party's top leadership in the past few years. The allegations, of course, have been denied by the leadership, but the party has also seen several exits and complaints of corruption and mismanagement by the BJP and the Congress. It remains to be seen what is going to be the party's poll strategy and the kind of defense which is going to be tendered by the party. Also, the party till now has touted several of its welfare schemes as the reasons behind its electoral success in the national capital, which includes the provision of free electricity and water, as well as the announcement of a monthly dole for women. Similar announcements have also been made by the BJP and the Congress. On the other hand, the BJP is looking to replicate its performance in Delhi's Lok Sabha elections since the previous 3 terms and is going to look at replicating the performance in the assembly elections this time around. Since the previous 2 terms, the BJP has not been successful in getting a good number of seats and only managed to get 3 seats in 2015 and 7 seats in 2020. The party has fielded several turncoats from the Aam Aadmi Party and the Congress to bolster its chances on several seats. Also, it's targeting several other seats where the vote share for the party was relatively good compared to other seats and has fielded turncoats on several seats. Also, the Congress party, whose performance had sunk to a rock bottom the last time around, they had lost their deposit, they had forfeited their deposit on all seats except 3 in the previous elections. They are looking to make a comeback on the basis of the work which was done by the Sheila Dikshit government in the past in the national capital. It remains to be seen what is going to be the poll strategy of all these parties, even as there are not going to be any alliances this time around between the Aam Aadmi Party and the Congress. And although both the parties are confident that the lack of an alliance is going to bolster their chances, the BJP is also confident that the votes, the anti-incumbent votes may get split in a way which may benefit the BJP. However, similar strategies or postulations are also being made by the Aam Aadmi Party and the Congress. So clearly it remains to be seen in which direction the political wind is going to blow in the next 1 month.
The Tata Punch was the highest selling car in 2024 with over 2 lakh units sold. This is for the first time in over 40 years that a company has displaced a Maruti Suzuki car for the top spot. Since the 1980s, the Maruti 800...
Hello and welcome to Business 360. I'm Shilpa Ranipeta and here are some of the headlines that we're tracking this evening. Sensex and Nifty end at the low point of the day. Mid-cap see a sharper sell-off. Rupee tests fresh record lows against the dollar before ending flat. Domestic institutional investors remain unfazed amidst selling by foreign portfolio investors. Inflow into equity mutual funds rise more than 14% in December, even as the Nifty declines 2% in the same month. SIP inflows hit a record high of nearly 26,500 crore rupees. TCS expected to report a minor decline in quarterly revenue as the Q3 earnings season kicks off. Margins likely to expand according to a CNBC-TV18 poll. Stock declines in trade ahead of the earnings. SEBI's new Sterner default rule pinches companies. Market regulators' November 18 circular says that a repayment delay of even a rupee by a day, even due to technical reasons, could result in default classification. Does away with the leniency previously granted to technical defaults during the pandemic. 6 people are killed and 40 injured after a stampede at the Tirupati temple. The incident occurred at a ticket counter where thousands had queued up for special darshan tickets. 50 people killed across Gaza overnight as Israeli forces continue their assault. Ongoing, U.S. Secretary of State Blinken optimistic about the prospects of a ceasefire. Parents of at least 800 soldiers and reservists write to Israeli PM Netanyahu and urge him to end the war. 5 people killed, thousands flee their homes as wildfires rip through Los Angeles. More than 1.3 lakh people are under evacuation orders as the blaze tears through iconic landmarks on Hollywood Hills. A Singaporean passport remains the most powerful in the world as it provides visa-free travel to 195 destinations. Japan ranks second in the annual Henley Passports Index. United States drops to number 9. Indian passport weakens by 5 places to number 85. Well, on to the money market action. The Indian rupee weakened further to hit yet another record low versus the dollar, but most of the losses were wiped out in late trade and the rupee ended largely flat. However, you will need nearly 86 rupees to buy $1 US. 10-year bond prices also came under pressure today, leading to a spike in yields. Now, the restaurant body NRAI is looking at legally challenging the decision by Swiggy and Zomato to enter the quick food delivery business and launch their own food labels. Now, the contention is that these companies are abusing their dominant position and using data generated by partner restaurants for their own gains while not sharing the data with the restaurants themselves. Now, for more on this, the association's objections and the plan of action, I am now joined by Sagar Daryani, the president of NRAI. Sagar, hi, thank you so much for joining us. We're here to talk about this. So, your objection here is that is on the launch of Snack by Swiggy and Blinkit's Bistro and not exactly the offerings like Bolt. So, help us understand, Sagar, what are you alleging here? And, in the statement, you said that this is a case of misuse of private labels and infringing on intellectual property rights. So, help us understand what exactly you are alleging by this.
See, we are completely for quick commerce in food. I think it just adds that zing to food delivery. And I think restaurants that can adopt to Q-commerce in food are definitely going to benefit because everyone wants convenience. What we're absolutely not okay with, and I'm repeating what we are absolutely not okay with, is both Swiggy and Zomato getting into their own private labels and launching their own Q-com apps like a Snack or, like a Bistro Cafe, which is by Blinkit, which is owned by Zomato. So what they do in these apps is that, they're selling similar products that restaurants sell, be it a samosa or a momo or a chai. Now, see, these guys have their entire data, right? Nothing stops them and they don't share the data with us, right? So they exactly know who our customers are. And for us, there's consumer masking, which I believe is absolutely unfair, but not getting there. But what they can easily do is that they can migrate our traffic to their app and sell similar products, which I believe is absolutely unfair. I think private labeling, them getting into private labeling is getting into the food business, right? Aggregators are supposed to facilitate the food business by, ensuring food delivery, but them getting into the food business, I think it's complete abuse of power. I think this definitely needs to have a relook. I think we definitely are going to take legal recourse if needed, and we are definitely contemplating. But on a very serious note, we've always given assurances by Swiggy and Zomato that they would never get into the food business. But, as partners, we feel that, we've been backstabbed in a way because this is absolutely what they are not doing. What they're doing. And, why are they doing this? Because they're competing with Zepto Cafe, right? Which is doing Q-com in food. Now, just because they want to compete with a Zepto Cafe and they launch a Snack or they launch, the Bistro app, we are the ones who get sandwiched. And I think this is going to adversely affect the food business. It's going to adversely affect the smaller players who sells snacks like samosas, like momos, like tea, like coffee, like biryani. I think it's absolutely unfair, and we completely condemn it. We grossly hold it against us, and we will definitely not wait and watch. We will take whatever legal recourse we can, but we feel this is sheer dominance of or abuse of power. Yeah.
Right. You know, just coming back to one point that you made, that, you know, they had assured you that they will not launch. So these were conversations that you were having in the past with both Swiggy and Zomato. Were these more of like verbal agreements? What was the discussion with these companies about them not launching their own cloud kitchens or their own private labels?
See, we've always looked at aggregators as partners. You know, we've always had a very candid chat with them, and we continue to, right? I think food delivery definitely helps the food vertical space, but you know, the high commissions definitely has anyways demolished this business to a large extent, right? And then there's deep discounting. Now you have the flash sales happening, etc., etc. But you know, we already are in the CCI with them. There's already a legal battle going on where we've anyways, you know, mentioned this to them that, you know, private labeling, etc. Initially, it was only Swiggy doing it. They had a brand called Bowl Company. Then, you know, we were lately assured by Zomato that, you know, they would verbally assured by Zomato that they would never get into this space. But now, you know, as time is flowing by, although, you know, we are already there in the CCI, it's been more than 3 years. But, you know, we just cannot wait and watch and see ourselves or our business just get absolutely obstructed by the actions of these aggregators, because they are growing their business, right? And they're getting into our domain, they're getting into our space, which we highly condemn, and we just can't wait and watch. You know, I think for us, it's very important to take the legal recourse, whether it's CCI, whether it's any other legal platform. We will consult and move ahead, but we just feel need of you know, not getting suppressed by the sheer power and dominance. See, firstly, they have all our data, and like I said, that data is not shared with us. They are our customers, but data is not shared with us. So I mean, consumer masking is something which we were anyways against it. And we were always worried that they would, if they ever get into our space, you know, it's going to disrupt the industry, and that is what they're now doing. And we just cannot sit and wait and watch. I mean, NRA is the voice of the restaurant industry. For us, it's not just the bigger players, but it's also that one single small restaurant in a particular locality selling local food. And, you know, you don't want his or her business to get affected. So we are deeply concerned about this, to be honest.
Right. You know, I think data masking is something that is being addressed in the CCI probe also. But you said legal routes now, Sagar. What are you looking at? I mean, what are the options that you have in front of you? Are you already talking to CCI also again? You know, what are the options? Just run us through that. Can you add to the existing probe?
Swiggy just announced the launch of Snack yesterday.
Yeah.
And, you know, obviously we knew about the Bistro Cafe, and, you know, somewhere we feel that, you know, internally we've been talking to our legal counsel, and we'll go by the advice that we get, whether we add on to the current CCI case or we do a separate legal case, whether it's CCI, whether it's any other body, legal platform, we'll figure. I think it's too early for us to mention, but yeah, we've already started working on it. We're not going to wait.
But what are you seeking? What are you seeking? You want an injunction? You want it to be blocked? What is the outcome that you're expecting?
I think we can't allow these aggregators to, you know, do the food business, sell the similar product that we are selling, having all our data. I think that's completely unfair. We definitely will seek for an injunction if we have to. Whether it's injunction, whether it's some other terminology, I'm not very sure at the moment. We'll go by the advice we get from our legal counsel, but definitely this cannot happen. This has to stop. We will put in our best foot forward to let it stop. See, we could have very easily gone and spoken to them about it, but they did not speak to us before launching it. So, you know, I mean, if it's a partnership, the communication has to go on both ways. You know, it just cannot be one way. So it's absolutely fine. You know, they've done what they had to. We'll do what we have to protect our interests, but we will definitely not wait and watch. We will definitely not, you know, take this on the, under our belt. We will do whatever is best for the interests of the fraternity.
Right. Actually, that was what I was going to ask you next is, have you had a conversation with Swiggy or Zomato yet about this? But that's what you said. You've not done that yet.
Not at the moment. See, in the past, we've had several conversations. Whenever we seek requests to share data with us. See, when a user downloads the Zomato or the Swiggy app, right, they are anyways giving consent to share the data with the restaurant. So the fact that the data is not shared with the restaurant is absolutely unfair, according to me, according to the fraternity, right? However, we can agree to disagree there. But whenever we've had conversations with them requesting to share data with us, we've always been told that, you know, there are different confidentiality, you know, agreements that they need to follow, etc., etc. But we've been always given a verbal assurance that they will never get into the food space, and now they are getting into our territory. So you know, we've had conversations before. We can continue having conversations, but they've already gone out there, launched the apps, announced the apps. we can't just sit and wait and watch here. We need to take some action. We need to protect the interest of restaurateurs, and that's why this body exists. I have nothing personal against Swiggy Tomato. I mean, I do a lot of business personally with them, right? But that's different. That relationship is more of a principal to principal relationship. Here, I'm representing the fraternity, where I need to look into the interest of everyone involved in the fraternity, right? We have so many cloud operators. Anyways, this food industry is going through a very, very tough time, and with deep discounting, high commissions, there is no margins left with us. Trust me, 60% of my business is offline. I make more money in offline than online. We just don't make margins in online. And imagine that small guy out there, I mean, those paying 30% commission, they will not even cease to survive. On top of that, if they have to compete with these aggregators selling similar products, I think it does not bring everyone on a level playing field. It just gives them the power to use that data. And we have no reason not to believe they will not do it, because it's happened in the past. If you see, even in the Flipkart case, I mean, they were not allowed to sell private labels. So larger e-commerce in India have not been allowed to do it. Why should Zomato and Swiggy do it? Absolutely not.
Right. All right, Sagar, we look forward to, what action is going to be taken next. And like you said, the impact is going to be mostly on the smaller restaurants who will not be able to compete because of the high commissions that they already pay. On top of that, competition with this also. Anyway, Sagar, thank you so much for joining us. Yes, and deep discounting. Right, and deep discounting as well. Well, Sagar, thank you so much for joining us. Look forward to keeping in touch. Do keep us updated on what you're going to do next also. And that's about it. Well, now it's time for a short break, but don't go anywhere. News continues on the other side.
The Swift and the Dzire have dominated the Indian passenger car market. But this changed in 2024. Punch emerged as the top-selling car, followed by WagonR in the second place with 1,90,855 units sold. Then you had the Ertiga with 1,90,000 units. Then you had the Brezza in the fourth place with 1,88,000 units. And Creta was in the fifth place with 1,86,000 units sold. So here's why Punch has emerged as the leader. First, it is available in 3 powertrains, petrol, CNG and electric, whereas the WagonR, Ertiga and Brezza are available only in petrol and CNG. Second, many entry-level buyers who considered buying a hatchback have gone for the Tata Punch instead because of its affordability and value proposition. If the entry-level WagonR costs rupees 5.6 lakhs ex-showroom, then the entry-level Punch costs just a little extra at rupees 6,12,000 rupees ex-showroom. Similarly, if the top model of WagonR costs around 7.3 lakh rupees ex-showroom, you can get a mid-range Punch also for the same price, which would have a 7-inch touchscreen with Harman infotainment, Android Auto and Apple CarPlay, reverse parking cameras and steering mounted controls. So both at the entry level of rupees 6,12,000 and at the top model price of roughly rupees 12 lakhs, the Punch has something for every buyer. It is also cheaper than the Brezza, which costs rupees.
BFSI grew by 0.9% and consumer business grew by 1.1%. Energy, resources and utilities grew by 3.4%. TCS banks and products and platform continued their growth momentum. Life sciences and healthcare and communications and media continued to have negative growth on a year-on-year basis. Our customer metrics remain strong and resilient. The number of customers from whom we make more than 100 million rose by 3 to 64 customers on a year-on-year basis. There has been a strong customer movement across all other brands as well. In addition, our customer base of 1 million plus stands at 31,309, an increase of 21 over last year. Our order book closure for the quarter stands at $10.2 billion. Our order book for North America stood at 5.9 billion and for BFSI 3.2 billion and consumer business at 1.3 billion. This represents a strong order book closure of over Q2 and Q2 and Q3 of FY24, giving us a confidence and comfort on the outlook for the future. By the end of Q3, our net employee count stood at 607,354, a reduction of 5,370 on a sequential quarter-on-quarter basis. Our IT services attrition stood at 13%. The board has proposed an interim dividend of 10 rupees and a special dividend of 66 rupees, amounting to about 27,500 crores. This is in line with our practice of returning 80 to 100% of free cash flows back to our shareholders. We are seeing continued momentum in AI adoption. Clients are increasingly investing in agentic AI adoption, building robust data foundation, and taking a value chain-based approach for AI and Gen AI-led transformation. We have launched an innovative offering, TCS 5A framework for responsible AI with AWS. This is the first of its kind in the industry. It helps identify and mitigate AI risk holistically. We also saw an increase in successful production deployment of AI Gen AI engagements, leading to greater business certainty and confidence for our clients. Our investments on research and innovation continued. In Q3, we applied for 195 patents and were granted 216 patents. Overall, 8,549 patents have been applied and 4,585 granted. With these updates, I hand it back to Kritika and we can open it up for questions. Thank you. Kritika, over to you.
Thank you so much, Kriti. We'll start with the Q&A. As always, we have Rima Tendulkar from CNBC-TV18 going first. Rima, 2 questions.
Yeah. Gentlemen, Happy New Year and congratulations. So Kriti, first question is, growth ex of India was under pressure. So what were the reasons for that? And also your press release reads that there are early signs of revival in discretionary spending in some verticals. So explain that to us and whether deal wins can sustain above $10 billion. Samir, how did you manage to expand margins when there was no growth, and the outlook on margins from here on? And Milind, how should we read your headcount declining when attrition went up? And what is the outlook on headcount addition and attrition going ahead?
So Rima, first, yes, as I said, we had negative sequential growth in all geographies, all major geographies. And to some extent that had a seasonality. And we've been calling out the trends in Q3, most of Q3, were showing a softness in discretionary demand. So both these contributed to the negative sequential growth in all major markets. But the point that we wanted to emphasize here is the TCV going up after 2 quarters. And TCV going up in North America, going up in BFSI, CBG. All of them portend well for our, at least gives us a confidence on medium term. And we also been seeing improvement in sentiments on discretionary spend. I did talk about BFSI and consumer business, but we've been seeing it yearly trends in few other verticals also. So overall, that's what is giving us a confidence on future.
And deal wins can sustain at $10 billion plus as for the visibility?
Our pipeline, I don't want to put a number, our pipeline continues to remain strong. So there are enough opportunities to sustain the deal wins. At a broad level, seeing what we are seeing today, we would be comfortable in saying CY25 should be a better year than CY24.
Okay. Coming to margins, Rima, in spite of the furloughs and Q3 seasonality, we were able to improve our margins by 40 basis points, and that was purely driven by operational efficiencies coming in from productivity, utilization, and pyramid. And while these levers helped us in this quarter, they do provide further opportunity. And through the year, in the next quarter also, we'll be banking on this lever to improve our margins further.
With respect to headcount, Rima, I think, as I said earlier quarters also, and there's no direct linear correlation with the growth and headcount. And as you know that we have added net 11,000 people in the Q1 and Q2. We also basically on track to get our campus hiring on track of 40,000 people in this year. And so the point is Headcount wise, this is something which is a result of many things, including what Samir said, productivity, utilization and pyramid, and the number is what it is. With respect to attrition, it is at 13% within our comfort range. Going forward, I anticipate reduction in the quarterly attrition going forward. LTM numbers may go up and down based on how it is calculated.
All right, thank you. Next question to Sajid Mangat, NDTV Profit.
Kriti, Happy New Year. You spoke about the fact that you entered Q3 with some of the macro factors like discretionary being slow. As you enter Q4, what are the macro factors looking like, and do you see improvement on those factors for Q4 and CY25 as a whole? The second thing is about the TCVs, $10.2 billion, impressive number. If you can give us a breakup of BFSI wise and geography wise, because while TCVs are growing, you are seeing a flat growth in BFSI and North America. So there's a difference in order wins coming in, but revenue recognition which is coming in for these two. On margins, you did mention about cost efficiency. If you can give us an idea of how you manage the currency being so volatile, and do you see what kind of hedges you have, and for FI or CY25, what kind of outlook you have on the currency? And Milind, on employee count, you mentioned the fact that it has nothing to do with the growth, but what is the kind of salary hike, if at all you did anything in Q3, and the gross additions that you expect in CY25, given that the campus placements would have been completed by now?
See, on the discretionary spend, while Q3, whatever we saw in Q2 continued, the softness in demand. But looking at the order book and our conversations with our customers, gives us the comfort that there is more budget, discretionary spend is likely to increase, and we are seeing early signs of improvement in discretionary spend. And we saw to some extent, even though the overall BFSI growth has been negative, we saw the growth in North America and BFSI to be positive. So that also we take as a early sign. So early signs on discretionary spend revival. I don't want to call it that it is recovered fully yet, but there's a early signs of revival. On the
Tax ex-showroom. In 2021, Tata Motors had launched the Punch and, in a way, launched a new category of subcompact SUVs. According to industry experts, the affordable price point and a feature-rich compact SUV make it a compelling option for many customers wanting to buy a small entry-level car but still wanting to own an SUV with premium features. The high overall SUV demand has also led to many customers buying the Tata Punch. According to company sources, the Punch is being bought by those in their 20s and even by those who are over 60 years of age. For some, it is the first car, and for others, it may just be an easy-to-drive option to get around a crowded city. This car was first launched by Tata Motors in 2021, with the Punch electric vehicle being launched in January last year. It is now expected that Tata Motors may give a life cycle upgrade to the Punch petrol and CNG versions in order to further cement the car's position in the market and increase sales in 2025.
वोटर टर्नआउट इंक्रीज हो जाता है 5 बजे के बाद। ये काफ़ी एक विषय पब्लिक में रहा, जनरल इलेक्शन के दौरान भी, उसके बाद भी। कैसे 5 बजे के बाद बढ़ सकता है, कहाँ बढ़ गया, कौन सी 5 बजे से 10 बजे तक के बीच में कतारों में, लाइनों में लोग खड़े हुए थे, हमें वीडियो दिखाइए। इस तरीके के प्रश्न पूछे गए, जिसके उत्तर मैं आज देना चाहता हूँ बिफोर गोइंग टू डेली इलेक्शन। ऑल्सो नेसेसरी, बिकॉज द डाउट्स गेट्स रिमूव्ड, यू कैन आस्क मी फर्दर क्वेश्चंस इफ यू वांट, and these questions do not come again election after election. वोटर्स में मिसमैच हो गया, जितने वोट पड़े थे वो बढ़ा दिए गए। पहली बात तो ये था वोटर टर्नआउट में, चलिए बढ़ा दिए। उसके बाद काउंटिंग में मिसमैच हो गया, कहीं कम गिन लिए, कहीं ज़्यादा गिन लिए, ये भी मुद्दे उठे। काउंटिंग को स्लो डाउन कर दिया गया,
अभी एक नया मुद्दा उठा है कि हमने कोई रूल चेंज कर दिए हैं जिससे बहुत बड़ी ट्रांसपेरेंसी खत्म हो गई है. सो ऑल दीज क्वेश्चंस आर एक्चुअली, अगर एक बहुत बड़ी पिक्चर आपको मैं दिखाऊं तो 10.5 लाख बूथ हैं कंट्री में. हर बूथ पर 4 से 5 पोलिंग ऑफिशियल्स होते हैं, तो उनका नंबर हो गया 10.5 into 4 भी कर लें तो करीब करीब 45-50 लाख लोग हैं. Actually, right to question is built in democracy. It's an 18.
Well, hello and welcome. You're watching Tech at Work, and I am Ashmit Kumar. Now, 2024 was the year of artificial intelligence. Every major company jumped on the bandwagon and announced their large language models. Now, governments and institutions alike across the globe are attempting to integrate into the technology to improve efficiency. But with the rapid adoption, there are growing calls for regulations. Now, to boost this opportunity and to tackle risks and uncertainties, an advisory body formed by the UN Secretary General has recommended forming a global authority on AI. It also proposed regular intergovernmental discussions to share the best practices to govern AI. But how can we strike the right balance between innovation and safety? I think that's one key question that's guiding conversations, not just here in India, but across the world. We will see the regulations on AI gather steam in 2025. That's another question being asked. To answer this and more, I'm now joined by Ambassador Amandeep Singh Gill, a technology envoy for UN Secretary General, Mr. Sharad Sharma, co-founder of iSpirit Foundation, and Ms. Astha Kapoor, co-founder of Aapti Institute. Thank you so much for taking our time, for coming all the way to our Noida studio. It's encouraging to host you here in our new studio. Thank you so much for being a part of this. Let me begin by taking the first question with you, Ambassador. In October 2023, a high-level committee was formed. 11 months later, in September last year, you came out with this report. I think the one message that, at least between stakeholders, has gathered momentum is that any isolated governance framework will not work. This is a distributed technology. We need a distributed governance system. Is that the message that came to you when you came out with this report in September last year, that we need more global cooperation for building a global framework, a global governance framework?
Absolutely. So this is a very powerful technology. Its implications extend beyond the private sector, the economic dimension, to political, social, cultural dimensions. And it affects people everywhere. So everyone must be part of the governance effort. That's why the report of this advisory body was titled Governing AI for Humanity. So if the benefits are concentrated in a few geographies, in a few companies, and if the burdens, the risks are unfairly loaded on to some others, then we have a very unfair situation. And to address that, the first step, the fundamental step, is to bring everyone into the conversation on the governance of these technologies.
I think that's one interesting observation, that heading into 2025, we're talking about bringing everyone together. Mr. Sharma, let me come to you. When we talk of bringing everyone together, all the stakeholders together, I'll just borrow from a study which came out just a couple of days back, which is the WEF report. It talked about how international cooperation has stagnated over the last 12 months. They've cited uncertainty, geopolitical tensions, risks of conflict. In this atmosphere, how viable it is and how feasible it is in 2025? Do you see that happening? That despite the conflict, you have countries coming together at a consensus on governing AI. Do you see that happening?
Yes, I think this report itself is a product of such kind of consensus that emerged. And I think Ambassador was the sutradhar for kind of bringing everybody together. And he was masterful in kind of drawing out the synergies and even the differences, so that you could please discuss them openly and come to some kind of consensus. So I think it is possible. It is effortful, as it should be, but it is definitely feasible. Having said that, I think there are many opinions that are there, and I think for a change, India has a very clear position on what it wants to see happen in the digital AI world. which is informed by its own domestic needs. And I think, increasingly, both India and the world are waking up to the fact that if we can make it work in India, if it works in India, it will work anywhere in the world, right? So I think these experiments that India is doing will inform global thinking as well as we deploy them and see whether they work or not.
I think a lot of interesting insights, a lot of conversations in India in terms of how to go about this aspect of governance. But before we head into the India example and the India model, I just want to address the elephant in the room. The Trump presidency is just a few days away. January 20th is what many people are referring to as D-Day, where the dynamics of international conversations will change. What's also interesting is that he's flanked by Elon Musk, who, of course, is very vocal, has strong views on this technology and how it is to be governed going forward. This combine, Trump and Musk put together, what does that do to the conversation on governance, especially when there are strong views not just on AI by Donald Trump and Musk, but also on China? What does that do to this conversation on governance? I leave that open to the panel. You want to take that?
Yeah, I mean, in the middle of this panel, but I think that there's a unique opportunity for India as well as the Global South to take a leadership position in that. I think that technology is one of the things that is experienced pretty equally across the world, whether it's the harms or the opportunities from it. And I think that what we're seeing, we're having this conversation a few days after the DPDP rules have come out. There's a new guideline for AI governance that's also come out in India. Several other countries are also working towards their own governance frameworks. So yes, it will be disruptive, absolutely. But I think it's also an opportunity to crack open some of these conversations and create a multipolarity around the governance of this. And I think it's a huge opportunity for India, which is data rich, it's eager to govern, it has a lot of innovation potential, and the conversation around, the fact that we are the cradle of humanity, to steal one of Sharad's phrases, is that I think that there's a lot of opportunity for us to take a leadership role. So yes, disruptive, but also potentially an opportunity.
Disruptive. I think focusing on a few individuals, one or two countries, it disempowers the rest of the world, because this is about the entire humanity. And the Global South in particular needs to be able to harness AI to leapfrog some of its development challenges. And we also need to work together to address the risk, the downside of it, to our opportunities to work, to how creative content is protected and used, to misinformation, disinformation. Also, the powerful reshaping of relationships and channels of communication that generative AI represents. So this is not an issue for just a few companies or one or two countries. It's for entire humanity. And in India, we say Vasudhaiva Kutumbakam, the entire world is my family. So you can't just sit behind national borders. These are problems without passports, whether it's climate change or the governance of AI. But this is a problem that I suspect will also come up in Davos, is when Davos will be coinciding, WEF, World Economic Forum, will be coinciding with President Trump taking charge. Again, same question to you. What does that do to the conversation, the Donald Trump, Elon Musk combine? Does it add more volatility? Does it make your job more difficult when you're trying to build consensus between countries?
I can't comment as to what they're going to do, and how that's going to play out. But I think one of the clearly, and the US has many voices, right? And Elon Musk is on one side, there are many others on the other side, even with respect to AI regulation. And the question, of course, is how do we connect with that? I think one common ground that emerges between the Donald Trump, Elon Musk camp is their primacy on the family. And therefore, that is something that's very close to India's heart. So it is quite possible that in those areas, our thinking will actually move faster than would be the case otherwise.
Sure.
But also, there are issues of, we are in the world of tech Cold War, and technology is a source of national power, and how that will be asserted may be very different as we go forward. So I think it's an unknown, but if anybody can deal with the chaos that is going to be there, with this change, I think it is us Indians. We don't get fazed by by these kind of changes very easily, and I think we'll navigate it as we go forward without too much of a problem.
Let's bring India into the conversation. One of the aspects that was a part of this report in September 2024, which in fact managed to strike a chord with the voices coming in from the regulatory mechanism here in India, is the concentration of this technology in a few hands. The concerns that were expressed by the RBI governor. He talked about while the industry here is encouraged to take on this new technology, the concern is if this technology is concentrated only a few hands, that raises systemic risks. Ambassador, I'll come to you. We were discussing just moments earlier as to what this does to the dynamic of competition, what this does in terms of a more democratic distribution of the AI technology. How do we address this concentration of AI on only a few hands in a few tech companies?
So the fortunate element with the advisory body's report was it landed in time for the adoption of the Global Digital Compact at the Summit of the Future, the United Nations. So its recommendations have landed in decisions by all the 193 member states of the UN. And among those decisions is precisely this issue which you highlighted. How do we address this growing AI divide, ensure that the opportunities spread more evenly? So there is going to be an international scientific panel that spreads knowledge of these capabilities around the world, reduce information asymmetries, a place for learning from each other, for sharing of what works, what doesn't work within the UN, the inclusive setting of the UN, and importantly, an effort to build capacity around the world and facilitate access to the key enablers of AI development, data, compute, talent, backed by funding, by predictable funding, potentially through a global fund on AI. So these are critical foundational decisions. If we can implement them in 2025, we reduce the possibility of a very unequal AI world in the future.
That's an interesting question. Another issue that is always spoken of has been the issue of IP, the issue of privacy. I think that is one issue where we don't really have a clear answer how to go about it. And I'm talking about how public data, which is protected by copyright, can it be used for training models? This is a question that has come up before the Delhi High Court. A newswire, ANI, has filed a suit against OpenAI. OpenAI conceded that they have as many as 16 suits across the world. Ms. Kapoor, let me come to you. When we are addressing these questions, how do we go about finding an answer to this? Because we don't really have one. Should AI models be allowed to train on these copyright-protected information and public information? How do we go about it? Because we have the DPDP, but it only protects personal data.
Yeah. I think the question of non-personal data or data that is, in the context of ANI or even New York Times, which is also a suit pending for OpenAI, I think these are things that are being considered. It's not simple. Some of the frameworks, such as sweat of the brow, that we used to consider in the context of intellectual property don't apply to AI. And OpenAI and other training models have been quite extractive. They have been sending their trollers all over the internet, and there are lots of ways in which the internet is fighting back. So people are putting up defenses on their website to prevent training data or models to come through. I think this is something that is, going to need a new framework and something that is going to require a much more complex set of answers than the ones that, age-old copyright and IP frameworks have allowed us. I think that this is a question of value. Who is extracting the value and where is the value getting concentrated? Who is making, at the end of the day, money from the data that is being it's being trained on, and how do you redistribute that? So what are the sort of ways in which models that are being trained on, say, public data, how can they redistribute value? To give you an example, if models are being trained on, say, public data on traffic, for instance, in the city of Delhi, how do we give back the value of that data to citizens or to other, smaller companies that are building on mobility in the city? Sure. So there may be newer models. It may not be within the framework of intellectual property as we understand it.
It's interesting. I think a number of questions there, which again circle back to the need for perhaps a global consensus and global cooperation. We will take now a small break. We're slipping into a very short commercial break, but on the other side we'll come back and we'll try to find answers to these questions in terms of governance for AI in 2025. Stay with us.
we respect this. We respect this right. We feel that क्वेश्चन करना और उसका जवाब देना हमारी जिम्मेदारी है. तो आज इन सभी सवालों की पूरी इज्जत रखते हुए हम इनका जवाब देंगे वन बाय वन. बिफोर गिविंग यू आंसर, एक पूरी पिक्चर दिखाता हूं आपको. ये स्लाइड देखिए और इसको अपने मानस में थोड़ा बसाइए. अभी अनुज ने कहा कि पिछले 2020 से 30 स्टेट्स के इलेक्शन हुए हैं. 15 स्टेट्स में different parties are the biggest parties. This is the beauty of Indian elections and the democracy. आप देखिए 2020 से स्टेट बाय स्टेट हमने दिखाया. दिस वी आर पुटिंग ऑन सोशल मीडिया. जैसे मैं आपसे बात कर रहा हूं तो आपके ग्रुप में ही आ जाएगा. स्लाइड बाय स्लाइड इट इज बीइंग ट्रांसमिटेड. 20, 21, 22, 23, 24 हर जगह में डिफरेंट पार्टीज आर कमिंग टू are getting maximum seats. This is one reflection how fair, how deep rooted the fairness of the Indian elections are. The Indian voter is extremely aware, conscious, he understands everything. चुनाव की तारीख से 7 या 8 दिन पहले ईवीएम्स को कमीशन किया जाता है. उसमें सिंबल डाले जाते हैं. वो एजेंट के सामने डाले जाते हैं. उसके बाद में उसको मॉकपोल करने की छूट होती है. वो उसी दिन मॉकपोल करके देख लें सिंबल ठीक पड़ गए. उसी दिन उसमें नई बैटरी डाली जाती है. उसी दिन वो बैटरी सबके सामने में सील होती है. उसके बाद उसको उठा के ईवीएम्स को स्ट्रांग रूम में जमा किया जाता है. उन्हीं के सामने सील लगाई जाती है. उसके बाद में जिस दिन पोलिंग डे होगा उस दिन सील उनके सामने तोड़ी जाती है. एंड दे आर अलाउड टू रिमेन एट द स्ट्रांग रूम. पोलिंग डे में डिस्ट्रीब्यूशन के बाद पोलिंग स्टेशन पे सबसे पहले कहा जाता है आपको ये वाली सीरियल नंबर की पोलिंग ईवीएम दी गई थी, प्लीज चेक वही है. आपने सील लगाई थी, प्लीज चेक वही है. उस दिन आपने मॉक पोल किया था, आज फिर कर लीजिए. सुबह सबसे पहले फिर मॉक पोल कर लीजिए. पोलिंग एजेंट इज इनसाइड द पोलिंग स्टेशन. शाम को वो दिन भर रिकॉर्ड रखते हैं कौन आया कौन गया. शाम को पोल खत्म होने से पहले, पोलिंग स्टेशन छोड़ने से पहले फॉर्म 17C अकाउंट ऑफ वोट्स, किसमें कितने वोट पड़े इसकी संख्या उनको दे दी जाती है. आई विल कवर दिस पॉइंट अगेन व्हेन आई कम टू वीटीआर. ईवीएम्स को वापस स्टोर रूम में
Welcome back to Tech at Work. We still have with us Ambassador Amandeep Singh Singhal, Sharad Sharma, as well as Aastha Kapoor. Thank you so much for being with us. Mr. Sharma, let me come to you. We were trying to find answers to some of these tricky questions. EU seems to have found an answer. They've come out with an AI-based legislation. They seem to have a risk-based approach, which is to say that if, say, there's a Gen AI model that produces videos that's potentially more risky and therefore invites a higher threshold of regulatory action as compared to, say, an AI tech that helps you pick whether to have biryani or butter chicken tonight. So making that distinction, that risk-based approach, that's the answer that EU has. Is that the same approach that you find working in other geographies as well? Do you see that working here? Does India have a different answer?
Yeah, so different countries are shaped by their past to figure out a way to implement the same set of principles. I think the principle that we must keep AI safe for a common citizen, I think is a common principle that is accepted everywhere. In the US, the thinking is that we could do that by labeling the AI appropriately. You know, they're inspired by their food labels. And they say if you label well, then it's the onus is on the person who's consuming that AI. In Europe, they are focused on making sure that there are enough testing that is done, you know, for models that are released in the public. They are inspired by what they did with car safety, right? In India, we have a more diagonal approach, which is to say that there is a chain involved in AI, which starts where the end product may be a deepfake video, but behind that is an application, behind the application is a model, behind the model is training data, and we should know what that chain is, and we can then intervene at whatever may be the appropriate point in the chain to keep our citizens safe. So this approach of what is called as an AI chain is a uniquely Indian approach. Indians the Indian thinking is bold and bullish on it simply because we've implemented such a chain for taxation, indirect taxation, GST, very successfully, right? It works better than anybody imagined. So therefore, I think the principles are common, but how they will get deployed are different. The other variation that is there in India is this concept of techno-legal regulation. So ultimately, you are shaping market behavior. In the West, shaping market behavior by regulation alone is sufficient. Thou shalt have a license only once you have a driving test. That's the regulation. What do you think? Does everybody follow that regulation? The answer is yes. What do you think is the case here in Noida? If you go out, does everybody follow that? No, it doesn't. So therefore, in India, the thinking has been that you need two hands to guide the market behavior. You need public policy, but you also need public technology. So therefore, it's only when both come together that you get the outcomes that you seek. India has been using that very aggressively, and it is called techno-legal regulation. And that is part of the report itself. So this is a concept of regulation that is being exported from India to other parts of the world in a very serious way. So India has its own story to tell about how AI shall be regulated. Now, now this is not theory, because some of it has worked. For example, EU has GDPR, and there's a debate whether it's been successful or not. Sure. India has the same principle, but reflected as the account aggregator. That was a fairly large pilot that was done just with financial data. That pilot is successful. We have already got more than 100 million consents. The sense is that it's worked by and large. And so therefore the DPDP Act brings that to life and extends it to all sectors, right? So therefore there are these variations that you will see.
I think that's a wonderful explanation of techno-legal regulation. If anyone didn't understand that, I think the Noida example would have explained that to them. Ms. Kapoor, let me come to you now. In terms of taking these baby steps forwards, we've seen the DPDP Act in 2023, then subsequently we have the rules now with us. We had the MeitY guidelines as well on AI governance. Is there more that needs to be done? We're nowhere near a Digital India Act that talks about AI regulation, but we're beginning to get some color on what that may look like. What indication does that give you in terms of more support coming in from a techno-legal perspective?
So I think, like you said, like some color within the lines, but a lot needs to be done. And obviously, we've lost time as well with the DPDP for all of us who were waiting for many years. But I think that the techno-legal approach has some opportunity for particularly the mass of the users, right? What we are seeing in our work is that people have high levels of distrust with technology. So you're seeing a lot of people with phones, but usage when it comes to financial payments, when it comes to, anything more than social media, which actually makes meaningful users, is very low, because we've not been able to communicate trust in technology meaningfully. And what something like a techno-legal approach, can do is that it can provide a very visual as well as coded instantiation of safeguards, in the same way that we have, the car won't start till you put on the seat belt. We will not be able to do a few things on an application if you don't have the requisite safeguards. And I think that's the kind of agency that people need on platforms, as well as the reassurance to build trust. And that's where some of the techno-legal aspects are very, very interesting. What's important is that the legal takes time. So we need to think about what the sort of base of regulation is supposed to be. And I think in that, some participatory approaches which can, make sure that we have relevant direction while we regulate is also necessary. So yes, for the techno-legal approach, but we cannot wait 8 years for law.
That, in fact, was my very next question, that the digital protection conversation began in 2017 with the Supreme Court verdict. It's taken us time now till 2025. How long do we need to wait, or do we need a piece of legislation and AI legislation in India immediately? What is the answer?
Please.
In this techno-legal approach, in India, the public technology piece usually ends up coming first. And the public policy or the legal piece comes later. And that's not a bad way of doing things. Okay. Because today, for example, the public technology for regulating AI, which is called DPI for AI, is not launched for public. but there are significant pilots that are taking place, right? And now what will happen from that is that you'll learn what works and what doesn't work. And because India is so complex, what works in Bangalore may not work in another place. And so you begin to develop a much more informed view. So take the DPDP Act itself. As the account aggregator pilot progressed, a draft of the law that had been already passed by the JPC was then set aside and replaced by a 35-page document, right, which is generally received good feedback. So the reason that happened was that there had been field learning that had happened in a financial space with hundreds of millions of people using it. So I think the Indian model is not a bad model. And I think, we should, all I want to assure you is that this DPI for AI part is well in the field, being tried out at scale with sizable pilots. And we will have to wait perhaps for the end of the year to see how they go. And if they go well, then to have complementary and enabling legislation to allow that to scale for the whole of the country and for perhaps even other parts of the world becomes a very sensible.
But let me then just ask a supplementary question. For a government that is quick to point and flag the risks of AI, how safe is it from a safety standpoint, from a harms standpoint, to work without a piece of legislation?
I think the government has taken a very good approach of saying, let's not rush to regulate. But at the same time, particularly for children, I think there is a concern that we must regulate for children, whether we regulate for adults or not. And so therefore, in the DPDP rules itself, as many people may have noticed, very good provisions for children, age-related rules have been already included. So it is not as if there's nothing happening. I think there is a two-tier kind of an approach. First is protect the children and then come back and protect the adults. So that's the approach.
If I may jump in, this depends strongly on context. India has a very mature technical community, so it can lead with public tech. That may not be the case in other countries. Yeah. So their legislation may have to lead the way.
Sure.
So the different stakeholders may be in a different geometry in different places. So different contexts will. What we need at the international level is a space where all these different approaches can be shared so that different jurisdictions can learn from each other and build the right approach that works in their context based on the principles that are there in the UN Charter and other international.
We're completely out of time, Ambassador, but I'll just come to you for a quick final closing comment. We began this conversation about the need for global cooperation. Why the UN at this point is, as per you, best suited to bring about that global cooperation? We have a varied sense of stakeholders. You have US on one hand, countries like China on the other, then countries like India that are looking to take the lead in terms of techno-legal regulation. Why UN is ideally positioned for bringing about this global cooperation?
Because everyone is there. All these players that you mentioned, it's the most inclusive forum on planet Earth. And because it is based in the UN Charter and a set of shared legal arrangements that have been developed over decades. Now, as we discuss, new law, new treaty making, that takes time in this space. So why don't we rely on what already exists so that we can protect everyone, we can advance on the sustainable development goals. Those are the advantages of the UN, and we have the decisions from the Summit of the Future for the foundations of AI governance. Let's start implementing them.
Ambassador, thank you so much for your comments and sharing your time with us. Ms. Kapoor, Mr. Sharma, thank you so much for sharing that insight. A lot of these questions, hopefully, we'll get answers as we move forward in 2025, but we're not short of uncertainty or volatility. I think as the year rolls on, as we near the Jan 20th date, perhaps that's when we'll begin to get more color on what the rest of the year may look like. But that, unfortunately, is all the time that we have. It's a wrap on this edition of Tech at Work. Stay tuned to CNBC-TV18 for more news and updates.
सामने ताला लगाया गया, फिर काउंटिंग के दिन आए, फिर कहा भाई काउंटिंग में फिर देख लो वही मशीन है, फिर सील चेक कर लो, उसके बाद में फॉर्म 17C से मिला लो। अगर 17C से काउंट मिलेगा तभी काउंटिंग प्रोसीड करेगी।
as we start the new year and kick off 2025. So thank you very much for being here. Before we talk about India, I'm going to kick off from where the last panel left things off, because there is a fair degree of trepidation, nervousness about the uncertainty that we're likely to go through come the 20th of January. So let's start with that.
What happens on the 20th?
What happens on the 20th of January?
I'm here. I don't know what you're talking about.
No, but realistically speaking, from a climate perspective as well as an energy markets perspective, what could a Trump administration mean? What implications, what impact is it likely to have in light of what we saw happen in the first administration as well as the rhetoric that we've seen on the campaign trail?
Yeah. Well, Shreen, it's an honor to be with you. I'm such a big fan of yours and really appreciate the work you do. I do want to say, before I answer that specific question, I think if you really look at what happened in the American election, I think something like 7 out of the last 8 elections in the United States have been change elections. I think most American households, if you take out those at the very bottom and certainly those at the very top, have felt negative about their economic prospects over time. When my parents immigrated to the United States in 1970, it was statistically true that 95% of kids born in the United States would do better economically than their parents. Ironically, unless your name was Rockefeller, in which case it's a little bit hard to do better than your dad. Today, that's probably closer to 40%. A while back, we dropped under the 50% threshold. And I think the message of this last election is that people need to believe their government will deliver real results for their economic livelihoods and for their children's future. And neither American political party has actually delivered that over the course of quite a long time. I say that because the Biden administration has made historic investments in greening the American economy. About $1.6 trillion in the 2 big bills, one's called the Inflation Reduction Act, the other is the Bipartisan Infrastructure Bill, are fundamentally about green energy investing. But if households don't feel like those dollars are creating more opportunity for their kids, they're not going to support a climate transition program, period. I think that's true anywhere in the world, and I think that's true for every energy transition we work on across this planet. So with that said, which is why it's so important that this alliance is about people and planet, and that we listen to the mothers we listened to yesterday say, I'm all for this solar project, but only if it creates opportunities for me and my kids. Okay, so that's the first thing I want to say. The second is the more direct answer to your question. I mean, I think it's going to be bad. We're going to pull out of the Paris Agreement. To put it mildly, we're going to pull out of the Paris Agreement. I don't think any new administration will unwind too much of the existing past legislation in the IRA and the infrastructure bill. But there's an American Farm Bill that's still outstanding where a lot of incentives for sustainability in agriculture can be unwound. And I think in general, American leadership is unlikely to be a prominent source of climate leadership in the near future. And I think that's probably an understatement.
Yeah, so let me ask you the question then. If we are going to see this vacuum as far as American leadership is concerned, what will that result in specifically as far as financing needs are concerned, and the green gap that we foresee is only going to get wider? What happens there?
Well, you have to understand, so in the U.S. we're making the investments right now to green our economy, and we're ahead of schedule relative to where we were a few years ago. Europe is in the same category. They're making significant green investments in the trillions of dollars. And China, of course, is not just making those investments for the domestic economy, but has effectively captured a large part of the world's supply chain for critical minerals and for products like energy storage that are mission critical to this task globally. So where will leadership come from? I think leadership has to come from India. It has to come from Brazil. It has to come from South Africa. That's where the action is. I mean, we know that if the 70-some countries that are not considered the most developed economies in the world don't change their trajectory, if the business as usual scenarios go forward, in about 20 years, 75% of total global carbon emissions come from just those economies. So to some extent, the world depends on those few places getting the energy transition right. And those places can only get the energy transition right if it serves everybody and creates meaningful human opportunity.
Well, let's talk about India then, because you said that in a couple of weeks from now, you're going to have 30 heads of state meet to take stock of where things stand as far as the energy transition map is concerned, and a lot will be in focus on what's happened here in India and how India could potentially lead the way. What gives you the confidence, what gives you the optimism of what is working in India, what India is doing right, and what could perhaps be an exportable template?
Well, I think the first thing that's working is India has had a strong policy of leadership on this domestically. So 500 gigawatts is a very clear and significant goal. And whether or not India is going to meet the 500 gigawatts on the current trajectory is open to debate, but it's an achievable goal if people come together and are very serious about meeting it. I'd say second, now that solar in India and other sources of renewables are, at 2-3 cents a kilowatt hour, or 2-3 rupees a kilowatt hour, you're at a price point where you're better than the next best fossil fuel alternative. And the challenge is less about will renewables compete financially with fossil fuels, and more about can we upgrade grids to operate them in a way where we can use renewables at a high share of total energy and still meet all the industrial and baseload requirements, which is going to be fundamentally about energy storage and the technology of the grid system itself. So, I'm hugely optimistic. I think the thing I'm personally most optimistic about is what I saw yesterday, which is, you give a farmer a chance to become an energy entrepreneur, double their incomes, and transform their local communities. All of a sudden, their kids, as we saw yesterday, are switching from public schools to private schools. Their dreams and aspirations are changing from staying in their community to going to the urban areas and leading more expansive lives economically. That's what success is going to look like. And I don't think any place on earth has gotten this right yet. But I think India has a legitimate chance to say, as we make this energy transition, it's not just about the total number of gigawatts.
Yeah.
It's actually about the number of lives changed.
Now, that's important that you highlight that, but let's talk about this achievable target of 500 gigawatts as well. We're a little over 200 gigawatts cumulatively today. We added about 30 gigawatts in 2024, and the expectation is that that's the kind of run rate that we're going to be doing. What will it take to expedite the current trajectory to be able to get to the 500 gigawatt number?
Yeah. I think a few things. One is obviously more of the mega projects and more of the pathway to scale on that. I've heard it both ways. I've heard people say, especially from my own team, that exactly what you just said, and we're going to be maybe 200 gigawatts short. I've heard others in industry say, it'll go from 30 to 40 to 50 a year, and we might be a year behind, but we'll get to the target. I don't know what the answer is. I do know that you have to have much more investment in this space. You don't get there until you really make sure the grids can take on more renewables and a much higher share of renewables. I think that's going to come down to energy storage, to this digitized grid management information system approach, and ultimately, and this is probably not in the same time horizon, but the adoption of new technologies like nuclear fusion and things like that when they become available.
I'll talk to you about nuclear fusion in just a second, but let's talk about Duet and the digital twins, because I'm going to get the nerd out from you. What will the impact be, and what are we talking about? I mean, is this the next 2, 3, 5 years? What are we talking about?
Well,
and what is it going to cost?
So honestly, relative to the cost of this whole transition, it costs basically nothing. And I can detail that in a moment. The idea is very simple. It's that you can't set these targets and say you're going to achieve them without a really hyper-detailed and real-time plan for how you do that. And the only way you can do that is if you have a genuine, a genuine energy transition plan grounded in the reality of your current energy system. And there's no place in India where that energy system is modeled, existing in a digital platform, and therefore susceptible to the application of tools like artificial intelligence that can help optimize how you reduce losses, optimize new sources of renewable, tell you exactly where to put what kinds of battery energy storage, and and over time predict how you would serve even new load requirements as the economy grows. And this thing started, in my view, I'm probably a little bit not seeing the whole picture, but there have been other places, single utilities in the United States, Chile. There have been other places that have invested in and China, of course, right, is the world's leader at this through State Grid, in building a totally digitized platform for their utility management. And China has one utility, so it can do that more efficiently than in America. We have 7,000 to 8,000 utilities. But if you can do that, you can then optimize planning to achieve your goals. And just yesterday in Rajasthan, we saw you can tell me which part of the state we were talking about, but you could see where they put a small 1 megawatt or 2 megawatt solar plant on someone's farm. You could actually track where there was coal power coming to a community and where there was renewable power coming to a community, and you could visually see the transition happening. And that's not even capturing the fact that the coal power is coming at the middle of the night and the renewable power is available all day long. So you need these types of tools to be successful. I think India could be, for the Brazil COP and for other global leadership purposes, could be the role model for building this kind of a system. My back of the envelope estimate is $200 to $300 million. You could probably build this thing for the whole country. And India could be the first emerging economy to have every transformer, every pole, every wire, every generation site totally mapped in a digital twin of its energy system, which would allow the kind of planning and optimization and management that is what I think the world will need in order to meet any reasonable NDC goal.
Well, you're starting this off with the government of Rajasthan. The aspiration is to take this to 10 states, and that's what you're hoping to do at this point in time. But what will the pitch be? Because you're going to have to sell this idea to various state governments and, of course, to the central government as well. What will the pitch be?
For building this kind of a digital system? Well, we just did some meetings today. It doesn't take much of a pitch. I mean, anyone who's had to manage an energy system sees right away. Imagine driving without looking out the window or the windshield. That's what we do today because if you run a utility and you don't have a system like this, especially if it's for rural communities, you're not actually seeing where your loads are, what your losses are, how you don't know where to optimize loss reduction. You don't know which poles to go upgrade. You don't know where you should put the next transformer. You're not making those decisions in an optimized, data-driven, super efficient way. And this would allow you to do that. The hard part, of course, is all these things. When you have to build baseline infrastructure that's effectively a public good, getting the money for it's hard, right? So the Rockefeller Foundation, GAP, is committed to funding the first model of this in Rajasthan. But over time, whether it's philanthropy or the public sector, someone should come along and produce a few $100 million and do this for India.
So is that essentially going to be what this partnership, this PPP model that you spoke of, which involves the public sector and, of course, philanthropies as well as the private sector, is capital essentially going to have to be the ask as far as this model is concerned?
Yeah, I think so. I think in general, our goal is to find those catalytic interventions like a digital twin model of the entire Indian energy system, or like distributed renewable electrification provided in small increments but in rural areas tied very closely to small enterprise and farming. Finding those interventions that are the innovations, I think philanthropy can take some of the risk in testing, is this a good idea, or doing the first one in a small way. We started that whole distributed renewable project in Bihar 11 years ago, and we're, it's 30 kilowatts, 60 kilowatts, 150 kilowatts. Now we're at a few megawatts and doing it at scale in some places. So we can take the early risk and be the risk capital there. But ultimately, public sector financing and private commercial capital are going to be needed to take all of these things to scale.
So how big a check are you willing to write at this point in time, given the appetite for risk that you have?
I'll write as much as I can raise, and I think, if you look around the world, think about where we were 3 years ago. 3 years ago, everybody said, well, the OECD countries have topped out their aggregate energy demand, and all they have to do is change their energy mix. And, emerging economies will grow at 4 to 5% a year, energy demand. And so they have to kind of slowly but surely change their energy mix. Just 3 years later, that was the Glasgow story. Just 3 years later, all of that is totally wrong. The United States is blowing through energy demand estimates just because of data centers, which now I think already account for 9% of total utilization. You see the same in Europe. You'll see the same in China. AI as a singular technology will change the world's hunger for energy and do that in a pretty fundamental and comprehensive manner over time. So, if in my job, I feel like I should go to Microsoft and go to Amazon and say, okay, you guys are going to blow up the world with your investment in data centers and GPUs and processing capacity. We need some sort of a mechanism to draw capital from those that have it to places where we need to invest it to have a viable energy system that doesn't destroy this planet.
So are you going to be talking to Microsoft
We
and Amazon?
try all the time. Yes, I do regularly.
Are they open to a conversation?
They are. They're very open to the conversation. Whether the conversation ultimately requires a carbon credit structure that allows them to also get credit for the good things they do, or is purely philanthropic, that's where we're at in terms of our conversation. I personally think the carbon credits can be a mechanism to do that, because every time you put a new data center up somewhere, they have a willingness to buy credits to offset the burden that that's creating, and the capital from that kind of raise should go into the high catalytic public goods investments that I'm describing with the digital twin system and some of the other solutions.
let me get your take on what's happening as far as electric mobility is concerned. And what we are seeing is a dialing down, at least as far as global corporations are concerned, cutting back on spends at this point in time. And as subsidies wind down, there is a fear that we are going to see a setback on the electrification of mobility as well. What's your take?
You know, it's hard to have a take because I have no idea what's going to happen with tariffs and availability. Yeah. But it's pretty clear where the technology goes. The technology goes cheaper and cheaper with higher function and more performance. And so it's a little bit hard to imagine that we're not going to be able to benefit from that technology at real scale over the long term. I think India has less than 2% electric vehicle sales in its annualized market. Hopefully it can be much, much higher. I know the GAP team is working on certain segments of the market, like e-buses, that could both be a source of electricity demand for more renewable electricity and be a model for how to make that transition at scale. We work with African countries as well that are interested in, transitioning to more electrified transport. And in the U.S., who knows? I just bought an electric truck, and it's like the coolest thing I've ever had. And the functionality is incredibly high. So we'll see. But right now, obviously, that market is quite depressed, and people are skeptical about that transition. So I unfortunately can't share more. I will say this. The EV market is what drives the battery energy storage system and supply chain. And, India should make, and every country should be making, big investments in energy storage, because separate and apart from transport, stationary storage requirements are, I think, largely underestimated and undervalued as part of this transition everywhere in the world. And so when you talk to leaders of big companies, they say, well, we don't understand that there's a lot of different technology. Nobody knows what the winning technology is, so they're not able to invest in scaling supply, and then critical minerals becomes an issue, and Chinese dominance of the supply chain currently becomes an issue. But that's a huge area of opportunity, and hopefully GAP can do more in that space.
Yeah, I was going to ask
well.
you that. Is that going to be a big focus area for you here in India? I mean, the Delhi kind of example that you just gave us, are we going to see
absolutely.
much more of that?
Not only that, I mean, Delhi is, I think, a unique example of that within a utility, which is where we want to focus our efforts on best. Under Ashwin Dayal's leadership, the Global Leadership Council of GAP, which I chair with Jonas Støre, the Prime Minister of Norway, has pulled together 16 countries to come together and jointly procure energy storage solutions, because it lowers the price considerably and it gets you larger volumes.
How much lower are we actually expected to see prices move? Because, as you said, it boils down to affordability, and we have seen prices come off quite sharply, but, what's the kind of trajectory that we're looking at?
Well, in the BEST consortium, the countries, a lot of African countries, some Southeast Asian countries, when they're trying to acquire for a single project a battery energy storage solution, we were finding that the prices were 200% to 400% higher, depending on where in that community, than they would be if you aggregate demand and procure and get the best price available. So I think that's an area where you can see significant price improvement. On the very small mini grids that we built out, and I think Tata Power is building out a few hundred right now, by our math, the key to making those things, to getting the price down even farther in terms of the service price of power to low-income communities, was in fact getting lithium-ion battery storage into those systems and doing it at a low price point. So, cheap energy storage that's abundant is a huge part of this transition. And like everything else, if we only make it for Teslas and Hyundais and whomever else, we'll be missing the real human impact, which is going to be stationary storage in these mini grids in Rajasthan and elsewhere.
What is it that you would like to leave the audience here to take forward as your message for what India needs to do from a regulatory perspective, as well as what the ask and the expectation is of the private sector to shoulder some of the responsibility?
Work with us on the distributed renewables, on the BESS, and on things like the digital twin. I think the second is, I think there needs to be more investment from the public sector on the core catalytic initiatives like this digital twinning project. I mean, I really do think for a few $100 million you could build something for India that would be transformational here and transformational for the rest of the world at a time when the world is desperate for big solutions. And so I hope you all can work with those you influence to make that happen at real scale. And then the final thing is, to me, the most important. As I go back to my first answer or non-answer to your first question, which is if we don't demonstrate that the energy transition helps improve the lives of the women and the kids we met yesterday at that solar plant in rural Rajasthan, the whole transition will fail. And we see that failure in our politics in the U.S. We need to react. We see that failure, I think, in populist politics in many other countries around the world. And I think it's too easy for us to just talk about gigawatts and energy and flow and the lineman app and stuff that we think and I think is super cool, and forget that at the end of the day, this is about, does that girl in that household have a brighter future or not?
So I'm going to end by asking you that women-led enterprises, is that going to be a big focus area? And
That's the next big focus. I don't think we're getting it right yet. I know the intention is there, but even yesterday, everyone we met who was benefiting was male. And unless women get income, unless girls get education, you don't get that positive flywheel of development and growth happening in a meaningful way. So we have to double down on that and get it right. Thankfully, partners like the Gates Foundation and others are already supporting GF to explore that. But that should be a much, much bigger focus of our community's work.
Is there a target that you've set for yourself?
No, but there should be. Ashwin, let's come up with a target, and there should be.
Okay, we look forward to hearing back from you on the target that you decide to set for yourself. But thank you very, very much for joining us here this evening and for giving us a very comprehensive view of where things currently stand in the world with all the uncertainty that we're dealing with, and more importantly, what the trajectory here in India looks like. Appreciate your time, and we wish you the very best of luck. Thank you very much, ladies and gentlemen.
got it from Zepto, is it?
Are you all on Zepto or Blinkit in fact?
No, I'm on Swiggy actually.
What's happening in Bombay? I don't know. I live in Delhi. You're in Bombay a lot. I'm in Bombay every week, but I live home is Delhi.
I enjoy being in, I think, a couple of places instead of being in one.
But home for you is what you know.
Yeah.
Home is the place that you don't want to escape from, and I think it doesn't geography doesn't really define that, but the space that you feel the safest and most comfortable in, I guess that's.
Then home
that's
is time because
after
a certain amount
I
of
know
time you want to
he's
escape.
getting philosophical now. Are you back in the gym?
Back in the gym.
Yeah. There's a 7-year difference between the two of you. That's a pretty, a big gap. But you almost seem like the older one in this relationship. Am I right? Or
I mean, he is always in his podcast mode.
is this the serious space?
I feel like people call us a startup, but 15 years.
And that's exactly what that. Do you feel like a startup?
I'm going to be 40 years old soon. When all of this started, I was 22 or 20 or 18 or something like that.
How different is the belief system? And what are the differences? Now this is an interesting conversation to have.
We're quite good at this.
Quite good? What does that mean?
I said you're quite good at this.
I've been doing it for 24 years. A little bit longer than you have. Since he comes to you for grounding and centering, what have you sort of set boundaries in terms of what you should do or shouldn't do?
We have a lot of disagreements. We have fewer disagreements.
AI's expertise at your fingertips, or AI first, and so on and so forth. Today, as you look at your business as well as you look at the adjacent ecosystem, what do you make of it?
It's been commoditized to such a large extent. When anybody says we are powered by AI, you have to take it with a giant sack of salt because an 18-year-old teenager,
how giant?
big, an 18-year-old teenager who's tech savvy can start using these things.
You've had a difficult 12 months, and what has been the mechanism to try and cope with this?
There's no answer to that, as in the doctors said that it could be any one of the reasons, for the stroke.
Has it reshaped the way that you look at work, relationships?
Yeah, Nikhil has been trying very hard to get me and Seema to kind of socialize.
What baby steps does he need to take?
Nitin is on one extreme, Nikhil is on the other. He's a social animal. Maybe you can be social, but you don't have to be an animal.
That's the headline. Nikhil Kaman, social animal. For people who are starting up today, if I would ask you to share the 2 or 3 things that you believe are important.
Before you build something, first experience.
If we were born 15 years hence and we did the same thing, I don't think it would work.
What is the fear that you have today as you build Zerodha?
Regulations are something that we are afraid of.
At 17 crore demat accounts today, what do you believe that number is likely to be 5 or 10 years?
All these new accounts that are coming, in one bear market and they will go away.
You think so?
Yeah.
I wish there is that era in India like there once was in China, where we make the religion of the state for a decade, entrepreneurship. Everybody's allowed to try.
So is external validation important to you?
I'm surrounded by people who are saying shit to me all day long.
Number one question that everybody's asking, why don't you IPO in?
As a listed company, there is so much you can say and there is so much you can't say.
14 years on, with the business that you've built, with the money that you're generating at this point in time, what do you see as the use of this?
I feel like we are still David in the story. We've been struggling for a long time to maybe get a banking license. We are subject to regulators who we don't really have any influence or access to. Their decisions can reduce our revenues by 50% in one day. They can make us shut down 6 months later.
Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. 22 years ago, the reason why we started Young Turks was to go on a journey to find first-generation entrepreneurs who were trying to use the very nascent internet business in India to create new categories or disrupt existing categories. The idea was to spot and identify the next emphasis of India. And today, it gives me great pleasure to have on the podcast with me three gentlemen who met by chance. Well, two of them actually met by chance. The third one happened to be connected by blood, but two of them met by chance and decided to start a company 14 years ago, which is today quite the shock and awe story across India's startup ecosystem, delivering 4,700 crore rupees in profit and 8,300 crore rupees in revenue. We're talking about Zerodha, and joining me on the podcast today, Nitin Kamath, Kailash Nath, and Nikhil Kamath. Thank you very, very much for joining us here on the podcast on Young Turks Reloaded. I'm going to start with you, Kailash, and that's because we've heard both of them more often than we have heard you. But there's another reason why I want to start with you, because Nikhil and Nitin, no, actually Nitin was at an offsite that we did, and he said that he considers you his life guru, and he believes that Zerodha is what it is because of you, essentially. And so I want to start by asking you, what do you think it was about Zerodha that clearly makes it, in many ways, a pattern breaker, an outlier in the context of how other companies around you were growing and building?
Definitely not one individual, but I would say the right people with the right mindset and the right philosophies who happen to meet at the right time in history. So that really is the reason why Zerodha has turned out to be.
Serendipity.
Absolutely, serendipity.
So take me back to that moment when the two of you met.
I mean, in fact, it happened right here on this road. I was in Bangalore in 2012, and it was my first time in Bangalore. And I was always a tinkerer, techie engineer, and a high school friend of mine who happened to be here, who happened to be in finance, had this idea to build a certain investment app. And I had no connection to finance, but I was an engineer and I always liked tinkering. So I joined him in attempting to build this. And we'd hang out right here, I think 2 minutes away on this road at his friend's place. And Nitin and Nikhil's first office happened to be across the road, I think 10 seconds from here.
So not much has changed.
We're still here.
and still together.
Yeah, and one day, I think Abid just walked in and said hi to Nitin, and we met, and that's how it happened.
And the rest is history.
Yeah.
So let's talk about that moment when the two of you got together. And I know that you went back and realized that there was no tech as far as the broking business was concerned. And that really was the problem that you tried to solve. And you know, going back to the question that I asked in terms of what makes you pattern breakers and what makes you outliers, one, just bootstrapping your way to success. B, a very clear focus on ensuring that you do things efficiently. And I was talking just before we started about the scarcity mindset. And I know that at CNBC, for instance, we've always operated with the mindset of doing more with less. And I want to go back to the start and there was no sort of napkin moment clearly,
Right.
but what was it that you hoped to do with this company?
It kind of, different points, we were meant to do different things. Like when we started off, it was essentially saying, can we be better brokers for traders, very active trade traders. And around when Kailash joined, it was, we were kind of, dreaming a little bigger, saying we probably maybe have to go for investor audience and etc., which is a much larger crowd. So between 2014-15 until we launched Kite, with the launch of Kite, we were addressing like a much bigger audience. And 2016, this Aadhaar and etc. happened, 2016-17, and like what Kay was saying, it was the right moment as well. It is
right place, right time, with the right people.
Yeah, with the right people, of course.
Yeah.
So, and then, so the journey really began only 2015. The first 5 years was more like, for us, it was like learning. And 2020, COVID happened.
Yeah.
And then it was like really...
I mean, that was the breakout moment in many ways. The next big breakout moment for the business.
Correct, yeah. And during this journey, as in at different times, we wanted to be different things. As I said, first we were trying to be for active traders. Then we were trying to attract active investors. Then the Rainmatter, the incubator, we started investing in the startups who can build like adjoining niche platforms for people who trade on our side, and yeah, as in bootstrapping and all, it's just lucky. I mean, we were just lucky that the first 4-5 years we didn't have to go out and raise any capital, right? Otherwise, it's you have to go.
It wasn't an active choice.
It was not an active choice. It was really the only option. I mean, the VCs, etc., came into play only after 2015, because that's when they realized that.
But then it became an active choice.
Then it became an active choice, and then it became an active choice because now kind of realized that people who have who raise investments come with a certain baggage, and it's for us, without carrying that baggage, just the fact that if you have an investor, you have to give him an exit in 6 to 7 years or 8 years, that comes with the baggage. That means you have to grow, right? We have actually never chased growth, like not 1 year in the last 14 years have we ever gotten up and said, this is how much we have to grow. And that also makes us little susceptible to, I mean, today we get asked why not list and why not IPO. And there's no predictability in the business. In our.
So you've preempted. I was going to come to IPO in a bit. Since you've started that conversation, let me put that question to all three of you, because that is the number one question that everybody's asking. Why don't you IPO in a market where everybody's IPOing at this point in time? Is it about the fact that you don't have clear line of sight as far as revenue predictability is concerned, especially in the current regulatory environment? 2, is it about the fact that, look, you don't have any exits to offer because you didn't want to carry that baggage with you? And 3, your freedom, the ability to want to do the things that you want to do without having to answer questions, which is it? And is it a no for now, or is it off the table, for the long term?
I mean, the only reason we would want to IPO is because we are at the forefront of this, right? As in, we are a stockbroker, and we ask every company to create wealth.
Exactly.
So that's the only reason. I mean, I don't think, at least for now, there's any other reason to go IPO, right? As in, if ever we decide in the next, I don't know, by the time, I mean, the plan as of now is we build a bunch of businesses, build some diversification, and then maybe once there is predictability, then we can decide, right? As in, but then, even then, IPO or not IPO, that's...
So let me come to you, Nikhil. We're going to go back to your story in just a second, but let's do the IPO part first. And I was having a conversation with Sameer Nigaman at PhonePe, and he said exactly this. He said, till I can look an investor in the eye and say, this is the line of sight I have as far as revenue and profitability is concerned, I'm not going to go IPO. And then I had a conversation with Yashish Daya at Policy Bazaar, and he said, one of the reasons why we considered IPOing was because in a regulated business, trust is a crucial currency. And when you're listed, it automatically sort of is a currency that you deal with. So when you consider the possibility, I don't know whether you'll do it 5 years from now or never, but what is the conversation in your head and amongst yourselves about IPOing?
Well, I think there are ways to argue both sides. There are pros to IPOing and there are negatives to IPOing. To your earlier example, can one argue that without IPOing, can a company be as compliant and follow regulation and build the kind of trust that a company which is public can? I think the answer is yes.
No, he wasn't saying it from the point of view of can we be compliant, but he was saying it from a point of view of for the retail investor, when you're listed, they see you as being a trusted entity because you're out there in the public markets.
I feel the contrary is true. As a listed company, there is so much you can say and there is so much you can't say. If you look at Zerodha and you look at Nitin tweets a lot about the numbers and predictability and stuff like that, I would argue that as a listed company, he can't go out on Twitter and say it looks bleak and profits are going down.
To say the best is perhaps behind us. I mean, that would have taken the stock down if you were actually listed.
So maybe there are other ways to build trust which are not necessarily IPO. They're more nuanced in nature, but they're also more honest by virtue of that.
So if you had to vote, would you vote for an IPO in the near future or not?
I would be conflicted because the pros and cons, I think, are very close to being equal.
So it's what, 50-50 for you?
I would say 50-50, more leaning towards no IPO today.
More leaning towards no IPO, Kailash?
I would lean heavily towards no IPO, but then again, I'm not really a finance person.
Yeah.
To me, it's a bunch of common sense questions. Why does an organization IPO? If you want to raise capital, if you have a need for capital. Thankfully, we don't have a need for capital. And freedom and liberty is what really allows us to excel in what we do. And that's a big factor for me personally, the innovation that we do, the decisions that we take. So for me, unless, like Nikhil is saying, unless there's the pros and cons outweigh each other significantly, the flip, I'd heavily lean towards not.
Heavily lean towards not. Are you 50-50 or heavily leaning against not?
I mean, the only other reason, apart from the fact that we are stockbrokers, to list is if regulations ask us to list. Like, if SEBI says you're too big a broker to be not listed, then maybe not. Then maybe yes, we have to list. But otherwise, as of now, there's no need of money. So no.
No, clearly there's no need of money at this point in time. In fact, I guess the question is, what do you do with the money that you're generating, and that could potentially lead to some of the issues that we will talk about.